we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we are doing will help towards this, because, this is not some model that's in some supercomputing facility, right? Not available to the public. I mean, you can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
If you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now. Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years' time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you.
Thank you,
been
Maud.
fascinating. Yeah. Thank you for taking the time.
Yeah.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have, sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are equally creative, and they've been able to take, tools and ideas that are available both in open source and the academic literature and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. Without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
We're talking about superpowers, Clash of the Titans sort of stuff. It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, it's talent that drives, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, it's still really important to be physically proximate to other people who, are working with you in the office. I mean, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? China restricted gallium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. We're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, can you tell, because we're all friends here.
Sure, go for it.
Do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years' time, those kinds of AIs are set loose on the open web in a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the U.S. is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things, where China is not so good, but there are big areas in which China is way outbuilding the U.S.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors, but what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from U.S. sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the U.S. really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, U.S. policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
how does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is almost, it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's not the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China. in terms of what you're saying?
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to, opt in to different uses. Of course, in China, there's always the exception, unless the security services, think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology, really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
This is Horizons Middle East and Africa. Our top stories this morning. Tough talk. U.S. forces strike Iranian targets for a 10th straight day after President Trump says Tehran will pay for the killing of 3 American soldiers. The conflict looks set to expand as Iran-backed Houthi militants in Yemen threaten to blockade Saudi shipping in the Red Sea. Fresh tariffs. The U.S. plans new 50% levies on some Canadian goods, saying its northern neighbor has unfairly treated American alcohol, cars, and dairy. Plus, flying high. Airline and airport operators meet in Farnborough for the biennial air show. We hear from the Turkish airline chairman and Dubai Airport's CEO. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa where I am. I'm Jennifer Zabisanja in Johannesburg. We have plenty of news to get you throughout the morning. But first, of course, we want to take a check on where markets are right now. If we take a look at U.S. equity futures, pulling back slightly, as you can see, up just about 0.4%, a noticeable reversal from what we saw last week, but then also from what we did see throughout the session on Monday, though we did see chip makers staging a noticeable comeback, especially after last week's sell-off. Of course, we know that was the name of the game last week for volatility, but on Monday we did see the S&P 500 still closing at its lowest level since late June. Interestingly, though, we did hear from Goldman Sachs saying that hedge funds have been pulling back from U.S. tech stocks, rotating into other sectors at a record pace over the past few months. We've seen that reflected in some of the price action, and that will be key, especially as we go through earnings throughout the week. The energy complex is also adding to a bit of caution in the markets right now. As you can see right now, oil, Brent crude is down just about 0.8%. We've been seeing oil fluctuating, though, between gains and losses, especially as the conflict in the Middle East continues to escalate. The market increasingly pricing a cycle of what we've been seeing over the past 10 days now of attacks and potential reconciliation rhetoric that we are getting. So one to pay attention to. Brent crude just over $88 a barrel there. The U.S. 10-year yield marginally lower right now, though what we did see on Monday was, interestingly, bonds were under pressure, and adding to some of the pressure were comments that came from the new UK Prime Minister Andy Burnham suggesting potentially a bit of flexibility. He used that term, that leading to a bit of trepidation for gilt markets, and that spilling over into sovereign bonds across the world and across the curve. The U.S. 10-year yield at about 4.59% there. And we have the Bloomberg dollar on the board as well, unchanged, though we are keeping a close eye on the currency, especially as we now see tariff concerns are back into the fold. Now let's check in on how markets in Asia are faring. Winnie Xu is standing by in Hong Kong for us. Winnie, what are you watching this morning?
Good morning, Jen. We are seeing a very nice rebound in Asian stocks today, with the benchmark up more than 2% after having been sold off for the past 3 days, and also being supported by oil prices easing a little bit. Now we have Japan coming back online after a holiday, but leading gains today is really South Korea's Kospi index, here up 4.6%. Earlier, we did hear from the exchange triggering a sidecar to hold the trading after such sharp gains. But today, what we're really seeing is foreign investors stepping in to buy while retail investors sell. So that foreign buying also supporting currency here, with the South Korean won strengthening against the U.S. dollar. And in fact, it is leading Asian peers today, and also the best performing Asian currency so far this month, supported also by that hawkish stance of the central bank, as well as those strong trade data that we saw this morning. Now, flip aboard, we also take a look at another bright spot today, which is the onshore stocks here in China, with the CSI 300 as well as the Chinex index both extending gains from yesterday, supported by Beijing stepping in to stabilize the stock market with the help of insurers and also these state-backed funds. Now, we are also seeing some gains when it comes to Zhipu, saying that the company has completed a data center use just local chip makers chips. So that's why we are seeing local chip makers also gaining as well. Back to you, Jen.
Thanks so much, Winnie Xu in Hong Kong. We'll check back in with you in just a bit. Now, the U.S. says it's completed a 10th day of strikes on Iran after President Trump promised Tehran would pay for the killing of 3 U.S. soldiers. But the conflict could expand further, with Iranian-backed Houthi militants threatening to blockade Saudi Arabian shipping in the Red Sea. The Saudis' use of that export route has helped limit disruption to global oil supplies. Joining us now is Stuart Livingston-Wallace, executive editor for the Middle East, North Africa, and Russia. Stuart, let's just start with these latest strikes. What exactly were they hitting, and what has been the response given the escalatory measures that we've been seeing over the past few days?
Yeah, so I mean, it was largely the same sort of suite of targets as you've seen in the previous 9 days. So US CENTCOM was saying that they were basically targeting military command centers and other military assets, largely on the coastal regions and largely around Hormuz. So clearly designed to diminish Iran's capability of attacking shipping. But if you want sort of some indicator of how effective these 10 days, or rather nights, of bombing have been with regard to shipping, there were reports of basically 2 separate ships attacked overnight, one late last night, one this morning, one off the UAE and one off Oman. So clearly there's no decline in Iran's ability to continue to threaten shipping, and it's very hard to see going forward how many more nights of US military attacks will it take before that capability is eliminated completely. One would think that it might be almost impossible.
And now adding to more of the tension, Stuart, is this threat from the Houthis. How much does that change the calculus of the various sides that are involved?
I mean, it's a big deal. It's a big deal assuming it happens. Now, one thing that must be said, you know, an important caveat is that the Houthis have said this sort of thing several times over the last several months and by and large have not carried through with it. That is not to suggest that anyone should be complacent about this latest threat. You know, there is obviously a long track record there of the Houthis attacking shipping, and maybe even just the mere threat of an attack is enough to deter most shipping companies from going through the Bab el-Mandeb Strait. If that does happen, in effect, what you end up with is a blockade on the Hormuz side, a blockade on the Red Sea side, and it more or less paralyzes shipping. Most importantly, of course, it potentially crimps Saudi Arabia's ability to get oil out into the global markets from the Red Sea ports. And that itself has been something of a lifeline in terms of the millions of barrels that they've been able to get out there. So look, it's something we'll watch over the next couple of weeks. Clearly it's impactful, and it's something the market needs to pay a lot of attention to.
Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, thanks so much for starting us off. Now, joining us to discuss this further is retired Lieutenant General Karen Gibson, an advisor at Academy Securities Geopolitical Intelligence Group. Lieutenant General, thank you so much for your time. So there are quite a bit of conflicting messages about what is driving this latest escalation on the part of the U.S. How do you view this?
So it's a great question, Jennifer. The initial aims of the campaign were to conduct such destructive strikes against Iran's military and leadership that it would compel them to make concessions at the negotiating table that would lead to enduring curbs on their nuclear program. This latest phase is a battle for who will control Hormuz, a far more narrow aim made critical by the chokeholds that Iran has put in place on shipping that flows through the Straits of Hormuz. It is a battle for Iran saying that they insist that they will play a role and they will determine who goes through the strait, and the United States seeking to restore the normal flow of international commerce through a strait that was previously free and open.
And we have seen the strikes now even expanding beyond just military targets, as we heard from our Stuart Livingston-Wallace. Do you not see that as a complication of any sort of mediation efforts?
Well, I think before we can even get to mediation, we really need to achieve some kind of success in this aspect of the campaign. And whenever I look at what an adversary might do, I look at 2 aspects. 1, what is their will and intent, their desire? What are they hoping to achieve? And 2, what is their ability to do that? Their will and intent, clearly stated and consistently reiterated, is that they want to control traffic through the straits. Their ability to do so is very difficult to eliminate, as your previous speaker said. The United States has had tremendous tactical success in destroying a lot of capability, but totally eliminating it, that's an incredibly high bar. Iran has a number of asymmetric advantages in this regard. It's one point in space, the Strait of Hormuz, that we seek to secure, but they have a vast geography from which they can launch attacks. And the kinds of one-way attack drones that they're using are relatively inexpensive, easy to replenish, easily concealed, and have limited signatures associated with them until they're actually launched. Completely eliminating that is very difficult. And so despite the precision and lethality of these American strikes, they've only made a dent in that capability. In terms of intent, I think there's been no success thus far. Iran continues to insist that they'll control the straits. They continue to strike back at bases in Gulf partner nations, and they have made no indication that they are willing to budge in this regard.
Well, and we're now hearing some reports that Pete Hegseth has gone to Capitol Hill to ask for more funds to cover some of the war costs. So what do you see then as the greatest challenge for the U.S. military campaign as we are now in a 10th day of these escalatory strikes?
So I think the greatest challenge is that it is largely at this point a military campaign. It needs to be multifaceted. It should probably include some financial penalties. You know, I know we've gone back to invoking some recent sanctions against 7 entities as well as diplomatic efforts. And it's unfortunate that it's not a more multinational effort, because there are a couple of areas where I think people tend to forget that for the men that are leading the Islamic Republic, this is an existential threat for the survival of their state. And so there is an underestimation of their willingness to absorb pain, whether it is in the shape of years-long sanctions or punishing airstrikes. And so continuing to attack these assets that are being used to affect shipping is probably not going to be enough to change Iran's strategic calculus. One more facet that I would throw in this, you know, the president can say the straits are open, Iran says they're closed, but who really at the end of the day determines the status of shipping through the straits is commercial shippers and the companies that insure them, as they weigh the potential for profit against the perception of risk. And Iran doesn't have to do much at all to raise the perception of risk. And that will be a very difficult matter to resolve and to restore commercial confidence that it's a consistent ability to sail through the straits, not something that is episodically protected.
And in terms of restoring, what do U.S. Gulf relations look like in the near term? How do you restore some of the confidence, if there ever were confidence, between some of these nations and the U.S.?
So I think it's not really, I wasn't thinking of it in terms of the confidence of Gulf allies. I was thinking in terms of confidence of business interests that are paying for the shipping costs or for insuring, you know, vessels that are flagged from many, many nations. I do believe there is still a strong relationship between the Gulf partners and the United States, because there has to be. And this is another area of tremendous asymmetry in that they are the ones that are absorbing the cost of these strikes as Iran reaches out and retaliates against Gulf nations that are hosting or supporting the United States. Iran's strategy is to make the campaign so politically and economically untenable for the United States that the U.S. changes its campaign plan. And part of doing that is by punishing those states, by showing that the United States cannot protect them, and by trying to compel the Gulf states to pressure the United States to try a different tack.
Really valuable insights from you. Retired Lieutenant General Karen Gibson, advisor at Academy Securities Geopolitical Intelligence Group. We really appreciate your time. Thanks so much. Now, still ahead, Neovision Wealth Management tells us why they expect realized oil volatility will run higher than markets are pricing. Their CEO joins us next. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. Traders are tracking a pullback in oil after U.S. forces struck Iranian targets for a 10th day. This comes as markets watch for disruptions to Saudi Arabian exports following Houthi militant threats to blockade an export route through the Red Sea. Let's bring in Neovision Wealth Management CEO and co-founder Ryan Lamond joining us now. Ryan, thanks so much for being with us. So we were just mentioning we are seeing a bit of a pullback in Brent crude, but your notes actually say that you suggest the markets may be underpricing the cost of a delivered barrel. Can you just explain what you've noticed?
Yes, completely, Jennifer. The first thing is that refined products of oil are getting in shortage here in Europe. So I arrived on Sunday to Paris. The taxi had to stop for 25 minutes outside of Paris to fill up in diesel because inside of Paris, there's no more diesel. So clearly, it's a problem not only of delivery of oil, but the refining of oil. The top refining countries like US, China, Russia, South Korea, India, they all refine from themselves. Russia's refineries are like pretty much destroyed. So there are tens of millions of barrels of oil on water right now that are useless because they cannot be refined. So the reserve to use is getting in shortage.
What does that mean for prices, Ryan? Do we continue to see volatility between the $88 to $90 a barrel, or is your expectation it might go higher?
I think the paper oil price that we see on screen is not really reflective of reality. When you want to buy today gasoline or diesel, it's still trading at a price as if oil was more than $100. And with all of the risks that your previous guest has mentioned, the potential closures of other straits, I think oil prices should be much higher than they are right now. Absolutely.
What is that point, though, Ryan? What are you expecting?
We should see around $100 a barrel, and if the Houthis they close the Bab el-Mandab Strait, I think we should see around $150 a barrel. We're talking about around 30% of global oil supply of oil and gas. Add to it the refined products like gasoline, like diesel, like helium, which is essential to the manufacturing of chips, will be in very serious shortage.
Ryan, then what's your expectation for when we see this maybe showing up, the premium on crude showing up in CPI and PPI prints? Last week we got softer prints, but your expectation is that this may start to change soon.
Yes, absolutely. What we observe when we have a very large energy shock, it translates into CPI and PPI between 3 to 6 months later. It's always quite delayed. So we've seen a much better than expected print on the last one, which I have a question mark on. But we should expect its appearance again before the end of the year, sometime between September and December in the fourth quarter. Let's hope it's not as bad as I think it will be. But I think it will show up by Q4, unless there's a resolution of the conflict that is very quick, where producers and suppliers would adjust the price accordingly.
Does that change your allocation then, Ryan, for your portfolio?
At the moment, yes, we've reduced risk into the summertime and with the escalation that we've seen. So we've reduced substantially anything that we consider as overvalued, because generally overvalued assets are the ones that suffer the most, whether in volatility or drop in price in case of issues. And we're going into much less volatile assets like short-term bonds, Swiss equities. So anything that is decorrelated with the market, decorrelated with the energy sector that might suffer from huge volatility.
We of course are in the midst of earnings season. I know you're underweight U.S. right now. What would you need to see throughout some of these earnings results to maybe change your exposure then?
So we're all waiting for the AI sector to start showing some very good results. So basically what we're seeing is a financing by hyperscalers into AI companies. So enormous amounts of cash flow, free cash flow is going to these companies. And we are yet to see this business model as sustainable and revenue generating. So at the moment, I'm paying $200 a month of subscription with an AI company, while I'm consuming $5,000 a month in tokens. So this subsidy model is not sustainable unless we see these AI companies showing real profitability and no need for subsidies anymore done by private equity and VC houses. So this is what I would like to see more, to have more faith that the overvaluation that we're experiencing in the US, well, it's justified and it shows future revenue generation of these companies.
And we'll see how those earnings pan out. Thanks so much, Ryan Lamond, as always, for joining the show, CEO and co-founder at Neovision at Wealth Management. Great to have you. Now, still ahead, tariff tussle. President Trump plans 50% levies on some Canadian goods. He says America has been unfairly treated by its northern neighbors. The details later this hour. This is Bloomberg.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome back to Horizons Middle East and Africa. The new UK Prime Minister, Andy Burnham, has made several appointments to his cabinet. John Healey, the former Defense Secretary, replaces Rachel Reeves as Chancellor of the Exchequer. His appointment was unexpected and comes weeks after he resigned in a row over funding with the Treasury. Shabana Mahmood remains Home Secretary, a role she has held since September, and oversees immigration policy. Former Labour leader Ed Miliband takes over as Foreign Secretary. Miliband replaces Yvette Cooper, who has since been appointed Health Secretary. The EU has fined Alibaba's e-commerce service nearly $630 million for failing to adequately police illegal, unsafe, and counterfeit products on the platform. The European Commission says AliExpress did not do enough to remove repeat offenders or enforce its own penalties. Alibaba says it's surprised by what it calls a disproportionate fine and is planning to appeal. And a group of 12 U.S. states have sued Paramount Skydance, seeking to block its $110 billion bid to buy Warner Brothers. The antitrust lawsuit alleges the deal would harm competition for film distribution and leave viewers with higher prices and less choice. Paramount Skydance has responded to the suit, saying it would defend the transaction in court. Now, let's take a look at where your markets are trading at this hour. Right now, as you can see, a bit of a reversal for U.S. equities. Euro Stock 50 futures pointing marginally lower right now, though, of course, that is a welcome sign, at least the bounce that we're seeing in U.S. equities from a lot of the trepidation last week in markets. Now, coming up, the CEO of Dubai Airport says that the Iran war has made little impact on operations. We'll get more on that conversation next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
This is Horizons Middle East and Africa. Our top stories this morning. Tough talk. U.S. forces strike Iranian targets for a 10th straight day after President Trump says Tehran will pay for the killing of 3 American soldiers. The conflict looks set to expand as Iran-backed Houthi militants in Yemen threaten to blockade Saudi shipping in the Red Sea. Fresh tariffs. The U.S. plans new 50% levies on some Canadian goods, saying its northern neighbor has unfairly treated American alcohol, cars, and dairy. Plus, flying high, airline and airport operators meet in Farnborough for the biennial air show. We hear from the Turkish airline chairman, as well as the Dubai airport's CEO. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabasanja in Johannesburg. We will get you those interviews in just a bit, but let's just check in on where markets are trading at this hour. Right now, U.S. equity futures pointing higher, reversing some of the earlier losses, though we did see the S&P 500 close lower on Monday. Some of the risk, some of the concern around sentiment, of course, is what is escalating in the Middle East. We did see the S&P closing at its lowest level since June. Still some of the questions around AI spending percolating throughout the markets, but perhaps we're seeing some investors coming back into the fold. Though we did get a report from, or a note from Goldman Sachs saying that hedge funds have been pulling back from U.S. stocks and rotating into other sectors. We'll see how that plays out as we get more earnings throughout the week. Brent crude right now adding to some of the caution in the markets, although down just over 0.7%. We've seen oil fluctuating over the past few days. Right now, Brent crude just over $88 a barrel. The U.S. 10-year yield is reversing some of the earlier losses, down right now. We did see a bit of concern across the curve for sovereign bond markets globally on Monday, especially as we did get some comments from the new UK Prime Minister Andy Burnham suggesting some fiscal flexibility, and that adding to a bit of concern for markets globally. The U.S. 10-year yield at about 4.59% there. And the Bloomberg Dollar Spot Index trading sideways, though, watching it closely as trade tensions continue or pick back up, I guess, between the U.S. and Canada at this point. Let's, though, check in on how markets in Asia are faring. Winnie Xu is in Hong Kong for us. Winnie?
Yeah, good morning, Jen. A very nice rebound in Asia today with the MSCI Asia here up 2.3% after 3 days of tech-led sell-off and also actually having its best day in about a month. Now we have Japan coming back online with the Nikkei 225 up 2.6%. Now this is coming after the gauge, in fact, hit a technical correction territory just last week. South Korea's Kospi Index leading gains today up 4.5% here with foreign investors buying as retail investors continue to sell. But that inflow is also supporting South Korea's Korean won here, which is in fact Asia's best currency so far this month. Also supporting sentiment in South Korea is that trade data that we got earlier showing that July 1st to 20th, a jump of 63% in exports. So that is actually a record compared to any other year for the same period of time. So really being driven by that AI demand. Flip the board, we take a look at another bright spot in Asia, which is in Chinese stocks. We are seeing onshore stocks gauges specifically extending gains after Beijing really step up their support to stabilize the market with the help of the national team as well as the insurers and also the state-backed funds. Now, also the strength are being seen in some of the technology names here. We have Zhipu, which is China's AI model maker, and it actually said that it has just constructed a data center used only local chips. So that is supporting local chip makers as well. Back to you, Jen.
Thanks so much, Winnie Xu in Hong Kong for us there. Thanks. Now, the Trump administration has vowed to impose a fresh 50% tariff on some Canadian goods over what it said was unfair treatment of American alcohol, cars, and dairy. The items subject to the new tariff include milk, hockey equipment, beer, and plywood, but not major resource imports such as energy. The levy, set to take effect in 30 days, marks one of the most severe trade actions the U.S. has taken against their second largest trading partner. To discuss further, I'm now joined by Bloomberg Chief Asia Correspondent, that's Rosalind Matheson. Ros, thanks for being with us. Maybe just start by giving us a bit of context as to the legal framework that was allowed to allow for these tariffs to be in place. What is behind this?
Well, it's interesting because it comes at the same time as the US president was in fact threatening tariffs on Canada over wildfire smoke that's been blowing into the US. But the US administration says that's separate. That may yet be action to come. This action would be under Section 338 of the 1930 Tariff Act, which in theory allows the US president to impose duties of up to 50% on countries deemed to be discriminating against the US. And this is a measure that's not actually been used, it seems, before for such action, so it's legally untested, and it comes against that broader backdrop of tensions over the future of the relationship and the trade agreement between the US, Canada and Mexico, which the US has said that it won't extend. It's now on a rolling basis, so it feeds into all of those negotiations. But as we've seen, it's not yet imposed. The US administration says 30 days before it is, and we know that 30 days is a long time when it comes to the trade decisions of the US, so anything could still happen.
Yeah, of course, and especially from the Canadian perspective, we're looking at what Mark Carney, the Prime Minister, has said. What is the likelihood then of retaliation?
Well, certainly this is going to irritate Canada. It comes against that backdrop of tensions, and particularly between Donald Trump and Mark Carney. You already have the Premier of Ontario, Doug Ford, coming out and saying if this does get enacted, Canada does have to retaliate. But this would represent a pretty small part of the bilateral trade relationship, which was in goods and services around $900 billion last year. These products don't represent a significant chunk of that, which might be a factor for Canada in thinking about how to respond. There's also the possibility, again, that Donald Trump changes his mind, which they've seen before, which might encourage them to take a bit of a wait-and-see approach in this. You can see that Mark Carney says, yes, Canada, in his view, has matched what he calls unilateral US actions so far, but he also says they proposed a whole lot of things to try and resolve these trade tensions, and they're very willing to keep talking. So that sounds like a placeholder kind of comment to allow them a bit of time to see how this is going to play out.
Yeah, certainly still unfolding there. Rosalind Matheson, thanks so much for walking us through it, though. Appreciate it. Let's turn back to the Middle East. The oil prices are steady as traders watch for disruptions to Saudi Arabian exports after Houthi militants threatened to blockade an export route through the Red Sea. The Saudi-led coalition in Yemen says it has taken steps to protect vessels from a move that could put the flow of millions of barrels of oil at risk. Let's bring in Bloomberg oil and shipping reporter Rong Wei Neo. Rong, let's just start with this. What sparked this move from the Houthis? What have we heard?
Well, essentially, the move by the Houthis to blockade these Saudi Arabia-linked ships come as a point of retaliation after Saudi Arabia has attacked an airport in Yemen. Of course, that's just one point, or I would say a point of conflict in the wider what we are seeing in terms of what's happening in the Middle East. That's because for the Houthis, they're backed by Iran. And of course, some analysts would actually speculate that the Houthis are being used by the Iranians to kind of push for further disruptions in shipping lanes. Firstly, we already have Iran, who is blocking off shipping channels at the Strait of Hormuz. And now with this latest blockade, there is increasing fear of there could be disruptions on ships carrying oil transiting through the Red Sea. And but however, as you can see from oil prices, oil markets, or rather oil traders, have been taking these in their strides. That's because if we look at a wider landscape of what's happening in the Middle East, there have also been some hopes that through mediators, we have heard that perhaps Iran is hoping to broker some sort of temporary ceasefire, or at least there are steps being made to kind of push towards some kind of a conclusion after the US have launched multiple strikes on the region, and many oil traders are keeping a close eye out for that.
Well, but we are still, as you were pointing out there, we are still keeping a close eye on the price action of oil. But what are the ramifications, the potential ramifications, though, if we do continue to see a threat to oil flows?
Right, so the latest blockade by the Houthis did raise some alarm bells for oil traders. That's because the Red Sea is essentially the channel where Saudi Arabia, of course, one of the major oil exporters in the world, they have been using this alternate routes. Rather, they have this alternative pipeline bringing oil from their oil fields to this port called Yanbu. And from there, several of the major oil importers here in Asia have been continuously getting crude oil from that port, effectively bypassing all the chaos that has happened in the Strait of Hormuz. So naturally, when this blockade happened, a lot of the traders' first thoughts will be on what's going to be happening with the oil flows coming out from Yanbu. Is this a bigger issue? But as of now, from what we are hearing from traders that directly deal with cargoes coming out from that port, it seems that oil loading operations are continuing as per normal, and these Asian customers are still waiting out for further directions or further indications from the Saudis on what they should be doing, or are there perhaps alternative routes that these ships could take, which is why we can see that the price action of oil has been relatively stable, and we haven't quite seen any other further catalysts that could actually push oil prices up further.
Great analysis there. Bloomberg oil and shipping reporter Rongwei Neo. Rongwei, thank you so much for your time. Now, the Farnborough Air Show continues for its second day today, with the global disruption of the Iran war taking center stage. Bloomberg TV anchor Guy Johnson sat down yesterday with Dubai Airport's CEO Paul Griffiths. Here's what he had to say on the war's impacts.
Operations completely normal. I've checked in again this morning just to make sure that is still the case, and it is the case. We're operating at pretty much full capacity. Emirates have actually got over 80%, probably closer to 90% of their regular scheduled operations. And when I went through late last week, the airport was as busy as ever. I mean, we're facilitating more than 6 million customer journeys since the conflict began, and I think things, if you look at on the ground at DXB, there's no suggestion that there's a problem, and we'll continue to operate. Obviously, airspace is still subject to some restrictions going to the north, but we've got plenty of other air routes across Saudi and out to the south, so air operations are continuing as per normal.
Do you think you will continue to use those routes? Is that going to become the new normal? Is that the way out, effectively, and the way in?
Well, until there's a long-term stable situation and those routes across Iran and Iraq are available to us again, yes, but it's not a huge problem at the moment. We certainly have enough capacity via the alternative routes to be able to mount a very stable and normal operation.
What are the latest numbers in terms of passenger figures? You talked about Emirates being back, but what about some of the other carriers?
Well, we're about 50 airlines now. That's about half of the normal number, but actually a lot of the additional capacity that Emirates has put on is covering for those airlines. Pretty much all the foreign airlines are coming back very strongly. We're seeing 10-20% growth, and that's a fairly good number, because obviously it means that we are missing some of the key European carriers. I mean, Air France have suspended operations, BA are not starting, and I think that's mainly because of advice from their governments. They are having difficulty getting insurance for operations to the region. It's not related to any specific issue. But a lot of other airlines have made satisfactory arrangements for insurance, and they're continuing to operate as per normal.
In terms of the damage that was done to DXB, is that all fixed? Was it expensive to fix? Are you making any changes that will harden the airport effectively and make it more robust?
Well, let's get it in context. We had something like 111 missile alerts during the conflict, and we had something like 16 missile impacts in our infrastructure. There are a couple of things that will take a little longer to fix, but most of them were fixed within a couple of hours of the incident happening. None of them have hampered our operations in any way, and we've been able to operate pretty much full capacity throughout the entire period.
That was Dubai Airport CEO Paul Griffith speaking with Bloomberg TV anchor Guy Johnson at the Farnborough Air Show yesterday. Very active there. Now, coming up, we're staying with air travel. The chairman of Turkish Airlines tells us he's seen a strong recovery path since the start of the Iran war. We'll get the details on what's next for the carrier next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. The chairman of Turkish Airlines has told us the recovery path since the start of the Iran conflict has been, quote, strong, and that the airline was able to keep up momentum during trying times. Bloomberg's Guy Johnson spoke with Murat Çeker at the Farnborough International Air Show yesterday.
Since the beginning of the crisis, like end of February, we were a little bit more worried because we are physically close to the hot zone, if I may call it that way. But the Ramadan holiday, the Eid that we had, and then the Easter afterwards, we saw a little bit of an impact of it. But then the recovery path was strong. Despite of the fact that Middle East makes around 6% of our overall capacity, we were very quick to relocate that capacity to the other places where the demand kept the momentum. In particular, Far East region and then South Asia, we saw a very strong demand, and we added about like 40 additional frequencies, namely to the Asian countries, some African countries, even some European countries where the demand was holding up. And then overall, we were able to put about like a 5-6% capacity growth on top of last year in the first half of the year.
Is that capacity coming out of the Gulf carriers? Are people not going via the Gulf, they're going via you?
A little bit of that, definitely, but we are not the only airline that took part of that capacity. Moreover, it was for an interim period of like 2-3 months, and then since I could say mid-June, we are seeing the Gulf carriers are almost full back into operation. So that extra demand we were getting from the Gulf carriers is gone. It's just like back to normal, I might say. But still, there is some hesitation probably on some potential leisure travelers.
What about the last few days? Have you seen any shift in demand then?
This thing, I think people are definitely cautious to travel, but it is not as strong as the first phase of the war. So people are more reluctant to cut their planning. But definitely we have seen the horizon has shortened. People don't make anymore like a 2-3 months in advance reservations for their summer plans. They make like up to 40 days at most.
So visibility is being reduced. So what can you tell me about what the rest of the summer looks like and what maybe into the autumn looks like?
I mean, actually, from today, when I look at the rest of July, August, and September, we are slightly above last year. So it shows that the traffic is holding up. But the visibility drops significantly for the last quarter of the year. Into October, November, we see that we're seeing the reservations are below last year. So people are waiting to have a more clarity as they get closer to their travel times. They are making the bookings.
And what's happening with fuel prices?
Fuel prices has been definitely very volatile. We hedge up to 50% of our 26 consumption. That's part of our regular strategy we have been implementing through many, many years. So it is providing some reservation, but more importantly, we were also able to increase the fuel surcharge on ticket prices. There are certain destinations where we were able to increase the price up to 20%, the ticket price.
That was Turkish Airlines Chairman Murat Şeker speaking to our own Guy Johnson at the Farnborough International Air Show. Now, Boeing secured almost 150 orders on the opening day of the air show after sitting out last year's event. The bulk came from jet lessor SMBC Aviation Capital, which bought 100 737 MAX jets. Saudi Arabia's Riyadh Air and Philippine Airlines also placed orders and options on 787 Dreamliners.
We're turning the corner. I tell my team we haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong. So our backlog is very, very strong. So our story is really focusing on executing that backlog.
Meantime, Airbus also sold 100 of its A320neo to SMBC Aviation Capital and firmed up options with Riyadh Air for 6 wide-body A350-1000 jets. The European plane maker says the conflict in the Middle East has boosted demand for fuel-efficient aircraft. CEO Guillaume Faury promising the next generation of narrow-body airplanes will be in service in the next decade.
We want to be going to the market in the right timing, when we are ready, when the technologies are ready. We have already said and we confirm that we want to launch the next generation single aisle in 2030 for an entry into service in the second part of the next decade. Okay, so that's a bit more than 10 years away, which in our time frame is almost tomorrow.
And our coverage on the ground from the Farnborough International Air Show will continue with insights from the biggest players in the industry throughout the day. Bloomberg will be speaking to Leonardo's CEO, Lorenzo Mariani, Jefferies Senior Equity Research Analyst, Sheila Kayaholu, Lockheed Martin Aeronautics President, Orlando Sanchez, and GE CEO, Larry Culp. A really packed day for our team on the ground there. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. Frontline health workers in the Eastern Democratic Republic of Congo may soon be offered an experimental vaccine against the latest outbreak strain of Ebola. The proposal involves using existing vaccines for other Ebola strains to see if it could provide partial protection before a strain-specific vaccine is developed, which remains months away. Senegalese President Bassirou Diomaye Faye has begun the process of turning his coalition of supporters into a political party in a bid to consolidate his power base. The move comes after Faye split with former ally and Prime Minister Ousmane Sonko, who had previously supported Faye's rise to power via his political party PASTEF. And China Civil Engineering Construction Corporation has won a contract to build a $2.7 billion railway project in Tanzania that will connect the nation to some of its landlocked neighbors. The Tanzanian government aims for the 506-kilometer railway to link its main port of Dar es Salaam to Burundi, Democratic Republic of Congo, and Zambia. That is it for Horizons Middle East and Africa. Stick with us, of course, for Daybreak Europe. That's up next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The US launches another wave of strikes on Iran as President Trump vows to make Tehran pay for the deaths of US troops. But oil holds steady as mediators continue to seek de-escalation. A surprise choice for Chancellor as former Defence Secretary John Healey heads for the Treasury. The new UK government pledging more support for the cost of living. And expectations for increased defence spending take centre stage at the Farnborough Air Show. We'll be speaking to industry leaders throughout the day. Well, a very good morning. Welcome to Tuesday. We've got geopolitics, politics and tariff news in the mix today. But for equities, the focus is firmly on tech. Asian stocks up for the first time in 4 days as investors buy back into chips. So the MSCI Asia Pacific Index up 2.2%, boosted by the likes of the Kospi up 4%. There we also have futures up stateside, the chip bid feeding through, but we're looking towards a lower start here in Europe. Less exposure to tech, of course, but does this picture change by the time of the open? Euro Stoxx 50 futures down 0.2%. Now, flip cross asset, and you can see what's supporting stocks as well this morning is also a drop in oil prices after this 2-day gain as traders weigh up the Middle East outlook. You've got Brent trading here at $88.56 a barrel. Goldman saying it could top $120 a barrel if the Hormuz disruptions persist, though. Yields steady on the 10-year at 4.59. And we're keeping an eye on the pound, aren't we, given all of the politics, holding on to its declines from yesterday's session, just up a touch at $1.34. Of course, we had markets surprised by the new Prime Minister Andy Burnham's choice of Chancellor, and gilts selling off on Burnham saying that he'd seek flexibility on the fiscal rules. So let's see how UK assets hold up as he floods the zone with policy announcements over the coming days. Now let's take a look at the other risk events on the agenda for today. At 7 a.m. London time, it's the latest UK jobs and public borrowing numbers. The jobs numbers expected to reinforce the BOE's view that no hikes needed for the time being, and the public borrowing numbers setting the scene really for the fiscal squeeze on Burnham's government. Then at 9 a.m. London time, we get the ECB Bank Lending Survey, which, of course, could show that both the supply of and demand for credit have declined since the start of the Iran war. And then at 10 a.m, we'll have another read on the German economy with the ZEW survey. So, plenty ahead. Let's get you set up for your Tuesday. We begin with breaking second quarter earnings out of the Swiss pharma industry. These from Novartis. The expectation was that it would reiterate its full year outlook. What we are seeing is that it has reported core earnings per share for the second quarter that beat the average analyst estimate. So $2.41 per share. The estimate was for $2.16. The CEO saying that they remain on track to deliver their outlook. The 2026 full year guidance is indeed reaffirmed. And so a positive set of numbers, it would seem, from a first glance from Novartis. And we'll get full analysis of those numbers later on in the show. Now let's take a look at broader markets. Asian stocks moving higher overnight, boosted, as I say, by the closely watched chip sector. And Winnie Shu has got an update for us from Hong Kong. Winnie, what should we be focused on this morning?
Yeah, good morning, Lizzie. A very nice rebound that we are seeing in Asian stocks today, with the MSCI Asia here up 2.3% following 3 days of tech-led declines, and in fact having its best day in about a month. Now we have Japan coming back from its holiday, and the Nikkei 225 also up nearly 3% after entering that technical correction territory just last week. But leading gains today, we have South Korea's Kospi index here up about 4%. Now we are seeing today foreigners buying while retail investors sell. Now that foreign investors inflow is also helping South Korean won here strengthening against the US dollar, and in fact it is Asia's best performing currency so far this month. Also coming back of that tailwind we saw this morning from the trade data, we are seeing export numbers up about 63% for July through the July 20th, and that is a record compared to any of their years for the same period of time, supported by that strong AI demand. Now, flip aboard, we take a look at another bright spot, which is in the onshore Chinese stocks. We are seeing gauges here, CSI 300 also up to more than 2%, extending gains from yesterday as Beijing continued to ramp up its support to stabilize the market, and that is also being helped alongside the so-called national team, as well as the interest and the state-backed funds. Now, another bright spot we are seeing is in the tech space, because we have a Chinese AI model maker, Zhipu, saying that the company has completed the construction of a data center used only local chips. So you are seeing shares there, as well as the local chip makers surging on that front. Back to you, Lizzie.
Winnie, thank you very much. That's Bloomberg's Winnie Su in Hong Kong. Now, turning to the geopolitics, the US says that it's completed a 10th day of strikes on Iran after President Trump promised Tehran would pay for the killing of 3 US soldiers. But the conflict could yet expand further, with Iranian-backed Houthi militants threatening to blockade Saudi Arabian shipping in the Red Sea. Let's get the latest now with Bloomberg's Middle East breaking news editor Patrick Sykes. Good morning, Patrick. How does the threat from the Houthis then change the situation? How much oil is at stake here?
Yeah, it's millions of barrels a day, right? Saudi Arabia had been relying on that alternative route when the Strait of Hormuz became closed. It moved to shipping those barrels to the Red Sea coast as an alternative, and that is the route that's now under threat. In particular, for now, of course, focused on Saudi Arabia. But I think the fact that the Houthis started with this very country-specific restriction, as they would call it, also points to the idea that they could, escalate it further and apply it to other countries' exports in future. But Saudi Arabia being the closest to them, and I think the most prominent in terms of that Plan B supply chain, was the one they went for first.
And Iran says, Patrick, that it's still in contact with mediators on proposals to ease the hostilities. How real is the possibility of de-escalation now, given the comments we just mentioned from President Trump?
Yeah, yesterday, despite all of the recent the escalation over the past week or so, yesterday we did see these small signs of movement on the diplomacy, albeit before the announcement by the Houthis of that naval blockade. But we do know that that some of the mediators, we assume among them certainly Pakistan, maybe also Qatar, have been proposing to Iran that they get back around the table. Perhaps a 10-day ceasefire has also been mentioned. We also know that Iran's interior minister, who's previously been involved in shuttling between capitals on the issue of the war, was dispatched yesterday to Pakistan, ostensibly to discuss bilateral issues, but I think everyone expects that those talks would also cover the war. So it does seem that there's some kind of movement, but it's worth bearing in mind that the thing they're aiming for right now is simply a very brief ceasefire. It's not even as ambitious as returning to the status quo at the time of the MOU back in June, let alone looking for a more permanent resolution to the conflict and the underlying reasons. So very modest expectations, and for now, even that appearing elusive.
Okay, Patrick, thank you very much. That's Bloomberg Middle East breaking news editor Patrick Sykes. Now, turning to the UK, because we are going to be keeping a firm eye on gilts at the open after yields rose on comments from UK Prime Minister Andy Burnham saying that he's looking for flexibility in the fiscal rules. The new Chancellor, John Healey, later described fiscal credibility as the bedrock for economic stability after his appointment. Let's bring in Ven Ram, cross-asset strategist at Bloomberg MLive. Ven, good morning. So I do wonder whether Healey's appointment is enough to calm the market. He's being presented to us as a safe pair of hands with Treasury experience to boot.
Morning, Lizzie. I don't think gilts are out of the woods yet. Yes, Healey is a well-known name in Treasury circles. He was a junior finance secretary back in the days of Gordon Brown's cabinet. So he knows how the fiscal rules work, and he also vowed allegiance to the fiscal. He said fiscal rules, saying that fiscal control is the first operator for any chancellor, and that he will certainly hew to that. But even at the same breath, he also mentioned that he will meet increased defence commitments, the UK's increased defence commitments to its international allies. So, on the one hand, he says that fiscal supremacy is what matters, but on the other hand, he says that he wants to increase defence spending. Investors will need to see how that plays out. And because he's a seasoned campaigner in the finance chambers, I don't think we are in a situation where it's going to be a repeat of the Liz Truss episode. But all the same, we've got an experienced pilot in the cockpit. Whether or not that means a turbulent ride, only time will tell.
I'm sure the ex-Defence Secretary will enjoy that analogy. Ven, I'm just seeing lines crossing the terminal saying that the UK government is going to remove VAT from electricity bills from the 1st of October. Of course, we're expecting an announcement on cost of living support today. I wonder how much leeway the bond vigilantes are going to give this Burnham government when it comes to cost of living support, but also more broadly when it comes to spending. How much gilt nervousness do you expect this week and beyond?
Oh, there is going to be a fair bit of gilt nervousness, Lizzie, because if you look at the 10-year yield, we popped above 5% yesterday. Now, 5% we have seen briefly earlier this year. But really, it was a routine occurrence only before the global financial crisis. So a 5% yield is pretty significant. How significant is it? Now, if you fully swap out the gilt cash flows into, say, the euro, you will get a comparable yield of 3.4%. That is fully 25 basis points above what you get on 10-year German bonds. So that is a price discount that investors have slapped on gilts, and that shows that investors are not a willing partner if the government starts experimenting with its fiscal rules.
OK, well, we're not seeing a discernible move in the pound off the back of this announcement, Ven, but the statement from the government saying that any further action, including on funding for longer-term measures, will be taken at the budget alongside an OBR forecast, the Office for Budget Responsibility. All decisions at that point will continue to be funded and also consistent with the government's fiscal rules. For now, Ven Ram, Bloomberg MLive strategist, appreciate your analysis this morning. And we're going to talk a lot more about UK politics later on in the programme. Still ahead, we'll head live to the Farnborough Air Show to look ahead to our interviews throughout the day as defence spending takes centre stage. But first, the Trump administration threatens new 50% tariffs on Canadian imports. So we'll get you all the details next. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Turning to the tariff story now, the US says that it'll impose a fresh 50% levy on some Canadian goods, alleging that Canada has been treating American cars, alcohol and dairy unfairly. The duties are due to take effect in 30 days and would mark one of the most severe trade actions taken by President Trump against the US's second largest trading partner. Let's get some analysis now. We can speak to Bloomberg's Rosalind Matheson. Ros, good morning. I have to wonder whether these are just another of President Trump's threats that he'll later pull back on. What's the legal basis for these new tariffs?
Well, that's right. That's probably the big question that will inform the Canadian response, is to wait and see, is this indeed something that the US will follow through on? Because there's also this talk about potential tariffs because of Canadian wildfire smoke, which has been blowing across the US. But this is being done, according to the US, under a section of the 1930 Tariff Act. And this would allow the US president to impose duties of up to 50% for countries that they say are discriminating against the US. And this is not an act or a provision that's been used before in this fashion. So it is untested also in that space. But it shows how much the US administration is trying to rebuild the tariff regime of Donald Trump using any and all mechanisms possible. And it does raise those questions again about, is this untested and what might it mean in the court of law as well if it does get enacted, and will indeed the US administration proceed? But it comes against that backdrop of uncertainty about the overall trade agreement between not just the US and Canada, but the US, Canada and Mexico, which the US has said it's not going to extend, and that's setting up years potentially of contentious negotiations. It puts that deal on a rolling basis only. So certainly the sense from the US, they're trying to keep that pressure up on Canada on a whole kind of different array of ways when it comes to the trade relationship.
And Mark Carney's not going to like this tariff on hockey goods, is he? What's been the response from Mark Carney?
Well, Mark Carney is used to these tension points right now because there's been so many under the latest Trump administration, and the friction particularly between the US and Canada. So you can imagine them probably taking a pause on this. Of course, they wouldn't like it, but it would represent a pretty small percentage of the overall trade relationship, the bilateral trade relationship between the US and Canada. So that might be a factor in Canada's thinking. Also, again, is the potential for the US to reverse course before it takes place. And you can see that really in the response so far from Mark Carney, which is to say, in his perspective, Canada has simply matched what he calls unilateral US actions against Canada. He says at the same time, we proposed a bunch of solutions to these trade tensions, and we're very willing to keep talking about those. So keeping the door open to negotiations. And certainly from the Canadian perspective, they've been here before a number of times. Sometimes they've followed through from the US, sometimes they haven't. So they perhaps just want to sit back and see, is this going to play out the way that the US says it will? And they've got 30 days to find out.
OK, Ros, thank you very much. That's Bloomberg's Ros Matheson. And coming up on the programme, we're going to turn to another aspect of trade tensions. This after the French president has warned that Europe is facing an aggressive trade war. this one from China. More on that next. This is Bloomberg.
Up to the minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. July 30th. The Bank of England makes its next interest rate decision, and investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Inflation is higher than we expected. Of course, now what we've got to do is get it back to 2%.
Join the opening trade team for live market reaction and analysis and on-the-ground coverage at the Bank of England. It all starts July 30th, 12:30 p.m., only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, a delegation from the European Parliament is heading to China for talks expected to be dominated by these growing tensions over trade. The visit comes after the French president warned that Europe's facing an aggressive trade war from China. Let's get more now with our Bloomberg Chief Europe correspondent, Oliver Crook. Ollie, joining us from Brussels. Just give us the perspective where you are. How bad is the situation for Europe?
It's getting to a point, I think, where people cannot ignore it anymore. And you've had some willingness to ignore it, particularly from the Germans, because the relationship economically between Germany and China has been so important. But that is sort of dwindling away. So there are a few categories of activity that the Europeans are now putting into focus. Of course, the main one is just the general trade balance. This is something that we've heard repeatedly from the Europeans. But they can't put just that into relief, right? Because that is exactly the sort of basis upon which the United States has been upset with the European Union, because they have an imbalance in terms of trades of goods. But you see it on the screen there, the relationship between the EU and China. You've only seen that deficit between the EU and China really blow out over the last couple of years. But the real criticism that the EU has towards the Chinese is not just that trade balance, it's the way in which it has been achieved. And again, we hear about the trade subsidies that the state gives to the Chinese enterprises back at home, and that sort of unfairness in that trading system. But it's something that the Europeans have really been basically unable to address. There's also been some comments recently, more and more, from Friedrich Merz, someone who has not been quite as hawkish, talking about monetary policy in China and the artificially depressed value of the yuan. So these are conversations that are getting louder and louder. And just, Lizzie, to illustrate kind of the scale of this and how much it's hurting the Europeans, you look at the trade deficit, the trading relationship between the Europeans and China. That's about 900 billion euros. The trade deficit now between the EU and China is 360 billion euros. So we're talking about a deficit that is effectively $1 billion billion a day. The uncomfortable part, I think, for the Europeans is that, yes, part of it is because the Chinese are subsidizing their companies. Yes, some of it is about the unfair side of things. But the Chinese have just been very, very effective at dominating a lot of the industries that have been very important to the Europeans and a lot of the industries of tomorrow, whether it's solar panels, whether it's batteries, and of course the all-important electric vehicles, which has been one of the main concerns for the Europeans. And that is one place where they did manage to get some action. You'll remember they did put some tariffs on some of those EVs coming from China, but that is not sort of dissipating their influence. You can see them obviously more and more on the streets, and that is a trend you're going to continue to see here in Europe.
Well, yeah, what else can the EU actually really do? Can they club together to do something, or is the whole exercise just going to be another display of weakness between the bloc?
Well, that's the big question, Lizzie. I mean, there are a lot of things that they can theoretically do. The question is, what will they actually do? But as we've been reporting actually in the last couple of weeks and months, it seems that the Germans now are slightly shifting their tone in terms of willingness to potentially look at the Chinese threat a little bit more actively. I mean, we have Emmanuel Macron. He's spoken often very aggressively and very sort of more hawkishly about the threat that's posed by China, but it's a little bit easier for him to do that because his country is not as dependent on China. That being said, Lizzie, I mean, we're talking about that trade deficit between the EU and China. The trade deficit between just Germany and China is $90 billion. If you go back to 2019, so just before the pandemic, right before the sort of normal period was in this sort of before this new paradigm, that was $14 billion. So that is something that the Germans cannot ignore anymore. So what they could do is, of course, if they look at additional sort of tariff measures. But the main problem, Lizzie, as ever, is yes, there's a question of political consensus, but it's also about moving fast. Even when the Europeans decided they needed to do something about EVs, it took them a full year to do their investigation and to put those in place. When Joe Biden wanted to do it, he basically came out, he said, listen, we're putting in 100% tariffs, and that's just the way it's going to be. And of course, the other thing that everyone is sensitive to, Lizzie, not just the Europeans, is the stranglehold that the Chinese have on critical raw materials, the stranglehold they have on some of the companies, and that's going to be sort of weighing in the balance. So listen, you have that parliamentary delegation in China today. I don't expect a whole lot from that, but it's really going to be down to the leader levels, how much pain they're willing to exert in order to get that rebalance with that relationship with China.
OK, really helpful charts there. Ollie, thank you so much for your reporting. That's our Bloomberg Chief Europe correspondent, Oliver Crook, out of Brussels. Now let's turn to some other top stories we're following for you around the world this morning. The EU has fined Alibaba's e-commerce service a record €550 million for failing to adequately police illegal, unsafe and counterfeit products on the platform. The European Commission says AliExpress did not do enough to remove repeat offenders or to enforce its own penalties. Alibaba says it's surprised by what it calls a disproportionate fine and is planning to appeal. Elsewhere, we'll be keeping an eye on Swatch at the Open after the Swiss watchmaker reported earnings that missed estimates by quite some margin. First half operating profit came in at 52 million Swiss francs versus expectations of more than 131 million. Swatch has blamed negative currency effects and the fact that it had maintained jobs without cutting pay for reduced hours. And the US Defense Secretary, Pete Hegseth, is set to testify before lawmakers for the first time in more than 2 months to defend the Trump administration's request for billions of dollars in additional money for the Iran war. Hegseth is also expected to address growing scepticism among lawmakers about the course of the conflict and to face questions about the apparent collapse of the US ceasefire with Iran. And staying in the US, a group of 12 US states have sued Paramount Skydance, seeking to block its $110 billion bid to buy Warner Brothers. The antitrust lawsuit alleges that the deal would harm competition for film distribution, and Paramount Skydance says it'll defend the transaction in court. Well, those are some of our top stories from around the world. But next up, we're going to zoom in on the UK. We'll have a look at what to expect from Andy Burnham's new top team with politics professor Tim Bale. That conversation coming up next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The US launches another wave of strikes on Iran as President Trump vows to make Tehran pay for the deaths of US troops. But oil holds steady as mediators continue to seek de-escalation. A surprise choice for UK Chancellor as former Defence Secretary John Healey heads for the Treasury, the new government pledging more support for the cost of living. And expectations for increased defence spending take centre stage at the Farnborough Air Show. We'll be speaking to industry leaders throughout the day. A very good morning if you are just joining us. It is Tuesday, it is 6:30 a.m. here in London, and we've got politics, geopolitics and tariff news all in the mix today. But for stocks, the focus is very much on tech. The MSCI Asia Pacific Index up 2.3%, boosted by the likes of the Kospi, up 3.5% now. So that's pairing some of its earlier gains. But these are the first gains for Asian stocks as a whole in 4 days as investors buy back into chips. That is feeding over to the stateside picture. Futures up 0.4% for S&P E-minis, up 1% almost for Nasdaq futures. But here in Europe, of course, we have less exposure to tech. So Europe soft 50 futures are down 0.2% currently, so looking for a lower start. FTSE futures also down 0.7% as things stand. Flip cross asset, we can perhaps see why. We've got Brent down 0.7% at $88 a barrel. Of course, the UK exposed to the energy names, but that was giving support perhaps to broader stocks this morning. We had seen a 2-day gain as traders weigh the Middle East outlook, but Brent here trading at $88.60 the barrel. Goldman says it could top 120 if the Hormuz disruptions persist. Yields on the 10-year pretty steady at 4.58, and we're also, of course, keeping a firm eye on UK assets this morning. $1.34 is where we trade right now on the pound. We haven't seen much reaction to that news that we brought to you earlier on in the hour, which is that the UK government's going to remove VAT from electricity bills from October the 1st. Of course, we're waiting for more announcements on the cost of living out of the UK government, the new UK government, later on today, and we'll dive into all of that again in just a moment. Time now, though, for your front page news, and we'll kick off, shall we, with the Financial Times. It leads on Andy Burnham's surprise decision to appoint John Healey as Chancellor. The paper saying that his appointment may come with a hefty price tag, given his demands to spend 3% of GDP on defence. And you'll remember that the FT had reported Shabana Mahmood was the front-runner to become the Chancellor. So a big surprise there for Westminster and the markets. But meanwhile, if we look over to the Telegraph, they say that Burnham's pinning his hopes on Chancellor Healey and that his return to Cabinet has been welcomed by military chiefs as well. Let's also flip over to the Wall Street Journal. It reports on warnings from top executives from OpenAI and Anthropic about cheap AI models from China. But you can get a roundup of all the stories you need to know to get your day going, as ever, in today's edition of Daybreak. And that newsletter is available to terminal subscribers at DAYB Go. Now turning back to the UK, Andy Burnham has named former Defence Secretary John Healey, as we say, as the Chancellor of the Exchequer. And speaking outside 10 Downing Street, the new Prime Minister pledged more changes are to come.
We will make this moment a circuit breaker
for Britain, bringing forward the biggest changes in the last 40 years. A new political model and a new economic model.
Let's get some analysis now. We can speak to Tim Bale, Professor of Politics at Queen Mary University of London. Tim, always good to have you on the programme, so thanks so much for joining us early. What do you make of John Healey as Chancellor? Is he a safe pair of hands? Were you surprised?
I think I was surprised, like most people, but I think you're right to suggest that he is the ultimate safe pair of hands. It's an interesting one, given that he resigned from Starmer's government over the defence budget. It's clear that as Chancellor, he will have to make more room to fund that if he is to keep up with what he wanted when he was Defence Secretary. He is someone who commands a degree of respect right across the party from left to right. Which is important. I think he is, on the same page economically and indeed ideologically as Andy Burnham. And obviously a Prime Minister and a Chancellor have to work together in harness. So I think that's a good move. And also in some ways, he's not that familiar a face to people who don't pay that much attention to politics. And given that Andy Burnham needs to signal a big break with the previous Starmer administration, appointing someone who isn't that familiar to people and who resigned from the Starmer government strikes me as a good way of symbolising that break.
Yeah, I've interviewed him a few times. He's definitely a veteran, someone who gets on with the job quietly. I'd agree with that. I wonder, given that he obviously is going to have to find the money to pay for defence spending, given, as you say, that's what he quit over, does it bode well for the UK relationship with Trump under Burnham?
Whether you can ever spend as much as Donald Trump would like you to spend on defence, I think, is a moot point. Clearly, it's already been the case that the Prime Minister has phoned President Trump. So presumably that is the start of the attempt to calm and charm the US president. Whether that will work and whether John Healey as Chancellor and spending more money on defence will actually help that relationship, I think is anyone's guess, to be honest. This is someone in the White House who is so erratic and so difficult to please that one wonders whether any country can do enough for him.
Yeah, Trump invited to Manchester. We'll see when that date is put in the diary. But look, just speaking of the cabinet appointments, there seem to have been a lot of jobs for Northerners, people that have been in close geographical proximity to Andy Burnham when he was Mayor of Manchester. Are we starting already to see the factionalism that Burnham said he would get rid of?
I'm not so sure that is the case. I mean, you are right to say that many of the people appointed are from the north, but I'm not sure that most people in the UK will make up their mind about the government based on the accents of the people who are there. I think it will come down more to whether they can actually deliver, to be honest. And I think, when you look at that, if you look at the fact that Yvette Cooper has moved from one of the great offices of state, the Foreign Office, to health. That in some ways is a demotion, but it also, I think, speaks to the fact that the National Health Service, improvements in the National Health Service and getting health spending right is going to be absolutely crucial to Labour's chances of re-election.
Do you think that Burnham really gets how sensitive the bond vigilantes are? Already yesterday, he provoked the bond market with those comments about finding flexibility within the fiscal rules.
Listen, I think Burnham, like many economists friendly to the Labour Party, realise that the bond market is a constraint. But I think they also realise that as far as the bond market is concerned, the key thing is really that spending doesn't get out of control and that it is also matched by attempts to raise additional revenue in order to match it so the government doesn't have to borrow too much in the first place. He has hinted, and he did so in his speech on the steps of Downing Street and also in an interview he gave to another media outlet, that he's thinking of raising taxes, or he may have to raise taxes in the kind of medium term. I think as long as the government actually funds its spending, then probably, and I'm not a bond market vigilante, probably the bond markets will be reasonably satisfied with that.
Well, can he get away with that politically?
Yeah, I mean, I think it depends on how he structures any increase in taxation. Clearly, he's not going to go for the classic income tax or VAT. He's not going, I think, to pile more taxes on employers because that's seen as counterproductive for growth. He might go for some wealth taxes, and there is some room for that, although it shouldn't be too dramatic. So I think politically he can sell that to people, but it does depend on whether the money he raises actually looks as if it's improving services which people rely on in their everyday lives, and the NHS is the most obvious one of those. So any money that he raises has to be seen as improving people's lives. And I think the announcement this morning of a cut to VAT on people's electricity bills is a good example of that, because he is able to say he's using the money from getting rid of the digital ID card initiative to fund the reduction in VAT. So in some ways, as long as what he does is balanced by something else, then politically that will seem to make sense to most voters.
OK, Tim, really appreciate your analysis this morning. That's Tim Bale, Professor of Politics at Queen Mary University of London. Now, the UK Prime Minister has fuelled speculation about a bigger increase in military spending, as we've been discussing, with that new Chancellor pick. And it comes as UK government bonds dropped after Burnham unnerved investors on his first day in the job over his approach to the country's finances. So let's get more now with Matt Bunny, UK economist for Bloomberg Economics, and also Tim Craighead, Research Director here at Bloomberg Intelligence. Morning to you both. Matt, I'm going to start with you. What do you read into Burnham picking the ex-Defence Secretary as Chancellor? Is more Defence Secretary really going to help grow the economy when we already know it doesn't have as high a multiplier effect as other fiscal levers that he could pull?
So the pick of Healey was a surprise to markets. Expectations had really coalesced around Shabana Mahmood. And we don't actually know a great deal about John Healey's position on economic policy. I mean, beyond the fact that he's likely to push for higher defence spending. So what does this all mean? We know he's likely to stick to the same set of fiscal rules that we saw under Rachel Reeves. So there's not a huge amount of wiggle room there. And in terms of the actual levers he can pull, this is an important question for markets now, is will defence spending crowd out other potentially more fruitful spending that will boost growth by more? So they really have a tightrope to walk here in terms of delivering on growth as well as delivering on Burnham's policy priorities.
Well, Tim, we had Burnham telling the NATO Secretary-General Mark Rutte that Healey's appointment as Chancellor was a signal of his intent on defence. I wonder how much impact that could have on defence stocks at the open, the likes of BAE Systems and indeed beyond today, longer term.
Yeah, it's pretty interesting. If you think back a couple of weeks ago, the Defence Investment Program, the DIP, was announced, and it was underfunded. That was the issue with him.
That's why he quit. Yeah.
Exactly. And that was targeted at 2.6% of GDP in a couple of years. That takes the UK, if that were to stand, to far behind several other European countries. So, we would expect to see something better. A couple of things that go into this from the standpoint of the defense stocks. Number one, BAE is certainly in the focus here. They are a prime contractor on several programs that should be playing into the defense budget, whether it's submarines, whether it's the new 6th generation fighter. There's a couple of, ships that feed into the program. This is all good news if there's more money to be spent. I think the key thing, though, and it goes on to the larger European defense establishment, is can this government, along with those in the continent, actually start to coordinate and collaborate more to get more bang for the buck? And can they spend more money within the European region? Certainly, if that happens, BAE is a prime beneficiary. If they're only buying more kit and they're getting it from U.S. defense primes, that's not helpful. And that's the issue about the lack of a multiplier effect. If it can be steered here, that's a good thing.
But that's certainly a point that Healy had been making as Defence Secretary, that you should try and keep it at home. Interesting to see JP Morgan seeing Babcock as a potential winner here because it's had a year-to-date sell-off. Also noting Kinetic as an enabler, in their words, of new technology deployment. Matt, I want to come back to come to you on a point that Tim Bale was discussing. Andy Burnham talking about finding flexibility within the fiscal rules. Is there any?
So by committing to the fiscal rules that Rachel Reeves had in operation, as well as Labor's manifesto commitment on tax, there's not a great deal of wiggle room for Burnham and Healy, but there is some. So effectively, because of the definition of debt under the current fiscal rules, Burnham and Healy will be able to boost lending via public corporations to help support investment. I guess the caveat here is that there needs to be credible guardrails for markets in order to not receive this negatively. So they're going to want to see a growth dividend from that lending. And indeed, the market jitters we saw yesterday in response to Burnham's comments that he will be seeking flexibility within the fiscal rules really underscores that Burnham and Healy are going to have to earn credibility in the eyes of markets.
Well, we saw rate-sensitive sectors like the home builders falling yesterday, even though Burnham says he wants to do lots on house building. Tim, this is another interesting sector as the Burnham government pans out. Is there a longer-term upside for housing stocks?
We would certainly hope so, but it seems to be emphasizing the word longer term.
Mm-hmm.
We actually have two negative focus ideas on the housing-related sector right now. One is Taylor Wimpey, one is Travis Perkins. Different elements, one's a builder, one's a supplier, but it all feeds into the issue of the current housing market, housing activity is quite weak, and we think disappointments are ahead. And a lot of it boils down to where interest rates currently are. It'll be interesting to see if there are policies to spur activity, if there's policies, there's discussion about what happens with the wealth tax, what happens with local property tax, things along those lines that might spur activity back into the marketplace.
Yeah, and these cost of living measures, the impact on inflation as well. Tim, really great to get your analysis. Yours too, Matt. Matt Bunny, UK economist for Bloomberg Economics, and Tim Craighead, Research Director at Bloomberg Intelligence. Thank you both very much. Well, coming up, we'll stay on that subject of defence, very much in focus at the Farnborough Air Show. We'll be going live there next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We still see a very strong demand for our products. We have a backlog of more than 9,200 aircraft, and we continue to get fresh orders for our short distance aircraft, for the long-range aircraft. The Middle East crisis is actually fueling some demand because price of oil is very high and fuel-efficient aircraft are in more demand.
The Airbus CEO Guillaume Faury speaking to Bloomberg's Guy Johnson at the Farnborough International Air Show. And we can go now to Guy, who's still in Farnborough for us. So, Guy, good morning. What else did Guillaume Faury say to you?
So the big question here at this show, Lizzie, is one that nobody really knows the answer to yet, and that is, when does Guillaume Faury and Kelly Ortberg over at Boeing make a decision on when the next aircraft program is going to start? He was talking there about the significant order book he has, particularly for narrow-body aircraft, the A320, which Airbus makes. That's something that I think at the moment he's very proud of and is a huge anchor for Airbus. But at some point, that aircraft is going to become too old, and he is going to have to make a decision on when he launches a new version of that aircraft. It's even more pressing for Boeing, but Boeing are pushing it later into the decade, next decade, as to when they're going to make that decision. They have to get the finances in order. So the question everybody's asking themselves here at Farnborough is, when does that decision get made, and what does the next generation of aircraft actually look like? Will it look like kind of the aircraft that we're all used to right now, traditional jet engines, or will it be a radical departure? And this debate is becoming increasingly live, and it's a huge bet for Boeing and Airbus. It is a huge bet in terms of the balance sheet for investors as to what they're going to do here. They have to commit huge amounts of capital to this decision. This is the workhorse of the global aviation fleet, so they've got to get it right. They've got to get the timing right. The customers have got to want it. Passengers have got to be comfortable with the next generation of airplane. But that debate really has started for the first time, I think, here at this show, and it's going to be one that really, I think, investors watch very carefully over the next few years, Lizzie.
And fascinating that you've got to speak to both of those companies while you've been on the ground there, Guy. I also have to ask you what the word on the street is about Healey, John Healey, moving from defence to the Treasury.
Well, it came quite late yesterday, so most people here probably would have only absorbed that information quite late in the day. I'm talking to Leonardo, the CEO of Leonardo, very, very shortly, one of the big European defence companies. I'm definitely going to get his take on what this decision is likely to mean, whether or not the UK is prepared to increase the commitment to defence spending. Healey wanted 3.3 and then 3.5. The Treasury only wanted 2.7% of GDP. Are we going to see a benefit coming through not only for UK defence companies? You mentioned Babcock earlier on. You were talking about BAE Systems, but the wider European defence ecosystem, I think, is going to be watching this decision very carefully. A strong commitment from the UK on defence spending will certainly go down very well. But it's not just the money; it's the need and the desire to coordinate. Will the UK work with others? Will it coordinate with others? Will it enhance that process of working with not only UK defence companies but a whole range of European defence companies, and making that kind of, as you were saying earlier, getting that bigger bang for the buck? And so it's not just about the money, it's about that kind of political commitment, that industrial commitment to make this work.
Guy, thanks so much for your reporting. That's been Guy Johnson at the Farnborough Air Show. And Guy will have plenty more conversations throughout the day with industry leaders, including, as he says, the CEOs of Leonardo as well as GE Aerospace. Stay with us for more on Daybreak Europe. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support.
No lectern, no notes. That was the new UK Prime Minister Andy Burnham speaking after taking office yesterday. And here has been the gilt market reaction. More to do with his comments on finding flexibility within the fiscal rules than to do with his appointment of John Healey, ex-Defence Secretary, as Chancellor of the Exchequer, as we have been discussing throughout the programme. But of course, we're going to get the zone flooded by policy announcements over the next 10 days, starting with announcements on the cost of living today. So we could continue to see nervousness in this gilt market. Flip the board over. And of course, the cost of living is largely to do with external factors. Oil prices, and this just shows how much the traffic through the Strait of Hormuz has been slowing because of the escalating tensions between the US and Iran. I'm sure they'll discuss that next on the opening trade. Anna and Tom will take you all the way to the open. This is Bloomberg.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of
making it seamless online to store.
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. It is Tuesday, July the 21st. Here's what's on the agenda. A surprise pick for UK Chancellor signals stepped up military spending. The US strikes Iran for a 10th straight day as Houthi militants threaten to blockade Saudi Arabia. And defence in focus at the Farnborough Air Show. We will bring you interviews with the CEOs of Hensoldt and Leonardo.
So, Tom, as defence runs really prominently through this programme, let's have a look at what's been going on in the Middle East and how that's been impacting on markets. This is the Brent price then for this morning, 88.43. So this is lower than it was this time yesterday. We were talking about $90 a barrel. It is down overnight, down by 0.9%, but it hasn't dropped all that far on the talk of what mediators might be able to do to try to step in here. MSCI Asia Pacific then giving us the really positive story that we're seeing through Asia. We saw actually some of the semi-trading over in the US, despite the Nasdaq ending pretty flat. The semis index, the SOX was up. And so we see some of that being reflected in some strength coming through for Asia tech. It's not just what's going on in Korea, it's plenty of other tech narratives through the Asia session coming in pretty strongly. And Euro Stoxx 50 futures, with all of that in mind, pretty flat this Tuesday morning. The countdown to the opening trade starts right now.
Well, the new Prime Minister, Andy Burnham, had promised, and his team had promised, a flurry of announcements. We're getting those. We're going to get cuts to electricity and energy bills coming through for the UK. And, of course, this on the back of the announcement that did come as a surprise to the political watchers here in the UK, which is John Healey, the former Defence Minister, taking over as UK Chancellor. Anna, someone who does have experience at the Treasury back between 2002, 2007 as a junior minister, but arguably more important for the markets, someone who obviously and notably and famously quit under Keir Starmer's government because he was dissatisfied with the commitments the Treasury is making to fund defence. So how much is he going to lean into that? How much defence spending, additional defence spending, and how are they going to fund that?
Yeah, absolutely. What does this mean for defence spending? And the suggestion is that he wouldn't have taken this job if he wasn't confident that he'd be able to get more defence spending, because that's, as you say, what he quit over very, very recently. So does this mean war bonds? And that's been the talk in the markets for some time. We will see whether that is something that is being considered by the Treasury. What does it mean for reform at the Treasury as well? Because this is somebody who, in a different department, has very prominently come up against the Treasury and described them as a block on growth. And so we do need to think about it in a sort of longer term, the way the Treasury operates, the way the Treasury relates to the rest of government. I think that's going to be really important. When you don't have many other fiscal levers to pull, maybe that kind of initiative might be appealing. And if we're going to see, if we don't know if we'll see war bonds, but if we are seeing that kind of thinking taking place, what does that mean for other off-balance sheet structures? Is that something that this government will dare to think about the day after we saw gilt yields up by 8 basis points?
Is it using infrastructure like the National Wealth Fund, for example? Is that the mechanism that they use to push through additional spending? Of course, the moves 8 basis points higher in gilt yields yesterday on the back of the new Prime Minister's comments around looking for any flexibility. So, yes, this is a Chancellor who is seen by many as a safe pair of hands at the helm of the Treasury, and someone who was seen by investors as the second best choice, at least in our survey. But there clearly will be a focus on any additional spend at a time, again, of policy announcements already from this new government around cutting taxes on energy bills to try to support households and try to alleviate some of the pressure on them. How you fund all of this with the current defence spending plan already seeing a £4.7 billion hole that needs to be filled.
So the defence question is a valid one and still pending. The cost of living action they've taken today, this is about VAT, as you said, taking that 5% VAT charge off energy bills. Important to note that they have said how they will fund that. And so that is, they've said that they're going to scrap the digital ID scheme. And so as a result of that, that's what they will use to fund that. As we're talking about the UK, Tom, let's just dive into some of the data that we're getting out on the UK. The unemployment rate over the past 3 months is coming at 4.9%. That's entirely in line with estimates and entirely in line with the prior number. Average weekly earnings, I can see that has come in with an increase of 4.3%. The survey was 4.5, actually, so that wage story a little bit weaker than had been expected. So we will keep that in mind. Let's turn to the Middle East and what's happening in the Middle East with regards to the US and Iran. We've seen, as you say, a 10th day of tit-for-tat attacks taking place. Now, what does this do to oil prices? Well, we were about $80 a barrel yesterday. We're now at 88, but that's really around these lines that have been percolating for the past 24 hours, that mediators have been reaching out, have been trying to talk to Iran about a way to bring things back to the talking table. And really, that's what matters here, isn't it? It's whether these two sides, if there's anything still salvageable from the MOU, can they try and get back to the table to talk about that? Goldman Sachs, in the meantime, out with some research saying, yes, we're at 88 now. Their base case for the fourth quarter is $80 a barrel. But they do see, if we don't reopen the strait, that this could go to $120 a barrel.
Which is why it's so important to watch what happens in terms of Qatar and Pakistan, who are the intermediaries, of course, in terms of whether they secure what some are suggesting is a 10-day pause in fighting to try and reset communications between Tehran and Washington, as, of course, the flows through the strait remain heavily restricted. So we had been leading into this week looking at potential escalation, 10 straight days of attacks, but now suggestions that possibly there is an attempt at mediation, whilst the Houthis in Yemen threaten a blockade of Saudi Arabia, to which Saudi Arabia says they will defend shipping in the Red Sea.
And all of that adds up to a bit of an uptick in volatility around oil prices. So we're not back at levels that we saw when this war started, obviously, but we have seen a bit of an uptick in volatility. Is that going to be something that sticks to stocks? Well, so far, the stocks narrative, or recently, the stocks narrative has almost entirely decoupled globally from what's going on in the Middle East. Even if in Europe we remain firmly fixed on these Middle East developments.
Currently, oil prices down on Brent, now 0.9% at $88 a barrel, $82 a barrel on WTI. We've been talking about defence in focus here in the UK. Also in the UK, what is happening in Farnborough at the Farnborough International Air Show, continuing for its second day, and defence is certainly a key thread there. Let's bring in Guy Johnson, who, of course, is on the ground for us at the air show. Guy, what are you expecting today from the event?
I think some reaction, Tom, to the stories you've just been talking to. So let's kind of break it down a little bit. I think the John Healey story will certainly be a big topic of discussion here. Will the UK step up in terms of its commitment to defence spending? There's a kind of second part to that, which is, will the UK as well, with Wes Streeting at the Ministry of Defence, also be easier to work with in terms of partnerships? Europe, as we know, has limited resources. Partnerships are going to be pivotal. How do you make those work? How do you get a bigger bang for your buck? I think these are all key questions. It looks like the UK is going to spend more money on defence. How does it spend that money better, I think, is also a key question that I think a lot of people are going to be talking about here. The other thing continues to be this oil price story. I was talking to Guillaume Faury yesterday, the Airbus CEO. He continues to push this line, and I think it's a fairly solid one, that airlines with higher oil prices and greater volatility around oil prices are going to want the latest, most fuel-efficient aircraft that they can fly. That will be the differentiator in terms of their business models. We heard from Ryanair yesterday. So those two topics, I think, that you guys have already discussed, I think are definitely going to be folded in here. We've got some great guests lined up. Leonardo is one of the big European primes, I guess you would call them, in the defence space. And we're going to be talking to its new CEO. He's only been in post for 10 weeks. It's going to be really fascinating to get his lie of the land. Europe needs to figure out a better way of working together, particularly on issues like the next generation of fighter aircraft. He's deeply involved in that process. How does Europe get together, work better together, I think is a key question we're going to be asking him. We'll talk to GE later. We'll talk about the next generation of engines. It's going to be another fascinating day here at Farnborough.
OK, Guy Johnson at the Farnborough International Air Show. And as Guy said, we will be speaking to global defence leaders, of course, throughout the day at Farnborough. Lorenzo Mariani, Leonardo's CEO, Orlando Sanchez, Lockheed Martin Aeronautics President, Lawrence Culp, GE Aerospace Chairman and CEO. So some fantastic names as well, conversations, as Guy was saying, throughout the day with that focus on defence.
Yeah, absolutely. So those are the voices we'll be hearing from the air show. Away from that event, we will be also having plenty of markets conversations, of course. During the programme, Maria Manucci, M&G Investments Multi-Asset Fund Manager, will be with us. Max Kettner, HSBC Chief Multi-Asset Strategist. And, of course, still on the subject of defence, but here in studio, we'll be talking to Oliver Dure, who is the Hensoldt CEO.
OK, let's look ahead to what else we are watching throughout this Tuesday. The ASEAN Foreign Ministers meeting will take place in Manila. We'll keep across that for you. The European Parliament delegation visits China at a moment of increased tension when it comes to trade, particularly exports from China into the European Union. So we'll watch that as well. 9 a.m. UK time, the ECB's July bank lending survey will come out at 10 a.m. UK time. Germany's July ZEW survey expectations will be published. And later, US Defence Secretary Pete Hegseth will testify before lawmakers stateside over the Iran war costs.
Coming up on the programme, we'll look at the stocks to watch at the Open. Novartis is reporting numbers today. The Swiss drug maker reporting a beat on sales and on profits. Plus, the Trump administration reignites its trade fight with Canada, vowing 50% levies on some imports from their northern neighbour. We will have details of that. Up next, Burnham's surprise choice for Chancellor. We will discuss what John Healey's appointment will mean for markets and the fiscal challenges ahead. If you have questions, please get involved in these conversations. IB plus BBTV Go is the function on.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
this moment a circuit breaker for Britain, bringing forward the biggest changes in the last 40 years. A new political model and a new economic model.
New economic model. Britain's new Prime Minister, Andy Burnham, speaking outside number 10 Downing Street just yesterday, of course. We'll be watching gilts at the market open after yields rose on the comments from Andy Burnham saying that he's looking for flexibility in the fiscal rules. The new Chancellor, John Healey, later described fiscal credibility as the bedrock for economic stability after his appointment. Let's bring in Daybreak Europe anchor Lizzie Burden, who was in Downing Street yesterday witnessing all of this unfold. And important to say, as we sort of alluded to there, that the John Healey appointment came after the gilt market closed. So I guess that's what we're looking ahead to. Talk us through this appointment then of John Healey as Chancellor.
Well, yeah, it was a big surprise given that the front-runner had been seen as Shabana Mahmood, the Home Secretary who stays in that position. I've interviewed Healey several times as Defence Secretary, and he's seen as an old head, a veteran, someone who gets on with the job quietly and loyally. So you can see why Burnham's picked him. Remember, you talked about it, he quit Defence over what he perceived as inadequate funding, and so him being appointed as Chancellor is seen as a signal of intent on that front, and indeed those are the words used by Burnham in his call with the NATO Secretary-General. In terms of the market reaction, as you say, it was more about the fiscal flexibility comments from Burnham himself rather than a reaction to Healey. But I would expect that gilt nervousness to continue because they're going to be flooding the zone, the Burnham team, now over the next 10 days with policy announcements. Today it's all about the cost of living. You've already been pointing out the announcement on cutting the 5% tax on electricity bills. That comes in from October. But I think what's notable about that is that they're taking money from the scrapped ID card scheme and using it to fund the cost of living, the breathing space. And maybe that's symbolic of the approach that will be taken going forward, and maybe it shows that they're going to focus on weighing on prices rather than lifting incomes when trying to give that breathing space going forward.
So that's the domestic story, and that is an area where arguably the new Prime Minister has a lot more experience than international affairs and foreign affairs. His first call was to President Trump, as you would expect, our closest, most important, at least military and security ally. How did that conversation go? What came through? Trump is notably a challenging ally to interact with from the UK's perspective.
Well, he's been invited to Manchester, Tom, of all places. Look,
did he accept?
We'll have to see. He did say that they'd be meeting in the not-too-distant future, that they had a very good conversation, and that bodes well, doesn't it? Because, as you say, it really isn't a crucial relationship for Burnham to get right, and he doesn't have diplomatic or defence experience. So he needs to build this relationship with Washington, even though he said that he'd be more upfront with Trump than Starmer taking that softly approach, of course. One of the first key material questions is going to be, does Burnham allow the US to use its British bases if the US continues or starts attacks on Iranian civilian infrastructure? And remember, the Middle East war, as much as Burnham would like to focus on domestics, the agenda is going to hugely impact the cost of living.
OK, Lizzie Burden, thank you very much indeed with that update on UK politics. We keep across, of course, announcements as they come through in the hours and days ahead. Let's bring in a markets perspective now with Maria Minichi, who's multi-asset fund manager over at M&G Investments. Maria, thank you for joining us around the set this morning. Are you reassured by the appointment of Healey as Chancellor?
Well, what we can observe is how the market has reacted, right, to these announcements and to the events that unfolded yesterday. I think what we're observing on gilts is that there hasn't been actually a lot of risk on coming from this phase. Yesterday we have seen some movements that were higher than in other parts of the market, but in general, gilts have behaved, in line with the bigger global events that we've observed. There is already quite a lot of risk priced in, and this is why we do like this exposure, especially at the long end of the curve over a structural and long-term perspective. But we've also been playing, opportunities from a more tactical standpoint. And so that has been a feature of the gilt market, but also more broadly of global government bonds, where we have seen volatility throughout this phase, especially as we enter the conflict at the end of February, and we have seen a lot of yields across markets, across curves, spiking.
So you're finding opportunities at the long end when it comes to the UK. Just unpack that view for us and what's sustainable.
Yeah, so I think you are seeing elevated level of yields at the moment from a nominal as well as a real yield perspective. The inflationary dynamic in the economy was cooling quite significantly before we entered this latest phase of conflict and increase in energy price. But fundamentally, you know, the wage perspective in the UK from a labour market perspective, you don't have a wage growth spiral going on. So I think from a fundamental standpoint, both the growth and inflation picture over the long term look more supportive and back in this real yield that you're finding in this asset. Obviously, you know, when we assess market, we have a very important behavioral lens, and that's also something that is playing out today on the gilt market. It's, as many other government bonds, quite an unloved part of the market. And the recent events in terms of political dynamics have had a bit of volatility to that. There is an embedded risk premium that is not just recent. It has been growing over time. If we think about where gilt sits today versus bonds, for example, the spread is very, very wide. And so over the long term, we do see as a potential opportunity, and this is something that is reflected in our portfolios in terms of duration exposure to the gilt market.
Yeah, that spread over bonds over the past 20 years or so, really widening out, hasn't it? Reflecting some real fundamental differences then, Maria. So just to linger on the UK for just a moment more, what should, if those at the Treasury are thinking about war bonds or other off-balance sheet measures, what should they be aware of? What is the sort of limits of the gilt market's tolerance, do we think, for that kind of innovation?
Well, I think that what we've seen is that the gilt market is very acutely aware of any single message that is coming from the government in terms of what they're willing to do, and is very quick to respond and give, you know, its perspective on that. And so I think that will continue to be very visible in markets in terms of, you know, steering and giving direction to the government. And, you know, the fact that there hasn't been a huge reaction on gilt markets in the latest weeks up to yesterday, where again we've seen a little bit more of volatility, but nothing extreme, I will say, tells us that, you know, this is seen as a transition that is not a rupture with something we had in the past.
Okay, so this is one of the themes we're watching today, clearly, and this week is around UK politics. We're watching the AI trade. That's never far from our radars. And just in the last couple of trading days or so, innovation out of China has really leapt up the agenda, and rival models out of China have been interesting and sort of shaking people's belief in profit estimates in other parts of the AI space. Where does that leave you on Chinese assets? We talked about, I think it was one particular US bank yesterday that was upgrading Chinese stocks. Are you leaning into Chinese stocks? How do you see that developing?
I think there is a very interesting development in equity markets that we've seen unfolding in the last few weeks. The first 6 months of the year were very dominated by concentrated returns, by a few companies leading returns, and we've seen a very strong turn of that momentum trade just in the last few weeks. We have been very focused on trying to understand where the opportunities were outside that momentum trade. And China was definitely an area that was flagging as something that had been underperforming for a while. The other markets are where you could still potentially see opportunities. And the reverse in performance that we've seen in China in just the last couple of weeks has been very, very interesting. So to us, the story today within equities is to really try and diversify and be selective, finding opportunities outside what have been the biggest winners. We have been very present in the Korean equity trade. We were invested already in 2025 quite significantly, but we then reduced that and redeployed that capital where we see better opportunities. China is potentially one of those markets, but also markets like Indonesia, like Brazil, that have underperformed. And interestingly, in this latest phase, you know, they have given some signals that potentially there is a value there. I think those are areas where it's worth looking at.
It sounds like that Chinese AI model innovation has underscored your shifting approach rather than led to a fundamental reset of your assumptions. Is that the right way to think about it?
Yeah, I think the AI theme will continue to shape markets for the foreseeable future, most likely. But it's what has been very clear in the last few months is that they're not the same companies that might continue to win going forward. So we have to be very selective on where we look for opportunities. And potentially these opportunities are widening right now. And so it's very important to consider, on the one hand, the price moves that have happened recently, because obviously, although we had quite a lot of correction, you're still seeing a lot of the stocks being up very, very significantly since the beginning of the year. The valuation of those stocks, and crucially, what are the earnings expectations for those stocks, which, are very elevated. And we have to be mindful of that. Even if that will continue to be the case, your valuation is basically resting on earnings expectations that are quite lofty, and therefore they're potentially a little bit more open to vulnerabilities.
Yes, I was looking at the SOX index, courtesy of our colleagues Jan Patrick Barnett, looking at the SOX index, heading for its worst underperformance in 25 years versus the wider market. So that's an interesting dynamic to watch. Maria, thank you so much for your time. Maria Monici, who is a multi-asset fund manager at M&G Investments.
Here's what else you need to know this morning. JP Morgan boss Jamie Dimon, of course, has warned new UK Prime Minister Andy Burnham over the UK's bank tax surcharge. Speaking on the Master Investor podcast, Dimon reiterated his criticism that tax hikes could drive capital away from the country. Dimon added UK politicians should be worried about the number of companies that have delisted from London in recent years. The London Stock Exchange is reportedly planning to start a nighttime trading venue next year. According to the Financial Times, the new exchange will start in the first half of 2027 and operate separately from the main market. The report says it will initially provide access to exchange-traded products such as funds, tracking the UK or US stock markets. And the Trump administration has announced new 50% tariffs on a range of Canadian goods set to take effect in 30 days. The White House is citing what it describes as unfair Canadian treatment of US dairy, auto and alcohol exports. Prime Minister Mark Carney says Canada has made detailed proposals to resolve trade disputes with the US, and it is prepared to continue those discussions. So a reminder that the trade tensions between Canada and the US continue. You've had different voices in Canada asking and pushing for a different response. Carney saying they're prepared to continue conversations, but they will respond, as they have done, in kind. There's a 30-day window to these additional tariffs that President Trump is now threatening.
Yes, indeed. And it speaks to the fact that we've moved, yes, the USMCA will be in place for another decade, I think, but broadly the Trump administration has moved away from that and says they want to move to a sort of rolling trade situation where they just reassess things every year. And that just adds a whole lot of unpredictability, doesn't it, for business who are making those investment decisions. So we'll watch how that one develops and how it goes down with business. 7:26 here in London. We'll keep the focus on defence this morning. Coming up, defence industry leaders are gathering, of course, at Farnborough. We'll be joined exclusively by Oliver Dore, CEO of the German defence tech company Hensoldt.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. in our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome back. Happy Tuesday. We are 30 minutes from the start of the opening trade. It is risk on across the Asian markets. US futures also pointing higher, but Europe not feeling the love so far. European futures, after losses of about 0.3 yesterday across the European equity space, currently flat. You're seeing losses being flagged for the FTSE 100, called lower by 0.5%, and the CAC current over in France also essentially flat, pointing lower by just 6 points. So Europe so far not seeing the upside from the turnaround. They're seeing in terms of positive sentiment, particularly focused on semiconductors over in Asia. And again, US futures pointing higher by 1.2% when it comes to the NASDAQ 100, Anna.
Yes, the FTSE 100 underperformance yesterday was notable, certainly in the early part of the trading day, and there from the futures picture it looks similarly so, weighed down by, I think it was AstraZeneca in yesterday's session in the drug space. Let's look at bond markets then. Yesterday the story around bond markets was quite UK focused, and we don't have gilts opening up for another 29 minutes, so we'll look for that, of course. But the European equity markets were dragged around a little bit by that gilt dynamic, and we did see yields going a little bit higher. Now those yields are coming down a little bit, so we're seeing a bit of buying across the European bond market space, but really not much in it, barely a basis point, in fact, in France and Germany. So not a basis point in France and Germany, so we won't make too much of that, but certainly we'll be looking for markets' reaction to the appointment of the new Chancellor of the Exchequer here in the UK. We'll look for that at the start of gilt trading. That takes us on to defence, actually, because the new Chancellor was previously of the Defence Department. Now, global defence leaders have descended on the UK as the Farnborough International Air Show takes place. One of those leaders is the CEO of the German defence electronics firm Hensoldt. Oliver Dure joins us now on his way to Farnborough, I think, for an exclusive conversation. Oliver, good to speak to you. Thanks so much for coming in. So I think you're on your way to Farnborough. You haven't been already. So what is the message that you're going to be taking with you to Farnborough?
Well, I think very clearly budgets, demand, I mean, it's heterogeneous in Europe, but looking at Germany is not the topic anymore. It's not the constraint. It's about delivery. That might be the constraint. We are ramping up our production. And also, I think if we want to deliver in time, in quality, at cost, and that is a demand of our customers, we need to partner up. So it's a lot about how can we partner to bring the best strengths together to deliver to our customers. OK, so the focus on partnerships. You say that the question around Europe and maybe specifically Germany is not about budget. It's, you know, that question has been answered, perhaps. But is the government spending in Germany, is it coming in as forthcoming a way as you would like it to? Are we seeing the actual spending coming as quickly as the market is anticipating? Well, absolutely. I mean, to be honest, we have been waiting for that planning security, as we called it. But ever since Q4, the orders are really pushing in. I mean, you saw it on our Q1 results, where actually we delivered a record order intake. 10 billion, almost 10 billion of order backlog. So that shows the demand is there, it's structural, but now really we have to ramp up in quantities, but also in qualities. It's about tech, and that's where Hensoldt is well positioned.
And there seems to have been this shift it recently, particularly in the market focus on air defence and tech versus artillery and tanks, for example, in the defence space. Does that continue? How do you lean into that? How do you make sure that you can profit from that?
Well, first of all, Tom, I'm not so fine with the dualism of tanks or drones, but actually we need both. I think we need an adequate quantity to counter the war economies that we are facing as a threat. But on the other hand, we see in Ukraine, in the Iran war, that whoever sees first, whoever acts faster, decides quickly, those will prevail on the battlefield. So it's a lot about connecting the dots. And actually, that's where we are ramping up with our strategic axis, which is pioneering software-defined defense.
OK, and you talk about partnerships, the need for partnerships. Are you looking at acquisitions? Do you see more consolidation in the defence space? And is there the political will in Europe to allow that and to encourage that and to push that forward?
Yeah. Well, consolidation will happen. I think probably different than we had expected it 2 years ago. But it's really more, the discriminator is rather, I think, the ability to deliver, but also the ability to partner, to put things together. I definitely think the times of monopoly, the big ones, is really over. It's rather, you know, everyone focusing on strengths, bringing the best things together. I mean, our mission has a deadline. The deadline is 2029. That's what the military leader said. That's where Russia is ready to attack Europe, to attack NATO. And that's why we need the best teams to work together.
And you need good relationships all round. You've talked about partnerships, Oliver. So I wanted to ask you a bit more about the relationships with the Defence Ministry, between the Defence Ministry and defence contractors. Given what we saw with that frigate contract that was announced, the nature of the announcement was seen as quite abrupt and it had an impact on markets. You've already set out the impact it has on your business. But how has that left relationships and communication channels?
Well, I think it underlines that really the speed, the reliability of industry is key. It's a clear signal. It's not about only signing contracts. It's really to be ready to deliver. So for us, I can definitely say the communication lines are open. So we will have the Minister of Defense joining us on Thursday, inaugurating our new plant. We have invested 300 million euro for a new optronics plant in Oberkochen. So the minister will be there. And I think that's also a clear sign that we work together. When I talk about partners, it's not only industry, it's also the government and the industry, which hasn't been the case, I would say, in the last decade.
Right. But is there still unfinished business around the frigate contract? I mean, Damen Naval, for example, they're initiating legal steps, trying to recoup some of the money that they lost on that. Any chance that you managed to recoup any of the money that you're without?
Well, I think for us, and I outlined the financial impact, it's a 200 million contract, so almost 1/3 of it is already recognized. So in that regards, looking at our growth profile, which is heavily on, I don't think that has a financial or material impact. The question is more looking at the strategy. And here I think TRS-4D, our radar, which was the core of the contract, sails on. I mean, it's still the family radar of the F-125 in Germany, of the corvettes. And I think there will be more opportunities in the future. And same applies to the combat management system. We're working with Lockheed Martin. Germany has deliberately decided to have a harmonized combat management system for their ships. That's where we are ready to deliver. And going forward, I definitely see that we will, let's say, press the clutch and run the gearbox.
So the F-126 contract is scrapped. TKMS gets a contract for smaller vessels. Are you going to be a subcontractor to TKMS?
Well, let's see. The parliamentary decision on the first batch, which is the first four, clearly states that the F-126 contractors have to be considered as we walk forward. I would see, in the end, it's a customer decision. But the customer will take his time to really see how does he move on with the fleet. Because for sure, we see that we have to harmonize systems. Also looking, I recently talked to the German naval leaders, where actually it turned out they have a topic with their people. So a heterogeneous fleet will not be able to be operated over time. So that's why commonalities, harmonized systems are key. That's where our radar and also the common management system steps in.
Oliver, I know that the UK market is perhaps not front and centre on your radar, but you are here at Farnborough, so maybe good to get your take. We've seen a former defence secretary now become Chancellor of the Exchequer. Does that tell you anything about the seriousness with which Europe is taking defence spending? Do you see that message in there?
Well, the question is, do I need signs? I think there are clear indications that Europe takes it serious, so does UK. I've attended a couple of meetings on Trinity House, where also Healy was still the defense minister. So I think there are close ties between Germany and UK as well. That's why we are here. That's why we're looking at it. We have 100 people in Enfield. So we have a UK operation. So we're ready to put meat to the bone of the Trinity House agreement.
OK. Oliver Doré, CEO of Hensoldt, thank you very much indeed. As you make your way to Farnborough, of course, defence set to be a key focus on day 2 of the Farnborough Air Show here in the UK. On day 1 of the show, we spoke to the CEO of Airbus.
We're still part of the future combat air system. That is more than a 6th-generation plane. But indeed, the 6th-generation plane, as it was structured at the beginning, is no longer there. So we have to find a way forward to the next 6th-generation fighter for Europe. At Airbus, we want to continue to be part of it.
Well, let's bring in Guy Johnson, who's on the ground, conducted that interview, of course, for us at Farnborough. Guy, anything else that jumped out to you from that conversation with Fauré, of course, someone you've spoken to a number of times over the years?
Well, just think about the conversation you guys have just been having with Hensoldt. A very strong message coming out of that conversation about partnerships. And in theory, that should be the way that Europe moves forward. But it's struggling to do that when it comes to the next generation of fighters. You've got 2 competing programs. You've got the FCAS program, which was Germany and France. That has largely fallen apart. Now, Airbus represented the German portion of that. Where does Airbus go next? It's not going to be working, it looks like, in the same way with Dassault out of France that was originally envisaged. So that partnership has already collapsed. And this is where Europe's big challenge now lies, is trying not only to get the money, but also to get those partnerships to work. And that is the message that you're certainly hearing loud and clear. So what does Airbus do next? Does it go and work with BAE and Leonardo? I'm going to be speaking to the Leonardo CEO very shortly on the other competing program, the GCAP program, the next generation fighter. Can that work? Would that imply delays? If Europe can't figure out how to work better together, does that open the door for Lockheed Martin, for instance, to come in and sell more F-35s into Europe? It's certainly trying to push that line. But buying American is a really tough thing to do right now for European governments. So how do the Americans use that partnership route as well to work more with the Europeans as well? They become partners too. So you've got this kind of web forming, which we've already had, but it feels like it's becoming more important in terms of these various partnerships around Europe that can deliver the weapons program that Europe needs. But who is going to take away the lion's share of the money from that? How is that money going to be spent? These are really open questions at the moment. Some places it's working, some places it's not. And next generation fighters looks like an area where it's a real struggle right now to get this to happen.
So, Guy, in the defence space, then, partnership certainly one of the things that you're telling us stands out then from Farnborough. On the civil side, which Farnborough is also about, lest we forget, I know that you spoke to the CEO of Boeing. What were the conclusions of that conversation?
Again, in some ways, there's some big challenges that lie ahead. We talked a little bit earlier on in the programme. There is this. At some point soon, there is going to have to be a decision made about the next generation of narrow-body aircraft. They're going to replace the 737, the 737 MAX, and the A320 family out of Airbus. Who goes first and how that's going to work remains an open question. I did speak to Kelly Ortberg yesterday. He is the CEO of Boeing. He's been in the job for 2 years. He came in with a need to stabilise the business and to put it back on the right track. Certainly the Trump administration has helped him with that. He's not quite ready to make that decision on kind of how the next generation of aircraft is going to look and when that's going to come. Because at the moment, and take a listen to what he has to say, his focus is still kind of in the here and now, getting Boeing back operationally to be able to deliver the customers, the aircraft that his customers want.
We're turning the corner. I tell my team we haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong. So our backlog is very, very strong. So our story is really focusing on executing that backlog.
It's about operationally delivering right now, and it applies to the defence sector as well as the civil side at the moment. There is a relatively strong market within the civil space at the moment, but you've got to be able to deliver. And both Airbus and Boeing continue to struggle to be able to do that. The supply chain remains a huge issue. Getting these companies on track to deliver the aircraft that the customers want remains a challenge. And it's the same story in the defence space as well. So in some ways, we are migrating from a world where the money's the issue. It remains an issue in the UK, but elsewhere maybe less so. And it's now about how do you deliver that capability? Which partnerships are going to work? Which kind of permutations of the various defence and civil companies out there are going to work to deliver what customers, both in the form of governments and in airlines, ultimately want? And that remains a big challenge, I think, for many of the companies here at Farnborough.
OK, Bloomberg's Guy Johnson at the Farnborough International Air Show. He'll be trying to extract, of course, some questions and answers to those questions in the hours ahead with further interviews. Guy will be speaking to global defence leaders throughout the day at Farnborough. Lorenzo Mariani, Leonardo CEO, Orlando Sanchez, the Lockheed Martin Aeronautics President, and Larry Culp, the GE Aerospace Chairman and CEO.
So a lot of focus here in the UK on defence and on aviation more broadly. In UK politics, the new Prime Minister promising a roadmap for renewal in the UK.
Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support.
Prime Minister Andy Burnham speaking as he arrived at Downing Street to take over from former Prime Minister Keir Starmer. We'll discuss what his premiership could mean for markets and the fiscal challenges ahead next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back. This is the opening trade, 7:49 here in London, and European equity market futures suggest we'll be a little bit weaker, perhaps underperformance in the London market, which will be interesting to dissect and interrogate. Let's turn our attention to the markets in 3 minutes on the opening trade with Adam Linton from our Bloomberg Markets Live blog. And Adam, at the time we're speaking to you, we're waiting for gilt markets to open this morning, and that's going to be important, is it, as a kind of verdict on the appointment of John Healey, because that happened after gilt markets close. But what do you make of the gilt market story right now? There is a danger, we've seen this with perhaps the last couple of budgets, or at least the last one, that the markets are just always waiting for the next budget to take place.
Yeah, I think, in terms of like the setup, I think the assumptions we had heading into yesterday have been undermined. A, we thought Mahmood would be Chancellor, and then B, we thought, Burnham would play relatively safe with the fiscal rules. We've now seen that Healey's going to be appointed Chancellor, and yes, we don't know loads about what exactly he's going to bring to the table, but the obvious inference is higher defence spending, given how he left the Keir Starmer administration, and the question is, what crowding out effect does that have? Then for Burnham, obviously, he carries a lot of sway. He's First Lord of the Treasury, of course, and also he clearly has a stronger policy platform that we've seen with Starmer, and he's now shown signs he wants to play a little bit more loose with those fiscal rules. And we've seen that this morning. We've seen they're going to cut taxes on energy bills. There's a lot of questions about how exactly that's going to be funded. And I think if you take that at a time when energy prices are high, that is going to be negative for gilts. So we've seen UK 10-year yields around about 5% yesterday already. And I think in the short term, UK paper will probably underperform that of the US. We saw that soft US CPI report last week. And yes, we may see the budget later this year, massage some of those concerns eventually, but there may be a bit of a runway where, we are going to see more fiscal angst. I think from an FX perspective, the pound doesn't really care too much. I think the higher carry is more important.
Yeah, and there's a debate, isn't there, as to whether or not the energy story emanating from the Middle East actually has a bigger impact on UK assets than maybe domestic politics. You've been thinking about the European stocks and relative resilience in the face of the geopolitical headwinds?
Yeah, I was off last week, and then I came back yesterday. I saw Brent was on a 90 handle, European natural gas prices were at multi-month highs, and Stock 600 was doing nothing. In fact, it had done nothing when I was away. We're down 2% from all-time highs. A month to date, Stock 600 outperforming the US, outperforming Asia. And I think part of that is, kind of optimism that eventually a deal, will be sought between the two sides. We've seen some reporting over the last 24 hours suggesting that is the case. I also think from a macro perspective, there's a relatively high bar to price a growth shock from the conflict at this stage. PMIs never really rolled over that much in the midst of the conflict. They rose last month, expected to do so again. And then also, the fact that there's a high bar to price a growth shock is allowing Q2 earnings to be in focus, which are relatively strong. They're expected to show up momentum throughout the year. And Europe's also offering an offset for any tech angst in the market.
Yeah, talking tech angst, briefly, Adam, we're going to get tech earnings, aren't we? The start of them this week. I'm still not sure if we're looking for big CapEx numbers or less big CapEx numbers.
I think it's a case of threading the needle. You don't want too high CapEx. You saw that from TSMC last week. You don't want too low, because you'll see AI angst, resurface. I think the key is, how did chip stocks react to this? Are we going to see rotation out of chip stocks into hyperscalers, or are we going to see, good tech earnings lift all boats? I think that's the key focus we need to look for.
Adam Linton, thank you very much indeed from Bloomberg Markets Live. Let's bring in your stocks to watch now. Chloe Melly, standing by. Chloe.
Good morning, Tom. Let's start with Novartis this morning. The pharmaceutical company has beat estimates, and that was thanks to a very strong performance from its new cancer medicines, which actually allowed it to offset the impact of generic competition on its best-selling drug, Entresto, which is a heart disease drug. And so this suggests that the CEO has been doing a pretty good job of countering that generic competition, which is facing a lot of those big pharma companies. And we could see these strong earnings this morning lift the shares after an already very strong performance performance from Novartis so far this year. Staying in Switzerland, but going over to a slightly less positive story, we've got the watchmaker Swatch this morning coming out with earnings that were well below estimates, but at the same time saying that the second half performance was going to be much stronger after an acceleration in sales in July. And so we'll see what investors decide to focus on this morning, those disappointing earnings or that better guidance. We have seen actually Swatch outperforming Richemont, the other Swiss watchmaker, which has been doing very well lately. So we'll see if this picture changes at all this morning. And finally, of course, UK defence is going to be in focus after the new Prime Minister Andy Burnham named John Healey as Chancellor. That suggests that there might be higher defence spending. So we'll be watching out for any impact on some of those defence stocks in the UK today. This is something that investors might welcome, but at the same time, there are some challenges with Bloomberg Economics saying that there will be intense focus on Healey's plans from financial markets, given that this higher defence spending does need to be funded in some way. And so we'll be watching out for any impact there on that UK defence sector.
Chloe, thank you very much. Chloe Melly with Stocks in Focus. Interesting, Kier Group, which is a construction business, Tom, they're out with some guidance to the markets, talking about coming in at the top end of estimates, based in Salford, Manchester area. Very fashionable these days to be based there. Anyway,
yes.
just flagging that the revenue at the top end of estimates. I've seen some calls that one could be higher at the start of trade.
Rates dependent as well. And we're going to have a firm eye on what happens with the gilt markets with the appointment, of course, of John Healey as UK Chancellor. That took most people by surprise. European futures are currently flat after a rebound in the chip trade in Asia. US futures pointing higher by 1.3%, but flat when it comes to European futures. We bring you the open next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story. This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
this is the opening trade. A few minutes until we get that opening trade in cash equities here in Europe. And this is the handover from the US yesterday. Maybe it tells a bit of a misleading story, though, about the global mood. But interesting to note that we did see a bit of a drift downwards in US stocks after European markets closed yesterday. So that's one part of the handover. But we go a bit deeper and we see that actually semiconductor stocks got a bit of a bounce after last week's heavy selling. That has been a positive momentum, provided positive momentum into the Asia session. So the Asia session has been quite buoyant from Tokyo to Taipei. We've seen strength coming through in Asia, but not with wild swings like we'd previously seen in the Korean session, perhaps. And so maybe that adds up to something more positive, and US futures, as a result, are pointing a little higher. Let's have a look at the European futures picture, though, because sometimes that tech theme entirely bypasses Europe. Sometimes it very much is front and centre. But this is the futures picture then. Eurostoxx 50 futures overall set to go nowhere. DAX futures pretty flat as well. FTSE futures, maybe some underperformers there, just as we saw yesterday, Tom.
On the individual stocks that we'll be watching, well, we'll be watching a group of UK stocks, of course, on the surprise announcement of John Healey as UK Chancellor. We'll see if there's any movement around that announcement. Novartis, in terms of the strength of the earnings coming through, profit beating estimates, pointing to decent growth for that UK-listed drug maker, or Swiss-listed drug maker, I should say. And over in the watch maker Swatch, interesting in terms of an upbeat guidance on sales growth. Profit came in as a miss, but it was upbeat guidance for sales growth. So potentially a positive story, in fact, for Swatch, at least pointing forward, Anna.
OK, so that's the list of stocks that we're watching today. Certainly underperformance in London was notable yesterday. Some of that coming from the drug sector. So we'll watch to see whether those Novartis numbers add anything specific to Novartis or to the drug sector more widely. So European equity markets opening for the second trading day of the week. We have a new Prime Minister in the UK. What material difference does that make, if any, to expectations around UK profitability for big caps, for mid caps? We'll watch all of that. We'll watch the start of gilt trading. I know those gilt markets will be opening up just about now. How has the appointment of John Healey, who's the new Chancellor of the Exchequer, formerly was the Defence Secretary, resigned from that post because of arguments with the Treasury, actually, about funding. So we'll see what that does to expectations around gilts. But for the moment, the picture across Europe, then, is, as expected, underperformance, Tom, on the FTSE 100 and more broadly, pretty flat across European equities.
Across your sectors, as a result of higher prices in gold and silver, silver's up 4.4% so far in the session. Copper also gaining about 1%. Basic resources is your top sector, at least in the opening minutes of trade this Tuesday. Basic resources as a sector gaining 1.3%. Tech also performing well, up 0.8, with the baton handoff from Asia and the US, of course. A return of strength from the semis trade in Asia. We'll see how long that lasts. Tech gaining 0.9%. On the downside, most of the selling pressure coming through for media, personal care as well, so luxury under a little bit of pressure. Media is down 0.7%, personal care products down 0.7%. Travel and leisure, which also sold off yesterday as a sector, seeing some further selling, just down 0.6%, with the benchmark now, Stock 600, up just 0.1%, Anna.
Yeah, healthcare, another day of weakness for healthcare. We've got some of those healthcare stocks that were weaker yesterday. Weaker once again. AstraZeneca down 1.3%, Siemens Healthineers, GSK, all of these in negative territory. Some of them yet to open, though, within that sector. Let's look at what's going on the bond markets, though, because as mentioned earlier, the gilt market story, really interesting to watch, and very interesting that it's not really moving very much. That in itself is perhaps a story, because yesterday we saw an 8 basis point move higher. That's at the 10-year horizon for UK gilt yields. All of that, Tom, was on the back of this language that we heard from Andy Burnham about using flexibility within the existing fiscal rules. Just how far does he want to push those fiscal rules? What does that mean about off-balance sheet financing? All of those questions then in the markets. And we saw those basis points higher on yields. But today we see something, well, not hugely different, or at least we haven't pulled back from those levels, but we're not seeing gilt yields climb.
Yeah, the gilts actually is not breaking away from what we're seeing in treasuries and sovereign debt over in Europe as well. So a slightly more benign picture on the back of that appointment.
Yeah, absolutely. So the market's taking that appointment in their stride. Let's talk about the markets then in a broad sense. Max Kettner joins us, Chief Multi-Asset Strategist over at HSBC. Max, very good to see you. Thank you very much for coming in. So we sit here with a number of divergent themes heading into another European earnings season where, or in the midst of a European earnings season, perhaps, where we're waiting for some new clues, really, as to what happens next. Because the oil price, yes, it went higher on developments in the Middle East, has come down a little bit. The AI theme rumbles apace, and we're looking for new clues as to what to watch there. So what's in focus for you this week?
I think, actually, the focus is probably the hyperscalers. tomorrow and next week, right? So the Mag 7 earnings, I think that will be probably the focus, what they're going to do with the CapEx, what they're going to do in terms of free cash flow projections, what they're going to do in terms of bond issuance and so on, right? So there's so many narratives, I think, where the Magnificent Seven actually can be, and the hyperscalers in particular, can be actually surprising to the upside, not only in terms of the numbers, but also in terms of the narrative, right? Because when you look at tech, so when you look at the numbers first, tech in the S&P expected to grow about 12.5% quarter over quarter, Q2 versus Q1. But that's entirely coming from semis, right? It's only semis. The rest is actually minus 1.5. So if you exclude semis
that's looking forward
from
or
tech,
back?
no, that's just Q2.
Right.
So that's literally comparing Q2 versus Q1. It's 12.5% earnings growth expected, but actually semis is something like 28, and the rest is minus 1.5. So imagine how much actually the hyperscalers can surprise to the upside in terms of the numbers, number one, but also in terms of the narrative. Because think about if they say things like, well, you know what, actually, we might not need as much CapEx, right? And that's not to say that they're saying, you know what, we might have to cut CapEx. No, but if you think about the hyperscaler CapEx estimates already, they went up 30% already for this year. They went up 55% for next year. So obviously, we're sitting here and we're saying, you know what if they just say, yeah, we drove it up 30%, that's it.
Okay.
Right? And they're not even saying we're cutting it, just that's it, we don't upgrade it further. That already would be an upside surprise.
So that's the background expectation around some of those hyperscalers, around that part of the tech landscape in the US. Another part that you mentioned already of the tech landscape has actually been under pressure recently, and that is semiconductors. Yeah. I was looking at some analysis by a colleague on the SOX index versus the S&P. We've seen the widest underperformance in semis versus the rest in more than 20 years. And I wonder what that tells us about where this AI trade heads next.
To be fair, I don't think it tells us an awful lot. I
think it's why.
Yeah, I think, but let's be honest. So you guys have it on the screen right now. I think. Look at what's happened in May and June, and look at what happened.
It went up a lot, and now it comes down a lot. Is that the analysis?
I think that's the analysis, right? Because let's be very honest. I saw it yesterday. I was like, and like I had a couple of my clients saying, lots of people are pushing for a rebound in momentum and a rebound in semis. I'm like, why? I'm like, well, because it's sold off. I'm like, cool, great. Anything else? Like the problem is. And I've got to be completely honest, I have no conviction on that because there's nothing really that I can analyze, right? I can look at maybe a couple of technicals like RSIs or oscillators or something like that, right? Or we looked at a couple of momentum signals. They don't look particularly oversold yet, right, on the semis. But otherwise, I mean, it's mainly driven by Asia. It's mainly driven by Asia degrossing in Asia retail. How do you gauge when it's over,
but
right?
I suppose
We
it's
can't
interesting
really gauge when it's over.
where profits in the AI stack accumulate, isn't it? And hyperscalers was the thing at the beginning of the year, and then it was semiconductors and memory.
But I think
now we ask questions about where it goes next.
Hasn't that paradigm, Max, have to be shifted? I mean, was that not a DeepSeek moment on Friday?
See, this is what we're going to say, right? Is this the DeepSeek moment where we're going to go basically back to January 2024, where it's basically, now we're going to buy China equities because, and particularly China tech, because we've underestimated how much China has actually advanced in the AI race. But let's face it, when you look at HS Tech, you've got your Baba, you've got your Tencent in there, you've got your Meituan in there. So you've got a lot of the AI adopters that actually, in terms of profitability, at least for now, look less attractive than what the hyperscalers look like, right? So actually, I don't think it is the same way you're saying, wow, now I need to rotate out of US tech into China tech. I don't think that's at least tactically the play here. I think it's still in US tech, it's still the hyperscalers, and in particular, how much the hyperscalers have been used as a funder, as a short in the last 3 months.
So tell us exactly what the hyperscalers have to tell you to make you convinced that that story continues for them. How do they balance that CapEx spend that needs to continue with ROI? What exactly is the message?
So Tom, I don't think it's what they have to tell us. I think it's more about the bar to beat, the bar to be surprising to the upside. Not only in terms of the numbers, but also particularly in terms of the narrative is so small so low because think if they say, actually, we don't need to issue as many bonds as people had feared. Already great. If they say, you know what, we've driven CapEx estimates up by 30% already this year, we're not going to do any more. Great, all right? They don't even have to cut. They just have to not upgrade it even more. Or if they say, you know what, we might actually not be free cash flow negative by 2027. Already great. So there is, you know what I mean? Like there's so many little puzzle pieces.
An opportunity to lean into hyperscalers, which are sold off.
Definitely. So for me, it's much more the hyperscalers than the Mag 7, right? The sell-off that we've had in the Mag 7 in May until mid-June, I think that is overdone. It's much more longer hyperscalers and getting still out of the sense.
And so where does that leave Max as far as Max bullish goes, because I want to point out, so that everybody knows, so February 2023, you started upgrading stocks to overweight. Others have backed off since, but you didn't. And your conviction around stocks and willingness to stay with stocks, I suppose, is one of the reasons why you ended up getting, I think it's the 5th year in a row, Excel top ranking for you, which is excellent. Well done. Congratulations. So what does that mean in terms of your max bullish call? Do you see chinks in that
Yes.
bullishness now?
I mean, to be fair, if you're maximum overweight equities, there's only one choice you can make, right? I can't be more bullish than that. So the only choice is when I can stay there, but we've been max bullish now really since mid-March, right? So since the 3rd week of March. So it's, in hindsight, a week too early, right, before the trough, so we didn't quite catch it correctly. But it was all right. But now I think we really need to get to the point, OK, when do we want to get out? And the second choice, of course, is do we want to be medium overweight? Do we want to be neutral? Do we want to be underweight, right? That's the next choice. I think there is a couple of things. Clearly, positioning is more stretched now, right? So when we look at the H2 outlooks, we look at sentiment among long-only investors, then actually that is starting to be looking as stretched as it was during the reopening trade in 2021. Not quite there yet, but we're starting to get there. That's one. All of our shorter-term positioning framework is saying the same. It's starting to flag some sell signals. And also, when you look in terms of fundamentals, there are some cracks, right? Some of the credit card data in the US is showing that things are starting to tail off, right? A lot of the tailwinds, a lot of the impulses that we had in H1. Think about the big, beautiful bill. Think about in the US, we had 20% higher tax refunds in H1 compared to last year. All of those impulses have happened already in H1. You guys probably were talking about it in the last few months as well, how big, how strong those US activity, these US economic surprise indices were. But all of that has happened already in H1. So to me, I think ahead of the midterms, after the earnings season, right, and in a month and a half, I think that's probably the time where you want to take a little bit of your foot off the gas.
Yeah, that's interesting. It's worth noting this profile of Max on the Bloomberg. There's some fantastic photography, Max. There's a picture of you walking moodily underneath the HSBC logo with the lighting. Fantastic, worth it just for the photo. Max, what does that reduction in risk exposure post earnings look like?
Yeah.
So where does it take you?
Yeah, so I think, look, I don't think this is definitely not, this is the beginning of the end and my God, now we're out. No. What I can see is that ahead of the midterms that there might be some concerns, ahead of the midterms around what is happening perhaps in terms of the fiscal impulse in H1 2027 after we've had this fiscal impulse now in 2026, which was on par. It was really the similar magnitude that we had as the financial crisis in 2009. So might we even have a bigger negative fiscal impulse now in 2027? What does that mean for growth? What does perhaps, the Democrats coming in, maybe the poll saying 50-50 for the Senate, what does that mean around AI regulation, data center regulation, all of this stuff, which actually then is not a hyperscaler versus semi-rotation, but it's just tech down, which drags everything down. Again, that doesn't mean start of a bear market, but is that good enough for a 5 to 10% correction ahead of the midterm, September, October, plus seasonality, plus, a bit more stretched positioning? Yeah, I think so, right? And then after the midterms, it's probably then time to buy again.
And in terms of things that are not directly linked to AI, and that maybe takes us into Europe a bit more, Max, what are the best opportunities right now that you see in Europe, either related to the AI theme around supplying it or decidedly removed from the AI theme?
So number one is actually Europe broad-based. So we've upgraded European stocks a couple of weeks ago because we wanted to lean more into that broadening trade, right? So your equal weight S&P long, bit more value, less momentum. And if you look at the equal weight S&P and you look at that over just European stocks over the last 2.5 years, it is virtually the same line. So if you want to play from a regional perspective, if you want to play broadening, you end up long Europe. Right, that's number one. I think in Europe, the best sector that I can still see is banks. Right? You look at the banks, you look at earnings revisions in H1 when the Bund yield curve was flattening. The worst that happened was actually that earnings revisions were stopping to outperform earnings revisions of the broader European index. They didn't underperform, they just performed in line. That was the worst that happened, right? So, and obviously with that tiny bit of steepening that we had about a month ago, that already propelled banks higher. So I do think any kind of little bit of whiff of steepening in the Bund curve that can just really get the earnings train and banks going again.
Max Kettner, always a pleasure. Thank you very much indeed. HSBC's Chief Multi-Asset Strategist. Let's check in on your core six this Tuesday then, as we think about a readjustment around the semis trade that we've seen in Asia and tech doing a bit of a pickup in the session in Europe today. And so you're seeing that reflected. ASML, a decent print there so far for that lithography maker, currently up 2.6% gains. In the defence space, up 1% for Rheinmetall. A bit of weakness, though, over in Novo Nordisk with the drug maker. LVMH, you're seeing a little bit of pressure across luxury, currently down 0.5%. Nestle also a little weaker by 0.7. And Schneider Electric in that tech basket, exposed to the data centre story, gaining 1.2%. Let's get a check on some of the other individual stocks now on the move and bring in Chloe Mallet standing by. Chloe.
Good morning, Tom. As expected, we are seeing those UK defence stocks react very positively to the appointment of John Healey as UK Chancellor. And so we are seeing, in particular, Babcock seeing a very, very good day this morning, up more than 6%. But really across the board, that the UK defence sector is doing very well, responding very well to this appointment. Moving on to tech stocks, and we are also in the green there. We have Soitec, Prysmian, ASML, Infineon, all of this kind of AI-related chip-related stocks in the green after the AI trade came back quite strong in Asia and now is spilling over into Europe. The pullback in oil prices is also contributing to positive sentiment there. So we're also in the green all over there. We're in the green as well for Mighty, which is a facilities management company here in the UK. It's up almost 40% this morning after OCS International, another facilities management company, agreed to acquire it for £3.1 billion. It does mean one more company leaving the London Stock Exchange, but we are seeing a huge boost in the shares this morning. And finally, Hugenreich, I think this is how it's pronounced, is a forklift manufacturer, is down very, very much, significantly this morning, 5% after the German regulator opened up a probe into the sale of its Russian business, saying that it might have violated accounting rules. And so we are seeing the shares down this morning for this forklift manufacturer.
OK, Chloe Mallet. Chloe, thank you very much indeed on the Stocks on the Move this Tuesday. Coming up, we're going to look at how markets are reacting then to another UK Prime Minister. Another, of course, more analysis coming up next. The gilt markets relatively relaxed so far today, of course, after a sell-off yesterday. Stay with us. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. This is the opening trade. Let's have a quick look at how UK assets are moving today. We've got the pound up by 0.1%, 134.47. FTSE 100 down 0.2%. That typically doesn't always reflect UK politics because there's so many big global businesses in there. But we had seen that some of the defence names have been trading higher. The UK 10-year yield looks fairly range-bound, so does the 30-year yield. And the new information that the bond markets are dealing with, of course, is around the appointment of a new Chancellor. Andy Burnham, the Prime Minister there, naming the former Defence Secretary John Healey as the new Chancellor of the Exchequer. The choice was a surprise for many and fueled speculation that more spending on defence is on its way. Let's bring in Bloomberg Markets Today editor Sam Unstead, who's been across all of this UK news flow, of course, for Bloomberg clients. And so, Sam, interesting then to see what we've got here in response in bond markets to the John Healey announcement, because that's the new information today, and bond markets went nowhere. So they seem to have taken this surprise in their stride.
Yeah, well, so gone nowhere, but having sold off a little bit towards the end of yesterday. Yes. So, you know, throughout yesterday, there was a little bit of a premium going on to UK yields anyway because of oil prices. And then as we got to the end of the day, the comments about flexibility, which actually are not too far different from what Andy Burnham has kind of said previously, there was a little bit of a sell-off into the close. So I think what you're seeing now is a kind of consolidation of that extra little bit of political uncertainty premium going back into UK bonds. You know, with Healey, you already mentioned defence stocks going up a little bit because I think all that really anyone has to go on in terms of any kind of detail of what John Healey may or may not do is that he used to be the Defence Secretary and fought very hard and indeed left his job because they weren't getting enough funding. Now he's in a position to be able to provide that, and it's how they provide that. Yeah. So do they provide that through sort of broad flexibility, or do we come back to this question of war bonds, defence bonds, and how would the market treat that?
And that's just one piece of the puzzle, because we were talking at the start of the show, Anna and I, about the fact that the government has announced, the new government, just in recent hours, the last couple of hours, a cut to VAT on energy bills that was framed as being funded by the money that would have otherwise been spent on digital IDs, a programme that, of course, has been scrapped under Andy Burnham. We've then had a post on X from the ex-minister, UK Chief Secretary to the Prime Minister, formerly, Darren Jones, saying that actually the ID scheme was not itself funded, which what it does, if we get away from the granular details of the particular proposal, it reminds us that there's a lot of commitments that this new Prime Minister is making, and it's not clear how they're going to be funded.
Yeah, and you know, we now are in this cycle with girls, and we have been for a long time, where long-term sort of has stopped existing. So these things are being assessed on an almost day-to-day basis, which for bond markets is not necessarily the healthiest way to do it. But as you get these pieces of information through, there's already a kind of very broad uncertainty, like what are they going to pursue, what kind of budget are we going to get later in the year, and then these questions of the spending that's already come in the first. You know, we're less than 24 hours in. You know, are these things funded? You know, does that add a bit more uncertainty? And that is the key problem, is that in order to get control of that, they need to keep announcing things, being very clear about fiscal discipline and keeping within the fiscal rules.
Yes.
But as I say, we're less than 24 hours in. It's not even 9 o'clock, in fact, on Tuesday.
Yeah, absolutely. It's not 9 o'clock. So not very far into this new administration, but they do want to hit the ground running, and they do want to make lots of announcements. And that's the contrast that many people have called for, I suppose, in contrast to the early days of the Keir Starmer government, who'd had many years in opposition and then seemed to hit the ground running with not that many policies up front. Yes. And that's what seemed to underwhelm.
Yes, yeah.
Summarising complex analysis.
No, but that's right. And so they are attempting to differentiate themselves from that. You have already had a couple of things come out, as you mentioned, on electricity bills. They'll probably be broadly welcomed, but the question very consistently is going to be between balancing the politics of doing these things and balancing what bond markets want to see.
Sam Unstead. Thank you very much indeed. As ever, we appreciate your agility around the UK story and the impacts across these markets. Sam Munstead with the analysis. One factor, of course, that will be a challenge for this new UK Prime Minister and his team will be the energy price story, the geopolitics, of course, emanating out of the Middle East. The US says it has completed a 10th day of strikes on Iran after President Trump promised Tehran would pay for the killing of 3 US soldiers. Threats by Iranian-backed Houthi militants to blockade Saudi Arabian shipping in the Red Sea, meanwhile, risk the conflict expanding further. Let's bring in Bloomberg's Stephen Stupczynski with the details. Stephen, how seriously do we take this threat from the Houthis? Could it materially change the situation when it comes to the Red Sea? And where do things stand when it comes to the Strait of Hormuz?
Right now, the oil market seems to be in a wait-and-see situation for how the Houthi threat is going to materialize in the Red Sea and if it will lead to any disruption. If it does lead to a disruption, answering your second question, this would be a big deal. Saudi Arabia has been using the Red Sea as a main alternative to the Persian Gulf and the Strait of Hormuz since it's been disrupted over 3 or 4 months ago. The East-West pipeline has been key for Saudi Arabia to export about 4 million barrels per day into the Red Sea and then through the Bab el-Mandeb Strait, which is the key waterway to get it to its customers in Asia. Now, the Houthi rebels are looking at potentially disrupting that Bab el-Mandeb Strait. They've done so in the past, famously in 2024. Now, whether this will actually materialize, whether they can do it, is another question. We're not seeing any big disruption. What we are seeing are some ships signaling that they're not Saudi. There's one vessel that went through signaling that it is Indian government owned, saying, hey, you know, we're not with those guys. But if we do start to see some ships turn around, if we start to see ships attacked, and more importantly, if we start to see Saudi Arabia reducing flows into the Red Sea, then we will see most likely a very large reaction to oil prices because take away the Red Sea, and that removes one of the key alternatives, levers that Saudi Arabia had to get away from the Strait of Hormuz.
Yeah. And, Stephen, I spoke to Goldman Sachs yesterday who were making that very point, suggesting that, yes, those alternative routes had proven themselves to be pretty useful when the Strait of Hormuz was closed. And that took us on to thinking about European gas and the extent to which European gas is going to be understocked, if you like, or stockpiles are not going to look as healthy as they would usually do heading into a winter. Is that something that's worrying the markets?
I think absolutely. I mean, you look at LNG and natural gas prices in Europe. We're at the highest level since March. Prices have been steadily rising, actually sort of outstripping oil prices over the last few weeks. And I think one of them is the lack of alternatives. You know, oil you can ship some other ways. There's the ADNOC shuttling service that they've developed, but for LNG there are no alternatives. And a fifth of global LNG flows comes out of the Strait of Hormuz. It's produced by Qatar. So the longer this continues, the tighter the market gets and potentially the higher gas prices get in Europe.
Stephen, thank you very much. Stephen Stupczynski with the view of the energy markets as a result of what's happening in the Middle East. Coming up, we'll get back to the defence theme. We'll head back to the Farnborough Air Show. Guy Johnson is on the ground for us. We've spoken to him about the civil dynamics and the defence dynamics unfolding at this Farnborough Air Show in 2026. He'll be speaking to the CEO of the European defence firm, Leonardo. How much are partnerships very much at the centre of that conversation? That certainly stood out in the conversation we had with the Hensoldt CEO earlier on. So Guy Johnson will be back shortly talking to Leonardo, the Rome-based defence business, defence electronics, defence systems, all of that in focus. That's next. This is Bloomberg.
Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
This is the opening trade. Good morning. 30 minutes into today's session, and we're looking pretty flat, actually, across the European equity markets. Overall, not going anywhere. But the difference seems to be technology. So where we have substantial presence of technology names, we're outperforming a little bit. I mean, the DAX is just into positive territory, I was saying, as it turned negative. We're unchanged on all of these markets that have some tech influence. The FTSE 100, a lot less tech, of course, and so that one is down by 0.3%, Tom, because the handover from Asia, from the US into Asia, was that technology, particularly semiconductors, actually was outperforming in the US session, and then into the Asia session we saw strength across the Asia technology landscape, and that does seem to have found a little bit of a niche here in Europe.
Yeah, you are seeing that beneath the hood, as you say, when you look at some of the individual tech plays in Europe. But broad-based, what we're seeing is volumes modestly higher, just up 3% versus that 20-day average. The majority of stocks then in negative territory so far in the session this Tuesday. 399 in negative territory, 184 posting gains, at least so far. So talking of gains, let's flip the board and have a look at some of the leaders. Swatek is there. That does have that exposure to the tech story, of course, to the AI story, and that is gaining 3.3% after a strong session and a turnaround in sentiment in Asia. MITI Group, this is focused on construction. It's a potential takeover target, so that's rallying that stock here in the UK, up almost 40% on the back of that news. OCS, potentially the new acquirer. BAE Systems in the defence space. You are seeing a lift to some of the defence names, possibly tied to what we're seeing in terms of the new UK Chancellor, former Defence Minister here in the UK, up 2.8%. Guy Johnson, of course, is on the ground at Farnborough with further conversations and that focus on defence. In terms of the laggards today, let's flip the board and see how things are playing out for some of the key names on the downside. In the construction and infrastructure space, you've got Jürgen Heinrich over in Germany, currently down 4.2%, making some of the machines that go into that. Schindler, meanwhile, is down 14 points. And Swatch Group, interestingly, they saw profits coming in well below estimates, and that seems to be where investors are focused. But the sales guidance was actually quite strong for Swatch. But nonetheless, that stock is currently down at 3.4% so far. Anna.
So those are the markets. Let's get up to date with some of the other stories we're covering this morning, Tom. The US has said it will impose a fresh 50% tariff on some Canadian goods, saying Canada has been treating American cars, alcohol and dairy unfairly. The levies are due to take effect in 30 days and would mark one of the most severe trade actions taken by President Trump against the US's second largest trading partner. Staying with the US, officials say the country's military has completed a 10th day of strikes on Iran after President Trump promised Tehran would, quote, pay for the killing of 3 US soldiers. But the conflict could expand further, with Iranian-backed Houthi militants threatening to blockade Saudi Arabian shipping in the Red Sea. And the UK Prime Minister Andy Burnham has named former Defence Secretary John Healey as Chancellor of the Exchequer in a surprise move. The decision is fueling speculation about a bigger increase in military spending. Tom.
Well, staying with the defence story, as Europe gears up to increase defence spending in order to reach NATO's 5% goal, the industry is preparing for shifting demand as warfare is reshaped. Let's get back to the Farnborough International Air Show. Guy Johnson standing by with a guest. Guy.
Yeah, we've moved over to the Leonardo stand. We're joined by its new CEO. He's been in the post around 10 weeks, Lorenzo Mariani. Great to see you. Thank you very much for taking some time to be with us this morning. You've been in the job for, what, 10 weeks now?
10 weeks about.
Less than 100 days.
Less.
Do you like what you see? Are you happy with the numbers?
Yes, I'm happy with the numbers. I'm happy with the products that I've seen. And I'm happy with the approach we are taking now to face this very, very challenging moment, although full of opportunities.
Okay, why is it challenging?
It's challenging because we need to accelerate. I think what the world is telling us is that the world has changed. There are many threats. We have to provide our customers and governments with new means of facing those threats, and this means accelerating in new developments, accelerating in new technologies, and accelerating in delivery of what we have already in our hands.
Okay, so let's talk about that. Is the challenge getting orders now? Because it looks like orders are beginning to show up and there's plenty of them. Or is it delivering on those orders? Is that kind of capability challenge the bigger challenge now?
I strongly believe that the challenge is delivery. I think delivery and acceleration of delivery is what we really need to do now. We have a good and a healthy order book. Orders are coming. Markets are very dynamic in all sectors, and I think the multi-domain approach we are proposing is bringing already a lot of results. Nevertheless, we need to accelerate deliveries and to make all these goods and services available to our customers.
One of your customers, and I think you've got 8,000 people here in the UK,
yeah, more.
Is the UK and what it's going to deliver. We've just had some big announcements last night. We've got a new Chancellor of the Exchequer, John Healey, who I'm sure you've probably met before. He was the former Defence Secretary. He's now going to be Chancellor. He's very keen on increasing spending. Got Wes Streeting as the new Defence Secretary. Do you welcome these appointments?
Of course, I welcome those appointments, but first of all, I think we are confirming that UK for us is our domestic market, is our customers, and we really understand the spirit of the new DIS with a lot of focus on key projects like the GCAP, a lot of focus on autonomy. Autonomy, we are here in Farnborough with Proteus, that is our proposal, our project for the future of rotary wing autonomy. And I think this will be really an important push for us to satisfy all the needs of the UK market.
Are you confident the UK can increase defence spending?
I'm confident. I'm confident because I think the demand is there. All the structure of the new plans are aligned with what we are proposing. I think GCAP will be really a big game changer, not only for UK, not only for Italy, but for the overall market of new generation systems. The sixth generation system is something that will really change the way air power is intended.
Let's talk about who is within GCAP.
Yes.
You have been out in front suggesting that Airbus over the road, and I spoke to Guillaume Faury yesterday, join GCAP in some shape or form. Why does GCAP, the next generation fighter program that BAE is involved with, you're involved with, why does it need Airbus?
Well, I will start from our history. I think we have a long history between Italy and UK of air programs together, starting with Tornado, then Eurofighter, then Tempest, GCAP. So I think it has been quite natural for Italy and UK to join forces. Then Japan, it has been a wonderful discovery. They are professional, they are strong, they are absolutely minded to achieve results in a reasonable time, and we really appreciate that. Then there is Europe. I think Europe cannot afford fragmenting the efforts, and efforts means money, means also brain in many projects, and so my point is that we would welcome, from the industrial point of view, Germany joining the GCAP program. Of course, how and when it's in the hands of governments.
The risk with that, and you're right, Guillaume was talking about the kind of, this is a government decision that ultimately needs to be made. But the risk is that 2035 is the kind of the date, the delivery date. We need to have that sort of set in stone. Certainly the Japanese have made that very clear. If you bring in Airbus, does that date get pushed out to the right? And Europe needs this capability now. You talked about delivery earlier on. Like, Europe needs to deliver. Otherwise, people are just going to buy the F-35, and that seems to be an increasingly kind of big concern.
Absolutely. On one hand, I think Eurofighter is still a fantastic plane that can easily cover the needs of many nations in Europe and outside Europe for the next 20 years. Nevertheless, I fully endorse the 2035 date, and I think for no reason we should delay that. This has been clearly said also by our ministers, who said that in this moment, for no reason, we should think about delaying such a development, but on the contrary, we should try to anticipate that is a challenging effort. So that is the risk, you're right, and I think nations and the industry should be also pragmatic and very constructive in finding ways to accelerate the program while building those capabilities in such a way that the requirement is met.
Let's talk about America. You've talked about it being a priority. How do you make that happen, or how do you get a bigger footprint in the United States?
Well, Leonardo has a very good footprint in the United States. I think this is thanks to the decisions that were taken about 20 years ago when we decided to invest in DRS. DRS today is a profitable business, fantastic company, moving up from tier 3 to tier 2 and sometimes tier 1, high technology in different domains, so very good. But in parallel, we also have a presence with our helicopters and with our electronics. So we have already a differentiated and quite heavy presence in the market that is expected to be, is already and is expected to be the most dynamic in defense.
Okay, let's wrap this all up. You've painted quite a positive picture for me. You've used the word confident a number of times. It feels like you are confident, and it feels like you have great confidence in the company. Your predecessor talked about the idea that maybe we could see an upgrade to the outlook. We could see an upgrade maybe to the earnings. Do you see that in the numbers? Do you see that in the future? Do you see that something that you can deliver now? Are you ready to say, yeah, this company's in great shape, we should upgrade the outlook, we should upgrade the earnings picture?
What I'm saying is that the company is in good shape. I think the market is helping us, and of course, as always, when the market is increasing, you have to adapt in order to intercept that demand. Numbers, we are looking at those numbers. We are very close to the disclosure of the half year, so I will not comment today precisely. What I think is that we really have opportunities not only for this year, but also for the years to come. And the real challenge is not only to concentrate on 2026, but also to do all what we can in order to improve by accelerating delivery, getting more orders, but delivering those orders, not only 2026, but the overall plan 2026 to 2030.
Would it be, you talked about the challenge of delivering. Is it that challenge and the kind of the working capital requirements and all the things that go with that would maybe prevent you from upgrading? You talked about the confidence in orders, but you've got to deliver. Is that the challenge in terms of the issue surrounding such an upgrade?
I don't see many challenges in terms of capital investments. I see more an issue in delivery related with supply chain. I think the European supply chain, namely, is quite under pressure because this acceleration often involves that 60 to 70% of our value chain that is in the supply chain, and this is a common problem to all European industries. I see in the civil side and the defense, us, our partners and peers. So in my view, that is the area where we have to work more, sometimes investing, sometimes helping them. In any case, helping the supply chain to see better what is our planning so that they can also make the investments in a more targeted way.
It's great to see you. Thank you very much indeed for sharing some of your time with us this morning.
Thank you.
Thank you very much.
It has been a pleasure. Pleasure for me.
Lorenzo Mariani, the CEO of the European defence giant, Leonardo. From Farnborough, we'll be back a little bit later on. We've got some great guests lined up throughout the morning. But for now, back to you.
Guy, thank you. Of course, as Guy says, he will be still at the Farnborough Air Show throughout the day, and he'll be speaking with Lockheed Martin's Aeronautics President, Orlando Sanchez, and with Larry Culp, the Chairman and CEO of GE Aerospace.
OK, coming up, the Trump administration threatens a new 50% tariff on Canadian imports. Details are next. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
July 30th. The Bank of England makes its next interest rate decision, and investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Inflation is higher than we expected. Of course, now what we've got to do is get it back to 2%.
Join the opening trade team for live market reaction and analysis and on-the-ground coverage at the Bank of England. It all starts July 30th, 12:30 p.m. only on Bloomberg.
Welcome back to the Opening Trade. We are 48 minutes into the Tuesday session. You're seeing gains, very modest gains across the European benchmark. Stocks just running up just 0.1%. On the upside, basic resources gaining alongside tech. On the downside, the grocers under pressure, the likes of Tesco and Carrefour. But the gains are coming through on the sector basis, again, for tech and basic resources, Anna, so far in the session.
Yeah, but let's talk about trade. The US says it will impose a fresh 50% tariff on some Canadian goods, alleging Canada has been treating American cars, alcohol and dairy unfairly. The levies are due to take effect in 30 days and would mark one of the most severe trade actions taken by President Trump against America's second largest trading partner. Let's bring in Brendan Murray, who leads Bloomberg's global trade coverage. Brendan, good morning to you. So the US then putting these tariffs on Canada, saying that that America has been treated unfairly. What's the legal basis for all of this?
Well, the legal basis is one that kind of came out of nowhere. It's called Section 338 of the Trade Act of 1930. It's the infamous Smoot-Hawley law from Ferris Bueller fame.
Yes.
And the trade lawyers will be scratching their heads this morning trying to figure out whether Trump actually has the authority to use this. It's never been used for tariffs before. It's been used in the 30s and 40s as sort of pressure on some adversaries, but it's never been used before. And the president surprised a lot of us by coming out with this. Canada has been in a prolonged sort of 12-month tussle with President Trump over trade. And this is just going to add to it. They've got 30 days to figure it out. Otherwise, these 50% tariffs hit roughly $20 billion worth of Canadian imports.
I saw that Jameson Greer had talked about Canada having more favourable trade deals with Europe, and so some may question, well, what do you expect if you're hammering Canada with tariffs? What has the Canadian response been to this? There's a 30-day window. Are these likely to come to effect? How is Canada responding?
Well, the Prime Minister Carney has said basically that they're going to start intensifying the negotiations with the Trump administration. You've got others like Doug Ford who say we're just going to match your tariff with tariffs of our own. So you've got sort of Canada has given President Trump quite a lot over the past year in concessions, and they've kind of run out of concessions, according to many Canadians. And they basically their attitude is what is going to make him happy. And so it's going to make for an interesting 30 days. This ultimately is a negotiating tactic to try to drive the two sides, Ottawa and Washington, together. Washington is already in talks with Mexico, so they're further ahead with Mexico. So this is has all the hallmarks of Trump's strategy to drive the two sides to the negotiating table. Ultimately, Bloomberg Economics thinks that these tariffs won't take effect 30 days from now, that they will have the desired effect. But whether Canada will give Trump what he wants is yet to be seen.
And I thought, Brendan, that these three countries were in some sort of relationship already on trade terms, that this had been set, the USMCA. We know that the US then has backed away from renewing the USMCA. Is that right? But it still is supposed to be in place for another decade.
Yeah, exactly. So it was several weeks ago when basically the three sides says we're not going to extend it for 16 years. We're just going to go to these rolling reviews, these annual reviews. And so this latest action by the Trump administration sort of gives you a preview of what we can expect. The negotiations are really never going to end between these three countries, and at least while the Trump administration has a say in it. And we can expect more sort of uncertainty about companies that are trying to run their supply chains across these three economies.
OK, Brendan, thank you very much. Thanks for the update. Bloomberg's trade czar, Brendan Murray.
OK, let's look ahead at what else we are watching throughout the day. The ASEAN Foreign Ministers meeting will take place in Manila. The European Parliament delegation, meanwhile, will be visiting China at a moment of trade tensions between Europe and Beijing. Certainly 9 a.m. UK time. The ECB's July bank lending survey will be published at 10 a.m. UK time. We'll get a gauge on the sentiment survey. Of course, the ZEW survey expectations out of Germany. And later stateside, US Defence Secretary Pete Hegseth will be testifying before lawmakers over the cost of that conflict with Iran.
Let's get the thoughts then with that day ahead, with the thoughts of Skylar Montgomery-Coney, who joins us from the Markets Live team. Skylar, good morning. So it seems like the tech theme is sort of going around the world once again. We saw a bit of a recovery in some of the semiconductor stocks in the States yesterday, decent session in Asia for tech, some tech resilience here in Europe as well. It's not all dominant, though, is it? Because Europe overall is doing something different.
Yeah, I mean, I think generally we're clearly not out of the woods yet on tech, and that's primarily because we have these big earnings coming for us tomorrow and, you know, further out into the earnings season as well. And I think what investors are really questioning right now are who's going to be the winners and losers from the AI trade, because you're having so much spending. Not all of these companies can get a big return on investment. And how worried are you about speculation in the market versus these kind of massive earnings expectations? Because what we've seen is leverage has risen quite dramatically. Yes, it's come off a little bit if you look at ETFs, for example. There's not as much money in them, but certainly because it's been building so long, it's very, very high. Concentration is high, and you have valuations on a trailing basis that look very elevated. Now, on a forward basis, they've come down actually in the last month or so, and that's because earnings expectations are so strong. And so what we need to see is whether or not those earnings are delivered. Can you justify those prices? And it'll really be to the decider of, you know, how these stocks do. And I think we're increasingly not looking at it as a one trade in the sense of everything can go up together, but from an individual stock perspective.
So we get Tesla earnings and Alphabet earnings on Wednesday, so tomorrow, and then we get the other hyperscalers next week. After that, it's just a quiet summer, is it, for the equity markets, for the global markets? Yeah. Or is there no such thing as a quiet summer now?
Yeah, we've moved away from this actually in the 2020s. Now, some of this is kind of structural around what the macro regime is and that we have more supply shocks. Geopolitics is clearly an issue. US-Iran, I don't think that's going away anytime soon. But you've also had this change in how we look at earnings, in that tech is not just, 1-2 weeks of the earnings season. It's spread out because semiconductors report further out into the earnings season. You also have more earnings from different regions that matter. So if you're looking at Korea, that still matters for the U.S. market. And so I think it's something that we're concerned about on a longer time frame. On top of that, you have stuff like systematic trading. That means that stuff turns over more, as well as leverage ETF making bigger moves possible. And so if you look at volatility from 2020 to now versus 2015 to 2020, it's much more elevated now, and you don't get that kind of summer dip that we used to.
So that's the summer. Let me think about the German outlook then, Skylar. We're going to get ZEW, investor optimism or lack of that data coming through in around, an hour and 5 minutes. And I'm reminded of what happened in June, just looking on the terminal, the German investor outlook jumping with Iran resolution in sight. And so you wonder if that was the thing that made things better in June, if that takes a step backwards here. I guess we're in a very difficult period to assess exactly how the Iran dynamics play out.
Yeah, and I think certainly from a sentiment position, it gets worse the longer it goes on, right? Because you thought you had a resolution. That's not the truth anymore. We've backed away from the memorandum of understanding being this kind of support for sentiment. And I think because you have such a high level of uncertainty and headlines going back and forth, that, that sentiment is much more worrying for the consumer going forward, and particularly for Germany, that's very much impacted from an energy perspective.
OK, Skylar, thank you very much indeed. Skylar Montgomery-Coney from our Markets Live team.
More conversations to come from Farnborough. Guy is there, as we've been saying. He'll be speaking to Orlando Sanchez, the aeronautics president at Lockheed Martin, and Larry Culp, chairman and CEO of GE Aerospace. So the aerospace industry, the civil side and defence side, very much in focus. Quite a lot of defence themes through this programme. That is it for the opening trade. The Pulse is coming up next. They'll continue to take you through the markets. This is Bloomberg.
the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The U.S. completes another wave of attacks on Iran for the 10th day in a row. Meanwhile, Houthi militants in Yemen, who are backed by Tehran, threaten to block the Red Sea. Well, the UK borrowed more than forecast in the first 3 months of the fiscal year. It comes amid speculation that the new Chancellor, John Healey, could increase military spending. Plus, there could be a new trade war between the U.S. and Canada, with the White House vowing to impose a fresh 50% tariff on some Canadian goods. Well, good morning, everyone. Welcome to the Pulse. There's just a lot going on in the markets. There's this chip rally that's been driving some of the stocks much higher in an otherwise pretty quiet session. I guess buyers are picking up semiconductor stocks at cheaper valuations after the sector suffered its worst week in more than a year. Now, if we look at the recent sharp sell-off in momentum stocks, it could be nearing its end. Investors saying this could create also opportunities to restart building repositions in AI and chips. And the other, of course, big story is what's happening in the UK with the Prime Minister. We have a new Chancellor, John Healey, and you can see sterling 134.42. Now, we're also looking at oil. If we look at the European markets map, U.S.-Iran strikes have been extending to the 10th day. The Houthis seem to be a new front that's opening up. Oil prices surging, and you can see stocks pretty much unchanged. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. A new trade war could be booming between the U.S. and Canada. We'll discuss that in just a moment. But first, the U.S. and Iran exchanged strikes for a 10th consecutive day as diplomatic efforts to ease tensions in the Middle East continue. Meanwhile, of course, the new UK Prime Minister has fueled speculation about a bigger increase in military spending with his new pick for Chancellor. With us now, Hugh Gimber, Global Market Strategist at JP Morgan Asset Management. Hugh, what a day to come on. I mean, we have talked talk about oil, but first, we have a new Prime Minister and we have a new Chancellor. What would you like to know? Because we're still thin on details.
We are. So for me, we know this government is going to want to spend more money.
Yep.
We'd like to know how they're planning to spend more money and where they're going to fund it from. I think when setting out the stall for this next premiership, the key thing for Andy Burnham to remember is that if you leave too much uncertainty about how you're going to raise taxes come the autumn budget, you could repeat what we saw over the course of the last summer, which was businesses simply saying, if I don't know which rules I'm going to be working with, I'm not going to do anything. So there's a balance to be struck here between setting out the stall for this circuit breaker and providing some early signs that there is going to be more support coming for consumers, but without then creating that burden for businesses worrying about where tax changes might be coming further down the line.
But Hugh, where's growth going to come from? And actually, how much does this Prime Minister need to be inventive, thinking outside the box to try and really kickstart growth, even with the fragile, the 10-year gilts trading at a premium, again, compared to Treasury? So the situation is tricky, but if he doesn't unlock something, it's going to be even trickier.
Yeah, I mean, this lack of growth is behind all of the UK's political problems. This is our 7th Prime Minister in 10 years. And if you go back really since the financial crisis, the working age population in the UK has benefited from absolutely no real wage growth. So it's getting that real wage growth going, which I think is key. But of course, with stronger wage growth, also you can do that by controlling inflation. So I think it's reassuring that the first step that we've seen this morning about removing VAT on energy bills is designed in a way which is going to help keep inflation under control. That, I think, is key when we learn more about some of the further measures to support consumers over the coming weeks. Yeah. We know that it's necessary, but it has to be done in a way which keeps inflation down, because otherwise that real wage benefit just isn't to be seen.
Hugh, so this is my morning must-read. I wake up in the morning quite early, always too early, and then the first person I read usually is John Authers, and he had this brilliant piece actually on the new Chancellor. So let's see what he has to say. So he basically says, John Authers, that we can't go back to the 70s, right? Is there a danger that this is like the old Labour? And that's the quote we were looking at.
So this is not what we're expecting. The tax revenue as a share of GDP in the UK economy is already at its highest level since the end of the Second World War. So yes, we know that this government is fiscally constrained, but I also think the bond market has worked that out. So you have UK 10-year gilt yields at around 5%. You have a 50 basis point premium on UK government bonds relative to the US. Yeah. I think this is well understood by investors. So provided that over the coming days and weeks, the new Chancellor continues to demonstrate that he's taking fiscal rules seriously, I think there are opportunities on offer in UK gilts here, because for the fiscal rules, it's not so much about what exactly the rules are, it's the fact that they provide any Chancellor with the ability to turn down new spending requests from other departments.
But can you attract businesses and increase taxes?
Well, it's going to be difficult. I don't think that the UK economy has very much more room to tolerate higher taxes. That's the challenge in a nutshell, that you need a business-friendly environment to promote growth. But if you want to spend in other areas, then it's going to have to come from somewhere. And that's why, in some ways, I think the choice of John Healey as Chancellor is a clever pick, because the biggest pressure on this government was going to come from a need to ramp up defence. And so effectively what the new Prime Minister is doing is to say, well, if you'd like to spend it, you've got to find somewhere to fund it.
Yeah, message received. I mean, it was a pretty clear message on day one. Hugh, when you look at equities in, the FTSE 250 or the FTSE 100, like, what do you go after? Because a lot of them are, some of these mega caps, especially on, oil and copper plays.
Yeah, I mean, bluntly, I don't think the politics of this really matters for the UK equities broadly. I mean, we all know 80% of revenues coming from overseas. The role for UK equities here, in my mind, is twofold. It's one, as a hedge against further escalation in the Middle East. And two, it's about, finally, an equity market which is not all in on the AI trade. You look at the US, you look at EM in particular now, more than half of those indices are directly related to AI before you even think about the utilities link or the industrials link. The UK equity market has suffered for 15 years from not having a decent allocation to technology. But for global investors, I think that is the case for the UK here as some form of AI diversification. And if a new Prime Minister offers international investors just a little bit more clarity, then maybe that's a catalyst to see some flows return.
Hugh, thank you. Hugh Gimber from JP Morgan Asset Management stays with us because we'll talk about trade and Fed in a second. But the U.S. says it will impose a fresh 50% tariff on some Canadian goods. alleging that Canada has been treating American cars, alcohol, and dairy unfairly. So the levies are due to take effect in 30 days and would mark one of the most severe trade actions taken by President Trump against the U.S.'s second largest trading partner. With us now, Brendan Murray, who leads our global trade coverage. So, Brendan, what's the legal basis for these new tariffs?
Well, the legal basis is that, according to the U.S. administration, Canada is discriminating against autos, dairy, and U.S. Alcoholic beverage industries. And so, what we're seeing is really the first surprise on tariffs from the White House, from President Trump, since he lost the Supreme Court case back in February, and really trying to reassert himself to show that he's got this sort of unilateral authority to put tariffs on trading partners that he's unhappy with. He's been annoyed with Canada about the wildfires, about this Gordie Howe Bridge. So this pressure, the tensions have been building between these two countries, and really they're going to start to intensify over the next 30 days. These tariffs, 50% on about $20 billion worth of Canadian imports, will take effect if they can't come to some resolution on August 19th. And so we're facing several weeks now of some uncertainty about where we're going to go, whether Canada will retaliate, whether they'll offer some concessions. But this just revives a relationship that had been under strain for the better part of the past 18 months.
Yeah, Brenda, I mean, it was funny because I was looking at the World Cup final, and actually Prime Minister Carney was next to President Trump, and they seemed to get along fine. So what's been the response from Canada?
Well, Canada, Carney's response was this will drive us back to the negotiating table. The Canada and Mexico and the U.S. have sort of abandoned any sort of extension of the USMCA, North American Free Trade Agreement, and so we're into these sort of rolling bilateral negotiations between the three countries, and the U.S.-Canada talks are well behind the U.S.-Mexico talks. And so what we're seeing, according to Bloomberg Economics and other analysts, is an effort by President Trump to spark some negotiations, to drive Canada to the negotiating table in a position of weakness, now with this 50% tariff hanging over the heads of a lot of Canadian exporters.
Brendan, thank you so much. Brendan Murray there, who leads our global trade coverage. Now let's get back to Hugh Gimber, global market strategist at JP Morgan Asset Management. Hugh, I mean, I guess, there's a concern, like we weren't expecting trade, right? So we worry about, of course, Fed, monetary policy, oil in the Middle East, and this is just another added layer of uncertainty.
It is, but I think it's a relatively small one in the context of the other issues that we're dealing with here, because you're looking at a contained proportion of US-Canada trade, a pretty small one, frankly. And so, yes, 50% is a big number, but it's on a small proportion of that activity. At the same time, the inflation backdrop is a lot better today than it was 12, 18 months ago when we were first dealing with these trade headlines. And so we already know that core goods inflation is going to be seeing a little bit of pressure from energy prices. If there's a small additional increase as a result of higher tariffs, then that's not really going to change the calculus for the Fed. And I think broadly, the reaction in FX markets last night tells you that markets are looking at this as a negotiating tool to try and bring those two countries back to the table.
What's your take on the Middle East? Because there's a little bit of, I guess, headline fatigue. It feels like we've seen this before, but we haven't had that much of an impact on the price of oil. Are we actually going to get a price of oil impact?
So for me in the Middle East, I think it's really important to go back to why oil prices came down so quickly when there was de-escalation. Because that wasn't just about the Strait being fully resolved by any means, completely the opposite. But instead, you were learning that, one, China's energy demand is much more flexible now, and that's a permanent story. Two, the OPEC's supply discipline has been weakened by the UAE's departure and countries such as Iraq saying, we want more supply quotas, otherwise we'll threaten to leave as well. And then third, all of the diversification efforts that are now underway to break Iran's hold on the global economy's dependency on the Strait of Hormuz. So I think that explains why we haven't seen a bigger backup in oil prices. And at the same time, if you have a booming earnings season, which is where we are today, stock markets can look through this quite easily.
What's your take on, we see a lot about semiconductors and AI. Is this actually the biggest unknown?
I think it is, but I suspect some people have been looking in the wrong place for the answers on the semis, because we had incredible results from TSMC, incredible results from ASML, and the stocks didn't perform. But where you have to be looking is effectively their neighbours in the supply chain. So I want to see hyperscaler CapEx commitments going up again. And that, I think, is the important part for the semi story to find a floor, because you know that it's not just what the semi CEOs tell you. They need their revenue deliverers, i.e. the CapEx spenders, to be willing to keep ramping up that spending in order for investors to get more comfortable that this is not as good as it gets for the semis.
What's your, where do you want to put value right now, given all of the earnings that, seem okay, but there's so many questions about revenue longer term?
Yeah, I think you look at Asia. China in particular is getting a lot more interesting here, because that is a part of the market that has not kept up with the rally that we've seen in areas like Korea and like Taiwan, and yet they're making real progress, not just in terms of competing on cost, but also in terms of being able to compete on the sophistication of the memory names, the chip names, and the models that we're seeing as well. So if you're looking for the next leg of the AI trade at still, I think, very reasonable valuation, China's definitely worth a look.
Is there one thing that you would stay away from right now, given all of this uncertainty? Is there a part of the market that looks a little bit frothy?
In the tech space itself, I still am more comfortable in the recipients of the CapEx spend than I am the spenders, because bluntly, there are questions about this whole space, but I think you are more stable, you have more visibility on the earnings profile if you're a beneficiary of that $700 billion of CapEx spend than you are if you're trying to tackle this return on investment question, which is still as unanswerable today as it was 6-12 months ago.
Hugh, thank you so much, as ever, for joining us. Hugh Gimber, their global market strategist at JP Morgan Asset Management. Coming up, a 10th day of U.S. strikes on Iran. We'll discuss the chances of bringing the war to an end with the U.S. midterm elections just months away. That's coming up next, and this is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The U.S. says it's completed a 10th day of strikes on Iran after President Trump promised Iran would pay for the killing of 3 U.S. soldiers. Now, the pressure is building on Washington to end the war, with the U.S. midterm elections less than 4 months away. Now, let's get an assessment of the rising costs of the Iran war later when U.S. Defense Secretary Pete Hegseth appears before the Senate committee. With us now this morning, Jasmine El-Gamal, founder and chief executive of Avero Strategies and a former Pentagon advisor. Also with us, our Bloomberg senior writer and author of Punishing Putin, Stephanie Baker. So thank you both for joining us. We'll talk about the midterms, but first, what is going on in the Middle East? Because either side, it feels like it's getting worse by the day, and there doesn't really seem to be a de-escalation strategy.
That's right. I mean, you and I have been talking for a while about the potential for miscalculation and whether the lack of trust between the two parties would lead to a degradation of the situation over time. And that is exactly where we are right now. If there was even a modicum of trust that had been built around the negotiation of the MOU, because of the vague language of the MOU, how it was misinterpreted or interpreted differently by both sides, and then how both sides chose to react to that different interpretation, we've gotten to a place where there's absolutely zero trust, and each side remains convinced that if they just put enough pressure and impose enough costs on the other, that the other side will break. And the more you get into that mindset, the harder it becomes to back down, because backing down is seen as a concession, and concession is seen as a kiss of death when it comes to balance of power and survival in the region.
But, Stephanie, there was an understanding, at least in the markets, that actually President Trump couldn't afford re-escalation because of the midterms. So is there a direct correlation between his popularity in the midterms and what happens in Iran?
Yes, there is, which is why it's surprising he is pursuing an escalatory strategy. There was a Washington Post poll that came out recently showing 69% of Americans disapprove of his handling of the Iran war. That includes 32% of Republicans. And at the same time, he's going back to Congress asking for supplemental funding to fund the war, tens of billions of dollars, at the same time as Congress has not given him renewed authorization for the war. I remember last month, a couple of weeks ago, they came together in a bipartisan vote that was symbolic, but said he needs to come back and request authorization, which he's not doing. So now the Republicans are in this bind where they're being asked to fund the war that they have not actually authorized.
So would he actually ask now supplemental funding approval?
He has to. The war has cost so much money. The Defense Department needs more. And I think that is going to have an impact on the midterms, because the war is very unpopular. Republicans are going to be forced to vote to support additional funding, which is going to be used in the midterms against them. So at the same time, you have rising costs as a result of the war. Gasoline in the U.S. has now hit $4 a gallon. Pre-war, it was under $3, so around $3 a gallon. So it is going to have an impact on the midterms. And I think there was the thought, that he was pulling back. Last month because of that pressure from the midterms. And now it's going to be really hard to distance himself and give time for those gas prices to come down.
Jasmine, is there a nation that can bring the two of them together? I know Oman's tried, failed. I mean, does China have a bigger role to play in this, or do we rely on the weakness of the Iranian regime going forward?
Well, it's, the mediators, bless them. They are trying so hard to get the two parties back together. Pakistan, Qatar, Oman, the region is really involved. But it just comes back to this point that the two sides see themselves as being locked in a zero-sum battle. If Iran loses control over the Strait, it really sees control of the Strait as its biggest piece of leverage right now. It cannot, if it lets go of that leverage, what happens to it? There's no indication on the part of the Trump administration that they're willing to move forward in any kind of conciliatory way. And Iran, at the same time, has done so much damage to its relations around the region. It has pummeled 6,000 nearly. I was looking at a graph in the FT today, about around 6,000 attacks on the Gulf states since February 28th. The bulk against the UAE, but very closely followed by Kuwait and Saudi Arabia. And that will not soon be forgotten either. So I think there's one conversation around how does this end, but there's another equally important conversation about how do we exist in this new normal if this is what we're dealing with, if this turns into a stalemate with periods of hot conflict and sort of simmering conflict, how do we live in this new normal? And that question applies to everyone from countries living in the region to the global economy to investors. And they really need to start thinking about how do we now exist in this new normal.
Yeah, and I want to ask you about the Gulf states, because this is, also a business model that actually has been really attacked. But, I mean, how has Trump's speech on election vulnerabilities played out? Because this goes back to the midterms, and there's now question marks about what exactly he's thinking.
It has not played out well. I mean, the bizarre speech, which was kind of difficult to follow, he did not even mention the war against Iran, which felt like a real disconnect for voters who are dealing with high gasoline prices as a result of this. He made a bunch of claims and released documents, declassified documents that didn't really match what he was claiming. He made these accusations that China was attempting to interfere in the U.S. election. Indeed, they had gotten some voter registration rolls, but much of that was public knowledge, so it wasn't like they had stolen it. And he ignored what was actually in those documents, which was confirmation that Russia interfered in the 2020 election to undermine Biden and help him. So it has not played well. It seemed tone deaf given the situation.
Does it mean that there'll be question marks around the midterms?
Well, I think many people were assuming he'd come out with some announcement that he was seizing voter rolls or seizing voting equipment or something. So it kind of lacked the punch. It was almost a plea for the Save America Act, which is this legislation that he's proposing that would require voter ID and proof of citizenship to vote, which has stalled in Congress, and Republicans are not supportive of it. But I think there is still an ongoing question mark as to what he's going to do around these midterms. If they don't go his way, he is going to cast doubt on the legitimacy of those elections. And the irony here is that is exactly China and Russia's strategy here, which is to cast doubt on the legitimacy of democratic elections in the West and in the U.S. So he's at the same time fired a bunch of election integrity officials in the U.S. government, which is undermining those efforts. So, we don't know what he's going to do, but he will certainly cast doubt on them if they don't go his way.
And Jasmine, going back to the Middle East, if you're a Gulf state right now, is there anything that you can do? I mean, that you worry about your business, you worry about having become, trading platforms or like trading hubs.
Well, it's difficult because even Gulf states who have tried to be conciliatory with Iran, even since the war has started, have borne the brunt of these attacks. If you look at Kuwait, for example, it has tried to be conciliatory, but it's getting pummeled right now. And so I think it would behoove the Gulf states. Of course, the Gulf is not a monolith, right? Different countries are being attacked at different levels. They have different capabilities. Some of them have the ability to bypass the Strait of Hormuz, or at least begin to. Others don't, like Qatar, for example. And so even though they don't have the same threat level from Iran and the same options, I think it would behoove them to think more as a bloc and think about how they are going to strategize as a Gulf, region and a Gulf bloc, whether they're going to approach Iran with an eye towards talks, whether they're going to be more aggressive. And I don't think that conversation has really fully been played out yet in terms of what the approach is, not as an individual country, but also as a bloc.
Do you worry about this escalating before it de-escalates from where we are?
I do, because I don't see many pathways, we were just talking before this, for de-escalation. And I worry that because the stakes are now so high, de-escalation is seen as retreat. Yeah. I've said it just the other day, and I'll say it again here. I think the one face-saving option is for both parties to lean on the mediators and to say, look, for the sake of the mediators, because of their great efforts, our brotherly nation of Pakistan, our good friend Qatar, we have listened to them and we are heeding their call to talk. We are doing this for them. That really is the only option I see for a face-saving de-escalation. But, with Trump, with the Iranians, it's very unpredictable. So I would just say brace for more.
Jasmine and Stephanie, thank you so much. Founder and Chief Executive at Avera Strategies, Jasmine El-Gamal, and our Bloomberg senior writer, Stephanie Baker. Coming up, we'll look at what to expect from the UK Prime Minister Andy Burnham's new top team. That's coming up next, and this is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The U.S. completes another wave of attacks on Iran for the 10th day in a row. Meanwhile, Houthi militants in Yemen, who are backed by Tehran, threaten to block the Red Sea. There could be a new trade war between the U.S. and Canada, with the White House vowing to impose a fresh 50% tariffs on some Canadian goods. Plus, the U.K. borrowed more than forecast in the first 3 months of the fiscal year. It comes amid speculation that the new Chancellor, John Healey, could increase military spending. So let's get more on the new government in the UK. Andy Burnham made some investors nervous on his first day as Prime Minister over comments on his approach to the country's finances. Let's get more with Rosa Prince, Bloomberg opinion columnist, John Stepek, author of Bloomberg newsletter Money Distilled, and Tim Craighead, research director at Bloomberg Intelligence. I'm excited about our panel because first we're all chatting like, well, the new Chancellor, we weren't really expecting him. What does he bring? I mean, what is the one thing that John Healey, questions about fiscal, of course, question on defense, but it seems like a pretty strong message from day one, John.
I mean, he's definitely seen as less left-wing than Ed Miliband. And the main thing that markets before this were worried about was that it would be Ed Miliband, who kind of brings a lot of baggage with him. I think probably what you can say about John Healey is he doesn't bring the same baggage, and obviously the other issue is that he effectively seen as one of the big reasons that Keir Starmer is out now, because he stepped down as Defence Secretary because he said, look, I cannot take this package, where we aren't spending enough on defence. So obviously he's going to look kind of silly if he doesn't increase the amount that we're spending on defence. So I think that's the kind of biggest issue here is, like, well, where's that money going to come from? Because there isn't a lot of fiscal headroom. And obviously when Burnham said yesterday, I'm going to try to be flexible, gilt markets immediately reacted. So he's on a tight leash, and it'll be interesting to see how he tries to navigate that flexibility.
So Rosa, I mean, can this country actually raise taxes and attract investment and business at the same time?
Good question. Andy Burnham did drop a little hint. He had a couple of interviews yesterday in Downing Street where he did not rule out raising the top rate of tax to 50p. I think that's why there were some of those market bumps. On the other hand, as we've just been discussing, John Healey is seen as a safe pair of hands. He would not have agreed to take the job unless he was confident that the sums were going to add up. And another really interesting thing about John Healey is he has been quite critical of the Treasury in the past. past, not just for failing to fund what he saw as adequate defence, but for that kind of Treasury mindset, particularly on devolution, which, as we know, is Andy Burnham's big agenda. So I wonder if he'll be much more amenable to letting go of some of that money, of devolving it down to the regions and the mayors and driving that strategy forward.
So I want to talk about sectors in a second, but actually when you look at the composition of the cabinet, I mean, he's kept some, others are new. What does this tell us? Like, Andy Burnham seems a little bit balanced?
I'm not sure it's balanced. I think Rose's point there about the kind of conflict with the Treasury is a good one, because if you look at who his kind of consigliere is, Louise Haig, she is very much of the mindset that the Treasury has too much power. Yeah. The one issue with that, there are several issues, but you can say that yes, the Treasury mindset has held elements back, and that it's not focused enough on the growth side of things and too much on the kind of penny pinching side of things. And certainly I think some of the mistakes that Rachel Reeves made have been kind of laid at the door of Treasury officials. But the problem is that, we're at a point where the markets are keeping a tight eye on what we're doing with our money. And so if you're turning around and saying, well, we don't like the way the Treasury scores things, let's score it a different way, the market's going to need convincing of your credibility, and we don't have a lot right now.
Yeah, and they'll get slammed, actually, because of that. Tim, so I love your research because you look at sectors. Given what we know so far, which is, again, we're 24 hours in, so not that much, who do you think will benefit? Is it the BAE systems and companies like that?
Yeah, I think there are a couple of things to think from a policy perspective, and it impacts industries, markets. One is clearly defense. That is the crux to the opportunity here. BAE is right in the target zone, no pun intended. You think about them with submarines, with frigates, with the Eurofighter Typhoon, and importantly, looking ahead, their partnership with others on the 6th-generation fighter. The bigger thing with defense isn't only that they're a prime contractor here, but can you actually get collaboration and integration across Europe so that you have a growing European budget that stays at home and doesn't go to U.S. prime contractors? That's a bigger issue that's also right on his desk from the standpoint of European relations. Housing is another key industry. It's currently depressed. Interest rates don't help. Weak demand, weak home sales. Some of that is a concern right now about what happens from a property tax perspective. We currently have negative focus ideas on both Taylor Wimpey and Travis Perkins, two different pieces of that puzzle. But if we get interest rates down, which is a big thing, at some point, that's a great business, and he wants to build homes, which is clearly how these companies would benefit.
And Tim, every time there's a new administration or a new cabinet, new prime minister, and you can't raise taxes on citizens, you look at industries. And I guess oil comes to mind, and then banks. I think Jeremy Diamond already said, please don't.
Yeah. Well, right now there's a 3% surcharge on banks. I think that there's a lot of waiting in the wings to see if this is a funding source for the new administration. Oil is an easy target as well, but there's not that much oil production that actually happens now in the UK. Shift the gears, I think a bigger policy question as we look ahead in the oil front plays into the energy security discussion, and that is there something that they want to do to spur investment actually in the energy business?
That's a very good question. Rosa, one of the things, and we were talking about this, right, you have to be fiscally responsible if you're the government, because as Mark Carney said, this country is also a small open economy that relies on the kindness of strangers, but you want these ambitious spending, I guess, promises. Is there a way to make both? Is there like a 3, 5, 6 months gap that investors will give a new administration to see what they do?
Well, Andy Burnham has said that we'll all have to wait for his first budget to get the answers to a lot of those questions. But you're right. Just kind of yesterday, he announced that he was going to eliminate rough sleeping. He has talked about improving or having a new national care service to cater to adult social care on the scale of the National Health Service. Just those two alone. Devolution is another very long-term promise that costs a bit of money. We don't know how any of these things are going to be paid for. And he has said that, he said, I'm going to stick within Rachel Reeves' fiscal rules. All the sums will add up. But I mean, he said we have to be patient. I guess we have to take him at his word. But I think there'll be a lot of speculation about that budget. If you remember last year, that budget speculation seemed to go on for
forever.
Months. Exactly. And I think we've just triggered. I think this is day one of that beginning all over again.
Devolution. Yesterday we had a panel, and actually, I think both participants thought it was a bit of a gimmick. I mean, does it actually deliver growth? Does it make voters feel like they're closer to Westminster and therefore helps them in the next general election?
I don't think it's a gimmick. I think that devolution can work. And I think that genuine competition between the regions and the nations would be a good thing. We don't really currently have that. And I'm not sure that's what we'll get. But I think, going back to Rose's point, it's also a really long-term thing. Yeah. The idea that anything you can do in the next 6 months or even up to 2029 to make that actually have an impact is kind of ridiculous. But one thing I would say is I suspect what he's actually doing just now is this is just going to be a big sort of like preview of what an Andy Burnham government would look like. And what he's going to do is try and aim for an election in 2027. So your next budget will be something like that. It will essentially be a pre-election budget. It'll make a lot of promises with the funding, kind of possibly, because a lot of the funding just now is out past 2029 or towards 2029. If you pull that forward and pretend you're going to take the pain earlier, you can look as if you're managing the budget better. But in fact, what you're doing is you're prepping for the pain to happen after the next election, which he'll make in 2027. I think that's probably what his strategy is. Now, whether that'll happen or not depends on, well, basically his polling figures over the next 6 months. Yeah. But, I mean, yeah, we'll soon
But that's
see.
a lot on outside stuff, right? The Middle East, the price of oil, things that he doesn't have any swagger over. Rosa, I mean, there are two different personalities, Keir Starmer and Andy Burnham. Like, will he succeed where Keir Starmer fails? Like, again, there's a lot that he has to do. We're talking about leaks before, the fact that maybe this government will leak a little bit less, and whether that be a good thing for the citizens.
Yeah, such different personalities. And I think you're right. I think if we're not talking about the budget, we're going to be talking about whether there's going to be an early general election, unfortunately. But, yeah, I think in terms of winning that election, he does have what Keir Starmer lacked, which is a lot of charisma. And what comes if Labour loses this election probably isn't the nice, cuddly Tories, where the two parties used to switch power between them. It will be a very different party in the form of Reform UK. And I think a lot of Labour MPs, that was their motivating factor for getting rid of Keir Starmer. They didn't think he had the personality, the voter appeal. Burnham is, for now he's very popular. So I think he thinks that he can perhaps take the fight to Nigel Farage and win that election whenever it comes.
Tim, what's the business case for investing in the UK right now compared to other countries?
Yeah, it's an interesting thing. You think about the FTSE 100. It's not a UK story. It's a global story. The vast majority of the big companies on the FTSE are global businesses, and what happens in a local economy doesn't matter. But we all know that the UK and more broadly Europe are underinvested. There's too much money that's tucked away in deposits. There's initiatives that this government can carry forward along with working in partnership with the EU to, there's the buzz phrase of make IPOs great again, and to actually unify the markets, have more of a common foothold, have more of an investment mentality, a risk capital mentality that would be quite beneficial, and to have more of a unified market that can compete against the U.S. would be huge.
So, Tim, this would be like retail investors, right? I mean, this idea like the pensions, the fact that we're just not investing in UK companies.
Well, exactly, yes, in a word, but it's more than just retail investors. It's institutional investors that are investing globally as opposed to locally. It's a combination of the two, and both of those need to function. It's part of the reason why there is, a depressed valuation here relative to the U.S., for example.
But Rachel Reeves, when she came in, John, I mean, she was very pro-business. We were expecting kind of like reforms, also regulation and things like that. Is this the right government to do it when, again, the other one failed?
I mean, she made a few bumps in the right direction with Mansion House. I think one problem with Mansion House is the focus has been on private assets rather than public assets. No one's paying attention to the UK equity market specifically. Like, we should scrap stamp duty because that take is going to go anyway, because all the big companies that pay most of it can dual list in the US if they finally want to get rid of it. AstraZeneca's basically already done that. So I think that there should be more of a focus on public markets. I do think there's a slight issue in that, well, it's a big issue. I think that a lot of Labour MPs are essentially ideologically opposed to, or suspicious of kind of the city, private sector in general. And I think so you've got a kind of heart versus head problem there when it comes to whether or not the city is going to be a priority. So I do think that's an issue.
You know, you think you've got ARM that lists in the US. Right. What a travesty from the standpoint of a UK franchise.
Yeah, and there are question marks on Revolut, but is that going to be a priority when they have so much to do? And we keep on hearing that they really have to focus domestically on the cost of living.
Yeah, absolutely. And actually, on the same kind of line, another issue I think that Labour MPs will have is welfare. Now, a lot of Keir Starmer's thinking was, well, I'm going to pay for this by getting down what is a huge bill for benefits in this country. Everyone agrees it's unsustainable, but when it came to the crunch, Labour MPs balked and they had a big rebellion against cutting those disability payments. So will they, have the stomach? Will Andy Burnham have the authority to really drive through what is probably needed, a very substantial recalibration of state spending?
Thank you all for joining us. I know we'll have more and more panels every day for the foreseeable future. Bloomberg opinion columnist Rosa Prince, John Stepek, Bloomberg senior reporter, and Tim Craighead, research director at Bloomberg Intelligence. Now, a group of 12 U.S. states have sued Paramount Skydance, seeking to block its $110 million bid to buy Warner Brothers. The lawsuit alleges that the deal would harm competition for film distribution and leave viewers with higher prices and less choice. Well, Paramount Skydance says it will defend the transaction in court. So let's bring in Manuel Baigorri, our deals reporter. Manuel, good morning. So how big of an impact could a delay actually have?
Definitely a big impact for this huge deal that kept us so busy earlier in the year. And now, as the companies were getting close to potential completion, they're facing legal hurdles. So definitely tough to answer and to get clarity on these uncertain legal hurdles and how they're going to play out. What's clear is that the uncertainty is going to really jeopardize the stability needed to complete the deal, and also potentially incurring some really big cost for Paramount. Remember, Francine, that they got these fees in the SPA they signed, in which any delay in completion, Paramount needs to compensate the shareholders of Warner Brothers. So that could elevate the cost of around $1 billion or even more, plus all the uncertainty and the disruption in strategy on a day-to-day basis. So big question mark around the deal, just as it was getting close to completion, and the potential financial cost also very, very big.
Manuel, what other hurdles are there between now and the deal's completion?
Well, Francine, I mean, we knew from the get-go that antitrust competition was going to be a big hurdle. It was just a matter of when rather than if. And obviously, the political angles, this deal became so political when we were, remember, kind of like narrating the bidding war between the different bidders. So definitely we might see politicians potentially weighing in. The political factor remains, but I think antitrust remains the key hurdle for this deal to complete. And then obviously financially, right? Again, if there is some severe delays, the financial impact will be potentially very, very large for Paramount to be able to sustain. So let's see how the potential next few days and weeks play out. But obviously a lot of uncertainty now around this deal.
Manuel, thanks so much. Manuel Baigorri, there, a Bloomberg Deals reporter. Coming up, Defense in Focus at the Farnborough Air Show. We're live there next, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Well, speaking to Bloomberg at the Farnborough Air Show, the chief executive of European defense giant Leonardo says a joined-up approach between allied nations should be the template for defense spending.
Europe cannot afford fragmenting the efforts, and efforts means money, means also brain in many projects, and so my point is that we would welcome, from the industrial point of view, Germany joining the GCAP program, of course.
Let's go straight to Guy Johnson at the Farnborough Air Show. Hi, Guy. Good morning. So what are you hearing from business leaders?
What am I hearing from business leaders? We're hearing that Europe has money to spend, and it's interesting that you kind of tie that back into the story around the UK and what John Healey's going to be doing at the Treasury and what Wes Streeting's going to be doing at defence. The biggest problem that Europe has when it comes to the defence story at the moment is actually delivering the products and executing the operational side to deliver those products to the armed forces of Europe. And that is increasingly where the challenge lies. And kind of part and parcel of that is this idea around partnership that Lorenzo was talking about there. This idea that Europe needs to learn to work together better. We've got two competing next generation jet fighter programs at the moment, FCAS and GCAP. Lorenzo's part of the GCAP program. Leonardo's part of the GCAP program with BAE and the Japanese. And then we've got the other program, which Airbus was part of. And that is where the challenge lies, because they've really struggled to work with the French at Dassault. Airbus represents the Germans. So Europe, in some ways, has moved on from actually the kind of the defence spending narrative, which Trump has pushed so hard. It's now figuring out, well, if we are going to spend some money, how do we get more for our money? How do we get more bang for our buck? And how do we work together to deliver the best products, Fran? And I think that is where the challenge now lies for companies like Leonardo, for companies like BAE, for companies like Airbus. It's how do we put all this sort of industrial strength that we have in Europe and the orders that we're getting into a series of programs that are going to deliver what Europe needs to defend itself.
Guy, any reaction to John Healey moving from the defense brief to Treasury?
Yeah, like huge. Everybody's very positive about it, because what it signals is that the UK is going to maybe deliver on a higher spending program than was originally anticipated. Now, remember, the Treasury was talking about 2.7% of GDP 2030, and that's what Healey got so upset about and why he quit as Defence Secretary a few weeks back. Now he's in the Treasury. Now he's the Chancellor. Well, in some ways, he's on the other side of the table. So he's now got to figure out how you get to that 3.5%, that 3% that he was originally looking for, and get up to 3.5. So the sense is this is a positive signal from the UK, but it's only one positive signal. The UK also needs to be part of this group of European companies that figure out how to work together. Now, historically, they have. They produce things like the Pravda Tornado. They produce the Eurofighter. They need to do it again. They need to produce the kit that Europe needs, because if they don't, companies like Lockheed Martin are going to be selling F-35s into Europe. It is a product that is well documented, has a strong history, and the challenge with that is that basically the money goes to the United States. Europe wants to keep it here. So, yeah, John, people are welcoming it here. They're very welcoming of it here. But they recognise that money's just one of the challenges that Europe faces. It's not the only challenge Europe faces in this big rearmament programme we're talking about, Fran.
Guy, thank you so much. Guy Johnson there at the Farnborough International Air Show. Now, there's plenty more, of course, to come from Farnborough, including the president of Aeronautics at Lockheed Martin, the chief executive of Aerospace at General Electric. Now, TSMC is set to raise prices by up to 10% for certain types of chip-making services next year. This is according to reporting by the Nikkei. Well, Bloomberg intelligence analyst Matt Bloxham is here with the very latest. Matt, I mean, 10% higher, it's not nothing. So does it mean that it's, the market can only go up?
I think certainly it's going in that direction. I mean, I think in recent years TSMC has put through quite a few price increases because of their strong market position. Now, by far and away the leading contract chip manufacturer in the world, and just generally the kind of imbalance between supply and demand. And so we've seen price increases of anywhere between 5 to 10% in recent years. So I don't think this will be a big surprise to their customers. I think there's also a lot of inflationary pressure in the market right now too, and the Iran conflict creates additional uncertainty behind that. If you look at consensus on the terminal on MODL, for this year, revenue growth at TSMC is about 41%. Next year, it slows to about 32%. Now, I would think that most analysts have at least some implicit price increase assumption in there, but maybe not 10%. So perhaps there's some upward momentum and consensus for 27 and beyond on the back of this if it turns out to be a real story. Yeah.
So Matt, overall, I mean, we're seeing some of the stocks moves really being driven by chips that are rebounding. But how should we think about the chip complex?
In what sense do you mean?
Well, you see a lot of the Taiwanese, right, that are doing very well because they have high end, and then you have the U.S. saying we're going to make our own chips. So we're going to see volatility also as certain countries just are spending much more on chips.
I think this is going to be a big story for next year. There's a lot of investment going into the U.S. for their own kind of domestic chip supply. Obviously, with TSMC, adding a significant amount, over $100 billion of incremental spend to what they plan in the U.S. But obviously, you've also got the likes of Google investing in their own capabilities, SpaceX too. So it's going to become a much more complex story. I think if demand continues on the current trajectory, then I think there's a big enough opportunity there for everybody. The crunch comes if corporate appetite for AI starts to slow and suddenly that kind of demand-supply imbalance kind of starts to normalise, then it becomes a bit more of a problem, and that perhaps there isn't enough to go around for everybody, and there's some hard decisions that have to be made.
Matt, thank you so much, as ever, for joining us. Matt Bloxham there from Bloomberg Intelligence with the very latest, of course, on chips and TSMC. Now, we see this very strong or pretty strong rebound in chip makers driving stock markets higher. There seems to be a broadly supportive session today that also is seeing lower oil prices, a rise in gold, and steady Treasury yields. The S&P futures gaining 0.5%. Up next, it's Bloomberg Brief, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market. Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A chip rebound driving stocks higher as investors await big tech earnings this week. The U.S. completes another wave of attacks on Iran as mediators continue to work on reviving a truce. A new trade war looms, the Trump administration vowing to impose a fresh 50% tariff on some Canadian goods. All right, let's get a check on markets around the world, and it's the first gain in 4 days for Asian stocks. Let's get the latest from Winnie Su in Hong Kong. Winnie.
Yeah, good morning, Bonnie. We are seeing chip makers leading gains in Asia today after that long tech sell-off, and also as oil prices continue to ease. We have the tech sector here in Asia up about 5%, having its best day in about a month, with gains being led by the likes of SK Hynix, Samsung Electronics, and also TSMC. Now, crossing the wire just now, we've also learned that local media has reported that TSMC will be raising its chip making prices by about 10% starting next year. Now, that just goes to show how the supply demand imbalance remains intact. Now, flip it where we take a look at how the broader Asia market performing today. We have the MSCI Asia up more than 2%. Really, the gains being led by South Korea's Kospi Index up about 3.6% here. Another bright spot that we're really looking at is the onshore Chinese market, as we also are seeing Beijing really stepping up its effort to stabilize the stock market alongside the help from regulators, state-backed funds, and also insurers.
Winnie, thank you so much. A lot happening in Asia. That's Winnie Su there in Hong Kong. Now to Europe and a new chancellor for Britain. Let's get to Louise Moon in London.
Good morning, Vinny. Well, starting broadly for the European market, it's a relatively quiet day. You can see the stock 600 ticking up very slightly, holding on to gains there in the green. Main risers there being tech on that story that Vonnie was just talking about. The chip stocks leading those gains. And then we've also got the higher copper prices pushing mining higher as well. But as you say, we've got a new chancellor here in the UK. So take a look at the markets. We've got the FTSE 100 and the 10-year yield, both relatively flat. It's a big day. It's Burnham's first day, full day as Prime Minister here in the UK. We've got a new chancellor, but essentially markets are waiting for the policy. What is going to be happening and how will that affect things? So it's a bit of a wait-and-see approach there, but relatively steady across markets. And just a quick look we'll take at the pound as well. Taking a look here, it's also relatively steady this morning. You can see just slightly dipping there, but holding on to that. It's that wait-and-see approach, so we'll have to see what policies come into force.
All right, Louise, thank you so much. That's Louise Moon there in London. Now, here in the U.S., chip stocks are getting back some of that enthusiasm, and you can see it in NASDAQ 100 futures. Now, broadly speaking, it was a pretty lackluster day for the indices yesterday, but notably, the Philly Stocks Index never actually dipped into the red at all, and it finished the session up 0.6%. We're seeing chip makers rally again today, and that TSMC news is bound to reverberate. TSMC might be raising its prices, but it's bound to have consequences for the spenders on chips as well. We'll see how those all trade today. day. We also have UBS's trading desk saying that this momentum sell-off might be just about done, and investors can start thinking about maybe rebuilding some AI and chip positions. So we'll see if that reverberates through the market as well. But once again, we are seeing a pretty broad-based, enthusiastic picture for this Tuesday trading session, at least in equities. Let's move to yields, where we see that we have not got too much movement, down a basis point, but still fairly elevated on the 2-year. Market's definitely not pricing out the potential for hikes. And that 30-year yield is actually well higher than it was yesterday, a good 4 basis points higher than this time yesterday morning, although in this particular session, we're not seeing much movement. That 10-year yield as well bears watching. We're getting very close to 460. Let's look at oil, because it's a little case of deja vu all over again. We have Goldman Sachs saying that it's looking at a high scenario of $120 a barrel for Q4 if the Strait of Hormuz remains closed. I believe that was the forecast some time back before everything started to de-escalate. Well, now that it's looking that it's escalating again, then those forecasts are coming back into play. Brent crude still, though, below $89 a barrel, but remaining elevated. And you can see European gas futures creeping ever higher. I want to point out Bitcoin as well is holding above $66,000 a coin today. And it seems institutional demand is returning. Also, those ETFs are seeing inflows now this last 2 weeks after 8 straight weeks of outflows. Let's get to some individual movers now in the pre-market. For that, we'll go back over to London and Chloe Melly.
Good morning, Bonnie. It looks like the AI trade is back on firmer footing this week. We had this rebound in Asian markets, those tech-heavy Asian indexes, and then also this good performance in European tech stocks. And now this is spilling over into those U.S. tech stocks with some big moves this morning across that sector. And the next leg of this AI trade is really going to be dependent on those big tech earnings later this week. Another big earnings, actually, that we're going to be thinking about this week is going to be Tesla. And there seems to be quite positive sentiment going into the earnings due tomorrow, with Tesla outperforming the Magnificent Seven this morning and up about 1.3%. And finally, over in the UK, BAE, the defence company, is doing very well after the appointment of John Healey as Chancellor. This is the former Defence Secretary who wants much higher defence spending, and therefore we are seeing that boding very well for the likes of BAE, and we're up about 3% in London this morning.
All right, Chloe, thank you so much. Chloe Melly will be back a little later in the programme. Also coming up this hour, Marvin Lowe of State Street, plus Orlando Sanchez of Lockheed Martin. He'll be coming to us from the Farnborough Air Show. Let's kick off with the chipmaker rebound. And of course, as Winnie Su just told us, Nikkei reporting that TSMC will be raising its prices for chip production by up to 10% starting next year. For more, Bloomberg Intelligence analyst Matt Bloxham joins us now. So, Matt, TSMC obviously taking this step because it needs to fund its ambitions, right? How will it impact the spenders? TSMC is reacting well, but I can't imagine it's good news for everybody.
Yeah, I mean, I think obviously this is going to put upward pressure on NVIDIA chips and maybe on Apple products. I've obviously seen recently Apple put prices up. So, you know, we're still living in an inflationary environment. So, yeah, ultimately, I think perhaps one way we'll see this is maybe some more upward pressure in the capital spending budgets for the hyperscalers. We've got Google reporting later this week, and definitely CapEx will be one of the items that people are focused on. So I think that's kind of how it will perhaps initially kind of flow through. Yeah, and ultimately maybe the end consumer is going to have to bear higher costs, whether that's through hardware costs or through the cost of using AI products and services. Obviously, we've seen a lot of upward pressure on token costs for corporates, and some of them have been pulling back. So there's going to be potentially a bit of a squeeze there between how the likes of, say, OpenAI and Anthropic can price their products and the rate at which customers adopt those products into their businesses.
Yeah, correct me if I'm wrong, Matt, but when Micron said that its margins were very, very healthy because it was able to raise prices for its memory chips, you know, the stock reacted extraordinarily well that day, but didn't that precipitate then this massive sell-off that we've been seeing for the last couple of weeks?
I think it's certainly one of a number of factors that's kind of contributed to the kind of weakness we've seen, but not the only one. But, you know, look, this is a market where you kind of have to take the opportunity you can, and there's clearly still a massive imbalance between supply and demand, and, you know, certainly Micron and TSMC shareholders will be looking to them to kind of maximize their value in the industry. And, you know, we've seen for a few years now prices go up, including at TSMC. There is, market power for them to fully exploit. There is also inflationary pressure in the cost stack for them too, so they need to reflect that in their pricing as well, not least energy prices that have been going up and continue to rise. And obviously, I guess to some degree at least, the Iran conflict is going to add to their kind of preemptive caution, if you like, in terms of where they need to pitch pricing to cover inflationary cost pressure going forward.
Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. And I just want to mention that this is still a report from Nikkei, and the report talks about these companies speaking with their customers about this. US-Iran strikes extend for a 10th consecutive day, and the Houthi militant group out of Yemen also threatening that maritime blockade on Saudi Arabia in the Red Sea. Bloomberg's Owner Ant joins us now. What is the shipping situation at the moment, Owner? Is any shipping company willing to send crews through the Strait, or even at this point, the Red Sea?
No, not exactly. We don't see a lot of ships going through Hormuz right now. At least the trackable shipping traffic basically dwindled to nothing over the course of the last 10 days or 12 days now, which is when this latest round of tit-for-tat attacks between Iran and the U.S. began. Earlier today, we've seen another vessel, an oil tanker or a products tanker owned by Kuwait Oil Company, came under attack off the coast of Oman. That's according to the UK Navy. And as you said now, in addition, Houthis, the Iran-backed militant group in Yemen, is threatening to open a new front in the war. They said yesterday that they were going to impose a blockade on Saudi vessels that want to go through the Bab el-Mandeb Strait. This is the lesser known of the two main straits in the region. It lies at the southern end of the Red Sea coast, and it's extremely important because that's where Saudi Arabia has diverted most of its crude oil exports after the effective closure of Hormuz, using the Red Sea port of Yanbu to ship oil through the Bab el-Mandeb Strait to the rest of the world, which is exactly where Houthis say they will not allow Saudi ships to go through Vani.
Now, Owner, Riyadh says it will prevent that from happening, but how can Riyadh prevent the Houthis from attacking ships? I don't remember them being able to last time.
That's true. The last time Houthis wanted to bring shipping to a halt, they did that with somewhat success. What right now Saudi Arabia is doing is that it's talking through also its the government backs, the alternative or the opposing government backs in Yemen, which said that they would try and prevent this blockade from taking place. The obvious way of doing that would be through use of military force, and that is what we may see going forward, Vani.
All right, so there could be escalation on two fronts. Owner, thank you so much. That's Bloomberg's Owner Ant in Dubai. The US is looking to impose a new 50% tariff on some Canadian goods over what it says is unfair treatment of imports of American alcohol, cars and dairy into Canada. Items subject to the tariffs would include milk, hockey equipment, beer and plywood. Joining us now is Brendan Murray, who heads our global trade coverage. So do we buy a lot of hockey equipment and Canadian beer, Brendan?
Well, the total amount of imports that are going to be affected by these 50% tariffs is something in the range of $20 billion, which is about 5% of everything that the U.S. imports from Canada a year. So it's not a huge amount economically speaking, but of course those exporters in Canada that ship those goods to the U.S. are really going to feel the hurt if these tariffs get back to the table to try to hammer out some sort of deal. The U.S. Mexico-Canada agreement has been split in sort of two tracks. The U.S. is negotiating with Mexico this week, in fact. And so among the many analysts, Bloomberg Economics included, to speculate that this is really a strategy that we've seen President Trump used many times before to force the two sides to the negotiating table, and they'll have 4 weeks to do so.
Yeah, the tariffs due to take effect in 30 days. And as we know, Trump has reversed course on such decisions. Now, he hasn't exempted exporters that export under the existing North American Free Trade Agreement. That's a problem, right? I mean, is there anywhere for Canada to complain to, or does this nullify the agreement in some way?
Yeah, well, it just really ratchets up the tensions in the two between the two sides. USMCA is a pretty sweeping and by many measures successful trade agreement. And if the U.S. is saying some of these goods won't be exempt under USMCA, then Canada will have a big problem with that. That said, some of the big imports from Canada, things like energy and a fertilizer ingredient called potash and autos and steel and aluminum, those things are covered under separate exemptions in different kinds of trade authorities. So those won't be hit by these tariffs. But nonetheless, this is certainly going to test Canada's willingness to offer Washington concessions. They've done so repeatedly over the past 12 months on a range of issues, from airplanes and remember the Reagan NAFTA ad that President Trump was all upset about. So we'll have to see if Canada has any more concessions to give.
Yeah, exactly. Brendan, thank you so much. That is Brendan Murray, our trade czar. Now to other top stories trending on the terminal this morning. A federal judge has granted a request to pause Paramount's $110 billion takeover of Warner Brothers for 14 days. According to the judge, the deal, quote, likely violates antitrust law. The transaction had been scheduled to close tomorrow, July 22nd. JP Morgan CEO Jamie Dimon renewing his criticism of the UK's bank tax surcharge as Andy Burnham takes over as UK Prime Minister. Dimon said the tax hikes could drive capital away. He also said UK politicians should be concerned about the number of companies that have delisted from London in recent years. The London Stock Exchange announced plans to launch a 24/5 trading venue to support digital, algorithmic and agentic trading. The new venue is called LSE24, which is set to operate separately from the main stock exchange. ETPs will launch as the first asset class if regulatory approval is given. Client testing would be available by the end of the year. Coming up, new British Prime Minister Andy Burnham making big promises in his first speech. We'll look at some of his key appointments and changes next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We will make this moment a circuit breaker for Britain, bringing forward the biggest changes in the last 40 years. A new political model and a new economic model.
Britain's new Prime Minister there, Andy Burnham, is speaking outside 10 Downing Street and promising to bring forward the biggest changes in the last 40 years, as you heard. Now, Burnham has appointed John Healey as his Chancellor of the Exchequer. Daybreak Europe anchor Lizzie Burden joins us now. Healey's plans, Lizzie, a little more fiscally loose. The market reaction was that gilts popped, but yields have come back down just a little bit again. What is the market thinking on this?
Well, I think that the market reaction yesterday was more in response to Andy Burnham, the new Prime Minister, saying that he was going to look for flexibility within the fiscal rules rather than in response to his appointment of John Healey as Chancellor. And indeed, as you say, yields are lower for gilts this morning, tracking moves elsewhere because we have lower oil prices. But it was a big surprise that he should pick John Healey as Chancellor. Of course, he used to be Defence Secretary and he quit over what he said was inadequate funding for defence spending. So the expectation would be that he'll have to stump up the cash to fund defence spending now that he is in charge of the purse strings. Just in terms of the initial moves that we've been hearing of policy announcements, Burnham said that we were going to hear something on the cost of living today, and indeed already they have announced that they're going to scrap the 5% tax on electricity bills from October. That is going to be funded by having scrapped ID cards, money saved there, although a former minister has said ID cards were never funded anyway, so questioning where the money's coming from. But I think it gives us two key signals, Vonnie. First of all, that the approach is going to be not to borrow to give what Burnham would call breathing space on the cost of living, but rather to cut other things to fund new measures. And secondly, when it comes to the cost of living, weighing on prices rather than supporting incomes. It seems like that might be the approach from the Burnham administration.
And Lizzie, there'll have to be a whole new relationship built now with the United States, but apparently President Trump has already been invited to Manchester, no less.
Yeah, well, of course, Andy Burnham was the mayor of Manchester until recently, and it seems like Donald Trump is willing to make the visit. He said that they had a very good conversation, Burnham and Trump, and that they'd be meeting in the not-too-distant future. But, of course, Burnham's going to have to lean into the relationship with Washington. It is the most important for number 10 Downing Street. It's his Achilles heel, foreign policy. He has zero experience when it comes to defence or diplomatic issues. As I say, he's just spent best part of a decade in running Manchester, so much more local focus. The big test, perhaps policy-wise, is going to come when Burnham is asked whether the UK is going to keep allowing the US to use British air bases if the US is to attack Iranian civilian infrastructure. So we'll have to see how things play out in the Middle East if this relationship between Trump and Burnham can continue as warmly.
Exactly, and Burnham will have to get some good people around him. We'll hear all of the rest of the cabinet appointments throughout the week. Lizzie, thank you so much. That is Bloomberg's Lizzie Burden. Coming up, a look at your front page news. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until the midterm election.
Hear it first on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York, and it's time now for your front page news. First up, the Wall Street Journal reporting Israeli and U.S. officials believe Iran moved thousands of nuclear centrifuges into tunnels deep inside a mountain last fall. Israel says it happened after the 12-day war in June. Now, the Journal says it doesn't necessarily mean Iran is building an enrichment site there, and it isn't clear where the centrifuges came from. Iran hasn't given the IAEA access to the site. Next up, the New York Times reporting the Pentagon has withheld dozens of U.S. military injuries in the Iran war. The Pentagon said yesterday the number of casualties since July 7th had risen to nearly 100, but hadn't disclosed previous strikes in Jordan before the strike Friday that killed 2 service members and left 1 missing. And finally, the Financial Times reporting Chinese regulators are considering tightening export controls on AI and semiconductor technologies. The FT says they've been consulting with leading groups, including Alibaba, ByteDance and Zhipu, on how to prevent China's advanced technologies and startups from being acquired by the West. All right, coming up, we're going to be speaking with Marvin Lowe of State Street on this chip rebound, liquidity conditions, the Federal Reserve, and lots more. Futures pointed higher this morning. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are. where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A chip rebound driving the stocks and futures higher as investors await big tech earnings this week. The U.S. completes another wave of attacks on Iran as mediators continue to work on reviving a truce. A new trade war looms. The Trump administration vows to impose a fresh 50% tariff on some Canadian goods. All right, after a lackluster session yesterday, we do appear to be seeing some nice enthusiasm today. Nasdaq 100 futures in particular pointed higher by more than a percentage point. The Philly Stocks Index, I will remind everybody, was up 0.6% yesterday. It never dipped into the red, even though the major indices were really pretty volatile in the session. We also just learned from Japan's Nikkei newspaper that TSMC is going to increase prices potentially by up to 10% next year. It's at least talking to clients about that. And that will have an impact on today's session. But also, UBS's trading desk saying the momentum stock sell-off may be nearing its end, and that's creating an opportunity potentially for starting to rebuild AI and chip positions if you have the stomach for it. Then yield-wise, not seeing a whole much movement in today's particular session, but we did see a few basis points of gains for yields across the curve yesterday. The 30-year yield topping 512 at this point, and that 10-year yield is getting very, very close to 460. We also have crude oil holding on to its gains, although it's a little lower this morning. Goldman Sachs, again, like it did a few months ago, saying Brent could rally to more than $120 a barrel by the fourth quarter if disruptions in the Strait of Hormuz persist, although it is not the bank's base case. And as you can see, we're actually turned higher now. Brent close to $90 a barrel and WTI just below 84. Bitcoin also holding on to its gains past $66,000 a coin. Let's get to some individual stocks to watch now with Chloe Mele. Chloe.
Good morning, Bonnie. This chip rebound that we saw in Asia and Europe is now extending over to the US with all of those memory and chip stocks up in the green this morning. And SanDisk in particular up more than 8%, benefiting from general enthusiasm and a report that TSMC is going to be raising its prices. So we are seeing a lot of green there on the screen. Moving on to Tesla, which is also up this morning after, ahead of the earnings that we are waiting for that are coming tomorrow. So this seems to indicate a general kind of positive sentiment going into those results, and we are seeing Tesla outperform the Magnificent Seven this morning. We're up about 1.3%. And finally, another positive mover this morning is BAE over in London. The defense company is benefiting from the appointment of John Healey as Chancellor under the new Prime Minister Andy Burnham here in the UK. John Healey is the former Defense Secretary and someone that really wants a lot higher defense spending in the UK. And so we are seeing that those defense stocks react very positively to this appointment this morning, and BAE in particular up about 3.3% here in London.
Chloe, thank you so much. Chloe Mele there in London. Marvin Lowe of State Street is pretty positive on this summer's earnings season. He writes this: with the fog of war creating uncertainty again, markets are likely to remain choppy, although we think the positive risk bias will be maintained throughout the summer. He's Global Macro Senior Strategist at State Street and joins us now. Marvin, we've been getting great earnings, really for the most part, but we have been seeing the stocks underlying those earnings sell off. What is behind your optimism that we're going to continue to see stocks rise?
Yeah, I mean, I think ultimately it does come down to earnings and the drivers of really the strength in terms of growth, the drivers of really the technology build out making its way into the economy, in my mind, hasn't really changed. We certainly read about, fret about valuations a bit, but ultimately these companies are still issuing an incredible amount of incredible sum of money, which is funded by investors and moving its way into the real economy.
Now, does the rotation continue? Because we've been seeing positive earnings, not just obviously from the tech companies, but also from a whole range of companies so far. I mean, obviously the financials are the big one.
Yeah, yeah, I think so. I think financials, front and center shows the demand for this capital ultimately. But we are seeing some of the industries that have been left behind really for the last couple of years starting to percolate. So, it is confirmation that this spend, which is driving a lot of the GDP expectations, are making their way through the economy and, will ultimately trickle down to a certain degree into the broader discussion.
Speaking of trickling down into the economy, this story from Japan's Nikkei newspaper that TSMC is talking to clients about raising its prices by up to 10% next year. It's just another reminder of the inflationary force that is the AI build-out. Kevin Warsh doesn't seem to be too worried about that part of things, but I'm curious, is the Fed's job going to be made more difficult in coming months and years?
Yeah, I mean, absolutely. So, we certainly had a CPI number that surprised. PPI followed with certainly a little bit of surprise. Some of the components don't necessarily make a whole lot of sense to me, like electricity was deflationary, and we kind of know pressure along that. And really, this chip discussion with the most basic chip being in short supply is something that does ultimately make its way into the economy. We can't escape pretty much the chips that are in everything that we wind up buying. I believe the Fed is ultimately putting themselves in a position to adjust to higher prices if they need to. I think that when I look at the Fed reaction function, we're questioning, are we at a point where the Fed needs to do nothing because the normalization cycle is over, or are we at an inflection point where we either need an adjustment or potentially tighter yields because, whether it's capital demand or whether the fact that we're still accommodated from a policy perspective, those debates are going to keep rate hikes on the table. And I do think that the Fed will have scope to have some really deep conversations as to whether or not they need to hike rates in the second half of this year.
Yeah, I mean, we're seeing the 10-year yield very, very close to 460 this morning. And I know we're only talking a few basis points, but it's quite the move in the last few weeks. Is that in itself going to be restrictive enough to maybe dampen capital spending just a little bit, and dampen liquidity conditions? Or will the Fed have to do more? Will the Fed actually have to hike?
Yeah, I mean, certainly it will have an effect going through the economy. We're seeing mortgage prices pick up a bit. We're seeing certainly auto loans pick up again. In terms of overall demand for that broader capital discussion that seems to be driving a lot of the growth, it really hasn't slowed things down yet. So we'll have to see, the balance between maybe some of the broader part of the economy and the capital demand on the technology side of things, and whether or not that would require the Fed to move sooner rather than later. But kind of having said that, I think the bias to keep those hikes in is the correct market response at the moment.
You also write that you don't see any troublesome signs coming from the funding market, nor has there been any kind of buyer revolt from the corporate bond investors. Obviously, we've seen that, right? And that investor behavior continues to show solid support for risk-taking and multi-asset risk-taking.
Yeah.
What would cause that to stop or to slow down a little bit, Marvin?
Yeah, I mean, the liquidity side of things, I think, is fragile. For sure, the use of leverage within a lot of these asset classes has become, larger and stronger over the course of the last 12 months. Any type of funding unwind created by a shock, whether it's problems at a specific bank that no one expected, and or the private credit discussion coming back with a little bit more force, if you will, I think would create an environment where that risk would become more challenging. At the same time, we saw the Fed continue to buy these bills as part of their reserve management purchases. They're aware of that. And the fact that they're continuing to put liquidity into the system, even though there's ample reserves, shows that they are looking at all of the statistics, fairly in all of the data fairly closely and coming to the conclusion that we continue to need that support within the market.
Yeah, what did you make of the balance sheet comments, Marvin? You know, it was specifically stated that we're not going back to 2006, that ship has sailed. I mean, is Kevin Warsh still intent on shrinking the balance sheet a little bit even?
You know what? I think it's a function of maintaining, figuring out how to grow into a smaller balance sheet, you know, relative to GDP. Those are encouraging words in my mind. I felt that the biggest risk to this new Fed management was a significant U-turn on the balance sheet, and whether or not, you know, financial assets could withstand significant changes in that funding discussion. And it does seem like they're apt to take their time and really communicate the process to investors, which, you know, I found encouraging.
Marvin, a 30-year yield at 5.12, which is where we're at now, is that enough to entice investors?
Yeah, you know what? I don't think we're there yet, to be honest, Vani. You know, demand for duration with a lot of the overhangs on the fiscal side of things, as well as really questions about what that correct neutral rate is continuing to discourage investors at the long end based on the data that we see. And the ramp up in issuance going into next year is still something that, you know, the market has to really come to grips with. So, yeah, I don't think so yet, particularly at the long end. I remain concerned about, you know, how duration is going to perform.
Marvin, it's always such a pleasure speaking with you. Thank you so much for joining us this morning, Marvin Lowe of State Street. Now to other top stories trending on the terminal this morning. TSMC is said to have been holding discussions with clients about raising chip-making prices by as much as 10% in 2027. According to the Nikkei newspaper out of Japan, TSMC, the main producer for NVIDIA and Apple, began those talks in June. It's postponing price hikes to next year to give its customers time to adjust. Swatch Group gives an upbeat sales forecast. The owner of watch brands such as Omega and Longines said the pickup in sales during May and June is carrying over into July. Sales gains were underpinned by a collaboration with Audemars Piguet to create a pocket watch that can transform into a pendant. The general manager of Nike Football says the World Cup ending was, quote, not what we dreamed, as two Adidas-sponsored teams faced off in the final. France and England, who were defeated in the semi-finals, were sponsored by Nike. Coming up, we head to the Farnborough Air Show for an interview with Orlando Sanchez, president of aeronautics at Lockheed Martin. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. You know, it's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board.
Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. It's day 2 of the Farnborough International Air Show, and Bloomberg's Guy Johnson is there with a special guest, Lockheed Martin Aeronautics President Orlando Sanchez. Guy.
So who is Orlando Sanchez? He's a former F-22 pilot. He used to run the legendary Skunk Works, which obviously has a huge history, and now, as you say, runs the aeronautics division at Lockheed Martin. Nice to see you.
It's nice to see
it's
you.
Quite a resume, by the way. I'm just going to kind of point that out. Congratulations on that. There's a lot of challenges at the moment in terms of what Europe is looking at. I want to get your take on it, kind of looking from the other side of the Atlantic. Europe wants to rearm. It's getting the money to do so. It now's got to figure out how it's going to work, and it doesn't want to buy American. It wants to build domestic capability. How different a kind of paradigm are we now operating with in terms of how the US defense establishment and the European defense establishment works together?
Well, first, thanks for having me. It's great to be here in the UK and talk about defense and our collective security. And I think the paradigm is not as big of a shift as we might think. In reality, we have always relied on one another for the security of our nations, and the way we do that is through allies and partners, and the defense industrial base has been a part of that. I'll take the example of, say, the F-35 program. The F-35 program, 8 partner nations developed it, and now 20 nations are using it. Here in Europe alone, we'll see over 700 F-35s, European, across the continent in this next coming decade. And so that ability to do that together is the first solution. How we do that now in this new environment is creating partnerships inside the industrial base, localized for surety of supply and to the benefit of the local people.
But in the past, it's always felt like you were buying American. Now it feels like, it doesn't feel like that anymore. Yeah. Has there been a tone shift?
We certainly have felt that shift, and again, the need to bring the supply closer to the nations that are using it is paramount to the problem set, and so we're committed to doing that.
What does that look like?
Well, as an example, when we think about what we just announced in the last couple of days, in this case outside of the aeronautics division, bringing PAC-3 missile sustainment here to Europe, looking at building ATACMS through Rheinmetall in Germany.
Yeah, just to translate that for everybody, PAC-3, these are the Patriot missile interceptors that you guys build.
That's right, and then ATACMS, a tactical missile necessary for point defense. We can build those here with great European companies like Rheinmetall in order to do that. On the F-35, we're partnered with Leonardo in Cameri, Italy, to deliver through that final assembly full-up completed F-35s. We do similar. We just started building the forward fuselage with Patria in Finland, and Rheinmetall, again, is building the center fuselage here in Europe. So what it looks like is us thickening those relationships. What we also can do here in the UK is start earlier with small, medium enterprise to help build that capacity up. We are working with the UK Manufacturing Technology Center with some of the most innovative companies here, bringing our Skunk Works team, as a matter of fact, looking at the technologies that in the early phases we might advance together. And that's how both now on programs like the F-35 and for future programs that haven't yet been invented, we start building that surety of supply. And there is, Guy, great benefit that can be had here in the UK. We just saw through the dip, by the way, we were encouraged to see the reinforcement of some of the key interoperable capabilities. For F-35, as they expand here in the UK into another model, that supports over 20,000 UK jobs. And over the program, that's about $45 billion, or billion pounds, in benefit to the local economy, which I think will help solve some of the broader social impact challenges that we all face.
You bring up the UK, so let me just kind of get your take on the UK. John Healey, former Defence Secretary, now becoming the Chancellor of the Exchequer, looks like he's going to try and find sort of extra money to put into the UK defence budget, which Wes Streeting is now going to manage. A, do you welcome that? And B, is the money the issue, or is it now actually finding and solving operational challenges? Is it actually a sort of a money issue now, or is it a capability challenge that Europe faces?
Well, first, we have been partners as a nation with the UK as one of our closest allies for decades and decades, and we're glad to see that continue. And as a company, we've also partnered with the UK defense industry and all of their services to bring these important capabilities for sovereign security. So we see no different in the new administration, and so we look forward to supporting the new government and going forward. And the second challenge that you described is it about money, or is it about getting the capability at speed?
Yeah.
And it's a bit of both. And so we all recognize that to be relevant in this day, we need to move faster. The solution to that is we need to expand our capacity. So the intersection that we're looking forward to is expanding that capacity here locally in the UK or across Europe in order to get after both speed as well as integrated, interoperable, allied capability, which will help all our nations feel safer.
In terms of where else you see opportunities in Europe right now, there are various opportunities for the F-35 in Europe. Spain, maybe the naval option would be one that would fit very well. In fact, maybe the only one that would fit very well. Where else do you see opportunities for the F-35?
Well, as I mentioned, the F-35 at its core, the reason there are opportunities is because it's an interoperable platform, most advanced fighter aircraft in the world, and in a world that we need to collapse air, space, land, and sea, the F-35 is now becoming that critical node, advanced capabilities, bringing data fusion through that whole system to deliver effects and provide deterrence. So we see that demand growing across the board. The other thing, back to speed, the F-35 production system, inclusive of the over 2,100 suppliers, teammates we have around the globe, many here, produces at 5 times the speed of any other allied fighter in the world. And so the combination of capability and the speed at which we're delivering is why we see the demand.
Do you think the F-35 is better than anything that Europe could
produce
right now?
The F-35 is by far, hands down, the world's most advanced fighter aircraft. And I would remind us that it is a partnered and allied airplane, with the majority of the airplanes here in Europe becoming F-35s. And remember, its predecessor here in Europe was the F-16. There's still over 600 F-16s flying. What that has done for all of us is bring us together closer as nations. These pilots, these maintainers, these operating systems, these bases, they can fly one another's airplanes if they needed to. They can land. They can use the same suppliers. The F-35 takes that to the next level for all of Europe and, quite frankly, the globe.
Do you think GCAP's going to be a competitor to the F-35? Do you think?
Coming from Skunk Works, I applaud the UK and UK industry working with others to try to advance and push the next level of air security through their program. We look forward to the opportunity through our programs to work alongside the next generation of capabilities. And what I actually see is the next generation is not going to be about a singular platform. It's going to be about a family of platforms and the integration of those capabilities. And so we're working on how do we interoperate with whatever might come next across air, land, and sea, the F-35 and the air domain. We see integrated air and missile defense, important to the UK and across Europe, being a part of that interoperable design. And so I don't see it as a direct competitor, but as an opportunity for us to advance our capability.
Great to see you, Orlando. Thanks very much indeed.
It was wonderful to be with you today.
Stop by to see us. Orlando Sanchez, joining us from Lockheed Martin. Bonnie, back in New York.
Fascinating interview, Guy. Thank you so much. That's Bloomberg's Guy Johnson with Orlando Sanchez, President of Aeronautics at Lockheed Martin. And later today, Guy will be speaking with GE Aerospace Chairman and CEO Larry Culp. That's on Bloomberg Open Interest at 10:30 a.m. New York time. Coming up, we're going to get you set up for your trading day. This is Bloomberg.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York, and now a look at what's ahead today. So, lots of earnings. We get earnings from GM, Hasbro, Halliburton, and 3M, all before the opening bell. We also get some economic data with weekly ADP employment change numbers. That's at 8:15 Eastern. And then Arizona is holding its primary elections. Let's take a look at your macro setup. It's going to be a big day for the chip stocks and any related AI stocks. NASDAQ 100 futures pointed higher, but we have many of, the Microns, the SanDisks, and so on, up by several percentage points in the pre-market. They were on a tear anyway in the pre-market, and then Nikkei newspaper came out and said that TSMC was having chats with its clients about raising its prices next year by 10%, and that seems to have added some extra oomph, although we'll see what it does to the likes of Nvidia. Not much change for the dollar index. The 10-year yield approaching 460 after a session yesterday where we saw a few basis points put on there. Let's take a look at Brent crude because it stays elevated. We have Goldman now saying we could see 120 a barrel in the fourth quarter if things continue to deteriorate. And Bitcoin holding above 66,000. That's it for Bloomberg Brief.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is a market with a lot of variance. The market's trying to figure out who's winning, who's losing.
I wouldn't be surprised if we see a little bit of a pullback in the capex.
It's really a balance of both the spending and the returns.
The demand's there and it's outstripping the supply.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, facing down higher prices, the US and Iran engaging in strikes for a 10th consecutive day as the White House is gearing up to slap 50% tariffs on Canada. TSMC is reportedly planning to raise chip prices by up to 10% to reflect rising costs.
And when it comes to the oil market, we are seeing these elevated prices. Brent just shy of $90 a barrel. And guess what? Right now, with the 10th day of strikes, there is no off-ramp just yet that the United States is willing to take. And Axios talks about this, the two options, the fork in the road for this administration. Either take potentially that 10-day ceasefire that mediators are putting out there, or, this is according to Axios, option 2, launch a massive joint military campaign with Israel to force Tehran's capitulation. Will it work is the question, as both of these forces, Tehran and Washington, fight over the control of the Strait of Hormuz.
Just sit on the price of crude. What do you do with that this morning? $90 a barrel on Brent crude, facing down substantial multi-way risk. Either we maintain this messy status quo, or it goes one way, or aggressively the other.
And not only maintain this messy status quo, but it potentially can get even worse for the oil market if the Houthis come through on their threats and block the Red Sea and the Bab el-Mandeb Strait and really take off a lot of Saudi product that's currently on the market, which is why you have the likes of Goldman Sachs saying into the fourth quarter, if this continues, we could see Brent higher than $120 a barrel.
Francisco Blanch of Bank of America coming up a little bit later in the program. Stay tuned for that. The cushion this time around is a whole lot smaller. Inventories have been drawn down globally, aggressively. The SPR in this country, the lowest since what, the 1980s? Yeah. And the situation in product is even worse. And if you speak to these guys right now, they'll say, forget crude. Look at crude product. That's where the problems might be.
That's what Jeff Curry was saying. He was like, you're focused on the noise basically coming out of the screen. You have to look what's going on in product. And we saw that yesterday. And that's a real pressure point for this administration. We're in the middle of peak driving season, summer holidays, and already you have a gallon of gasoline above $4 a gallon. And you know what, Jonathan, and we've talked about it a lot on this program, there are going to be potentially really good politics that the president could come out and say, but potentially really bad policy for the oil market.
That's the situation with energy. Let's talk about the situation with Canada. Seen the president sitting alongside the Canadian Prime Minister for the World Cup final Sunday. 24 hours later, the White House is gearing up to slap Canadian product with 50% tariffs.
So I think it's important to understand that at the moment, the market is kind of shrugging this off because we have been here before, and I think there's an understanding that this president does like to negotiate with tariffs as a threat, and we're in the middle of USMCA negotiations. And then you look at what the items are subject to when it comes to this tariff. Milk, hockey equipment, beer, and plywood. Major resource imports, energy, potash, critical minerals, those are not part of this, which basically says to me that the United States wants to make sure they are protecting the most important parts of trade that can hurt their own economies. Also, once this is signed, it doesn't take effect for 30 days. So I would say this is the start of a 30-day negotiation between President Trump and Prime Minister Mark Carney.
Market investors worldwide sitting here looking at these two risks and saying, I've seen this movie before. I've seen this movie in the Middle East. I've seen this movie when it comes to trade. And we're becoming very, very familiar increasingly with a very uncomfortable new normal.
Yeah, this is the new normal. There is going to be tariff headlines, as we've been saying since Donald J. Trump walked into the White House for Trump 2.0 and his second round of this. There are going to be tariff headlines throughout his entire presidency because that is how he likes to negotiate. When it comes to the conflict, that's a little bit harder to game out. How long are we going to be living in this new status quo where the president does not want to fully commit just yet to another outright war with Iran, even though it feels like that? But this is certainly not a ceasefire. It's this new purgatory.
Markets are not blinking. Check it out. Equity futures this morning up by 0.5 on the S&P 500. A bounce following a three-day slide on the S&P. Coming up this hour, we'll catch up with Julian Emmanuel of Evercore as stocks look to snap that three-day slide. Francisco Blanch of Bank of America warning crude could exceed $100 a barrel. And Jane Foley of Rabobank as the UK ushers in potentially a new fiscal era. We begin this hour with stocks rising as investors await another round of earnings. Julian Emmanuel of Evercore writing, the brave new world of higher tech stock volatility does not mean the bull market is ending. Expect positive price reaction from large cap tech earnings to catalyse the next leg higher. Julian joins us now for more. Julian, good morning. Good to see you.
Good morning.
That is confident. It's almost bold given the reaction we've seen to some of the tech earnings so far.
Well, look, so first thing is that earnings reactions have been all over the place in general. And that's actually typical for an environment where stock correlations are as low as they are. But coming into this season, we just felt that there was this cohort of large cap tech stocks, short interest extremely high, earnings are going to be fantastic, sentiment really terrible. And frankly, what we're going to probably find out at the end of this earnings season is that the free cash flow amongst the hyperscalers will cross that zero line. But the market's discounted that already. And so from our point of view, the unloved has upside.
So you're expecting positive reactions to Google, to NVIDIA. Let's start with Alphabet. Alphabet reports later this week, tomorrow, I believe. If they come out and raise CapEx intentions, how does the market respond to that?
So that has been one of the key questions. We think that the market, again, because these large numbers, we're looking for $1.1 trillion next year, have been discounted. But the market wants to see the confidence in the CapEx because if nothing else, you're going to stabilize the chip trade, which has, certainly had the mid-cycle crash.
It stumbled, so let's talk about it. You're at 77.50 year-end on the S&P 500, right? Mm-hmm. What's the path to 77.50 if the chip sector doesn't come along for the ride?
Well, again, it speaks to the weighting in the S&P 500. You could have large cap tech and value. I mean, very quietly, value stocks have outperformed significantly this year. Those could be enough, but we do think, you do need the chip sector to come along. The good news is that the tail that is wagging the global asset market dog, Korea, buyers emerged last night.
Right.
That's different.
As Jonathan mentioned at the top of the show, what's going on with TSMC, raising prices for some of their chips, according to this report. Do you think we're going to see demand destruction?
At some point, but it feels like that's still a way off. My colleague Krishna Guha talks about the waves of inflation and that, in fact, AI-related inflation in the near term has been more intense than expected, but you really haven't seen the demand destruction yet. And frankly, the market has been very efficient in terms of allocating capital and assessing risk around this. The narrative in our mind, again, thinking about earnings season, remains intact.
Do you think the market becomes more efficient and starts looking to cheaper models produced out of China?
Well, we've certainly saw that was the fright at the end of last week. It's trite to say, but frankly, you go back to DeepSeek, you go back to every one of these moments, and what we find, and it may not continue infinitely, but we certainly see runway based on past chip cycles in particular, that this goes into 27, perhaps into 28, is that Jevons paradox continues to work. It just does.
Well, perfect timing. Here's the headline. It comes from the team over at Reuters. There will be a meeting between the President of the United States and the Chinese leader in September. I'm sure you're aware of that. What will they be discussing? According to Reuters, the US and China plan to discuss AI ahead of that visit.
That's what I thought yesterday was going to be the #1 topic for this president to bring up after you had the Kimi K3 model released by China, and you also had Xi Jinping, when that model came out, was speaking at an AI conference and has 30 other countries signing up for the way China views the world in AI, except not the United States. So you really see a bifurcation of these two separate economies and also how they are developing, potentially regulating AI.
It's a different moment, Julian. The risk to this rally in America, the source of that risk might be outside of the United States. It might be in South Korea. It might be in China. How do you frame those risks this morning?
Well, no question about it. And look, what we have seen day in and day out is a much higher baseline level of volatility for technology stocks than the rest of the market. And our message is get used to it. We are long enough into the cycle, and there are enough risks, headline risks every moment, conceptually, that you're going to have higher levels of volatility. But again, and this was only a month or so ago, remember that volatility, when you think about the memory stocks, works to the upside as well as the downside.
Got some leverage building in South Korea that maybe we need to work out at some point as well. Julian Emmanuel of Evercore is going to be sticking with us. Check out equities this morning, positive by 0.5% on the S&P 500. If you turn briefly to the bond market, you'll notice at the front end of the curve, twos are just about unchanged at 420. Yesterday, the first close above 420 on a two-year yield since we had that softer than expected CPI reading a week ago. We can't get away from that number. This rate hike debate is still alive and well, encouraged by the Fed hawks. I'm thinking of the Cleveland Fed President, Beth Hammack, and encouraged by this move in crude as well, just lingering around 90 this morning.
Yeah, Beth Hammack saying for the first time in her tenure, businesses, consumers are clamoring about higher inflation. They're saying you need to do something. And then you wake up in a morning like this and Jonathan, the top 3 headlines you read all talked about a higher inflationary environment, whether or not it's tariffs, Brent crude, given the conflict persists in the Middle East, or TSMC with this report out of Japan that they're going to have to start raising prices for their chips.
Brent crude around 90 this morning, up a third of 1%. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. U.S. forces striking targets in Iran for a 10th straight day. The attacks coming after Tehran-backed Houthi militants in Yemen threatened to blockade Saudi Arabia in the Red Sea. The UK Navy saying a tanker was struck in the Strait of Hormuz. British Prime Minister Andy Burnham naming former Defence Secretary John Healey as the new Chancellor of the Exchequer. His appointment was unexpected and come weeks after he resigned in a fight with the Treasury over funding. TSMC is raising chip-making prices. Nikkei reporting the company will raise prices for advanced and mature chip production services by up to 10% to reflect rising costs. The higher prices are set to take effect next year. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Just a quick update from AP confirming, according to them, that an Iranian official has begun meeting with mediators in Pakistan this Tuesday. So that's part of the multidimensional risk that this market is facing this morning. It can go one way or the other.
And the same way the United States puts out carrot and sticks and signals, Iran is doing that as well. On one hand, they are meeting with mediators. Maybe they will take that 10-day ceasefire off-ramp that's being offered to them by the Pakistanis or the Qataris. At the same time, they have the Houthis putting out their own threats. There's carrot and stick, a lot of signals here. Someone has to blink potentially.
Negotiating in real time here in public through financial markets. We're down on Brent now by about 0.1%, stood around 89. Up next on the program, maintaining the tariff wall.
I really think we're helped a lot by the tariff situation that's going on. I used these tariffs, took in hundreds of billions of dollars to make great deals for our country. I hate to pay people back tariffs. We have other ways of tariffing. As you know, we're already doing it.
Just imagine you had a great day. You went to the World Cup final of all things. You wake up in the morning, they haven't texted. and they just slap you with tariffs instead.
I wonder if they spoke about tariffs while there, because you made a very good point when I walked into the studio this morning. Howard Lutnick was there, his Commerce Secretary.
In the box.
So potentially some of this was discussed, I'm not sure.
We'll pick up on that story in just a moment. Up next, we'll catch up with Bloomberg's Tyler Kendall, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, yet ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
15 minutes away, we get some earnings for you. General Motors at about 6:30 Eastern Time. Look out for those numbers to drop later this morning. We'll catch up with the CFO, Paul Jacobson, later on this morning. Paul Jacobson joining us at about 8 a.m. Eastern Time. After that, earnings really pick up later this week. Tomorrow, we'll hear from Alphabet. The following week, you'll hear from Microsoft, Meta, and all the big boys in big tech. Let's start with the equity market this morning. The scores look like this. Equity futures shaping up as follows. Futures positive by 0.5 on the Nasdaq, up by 1.36. It's a bounce back. Semis picked up yesterday, bit of follow through again this morning. Some outperformance there on the Russell. We're still positive by 0.75%. It's a better tape this morning for the equity market bulls. Turn to the bond market story. 2s, 10s and 30s. 2s still around 420. Yields come in a basis point off the back of news just a moment ago that brought crude a little bit lower as well. Check out Brent and WTI. Brent at the moment is still positive by about 1/3% at about $89 a barrel. Some news crossing from AP just moments ago.
A positive development when it comes to potentially an off-ramp that Tehran and Washington could take, with AP saying that an Iranian official has begun meeting with mediators in Pakistan. We do know as of yesterday, there was this report that mediators have been trying to at least offer a 10-day ceasefire for both of these countries to stop the back and forth strikes we see for 10th straight day. If they take that off ramp, that is definitely going to be negative for the oil market.
Two proposals here, AMH. You've got a ceasefire proposal. That's kind of the bearish story for crude. Then you've got the bullish story, the threat from the Houthis threatening to shut off the Red Sea to Saudi shipping. And Bramo was on the programme yesterday. Good morning, Bramo, if you're awake this morning. Lisa made the point, and it was a good point, that this market seems to be weighting one alternative versus the other just a little bit more, given the experience of the past few months.
Right, because I think the experience of the past few months is that you see that both sides want to find a diplomatic off-ramp. But of course, the issue is neither side wants to concede control of the Strait of Hormuz. The United States, Gulf Arab partners, want it to be an international waterway, as it has been for decades. And the Iranians have now used it as a point of leverage and realize and have been successful at making money off of it, because there have been vessels that clearly have, dialed 1-800 Hong Kong Bank and paid the fee in Bitcoin. They've realized they could be successful at it. And they have been. So that's where the tug of war is right now when it comes to this conflict. We haven't even gotten to the nuclear portfolio. That is going to take, I mean, when JCPOA took 20 months, that is going to take months and years.
This is the messy status quo, and just for the record, I feel bad now. Brahma has not slept in. She has never slept in. This was a scheduled day off.
Yes.
Lisa's
and I bet
back
she's
tomorrow.
watching. Good morning.
She's back tomorrow. Good morning, Brahma. The surveillance this morning, maintaining the tariff wall.
I am a tariff man. To me, the most beautiful word in the dictionary is tariff. I really think we're helped a lot by the tariff situation that's going on. I use these tariffs, took in hundreds of billions of dollars to make great deals for our country. I hate to pay people back tariffs. We have other ways of tariffing. As you know, we're already doing it.
So here's the latest this morning. The president vowing to impose a new 50% tariff on some Canadian goods. The president citing Canada's unfair treatment of American alcohol, cars and dairy and hockey equipment as well. Bloomberg's Tyler Kendall has more. Hey, Tyler.
Hey, John. Good morning. Well, this 50% tariff would mark what is considered to be the most severe trade action President Trump has taken against Canada if enacted. The tariffs will go into effect after 30 days and are expected to impact about $20 billion worth of goods, which shakes out to roughly 5% of Canadian exports to the U.S. Now, you went through some of the list of the items there. Importantly, these items will not be able to claim exemptions under the USMCA. The White House is using this obscure trade law. They've never used it before, alleging that Canada has been discriminating against U.S. commerce. We got a list of examples, including how some Canadian provinces have banned U.S. liquor products. It marks what is considered to be an escalation in what's been a relatively tense relationship between President Trump and Canadian Prime Minister Mark Carney so far this year. Just last week, President Trump threatening tariffs over the wildfire smoke. Earlier this month, the U.S. declining to renew the USMCA, setting up potentially years of contentious negotiations. Though we should say our own analysts at Bloomberg Economics say that they think that either part or all of these tariffs will end up being delayed or canceled, as they view this as a negotiating tactic by President Trump. And John, to that point, we got a statement from the Canadian Prime Minister Mark Carney overnight saying that the country is ready to, quote, engage intensively with the U.S. to address any issues.
Tariffs on smoke I can get on board with. Tyler, thank you. Tyler Kendall down in Washington. I'm sure most people in the Northeast can get on board with that, can't they?
I mean, it's been terrible, the air quality, so maybe Canada could help with that. But an administration official had said that this is not in response to the air quality and smoke in terms of what's coming on from the Canadian air. This is just tariffs that for different reasons.
There is always a signature tariff, and it always gets to the heart of national pride of whatever country is talking about. Germany, it's autos. France, it's always champagne and wine. Right? It's always champagne and wine. And Canada, if you want to get after Carney, go after hockey.
So when I was reading the list of items, I was like, okay, some of this I could see makes sense. Milk, beer, plywood, things that come from Canada, small but won't totally hurt the U.S. economy. And then I saw hockey equipment, and I said, this is the biggest troll.
The ultimate troll.
For the United States right now on Canada, especially since America's incredible win at the Olympics.
Gillian Emanuel of Evercore joins us now for more. Gillian, is that what it's about?
Look, everything is a negotiation. We know that. We're comfortable with it.
You're comfortable with it, and I find that interesting.
Well, look, it's a fact of financial markets.
We're like desensitized to these policy proposals.
We are. And look, that narrative may change after the midterms, but again, and every time we talk about the midterms, we realize the time between now and the midterms is like an eternity. So you just can't focus on it. And long run, we have a very favorite chart showing earnings progression over the last 30 years with the S&P 500. And there's lots and lots of noise. And we certainly had noise in the markets in the correction in March because of the war, and the previous year because of the tariff tantrum. But long run, markets respond to earnings.
When does the trade tariff story regarding Canada, also Mexico, given the fact that they are having these discussions about USMCA, when does it shift from noise to actually something you need to care about?
I'm not sure that it actually does, to be perfectly frank. And again, this is a lot about creating the narrative, you know, and reinforcing the various other pieces of policy. And at the end of the day, the fact is that the U.S. economy continues to chug along, and that's what people are focused on.
It's conditioning as well. So let's start with conditioning. We saw this with China, markets up and to the right. Right? Got through. We saw it with tariffs last year, markets up and to the right. Saw it with the Middle East earlier this year, markets up and to the right. Now we're insulated by this massive AI spend. Is that what's insulating us all now, both the market and the economy? Just the capex from a handful of companies driving earnings for a handful of companies that on net is benefiting the market and the economy alike?
To an unprecedented degree. Look, if we think about the concentration in the S&P 500, 40% of the index, 10 names, virtually entirely AI. If you think about the rest, emerging markets are no longer emerging markets. They're an AI trade because of the dominance of Korea. If you think about the bond market, the problem here is that because of the AI-driven inflation, even if we get a sell-off in the memory names further, bond yields may not fall as they typically do. So what it comes down to is that investors are looking for alternatives to AI, and there are some, but they are few.
Abby Yoder, JP Morgan, on the program later. She gets asked this question all the time. Is it just one trade? She says it's not. Do you feel like this market has become just one trade?
Well, again, to a large extent it is, but what we've found actually in our work, that this is a very rare time, that there is a larger than ever group of stocks within the S&P 500 that are moving inversely to the index.
You call them the negative beta stocks.
The negative beta stocks. They are value, and lo and behold, value has done very well this year. But interestingly, it's not just value, it's not just negative beta, but it's very diversified. Makes sense that energy is moving that way. We know that, but it's also staples, it's utilities, it's healthcare, and for some reason that our fundamental analysts are scratching their heads about, it's insurance stocks as well.
Insurance too?
Yep.
Can they make sense of that?
It's not easy, other than to go back and sort of, zoom out and understand that the correlation among stocks is as low as it's ever been, at the same time that people are looking for alternatives, and at the same time that algorithmic trading tends to become a bigger and bigger portion of the market as days go by.
Julian, what a ride. Good to see you. Thank you, buddy. Julian Emmanuel there of Evercore. Equities near session highs at 0.5% on the S&P. Up next, we'll catch up with Francisco Blanch of Bank of America, warning crude could top $100 a barrel once again. Plus, your Hira. How's your morning movers? Taiwan Semi rising on a report. Prices are going up for chip makers. That stock up by 4%.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Equity futures this morning, this session highs. Here's the bounce, up by 0.5 following a three-day slide on the S&P 500. Struggling to bounce yesterday, even with the chip sector leading the effort, looking to bounce back from a loss last week of 10% last week, the biggest weekly decline we've seen for the chip sector going back to April 2025. That's the equity story this morning. A better tape in the bond market, 2s, 10s and 30s. I mentioned this earlier, notable. 2s yesterday closed back above 420 for the first time since we had a softer than expected CPI report a week ago. That is largely because of what's happening elsewhere, including in the Middle East with the energy situation, but also the hawks on the Fed are determined to keep this rate hike debate alive and well. A week away, that meeting for the Federal Reserve next Wednesday. The two-day meeting starts the next Tuesday. That's the bond market. Let's turn to crude. WTI and Brent looks like this. I mentioned what's happening in the Middle East. Brent crude around 90, 89.58. WTI around 83. We're up by about 0.4% on crude this morning. Bouncing back with the tensions lingering across the Middle East.
Tensions are lingering. 10 days of strikes. Once again, the United States going after drone and missile facilities. They say that they're trying to degrade Iran's capability for going after the commercial vessels that are trying to transit through the Strait of Hormuz. Basically, Jonathan, we're seeing a grinding halt when it comes to traffic through the Strait of Hormuz, making potentially problems much worse. Not the fact that Iran is going after U.S. allies in the region, but now the Houthis are threatening to get involved. And if they cut off Red Sea access, you're talking about millions of barrels of oil and product that potentially Saudi Arabia has been able to ship out, unable to do so.
Crude around 90. Numbers from GM just dropping. I'll get to them in just a moment as we count you down to the opening bell. Let's get you some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We are seeing TSMC ADRs catching a bid this morning, up 3.7% on a report in the Nikkei that the company is talking to customers about potentially raising its chip-making prices by as much as 10% next year. The company said it's dealing with higher manufacturing costs, but investors taking this as a signal that demand remains strong, because if TSMC is able to raise prices, that means that customers are willing to pay up for its chips. It also, of course, helps protect its margins. And that is helping to reinforce the rebound in the chip and memory sector, with names like SanDisk and Micron all rallying in the pre-market. The semiconductor index snapping a three-day losing streak yesterday, and the recovery continues today. And what I'm hearing is that the recent pullback has made valuations look more attractive, and that is helping set a more positive tone as we get ready for our first batch of tech earnings, with both Tesla and Alphabet reporting tomorrow. Tesla up 1.25%. Investors will be looking to see whether its robo-taxi ambitions remain on track, and for Alphabet, whether that AI spending is translating into growth. John?
Yahira, thank you. Thank you for the update. Let's get to those GM numbers. EPS, second quarter, beat 357, the estimate 319. It's a beat and a raise. The outlook looks like this now. They now see full-year adjusted EPS in a range of 12 to 14. They had seen it in a range of 11.50 to $13.50. So it's a better outlook this morning for General Motors. That stock is up in the pre-market by 3%.
Yep, raising its full-year profit forecast by another $500 million after it beat the second quarter earnings estimates. This is really positive. Brighter outlook for GM. Large pickup trucks, FUVs, making up most of their earnings. We know that the prices there have been quite high, but this seems to be that there's a lot of demand, and they're able to save money when it comes to other issues. I'm really interested to see what GM has to say on the earnings call, because remember last quarter they were talking about how they are one of these companies that are getting rebates when it comes to the tariffs. Is that story still continuing?
They got some pricing power for the premium trucks. We'll talk about that later this morning, 8 a.m. Eastern Time. We'll catch up with the CFO, Paul Jacobson. Looking forward to that conversation later on. On our radar this morning, the United States and Iran trading military strikes for a 10th consecutive day. The Associated Press reporting an Iranian official is meeting with mediators in Pakistan. Reuters reporting a 10-day ceasefire has been suggested. Elsewhere, the Trump administration vowing a fresh 50% tariff on some Canadian goods. Milk, hockey equipment, alcohol and plywood are among the items targeted. Energy products and critical minerals are exempt from the new levy set to take effect in 30 days. And finally, TSMC preparing to raise prices for advanced and mature chip-making products. Nikkei reporting costs will rise by up to 10% starting next year. Taiwan Semi is the main chip maker for NVIDIA and for Apple as well.
So now over to all these hyperscalers. Are you going to have to spend a lot more? Are we going to see even more increased capital spending? Because TSMC, which is a massive chip provider to all of these companies, is now saying, well, actually, we're going to have to raise prices. Now, this is according to a Nikkei report, but apparently, according to this report, they held these conversations with customers last month and prepared to make that increase as of next year.
Well, speaking of pricing power, and we talked about this now for much of the last 30 minutes, it's this story, it's a story out of Iran. You were talking about this, it's the story out of Canada. Who knows where that's going to go? But ultimately, the backdrop remains the same. It's the threat, the pressure towards higher prices in the year to come.
Yep, it looks like it's going to be higher for longer when it comes to inflationary pressures right now. AI story, conflict when it comes to raw materials, and then, of course, tariffs on or off, whether or not even the premium potentially means companies have to start thinking differently. And this is what Governor Beth Hammack was talking about, a Cleveland Fed president. This is what she was talking about. Businesses, consumers are going to her and saying you have to do something about inflation, which is why the next week, off of these headlines, would you want to be Fed Chair Kevin Warsh? Not sure. This one's going to be hard.
That meeting a week away. Let's talk about inflation and the price of crude. Crude rising this morning as Yemen's Houthi rebels add to uncertainty across the Middle East. The group issuing a warning for vessels planning to use Saudi Arabian ports. Francisco Blanch of Bank of America writing the following. If tensions do not abate for weeks, Brent could retest again above $100 a barrel. Francisco joins us now for more. Francisco, good morning.
Good morning.
And first of all, congratulations. You're in the stadium Sunday evening. Share with us what that was like to watch your Spain win another World Cup.
It was an absolutely amazing feeling, you know. It was also such a tough game, you know, where there was a lot of biting and kicking, if I may say.
Did you feel outnumbered in that stadium? Because
Definitely
it looked like
outnumbered.
Overwhelmingly there was Argentinian support topping Spanish support in that room.
Absolutely. I think it was 5-1, 6-1.
Crazy.
But you know, it was just one of those games that it's just history in the making, right? I mean, second star for Spain. That's doesn't get bigger than that.
Well,
right?
congrats to you and your country. Let's pretend you weren't here for that and you're here for this. All right?
Yeah.
Let's talk about crude. Cushions matter. Clearly, we had a big cushion going into the initial war at the start of March, the end of February. How big is that cushion now to support this market?
It's a thinning cushion, John, and I'm increasingly worried that these tensions could eventually turn what's been a relatively orderly market, where prices have moved in a linear fashion, more or less, and we end up being pushed into a non-linear event, meaning that rather than just steady movements, we start to see spiky behavior. And in fact, I think crude oil doesn't really tell the full story. The full story is being told by diesel, is being told by gasoline prices. I mean, you see crude oil at 90, but look at diesel, it's trading $150+ a barrel, gasoline approaching $150 a barrel. We have a true petroleum product shortfall here. And even natural gas, not in the US, but globally, starting to trend higher again, with prices hitting 60 euros a megawatt hour. So that's where the price pressures, where the pain points are.
Can we go through the potential risks in the future? The first one being the Red Sea. How much product could we see be taken off the market if the Houthis were to get involved and make it quite difficult for ships to go through the Bab el-Mandeb Strait?
Well, so it'll be another choke point. I think for product is maybe not as big. I think Wild Monday is a lot bigger for crude oil. And of course for Saudi Arabia, which has been moving oil from east to west, has been one of the big relief valves for this Hormuz shutdown, has been rerouting through the other end of the Arabian Peninsula. But I think the issue with products is that we have Ukraine hammering Russian refineries, and we have up to a third of Russian refining capacity being hit or being damaged by Ukrainian military activity. On top of that, we have obviously a lot of oil, petroleum products that go through the Strait of Hormuz. And then just to top that up, you have a lot of countries in Asia, starting with China, the world's largest refinery toolkit, with the U.S. hoarding petroleum products and not being active in the export market in order to protect their domestic economy. So we have some of the biggest players in the world just either hoarding back or being damaged by military action. So effectively, the U.S. remains the place where you can come and buy your diesel and gasoline if you don't have any. So that's the irony of this.
Hasn't China, though, sort of put a lid on all of this by softening their imports?
They have, but they have softened their crude oil imports, not their gasoline or diesel exports, right? Remember, that's what China does. They import crude oil, and at the margin, they export some petroleum products. But yes, I mean, they've eased the pressure on the crude market. And they may have to come back depending on the duration of this conflict, because right now they're just drawing down inventory. That's what we're doing. We're drawing down inventories until we get to rock bottom.
So there's a phrase that I've heard a lot. I heard it from you, crack spreads. Right. Can you just explain to our audience outside of your world that might not be familiar with that, what it means and how big they are right now?
Yeah, so crack spreads are the differential between the refined product, diesel, gasoline, and the actual crude input that goes into making it. And right now we are record seasonal levels for a lot of products, like particularly gasoline and diesel. And refining margins are also exploding collectively because you have gasoline and diesel just running up together. Again, reflecting that scarcity of refining capabilities. So it's a major concern. Because if we have to ration demand, those products need to get to very, very high levels where they actually pinch your pocket. So even if crude oil at $80, $90 a barrel is manageable, it may have to be the petroleum product price that forces demand lower if we can't supply it.
Just quickly, if politicians start to see those spreads and they start to suggest that something else is happening here, something opportunistic, what would you say back to that? Purely from a market perspective, what is actually going on and why are they wrong?
Well, so I mean, I think the issue is obviously who's making the most money right now. You see U.S. refiners are effectively given a license to print money, and that's what's happening, right? They're getting relatively cheap input costs, and they are pushing enormous amounts of highly valuable product out into the U.S. and into the world. So there is that's one part of the market that is really benefiting from this situation. I think the broader concern is that prices, because consumers don't consume crude oil. Airlines fly on jet fuel, and trucks run on diesel, right? So if you're a transportation company, you can get hurt pretty badly. I think the view maybe in the U.S. is because America is such a large energy exporter these days. The U.S. is effectively the world's biggest petrostate, right? It's 20% plus of the world's production and a third of the world's gas. So I think there's the perception that the U.S. won't be as negatively impacted by all these tensions globally. But there will be other countries that will be hit hard, that won't be able to afford eventually these prices.
I remember TK used to call it Saudi America 10 years ago when the shale production, 15 years ago when the shale production boom really picked up. What's the client call like at the moment? I'm intrigued by that because I can tell you the reception we get every time we cover this story at the moment. Overwhelmingly, I'd say 80% of the audience right now kind of pushing back, don't need to worry about this, don't care. You talked about this all the time back in March and April. Didn't matter then. Why does it matter now?
Well, so I think back then inventories were very high. We've been drawing those inventories. And I think if you look at U.S. gasoline inventories, U.S. diesel inventories, U.S. crude oil inventories at Cushing, the Strategic Petroleum Reserve, they're all stocking out, right? So commodities move in a nonlinear fashion when you run out of stocks. And again, we haven't run out yet. I mean, we probably have another 2 to 3 months on crude oil, which is why Brent is not going crazy yet. But we are really running very close to tank bottoms for the petroleum products. I think maybe China comes to save the day. You've seen more aluminum exports from China as prices picked up. But it's unclear to me that Chinese have the appetite to essentially start using their system to release a lot of petroleum products into the Asian region. And we do need those products to run the economy.
What would be the impact if the United States bans exports?
Well, so that's, first of all, the U.S. would have a glut, right? Because the U.S. is such a large exporter. The U.S. is the biggest exporter of petroleum products in the world. It's around 7 million barrels a day of crude and liquids, petroleum products and liquids. So I think you have a domestic glut. I don't really think it'd be a very practical thing to do because you would just not create a major market dislocation. But there's other things that can be done to try to pressure down domestic prices, which frankly are starting to go up again, right? So you talked about price pressures. I mean, I get this question all the time. Why are price pressures not abating? Well, in my mind, we run a very, very lax fiscal policy, which wants to be laxer because there's more potential for military spending, right, down the road. And then at the same time, and Kevin Walsh has said this, interest rates may just be too low for the level of inflation that we have. I mean, we do have real rates pretty much flat to negative, not just in the U.S., in a lot of places, right? So we may have too lax a monetary policy. We definitely have too lax a fiscal policy. So it's really hard for prices to normalize in that context, and that includes commodities. But also, it's difficult to rein in demand because, again, as long as money keeps on gushing, oil does too.
Francisco, it's good to see you. Enjoy your win, sir, for the next 4 years and maybe beyond.
I'm going to love it the next 4 years.
It's a very happy Francisco Blanch there of Bank of America, fresh off the big win for Spain over the weekend. Let's look at crude this morning. Crude, Brent around 90, still up by 0.5%. You heard it there from Francisco. We've heard it from Jeff Curry as well. You don't consume crude, you consume crude product, and crude product is where the concerns are right now.
Right, and you see that across the United States with gasoline above $4 a gallon. You see what's going on in Russia with the diesel export ban because Ukraine has been hitting some of these refineries more deep into Russian territory. And then on top of that, while we will talk about the fact that China has been softer when it comes to imports of actual crude oil, they've been hoarding when it comes to product. And that is right now where the pressure points are.
Crude around 90, up 0.5%. Let's get you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. General Motors shares trading lower in the pre-market. The company reporting second quarter results that beat Wall Street estimates and raising its full-year profit forecast, pointing to stronger margins and lower tariff costs. GM CFO Paul Jacobson joins surveillance at 8:15 Eastern. The London Stock Exchange announcing plans to introduce non-stop trading next year. A new venue called LSE 24 will offer, quote, near continuous trading outside of regular market hours. Exchange-traded products will be the first available assets to trade on the platform. A disappointing result for Nike at the World Cup. Both Spain and Argentina wearing Adidas in the final game. In a memo seen by Bloomberg, Nike's vice president acknowledging production delays and criticism of the company's jerseys. He went on to say, quote, Nike has an outsized opportunity to lead and own women's football. And that is your Bloomberg brief. John.
Vonnie, thank you. Nike did not have a good World Cup. Kind of invisible, right outside of the one commercial.
I was just going to say, I remember the commercials, but that's about it.
Well, on the commercial front, I think Adidas owned that too.
Yeah.
Right.
And Adidas for sure owns, I feel like Adidas is more of a soccer company.
Without a doubt. Up next on the programme, ushering in a new fiscal era.
We will make this moment a circuit breaker for Britain, bringing a new political model and a new economic model.
Up next, Jane Foley of Rabobank, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
So here's the bounce this morning, up 0.5 on the S&P, up 1.4 on the Nasdaq. On the Russell this morning, higher by 0.7. In the bond market, some stability. 2s, 10s and 30s. Stateside look like this. 10s around 460. 10s in the UK. Some jitters in the last 24 hours, north of 5. Let's talk about the UK. Under surveillance this morning, ushering in a new fiscal era.
We will make this moment a circuit breaker for Britain, bringing forward the biggest changes in the last 40 years. A new political model and a new economic model.
So here's the latest this morning. The UK Prime Minister Andy Burnham naming former Defence Secretary John Healey as Chancellor of the Exchequer, fueling speculation for increased military spending. Jane Foley of Rubberbank writing the following: against the backdrop of an already high tax burden and a squeezed fiscal position, we see risks that market optimism will have started to run dry by the autumn. Jane joins us now for more. So, Jane, welcome. Let's park the vibes. Let's focus on the policy. And let's focus on the structure of this UK economy. What is it about the British economy that leaves any leader right now in a position where they face imminent failure?
Well, of course, the debt. The debt as a percentage of GDP, nearly 100%, just a little bit lower than that. And of course, you've got to think about the structure of that market too. The UK has a very low savings ratio. It's got a current account deficit, and that makeup can make the debt market really quite jittery, more so than other markets that are perhaps insulated by a high proportion of domestic savers. So the gilts market in the UK can be jittery. I think we all know the history of Liz Truss. Some commentators would say, well, you know, there's been a premium on gilts since then. There's, you know, long memories perhaps in the markets. And we're worried. We're worried about Burnham, how he can fund his plans, because what we've effectively got is a government that's moved further left. Now, Burnham has said that he will stick to those fiscal rules set by Rachel Reeves, but even that, there's a little bit of woolliness about that. He said yesterday he would use flexibility, and that might mean that he would fund perhaps some of those infrastructure projects he wants to do by putting that debt on the books of maybe public financial companies. So the market's trying to figure this out. Where is the money going to come from in order to finance his plans?
Well, let's talk about one dimension of policy. Let's discuss energy. So, Jane, there is the North Sea oil. Let's say we have a different perspective on North Sea energy in the UK. And let's think about what that could mean for the balance of payments position of the United Kingdom and the potential tailwind that might provide for sterling over time. How do you, as someone in the FX market right now, think about that?
Well, I'm no energy strategist, but what we've been told for years is that a lot of the cheaper reserves from the North Sea are depleted anyway. And of course, you've got to go back to the 2024 Labour Party manifesto. And, Burnham has said that he will maintain that. And that means no new licenses. So what we're talking about potentially under Burnham is a sort of a stretching of existing licenses to use that. But again, you have like the eco front. The UK has actually been ahead of many other countries in Europe, or most other countries in Europe, in terms of taking out coal, in terms of burning that to use electricity. We use less gas than some of our other Western European countries too. And a lot of people would still argue, well, you know what, we need more investment in nuclear, which is coming, but clearly that takes a long time. And we have stepped up, wind, for instance, solar, etc. And there's a lot of pressure, as we all know, on Europe in particular, to get that right. And there has been really since 2022.
Jane, what's different than the Starmer policies? Some of these just sound like repackaged Starmer policies with a different CEO at the top.
Well, we need to wait the detail. Now, the things that he really is talking about perhaps is trying to unleash productivity from some of the northern towns. Now, you could say that would be a great solution, because if you look at the UK, London, the southeast, really productive place. But if you go elsewhere in the UK, well, you do not get that. So you could say, yeah, you need that investment to really unleash that productivity. And productivity, if we were to get it here, would really be the answer to many of our problems. We'd have greater wealth, we'd have greater growth, for instance. That would really, really be helpful. The problem is, we all know it can take 10 years or so to really make infrastructure investment work. He's got 3 years to the next election. And this is where it gets really tricky, because if you look at the opinion polls are suggesting if there is an election right now, well, the country would vote reform, which is right. And right now, the Labour Party is sort of neck and neck with the Tories, which is also, centre-right party. And as Tony Blair pointed out in his essay a month or so ago, well, it's unusual, isn't it, that when the electorate goes right, the Labour Party thinks the solution is to go further left, which is where Burnham comes from.
Let's see if they wait 3 years for that election. Jane, thank you. Jane Foley there of Rabobank. Sterling this morning at 134, the UK with its own problems. Coming up next on the programme, Emily Rowland of Manulife John Hancock Investments will catch up with Ariana Salvatore of Morgan Stanley, Ted Morrison of Baird, Joe Davis of Vanguard. The second hour of Bloomberg Surveillance is just around the corner.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form. but is going to be a platform that runs in parallel to our more traditional exchanges.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
I think that the consumer is displaying real resiliency.
Yields are quite attractive.
I think the Fed will eventually end up on the side of not tightening.
Fed, maybe they hike, maybe they don't.
The orthodox policy response to a supply shock of looking through it is probably right.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Equity futures bouncing back from 3 days of losses on the S&P, up by 0.5. Outperformance in the tech sector on the Nasdaq this morning, higher by 1.4. In the bond market, some stability after twos closed above 420 again in yesterday's session. We hold that level this morning, 420.21 with crude. Been volatile. Brent and WTI. Brent still elevated 90 and up 1%. WTI 84 and up 1%. And we face significant two-way risk working through this week.
So the two-way risk is, on one hand, potentially there's a 10-day ceasefire that's floating out there. And there's some encouraging reports this morning that Iranian mediators are in Pakistan to discuss potentially this off-ramp. The other risk is the strikes continue, and already we hit 10 days of continuous strikes from the United States and in Iran fighting back in terms of going after U.S. military installations and some desalination plants of Arab partners, and also another choke point in the world for global crude potentially getting hit if the Houthis decide to get involved.
Escalation on the table in the last 24 hours. The middle option, the messy status quo, comes with its own problems. We've caught up now with countless professionals in the energy market who are making the point, stop looking at the price of crude, look at the price of product, look at the level of inventories, and think about the problems that could materialize in the months to come if this situation continues.
And there's already problems right now, today, when it comes to that product market. You see this in the United States with $4 a gallon, peak driving season. Potentially, it's only going to get worse. What is going on in Russia? They have a diesel export ban right now. China, yes, as Francesca was talking about, we talk about the soft imports there's been on crude. But when it comes to the actual product, they are hoarding. This is where the problem is right now. And this is why Jeff Curry says, stop with the noise on Brent and WTI. That's not where the action is.
I think the audience is just like, stop with the noise. I can feel it. Every time I look down the barrel of the camera and talk about this story, people throw their breakfast at the TV screens, throwing their smartphones on the floor. We've heard it all before. We don't care. It doesn't matter. It hasn't mattered over the last several months.
Well, would you rather than us talk about tariffs this morning?
Let's
because that's happening once again as well when it comes to Canada.
50% on the table for Mark Carney and a crew up in Canada. Where did that come from?
From milk, hockey sticks.
The hockey stick gets just,
beer,
honestly.
plywood. The hockey sticks is a massive troll, clearly.
Crazy troll.
But it is potentially, I think, this is more of a negotiating tactic. They don't even come into place for about 30 days after the president signs them. They are in the middle of USMCA discussions. It is interesting, as you said, the timing. They just had this wonderful outing together to watch the World Cup final.
It's a fantastic day. It was a perfect one, right? All sitting together, playing happy families, then bang, following day, tariffs. Now, I get it. You don't care because the earnings have been so good and the earnings have been absolutely fantastic for Q1 and potentially Q2 as well. We'll get more reporting later on in the next week or so. We'll hear from Alphabet tomorrow. Look out for that. Tesla and IBM in the mix too. Intel on Thursday. They'll be in focus. GM already out this morning. GM would have beaten a race. GM would have beaten a raise. The numbers for corporate America still absolutely fantastic.
They're holding on, and not just that, the bar has been high, and a lot of them have been clearing it. So GM, a fantastic quarter for them. When it comes to what's going down the rest of the week, you called the big boy earnings. It's true. Alphabet and Intel are going to be so important. And I think even now more so after this report out of Japan on what TSMC is doing. They are looking at raising prices by 10% for 2027. The hyperscalers are going to have to make sure that they can reach that spending.
Demand is great. Pricing power is pretty incredible for a handful of names right now. Equity futures on the S&P near session highs up by 0.5%. Coming up this hour, we'll catch up with Emily Rowland of Manulife on why earnings remain the key driver for markets. Ariana Salvatore of Morgan Stanley as US and Iranian forces exchange strikes for a 10th consecutive day. And Ted Mortensen of Baird as TSMC is reportedly planning to raise prices by up to 10% in the next year. We begin this hour with stocks rising as investors begin shifting focus back towards mega cap earnings this week. Emily Rowland of Manulife writing, stock returns may not match the gains of the past 3 to 5 years, but earnings remain the fairway. Investors may need to become more comfortable taking a full swing with growth assets over the long run. Emily joins us now for more. Emily, appreciate the golf analogy. It's good to see you. Let's get into the market and we'll focus on that. Earnings have been fantastic. The bar's crept higher. Why do you think the bar is not too high this earnings season?
Yeah, companies have proven that they can surpass that bar. But the problem, John, now is that the earnings are amazing story is already an old story. All you have to do is turn into Bloomberg surveillance to hear it. And now it's like, don't let me down. And we have seen companies absolutely crush it down the fairway. You know, we're 10% through earnings season, 51% earnings growth. Like, that is amazing. You look at financials so far, we're looking at 36% earnings growth. The bar was 5% to start the quarter, but we are seeing some company-specific challenges. They're not necessarily related to the macro environment, but if companies are disappointing, they're issuing guidance that's not favorable, you're seeing those stock prices punished. So the bar is high, but so far so good in terms of surpassing it.
IBM is a good example of that, maybe a rare example of that, but if you miss, you'll get obliterated in this stock market. If you won, you will get absolutely crushed. Emily, what do you think the setup is for individual parts of the tech sector then in the next week? What are the parts of the market you're worried about, the parts of the sector you're pretty constructive on?
Yeah, it's going to be absolutely critical over the next couple of weeks to see these heavy hitters in the tech space. You know, semis have continued to just throw up these amazing earnings. We're looking at 100% earnings growth quarter after quarter. It's really just remarkable. And prices are reflecting that. So we're watching things like the Kospi index right now to see how these South Korean exports are faring. You look at South Korean exports right now, they're up about 70% year over year. That is a record. And that is telling us that demand remains exceptionally strong. But can prices keep up with that? Some of these moves have been absolutely parabolic. So again, that bar has to be met. You know, we look at the large cap growth space, you know, some of those big hyperscaler names, they haven't seen quite the same price appreciation. So in that case, the bar may be a little bit more manageable here. But overall, 50% earnings growth in the tech space, that is a really high bar. I like looking at places that have a lower bar. Industrials, for example, expected to see less than 10% earnings growth this quarter. Again, financials, the 5% expected. We are looking to some of those sectors. Healthcare is another one where the bar is very reasonable. And those are areas we are looking at in order to diversify from some of those elevated expectations within technology.
When you're looking at diversifying, though, and you see elevated crude prices, potentially, does that worry you?
It does in some cases. And, you know, theoretically, the idea is that you should see some multiple compression if oil prices keep rising and the cost of capital becomes prohibitive. But we've looked at what happens in higher inflation regimes to stocks. And in a 3 to 4% inflation regime, that's actually the sweet spot. Companies are able to raise prices right now. We're seeing that in some of the earnings results and some of the guidance that's out there. In particular, mid-cap stocks and value stocks tend to do particularly well during those higher inflation regimes. I would say, Anne-Marie, it's all fun and games until the Fed has to pump the brakes. And right now, inflation is not hot enough to really see the Fed doing that. You look at the softer employment report, you look at the lowest CPI data that we've seen in 6 years, that doesn't exactly scream Fed hike. But if oil prices do remain elevated, that risk comes back into the table. And that's frankly when the party starts to look like it may be over.
But you hear from the likes of Cleveland Fed President Beth Hammack saying that businesses, consumers are actually going to her and saying, you guys need to do something about inflation. Does that make you nervous that at some point in the next few months, the Fed will end up having to hike interest rates?
It does. It's certainly on the table. And that's the biggest concern we have, because right now we have these two mega forces colliding of central banks, becoming a little bit more hawkish at the margin at the same time that there's this massive need for liquidity with this huge AI earnings boom. So those two things coming together are really critical here. But when we look underneath the hood of the inflation reports that we're dealing with, yes, PPI was a little bit hotter. I would say that probably isn't necessarily a bad thing because it means businesses and manufacturing is booming in the United States. But the key to us is looking at shelter. It's all about shelter. Housing is the economic cycle. And if you looked at that last CPI report, shelter was up 0.1% year over year. That is remarkably low. And it's finally starting to reflect some of the real-time data that we're watching within the housing market. The NAHB housing market index, it slowed to its lowest level in years the other day. Home builder sentiment is slowing, et cetera. So we think that that can keep feeding into the inflation. It's 35% of CPI. So we think that slowing shelter component, which, look, mortgage rates still 6-7%, that is not helping the housing market recover. That can help dampen any inflation that we see coming from higher oil prices or from the good side of the economy.
Emily, this is the challenge this Federal Reserve has got. The drivers of inflation right now are arguably rate insensitive. And if they hike, I was going to pick a bad phrase, I'll pick a different one. They're arguably just whistling in the wind. I don't think, Emily, it makes much of a difference.
No, and I think that's why it's so notable that Warsh has said that these things are mutually exclusive. The employment side of the mandate and the inflation side of the mandate. That's a very different tone than what we've seen historically. And we think that that doesn't necessarily play out because if the Fed does hike, they're not really solving the supply side problem. There's not much the Fed can do on that front, and they may risk the employment side of their mandate if this cost of capital becomes higher and company margins potentially get compressed. It's not our base case. Margins are great. Earnings are phenomenal, like we've talked about. But if that cost of capital goes up, that is the Fed that's going to really kind of be pulling the punch bowl away from the party.
Whistling in the wind is difficult. Emily, thank you. Appreciate it.
You.
Emily Ronan of Manulife, John Hancock Investments. I was going to say something else. I want to say the other thing. You mentioned Cleveland Fed President Beth Hammack a few times. I want to share this quote with our audience. This was in a LinkedIn statement going into the weekend. There is no conflict in our mandate. Inflation is too high. The labour market is right around my level of maximum employment. Then the line you mentioned. For the first time in my tenure, I'm hearing from businesses who say they think we need to take action to curb inflation. That's the push, the pressure they're under at a regional Fed right now.
And that's pretty direct. You hear a lot of Fed officials talk about weighing the risks, upsides and downsides. What you hear from Beth Hammack is business executives are coming to me and telling me to fix it, and that they just see inflation as the sole problem right now. And that is her posture going into next week when they have this big family fight at the Federal Reserve.
Which might result in some dissent. Few voting members, including Beth Hammack, increasingly hawkish, even with that downside surprise on CPI just a week ago. Bond yields this morning around 420 at the front end of the curve. Let's get you an update on news worldwide with your Bloomberg Brief. Vonnie has more. Hey, Vonnie.
Hey, John, thank you. Officials from Iran are reportedly meeting with mediators. The Associated Press reporting the meetings are taking place today in Pakistan. Reuters reporting a 10-day ceasefire has been suggested. The US and China are planning AI talks in September. Reuters reporting Treasury Secretary Scott Bessent will be leading the US delegation. The talks are set to take place before Chinese President Xi Jinping visits the White House later in the month. And JP Morgan CEO Jamie Dimon reiterating his criticism of the UK's bank tax surcharge. Dimon saying the tax hikes could drive capital away as they lead to an uncompetitive tax system. He says UK politicians should be worried about the number of companies that have delisted from London in recent years. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. Up next on the programme, continued escalation
Iran is very much intent. They want very much to make a deal. We're going to win one way or the other.
We're just ending it. We control the strait. They don't control anything.
Up next, we'll catch up with Ariana Salvatore of Morgan Stanley from New York City this morning. Good morning.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
So it was a struggle yesterday, a struggle to bounce from 2 days of losses to kick off this trading week, and it became a third day of losses on the S&P. Here's the bounce so far this morning. We'll see if it holds. We'll see if it sticks. Equity futures so far in the S&P up by 0.5. Some outperformance on the NASDAQ. The NASDAQ 100 higher by 1.3. In the bond market, I've mentioned this a few times, twos closing above 420 for the first time since we received CPI last week. A downside surprise, and yet we give up the rally. In the bond market, twos back to 420, north of that level at 420.85. This in the commodity market is not helping. Brent crude, WTI. We've talked about the monster drawdown in global inventories. Global inventories between March and May dropping some 360 million barrels. That's the cushion for crude. When you speak to the professionals in this sector right now, they will tell you, you don't consume crude. You consume crude product. And we have bigger issues with crude product.
Yeah, a lot of risks out there when it comes to crude product, including if the Houthis were to get involved and we would see potentially some hits in the Red Sea. What is going on in Russia in terms of export ban on diesel? The fact that China is still hoarding product. And a viewer writes in and says, look what's going on in the strategic Black Sea oil terminal. The fact that now they're having to halt some exports there because of Ukrainian drone strikes. They're a pocket of risks around the world that is putting tremendous amount of pressure right now on the product market.
It's not talked about enough, developments in Russia. The exports of diesel, right? Banned in the last few weeks or so.
It's a big deal.
That's kind of a big impact.
A massive impact, because Russia normally would be exporting a lot of this to the global market. And right now what they're seeing in terms of Ukrainian drone strikes on refineries more deep into Russian territory, and people are lining up. If you look at individuals in Russia and they send you some pictures, you see individuals lining up at gas stations. There's a real problem there, so having to cut off these exports right at the moment.
Just been this quiet, uncomfortable rally on crude. We sold off at one point on Brent. I'm talking about Brent. We were threatening to break into the 60s, and now we're back in the 90s, just like that, very quickly. $90.35. Under surveillance this morning, continued escalation.
Iran is very much intent. They want very much to make a deal. We're going to win one way or the other. To me, I think it's over. I don't want to deal with them and with this scum.
This is a far bigger job that we're doing. We're just ending it. We control the strait. They don't control anything.
So here's the latest this morning. Crude prices hovering around $90 a barrel as US and Iranian forces exchange strikes for a 10th consecutive day. The Associated Press reporting that mediators and Iranian officials are meeting in Pakistan right now, while Reuters is saying a 10-day ceasefire has already been suggested. Bloomberg's Tyler Kendall has the latest. Hey, Tyler.
Hey, John, good morning. Well, we're getting these signs that mediators are actively working to prevent further escalation, though a White House official tells us that the U.S. strikes are expected to continue until President Trump chooses a different course of action. And at this point, we've gotten very few public indications that Iran is willing to let up its leverage when it comes to the Strait of Hormuz, attacking another tanker overnight, this time linked to Kuwait. There's new data out from research firm Kepler that finds the average amount of ships transiting from Friday to Sunday was about 10 vessels per day, and most of them, if not all of them, use the route that is being approved by Iran and not that U.S. coordinated route that is closer to Oman. Now, just compounding the risks, as you've been discussing on this program, is the threat from the Iranian-backed Houthi rebels to institute this immediate maritime blockade of Saudi Arabia, as we know that the country has been using its pipeline to get more supply to market via the Red Sea to the tune about 4.5 million barrels per day since the conflict began. And Saudi Arabia is taking the threat seriously, saying in a statement overnight that they will take, quote, all necessary measures to protect its ships. Now, John, as regional allies are working to try to get some sort of resolution, we got this new reporting this morning that Iran's president says that he is in closer touch with the country's supreme leader, which some experts say could help smooth the path for diplomacy.
Tyler Kendall with the latest. Tyler, thank you. I want to pick up on that last line. If Lisa was here, she'd ask a question she often asks. When we negotiate, who are we negotiating with? I think that last line from Tyler was important.
Yeah, and also it's very odd because we have not seen Mojtaba Khamenei. We have not seen the new supreme leader. And now you have the president, which is very domestically focused in Iran, saying, oh, well, I have a lot of contact with him. Well, do you? This is where the questions really come from. At the same time, there's been a lot of analysts in the U.S. government that they say they see evidence of potentially a debate taking place within the regime. Well, is that properly happening? Is there a real debate between hardliners and then those that maybe want to go to the negotiating table?
Here's the take from Ariana Salvatore and the team over at Morgan Stanley. They write the following. We see the Strait normalization requiring 65% of flows to get markets back to balance, keeping our oil forecasts above pre-conflict levels, but below $90 a barrel. Ariana joins us now for more. Ariana, good morning. It's good to see you.
Morning.
Let's talk about those negotiations. I'll ask that question to you. Who are we negotiating with?
Good question. I mean, that's one of the key uncertainties when it comes to the implementation and seeing through the Memorandum of Understanding. Maybe just to back up and provide a little context, maybe why we're not necessarily surprised that this MOU sort of fell apart, right? We saw 4 clear paths to escalation after it was signed. First, implementation, and not just implementation, but sequencing. What happens first? Lifting the blockade, opening the strait. How do you lift decades of sanctions and reverse that policy? So that's the first question. Second question is, where are the Israeli and U.S. objectives diverging, right? That's a really important component to keep track of. For Israel, the Strait of Hormuz doesn't matter as much, right? For the U.S., that's obviously a key concern. Israel's more concerned with missile launcher capacity, nuclear, as you could guess. The third, where is Congress in all of this? We know that there are some hawkish members of Congress that have pushed back against the deal itself, saying it wasn't good enough, didn't go far enough, and they will not have an explicit role in approving whatever MOU comes forward, nor did they approve the JCPOA, the 2015 deal. But we are getting NDAA discussions going in Congress. So to the extent that lawmakers want to push back and make their preferences known, they'll have a platform to do so. The last thing I would say is on nuclear itself. This was a 60-day agreement. And the last time we saw nuclear negotiations, they took something like 20 months. So with that backdrop, it's not necessarily surprising to us that we saw this type of escalation. Who are they negotiating with? It's just one question among many.
And we're in the 60 days, technically, right. And already we're back to what honestly is war, 10 days of strikes. Do you track where the oil price is going depending on what the president is going to do next? Is there a threshold for him that then potentially he says, okay, I'm going to lead into the diplomatic route?
It's very hard to see where those incentives might overlap. When we think of this from the domestic standpoint, it's really gas prices, right? Obviously, affordability, key issue heading into the elections. And when we look back at prior elections, it's not a perfect, rule of thumb, but one thing we go by is the 3-4-5 rule. So gas national average around $3, good for the incumbent, right? $4, politically a little bit dangerous. 5+, that incumbent is likely to lose that election. So I think if there is a metric to track, that would be it, right? But overall, I think there are many incentives that are sort of driving the president's strategy here. And as you guys said before, you don't consume crude, right? It's just one factor of many.
What are the policy proposals that potentially this administration or Congress are going to look at if we continuously march higher from $4 a gallon?
I think a lot of the options have been on the table since the start of the conflict back in the spring of this year. The clearest things, temporary sanctions relief, right? So that was not just for Iranian oil that was on the water, but also some Russian oil, so secondary sanctions too. You saw a Jones Act waiver. You saw tapping of the Strategic Petroleum Reserve, right? Those levels are low relative to where they started in the conflict. But again, these are all mitigation measures. They're not really going to be enough to meaningfully offset this sort of increase.
I know this is a difficult question to answer, but do you get the sense that maybe this situation is more important to the president than the midterms? We often have guests that come on the programme and talk about the midterms. He's got to get this dealt with before the midterms. Does he?
I absolutely think this is not the primary concern. The midterms, not the primary concern for President Trump. As we've said on this program before, there's plenty that remains within his control following the midterm elections, right? So tariffs, geopolitics, foreign policy, immigration controls, all of that he can continue doing. And the historical precedent suggests the Democrats are probably going to do pretty well anyway. So if you think about that, I think the bar is relatively lower for President Trump in terms of keeping House control, keeping Senate control. I think that that's not the only thing he's considering when it comes to the conflict.
Arianna, it's good to see you. Thanks for being here. Thank you. Arianna Salvatore of Morgan Stanley. That last night, I think, is important. We often hear that he'll get this fixed because he has to before the midterms. Does he?
I'm looking at that quote he said a few months ago. Not even a little bit. The president said when asked to what extent Americans' financial situations were motivating him to make a deal with Iran. The only thing that matters when I'm talking about Iran is they can't have a nuclear weapon. Not saying he doesn't care about Americans' financial situations, just that he cares about this a lot more. And he's not going to let Americans' financial situation, potentially higher gas prices, impact what he wants to do with Iran. At the same time, we have seen this president definitely move towards wanting to take the diplomatic route when available.
That's the bias of the market too. And when you're confronted with two-way risks like we are this morning, the prospect of, say, the Houthis shutting down the Red Sea and blocking Saudi Arabian shipping, or the proposal for a 10-day ceasefire, the market will put more weight on the latter than the former, precisely for that reason.
And I lived it in real time with the president in Turkey. In the morning, he started out on the final day saying the ceasefire is over. They started bombing once again Iran. Then when we came to the press conference at the end of the day and reporters were asking, are we back to all-out war? He would not commit to that. He said it wouldn't be a long time.
Crude at 90, WTI around 85. Up next, we'll catch up with Ted Mordenson of Baird, as TSMC is reportedly planning to raise prices by up to 10%. Plus, Yahara has your morning movers. Software stocks falling across the board following a series of downgrades.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
This is the equity market picture so far this morning. Then good morning to you. Equity futures on the S&P bouncing back. On the S&P higher by 0.4. On the Nasdaq up by 1.2. The bar for earnings is sky high. The earnings continue in the next 24 hours. GM, we'll talk about that in a moment. A beat and a raise from General Motors earlier on this morning. Name the bank. In the last several months, they've probably upgraded their price target on the S&P 500 from Goldman to JP Morgan, from RBC to UBS, on the back of very, very positive earnings. This came from Matt Kettner of HSBC. Here's the warning. A man who has been very bullish on this market for a long time. He said it may well be time to reduce risk in portfolios after the peak earnings season in 2 weeks' time. Is this as good as it gets?
And he was talking about positioning being more stretched when he was on Bloomberg earlier today. And then he says, when do you get out? That's really hard to time right now. And that's what a lot of individuals are dealing with right now. And on top of that, you have a lot of risks coming into the market. We have 3 today that the market is digesting or potentially just shrugging off. When it comes to Iran, more tariff talk from this White House, this time on Canada. And then, of course, TSMC raising prices going into 2027.
Max Kenner joining the programme tomorrow morning, 6 a.m. Eastern Time. Don't miss that. Let's turn to the bond market. Switch up the board. 2s, 10s, 30s. Yields look like this. Here's your yield curve stateside. 2s at 420.64. 10s around 460. 30s around 5%. How many times have you heard me say that in the last few weeks? I've said it repeatedly because this bond market has been very, very range bound with yields at the upper end of the range. The why? Many reasons. Here's one. Check out crude. The bounce back we've seen in crude, it's been quiet, it's been stealthy, but you've gone from the 60s on WTI to 85. You've gone from the low 70s on Brent into the 90s. We're talking about a $20 move in some cases very, very quickly in this energy market.
Sometimes you would see these moves across a number of years, not just weeks. And this is all stemming from the conflict in the Middle East. And when it comes to Tehran and Washington right now, the main focal point on what they are trying to get control over is who controls the Strait of Hormuz. And that is why we've had this breakdown in the 60-day MOU. Potentially there's an off-ramp for a 10-day ceasefire, or potentially this messy situation gets a whole lot worse if the Houthis come well on their threat and start to block some of the product and crude that is going through the Red Sea.
A 15% plus rally on crude just last week, up again this morning. 2 hours away from the cash open. Let's get to your morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with the earnings that we've gotten this morning, and GM shares up 1.6% in the pre-market after the automaker posted a beat and a raise thanks to strong pricing on its more profitable trucks and its cost-cutting measures. But I will note that shares were in the red earlier, underscoring some of the concerns that investors have with this automaker. U.S. The car sales are still declining. Plus, the company is relying more on pricing power rather than seeing stronger demand for its trucks. Meanwhile, another company to report earnings was the credit reporting company Equifax, and shares are plunging 11% in the pre-market after it struck a more cautious tone on the rest of the year, lowering the top end of its profit forecasts, and investors are punishing it for that, even though it beat on second quarter earnings. And we end on the software stocks. They are under pressure with names like Salesforce down nearly 4% in the pre-market after Morgan Stanley downgraded a number of them. The call reflects a broader shift in sentiment that we've seen in software, where investors want more proof that their investments in AI are translating into actual growth. And Morgan Stanley says that it is not seeing that with these names, even though they all have a big AI push. And I will note, Intuit shares down 53% year to date, John.
Brutal stuff, cut in half. Yahara, thank you. Appreciate the update. More from Yahara in our next hour. On our radar this morning, day 10 of direct strikes between the US and Iran. Ceasefire talks are reportedly underway, with the Associated Press this morning saying an Iranian official is meeting with mediators in Pakistan. Reuters reporting a 10-day pause has been suggested. Elsewhere, the president threatening a fresh 50% tariff on a range of Canadian goods. Washington highlighting unfair treatment of American products as reasoning for the levies. The tariffs are set to take effect in 30 days should the president follow through. And finally, General Motors rising in the pre-market. The automaker exceeding estimates for the second quarter and raising its full-year earnings forecast. The GM CFO, Paul Jacobson, joining the programme at 8 a.m., so about 30 minutes from now, to break down the numbers.
I'm really excited to speak to him because there's so many issues right now affecting GM and whether or not you're a massive automaker in the world. I mean, you wake up this morning and you see fresh tariff headlines between Canada. I know that's not affecting autos right now, but you have to think, is this potentially going to be a problem given the United States, Mexico, and Canada are renegotiating USMCA? You have the fact that they have had EV losses. What's going on with that business? And the fact of the matter is, it comes down to people want pickup trucks and SUVs, and they have been having very aggressive pricing on that, and it's working for them.
So let's start with that last point. It's important. They've got pricing power for premium trucks. That's fantastic. At a time when gasoline prices are pushing higher and doesn't seem to be slowing sales right now, they've increased the guide. We'll start there, I think, for the conversation. The powering of margins, the engines for margin growth right now, they seem to be very constructive on that. And I think we need to get into that too. You talked about tariffs. High chip prices, another factor as well. They're going in the wrong direction too. So trying to work out how this company that's navigated these issues really quite well in the last 12 months, how they plan to do the same again over the next 12.
And it costs a lot of money to fill up an SUV and a pickup truck. And if gasoline prices are going higher, is there a threshold where potentially they would have to not raise prices anymore, or potentially will they see pushback from consumers? We know they're not interested in straight EVs. Potentially, is there more of an increase they see on the horizon for hybrids, or are people just going to put off buying brand new cars?
Based on the numbers we're seeing this morning, we're not there yet. GM this morning higher by 1.7%. Looking forward to the conversation with the GM CFO in 30 minutes' time. Let's turn to tech. Taiwan Semi reportedly planning to raise chip making prices by up to 10%, according to Nikkei. The changes will take effect next year and cover both advanced and mature semiconductors. Ted Mortensen of Baird writing, we're at the front end of a super cycle, but the spend and funding requirements are massive. Ted joins us now for more. Ted, good morning. Good to see you. The spending and funding requirements are huge, and these companies, a handful of them, are making massive, massive profits. Ted, to your point, and you've noted it in the note you've put out and sent over to us, we've seen great numbers from Taiwan Semi. We've seen great numbers from Samsung, from Micron. What does the market response to those great numbers tell you about how high the bar is this earnings season?
The bar is extremely high, and all these companies have got to absolutely annihilate the number, like Vicor just annihilated the number this morning. The issue, I think, is a little bit different. If you look at TSM, they increased their CapEx from $56 billion to $62 billion. To put that in perspective, CapEx in 25 was roughly $41 billion. On their call, they did indicate that some of that increase was due to higher equipment costs. So they're seeing the inflationary impact on their model already. So they've got to pass on all these additional prices. And from my perspective, I think this is a blind side on the tech market. If you look at the 10-year Treasury at 4.6%. If we lose control of the long end, I think cost of capital issues will become front and center with the street.
Ted, let's get into that. You've mentioned this the last time we spoke as well. The long end of the curve, at times over the last few years, has had these moments where it's felt untethered. Are we close to that moment now? And can you just build out what is the relationship between that and the things we're talking about in tech?
So we're not playing chess on 4 levels anymore. We're playing chess on 10. This is probably one of the toughest markets I've seen on trying to balance the macro inputs. If you look at oil at $90, that's massively inflationary. If you look at the semi trade, just the AI infrastructure build, the demand on memory, for example, due to the impact on inference and the memory loadings, has been biblical. We have never seen a 300% plus increase in memory. So we're seeing price increases everywhere in the semi-food chain, and they're significant. Memory I touched upon, there's 25 companies that are seeing their gross margins being hit by memory. Second of all, if you look at advanced logic, what TSM does, they derive about 33% of their wafer revenue from the 3 and 2 nanometer nodes. This is where manufacturing is going, and they're the only game in town right now at 2 nanometer. It's de minimis as it relates to their total revenue, but it's going to be a massive manufacturing node. For them to raise prices here, I guarantee you, in the boardrooms of NVIDIA, Apple, Qualcomm, AMD, I'm sure they saw this coming, but they've got to pass on these costs. And at some point, we have the discussion of elasticity of demand.
So, Ted, let's get into what it means for fixed income more broadly, and we'll start there. And then we can talk about the potential for demand destruction further downstream. This is what I've been thinking about. I know you've given it thought as well. These companies are spending tremendous amount of money. Clearly, it's creating inflation pressure, price pressure that needs to be absorbed somewhere by someone. That threatens to push up bond yields, might threaten to push up interest rates of certain central banks as well. At the same time, we've got these massive funding requirements, financing needs of companies coming to market, both through equity and through debt. The struggle I've got right now, Ted, does this put the squeeze on the Treasury market? Does the Treasury market put the squeeze on those financing requirements? Is the tail wagging the dog wagging the tail? Which one is it?
I don't think we've ever been here before, to be honest with you. I mean, I'm seeing estimates of $1.4 trillion of funding next year. We've never been here before. This is a totally different cycle. And when you've been doing this as long as I have, you always try to look around the corner of what's new, and that is new. That funding requirement is not bigger than a bread basket. It's the bakery. It is massive. So what I'm watching very closely, and I talk to portfolio managers sometimes 3 times a day, and what they're struggling with is attribution. And the worst thing that could ever happen to the tech tape is if we lose control of the 10-year, and let's just say, hypothetically, we go to 480 or even 5% worst case, there's going to be sector rotation. Look at the chart of Marathon Petroleum, and I am not an energy guy, but it's probably one of the strongest charts that you've ever seen. That's the definition of sector rotation. So what I'm watching going into Q2 earnings, all of these semi prints are going to be massive. They should be. That's number one. Number two, if you look at Micron, if you look at TSM, you look at Samsung as the underlying company, they blew out the number like nobody has seen before, and the stock traded down. If we get into the sell on the news on price perfection, there is going to be sector rotation. And where I'm watching very, very closely is if my PMs decide that, hey, I need to own energy, I need to own consumer staples, I need to own utilities, I need to move away a little bit from tech. The issue, Jonathan, is if you look past April 7th, the majority of the semi increases of 66%. I mean, that's a good couple years of performance in 3 months. The exponential increase on performance on the upside was historic. If we get sector rotation, my worry is it won't matter on fundamentals. If people move to different sectors, it's going to be a blind side for the general market if we lose control of the bond market.
Ted, layer that on top of the fact that we are seeing political pushback as well when it comes to AI data centers and potentially cheaper models coming out of China.
The investments that were made on OpenAI and Anthropic were done on the front end of the curve. I'd have your viewers go and do a deep dive on the partnership that Palantir and NVIDIA did. This is the definition of decrease in token prices via open source models, silicon, and the next generation stack middleware. You may love or you may hate Dr. Karp, but the guy's brilliant. And whenever he gets criticized, he's generally right. So the models are changing. Enterprises need lower token prices. They also need open source models that are not compromising their businesses. And this is what Dr. Karp went into great detail on a few weeks ago. So not only do we have a constant churn of the infrastructure changing, but I think you have to also look at how we are going to attain revenue, in the trillions to make up for this cost. There are three markets. I'll be very short. One is consumer. That's dead in the water. If you look at enterprise, that's 4% enterprise budget increases. Costs are up 25%. My clients are worried about the second half. And then you got the hyperscalers. They're spending like drunken sailors, and they will until they have to because they can pass on costs. Where we run into a problem is that the end customer just can't take it anymore. And we'll have to watch that in Q2 commentary.
Ted, after a conversation like that, forgive me for asking such a simple question. Give me a trade. With all of those concerns, what do you like right now?
I wish I was an energy analyst. I'm not, and I think that in tech there are three general areas. One is defense tech on semis. We're going to have multi-years of spend in defense. The Secretary of War is going in front of Congress asking for more money. There's no option here. That's number one. So semis that play in the defense area. In fact, some of the defense companies like an AVA or even a Kratos or some of the big integrateds, but also Palantir that plays into defense. I think defense is a great trade. The other one is semi-cap equipment. If you look what TSM just went up on their CapEx budgets of $62 billion, they're going to need a tremendous amount of equipment. The memory players are going to, whether it be SK Hynix, Samsung, or Micron, they are spending at historical levels on CapEx on equipment. They're going to need a tremendous amount. So you've got, on semi-cap equipment, you've got 30% growth for the next 3 to 4 years. That's the other area. And then in tech, where I'm looking at is anybody that has pricing leverage will be insulated. And those are the foundries. So if you look at the four foundries, it's Samsung, Intel, and TSM being the gem of the group. And then from a lagging edge perspective, where some people are just not paying attention, is a lagging edge fab like Global Foundries, for example. They also have pricing leverage. So anybody with pricing leverage, some of the semi companies that are very specific in their silicon, I think they'll be fine and they have pricing leverage. It's the commodities that I worry the most about.
That's a lot to chew on. Ted, it's good to see you, buddy. As always, thank you, sir. Ted Mortensen of Baird. I often go and listen back to the programme after the show. Listen back to all the interviews. I'll listen back to that twice. So much to get through in that conversation. Let's get back to our top stories this morning with a look at your Bloomberg brief. Vonnie has more. Hey, Vonnie.
Hey, John. Well, as you've been saying, Goldman Sachs says oil could trade above $120 a barrel by the fourth quarter if disruptions in the Strait of Hormuz continue. Now, currently, Goldman sees Brent at $80 a barrel in Q4 and $75 next year if tensions de-escalate. President Donald Trump says Benjamin Netanyahu will not be arrested in the U.S. Trump reacting to New York City Mayor Mamdani, who says his administration is in conversation about detaining the Israeli Prime Minister when he's in New York next month. The International Criminal Court has issued arrest warrants for Netanyahu on charges of war crimes and crimes against humanity. Neither the US nor Israel are members of the ICC. Kraft Heinz is partnering with Disney. The Wall Street Journal reporting the deal will put Kraft Heinz condiments and mac and cheese in Disney's North American parks and resorts. The food giant will also be able to use Disney's characters on some of its products. And that's your Bloomberg Brief. John.
Evony, thank you. Up next, AI's economic boost.
I think that investment in data centers and in AI generally do affect the demand side of the economy, and we can see it, and we can see prices move up. But unlike some of these other shocks, with a lag, it also affects the supply side.
Up next, Joe Davis of Vanguard.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on Salar de Uyuni in Bolivia, and this is Bloomberg.
Live from New York City, welcome back to the program. Under surveillance this morning, AI's economic boost.
I think that investment in data centers and in AI generally do affect the demand side of the economy, and we can see it, and we can see prices move up. But unlike some of these other shocks, with a lag, it also affects the supply side. Between the short term and the long term, it can have a disruptive effect, and we're attuned to that.
So here's the latest this morning. Big tech spending powering economic growth. Bloomberg reporting business spending in the first quarter advanced at the fastest pace in almost 3 years. Joe Davis of Vanguard writing outsized AI-related capex is expected to continue to offset softness in consumer spending. Joe joins us now for more. Joe, welcome. Let's talk about the contribution coming from the tech sector right now. How large is it, and is it still growing?
Oh, it's certainly large, and it is growing. You have to look really back to the late 1990s to see this sort of dynamic. Again, we have oil prices moving around. We have, consumer spending K-shaped the fact is, follow the money and follow the investment cycle, and then that gives you a really good insight on the economic outlook. We are fairly constructive next year for growth.
Joe, how difficult is it for policymakers like the Federal Reserve to set policy for that when so much of this is out of their hands?
Well, and again, as you know, we've looked at this very deeply for 3 years. And, you know, my urge and counsel to policymakers is not just look at the investment spent from a demand side, chips, data centers, but start factoring in a higher trend growth world from productivity, which we aren't fully seeing yet, but we will see if we're right, which means that you can have an acceleration in growth next year and it not be inflationary. It's boosting up inflation now, but it need not do that next year.
Joe, do you think this Fed, under this leadership, will wait it out, look through the potential spike in the short term and wait for the benefits further down the road?
Well, I think it's fair. I think you talk tough on inflation. That's easy. It's free. And why not do it? I think I'm hard pressed to see Fed tightening. We have a labor market that's stable, not accelerating. We have AI investment, to be sure, again, is going supernova. And so you have to follow that dynamic. But ultimately, that will put prices down. It's just we have a cyclical run up here. So I think talk tough first and then monitor. I don't think that's a sustainable inflation dynamic.
We've got an oil bounce as well. And Joe, for some members of the committee right now, the hawkish members of the committee, Beth Hammack of Cleveland being one, does that reintroduce some hawkish risk into next week?
Yes. I mean, again, I think you talk tough. I mean, the fact is inflation, as everyone notes, including the Federal Reserve policymakers, inflation has been above target for quite some time. And so, again, interest rates are in the rough range of where they need to be. They're certainly not stimulating economic activity. But again, with this investment phase that we're in, it's tough to derail that dynamic. And so I think you hold the line, much like the late 1990s. You may have some some touches up and down perhaps next year, but that is not our baseline. Our baseline is steady, talk tough on inflation, and then see the growth grow above trend.
I'm with you. I think a lot of people might agree as well. At times it feels like a communication exercise. Talk tough, keep inflation expectations anchored, wait to see how this plays out. Joe, let's talk about the talking side of things. I'm just curious to your reaction. If we don't have a news conference next week, would you care? Does it even matter?
Well, I think you also look at the forecast, whether it's during the meeting, in the press conference, what they publish, what they perhaps say afterwards. What we are laser focused on and have been is that we think eventually the Federal Reserve will start producing and expecting higher growth for the next several years. They will lag, I think, the data, but our projections are fairly clear and our conviction is rising that we are going to approach close to 3% growth next year, despite oil volatility and despite some sticky inflation. That is all being driven by the AI investment. And there's both risks and opportunities from the investment side, but I think that's where we will see the Federal Reserve raising their expectations for growth, yet not inflation.
Joe, appreciate it. Thank you. Joe Davis there at Vanguard. It's kind of the message that at times Kevin Walsh has tried to articulate. News conference or no news conference next week? Joe didn't bite. Are we getting one?
I think you have to have a news conference. Isn't that crazy if you don't go out? I mean, you're there to work for the American people and you don't go out and greet the press.
Go back to what it used to be like. Set the tone.
What happens to the Fed show then?
No
I
presser.
tune in.
A shorter.
Okay, but it
Fed
still
show.
exists. It's just shorter.
We read the statement. We move on. We take a break. Just like that. That work for you?
That works.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
This is a market with a lot of variance.
The market's trying to figure out who's winning, who's losing.
I wouldn't be surprised if we see a little bit of a pullback in the capex.
It's really a balance of both the spending and the returns.
The demand's there and it's outstripping the supply.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. 90 minutes out from the cash open, equities elevated by 0.5 on the S&P, up by 1.4 on the Nasdaq, following a three-day slide on the benchmark stateside. That is your bounce this morning. In the bond market, 2s, 10s and 30s, your yield curve shaping up as follows. 2 still around 420. Elevated still this morning. We hold those levels. We hold these levels too. Brent and WTI elevated in the crude market. Brent shaping up as follows. $90, WTI around 85, up by more than 1 percentage point this morning. It is the itch that just won't go away. It's becoming a bigger and bigger pain for this market. The rally continues.
It's a risk out there right now, and potentially there's this fork in the road of what the United States and Iran are going to do. On one side, they can take this 10-day ceasefire, or potentially, as we've been talking about, this situation can get a lot more hostile, especially if the Houthis were to get involved and then cut off another key choke point when it comes to the oil market. And that's just one of the risks right now. If you look around the stories this morning, there are pockets of inflationary risk, whether it's not fresh tariffs when it comes to Canada. Also, TSMC talking about, according to report, raising prices next year.
In Q2, we could ignore this. We could ignore the situation in the Middle East for a bunch of reasons. The one that we're focused on this morning, global inventories were massive. We had this huge cushion that just gave us this warm comfort blanket in this equity market, together with amazing earnings. Amazing earnings plus decent GDP growth. Just spoke to Joe Davis of Vanguard, who's talking up 3% GDP growth next year because of the massive AI spending that is just going to continue through the next 12 months?
It's going to continue. This is why, as you said, the big boys this week are going to be important. What does Apple say? What does Alphabet say? What does Intel say? But more importantly right now, the conflict in Iran is becoming a little bit more challenging because what did we hear from Bank of America? What are we hearing from Goldman Sachs? If this continues and we see this more escalatory posture, we're looking at $100, maybe $120 when it comes to Brent. That's going to trickle down to much higher product prices.
Anne-Marie mentioned Alphabet. Alphabet reporting tomorrow. You'll hear from Tesla as well. You'll hear from IBM too. IBM pre-warning. Not great news for that company over the last week. We'll hear from Intel on Thursday. Then next week, the major players continue to report results. Coming up on the program, we'll talk about another major player, General Motors. The CFO, Paul Jacobson, joins us with the automaker boosting its full-year outlook. We'll catch up with Abby Yoder of JP Morgan, with chip makers rebounding ahead of a key week of big tech results. And Rob Sarkin of PGIM calling for 3 interest rate hikes later this year. We begin this hour with stocks rising as earnings season shifts into full gear. The General Motors company exceeding estimates on the top and bottom line for the second quarter. The automaker also raising its full-year profit forecast by another $500 million. The GM CFO, Paul Jacobson, joins us now for more. Paul, welcome to the program and congratulations on the result. It's a beat and a raise. I'm intrigued by the raise, Paul, so let's start there. What powered that raise this morning?
Sure. Well, good morning, Jonathan and team. Thanks so much for having us today. You know, we're here to celebrate in large part the accomplishments and achievements of the GM team across the board. And I think the theme for the day is consistency. You know, the team has really executed well over the last few years. Our go-to-market strategy, our inventory discipline, our incentives remain below the industry average across the board. The consumers remain resilient across the board as well. And we've seen some good tailwinds coming in the form of continued warranty improvement, our EV profitability journey, as well as pretty significant ramp in our digital revenues across the board. So when we look at that and measure it against even some of the macro headwinds that are out there, we felt confident raising our full-year guidance by another $500 million, effectively taking our outperformance in the first year and banking it, and really continuing to drive those results. But incredibly proud of the team and what we've been able to accomplish.
I can see that this morning. Paul, also the pricing power. Let's just sit on that just for a beat. The pricing power is impressive. We see gasoline prices back to $4 a gallon for the first time in something like a month. That problem has persisted through Q2 into Q3. You've got great experience of dealing with energy prices in your time over at Delta. It's different in the same seat over at GM, but can you describe how this works? When you see gasoline prices push up the way they have, what is the relationship between that and sales for General Motors?
Well, certainly the airline industry has a lot more ups and downs than the auto industry does as it relates to oil prices. But, you know, what we look at is where is the health of the consumer, where is the demand? And, you know, our full-size truck sales are up 4% year to date. We expect that to be flat for the year, mainly because of production, because we're cutting over to the next generation of trucks, which we're really excited about. It'll be the most capable pickup truck we've ever produced with a brand new Gen 6 V8 engine, as well as diesel options across the board. So, you know, the success that we've seen in the last year of a generation of trucks is really unprecedented, and we've held in on price and demand as well, and that's remained consistent. So as we look at the overall energy price environment, it hasn't really impacted us. We're still selling full-size SUVs as quickly as we can make them, but we have a much broader product portfolio. You know, we like to talk about here that, you know, when you look at our crossover portfolio, the profitability is up 4x from where it was just in 2020. So we've gotten much more efficient at a broader portfolio to be able to meet customers wherever they are.
Paul, there's a line in the statement this morning from Mary, and it reads as follows, just a short quote. We have multiple engines of margin expansion. Can we just sit on the margin expansion as well? I think this is really important. You know what we're like, Paul? We sit around this table every morning and we worry for 3 hours about a bunch of risks. You have to execute. We've spoken this morning about higher prices for chips, higher prices for energy, the prospect of increased tariffs. How do you make sure that you've got that cost discipline, to make sure you've got the flexibility as well, to see those margins and that margin performance continue, even with that price pressure coming from all directions?
Well, if you're pros at worrying, that might set you up to be a CFO someday. So keep at it, because we have to worry a lot, in our desk as well. But we've really also got to focus on what is that playbook that we can do, can execute to overcome. And I think what the team has really done is we don't make excuses. We're out there trying to find productivity where we can, enhancements across the board. So when you look at what the team is doing with quality improvement, and we've increased our warranty savings year over year from $1 billion, which we came out at the beginning of the year, to $1 to $1.5 billion. Our digital revenue, which we're really excited about, will be over $3 billion this year, and we expect to add 1 million new subscribers to our digital channels. So the team is really executing, and I think that's what's really different. When you look at 10 years ago, we were producing about $3 to $5 billion a year in free cash flow. Today, we're producing over $10 billion a year in free cash flow, and it's driving that efficiency in spite of what everybody would argue is probably a more challenging macro environment than where we were a decade ago. So we're really proud of these results, and we're continuing to execute and expect that the market is going to continue to see that.
Building on Jonathan's point, though, when it comes to TSMC this morning, they're looking at 10% higher prices next year for their chips. Do you at some point have to start passing chip costs specifically down to the consumer?
Well, we look at it in the entire equation. So coming into the year, we talked about $1 billion to $1.5 billion of inflationary pressures. We took that up after we saw the Iran conflict. Some of that is chip inflation as well. So our supply chain team is out there sourcing everything that we can. The first and most important thing is that we don't impact production, and we've been very, very consistent in that space. So while we are seeing some inflation, the opportunities and the tailwinds we have elsewhere in the business have been more than enough to overcome it. And that's why we've been able to get back into our 8 to 10% margin range in North America, despite $3 billion of tariff headwinds and other inflationary pressures as well. And, we think many of those opportunity sets that we have are going to carry us in with even more momentum into 2027 and beyond.
I'm glad you mentioned tariffs. I know you've done a lot to try to reduce the tariff bill, but are you having some PTSD this morning when you wake up and you see the president is talking about Canadian tariffs once again, which is key for your supply chain?
Well, there always seems to be something happening the day before earnings, but in this circumstance, this isn't anything that is impacting us. These new tariffs that were announced don't fall under Section 232, which is what covers autos. And and I think if we could encourage the parties, we would love to be able to get the deals done with Canada and Mexico. Mexico seems to be a little bit ahead of Canada right now, but I think a good trading bloc that meets all of the countries' needs is really important for us competitively. We've got a lot of capital that we've been putting in place, almost $6 billion into the United States to onshore production of both vehicles, full-size trucks, as well as the new Gen 6 engines that are coming in. We're increasing production across the board. We'll have over 2 million units produced in the United States when all this is said and done. So, I think we've been able to make adjustments, but, consistency is helpful, especially when you have a multi-year planning cycle.
Paul, I don't want to put words in your mouth, but is that a frustration for you and the team, for the executive team, for the whole team at GM? You just want to know the rules and you'll get on with it.
Well, I wouldn't classify it as frustration, Jonathan. I would just simply say, there's a lot of volatility in the world, and if it wasn't tariffs, it might be energy prices, it might be global conflict or geopolitical issues. And that's why I say as a team, we don't sit around and make excuses. We look and try to figure out what is that playbook that we're going to execute, where are we going to continue to try to find the opportunities to expand margin. And what the team has done is pretty remarkable. And it's now 3 years straight that we've delivered these types of results. And feel very, very optimistic about our ability to weather the storms wherever they might come from.
Well, it's a beat and a race this morning. It's impressive. Paul, we appreciate your time. You're always generous with it. Thank you. Paul Jacobson there, the GM CFO, following a beat and a raise of $500 million for the profit forecast this morning.
Yeah, beat and raise. They continue to deliver, and they are dealing with a number of headwinds. And I'm with you. There was a little bit of frustration there. I think he was just trying to say, we're lucky we're not in the middle of this latest tariff threat when it comes to Canada. But I was trying to get at the point of, do you just want this to be done with?
Yeah, I don't want to put words in his mouth. He can speak for himself. We'll just talk about the whole industry right now. I think for most companies, They just want to know the rules of the road and they get on with it. They're flexible enough, they'll navigate it. But when it's up and down and there's tons of volatility, and to Paul's point, the point he did make in response to that question is if it wasn't for tariffs, it'd be something else. That volatility is coming from all directions.
Well, we're also seeing it in the oil price. And right now, $4 a gallon of gasoline. At some point, does that mean consumers might defer buying a massive SUV, buying a massive truck that GM obviously is one of their main selling points?
You certainly don't see that in the GM numbers this morning. GM positive in the pre-market. Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Following 10 straight days of military strikes between the US and Iran, the Associated Press reporting Iranian officials are now meeting with mediators in Pakistan. Reuters had reported a 10-day ceasefire had been suggested. Competition between the obesity drug makers ramping up. Novo Nordisk is suing competitor Eli Lilly, claiming Lilly's advertising for Zepbound and Mounjaro is misleading. Eli Lilly currently leads in US obesity drug sales. Tropical storm Bertha making her way towards the Gulf Coast. The National Hurricane Center forecasting as much as 8 inches of rain this week and warning of possible flash flooding from the Florida Panhandle to Texas. And that is your Bloomberg Brief, John.
Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next, the morning calls. Plus, we'll catch up with Abby Yoder of JP Morgan with the chip makers rebounding ahead of a key week of tech earnings. Live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
What we're going to probably find out at the end of this earnings season is that the free cash flow amongst the hyperscalers will cross that zero line, but the market's discounted that already. The market wants to see the confidence in the CapEx because, if nothing else, you're going to stabilize the chip trade.
That was Julian Emanuel of Evercore weighing in on the chip trade and the tech sector this morning. The tech sector bouncing back this morning. The Nasdaq looks like this. The Nasdaq 100 higher by 1.3%. Big slide through last week, bouncing back this morning. On the S&P as well, following 3 days of losses, higher by 0.4. Big focus on the bond market. Notable that twos are back above 420 again. 420.64 closed above that level yesterday. For the first time since we had that softer than expected CPI read last Tuesday. That hasn't pulled yields lower on a sustainable basis anywhere on the curve. 10s are back at 460, 30s and north of 5.1%. In the commodity market, crude higher as well, elevated throughout the session so far, $90 on Brent. Just think about where we were a few weeks ago, threatening to break into the 60s on Brent, and here we are back in the 90s and higher by 1.5%.
That's because we've had 10 days of continuous strikes on the U.S. side, and then Tehran going back to U.S. Gulf allies and really targeting important civilian infrastructure like desalination plants as well. We got an update from the Kuwaiti authorities this morning. They're in the middle of a crossroads, and they can either take a 10-day ceasefire, potentially recalibrate. Both sides would have to agree to this, or things are going to get a lot worse. The Houthis could get involved. We have no shipping right now to the Strait of Hormuz, and the point you continuously make, it's coming out of time where we already have very low inventories because we've been drawing on them for the past few months.
Does this reintroduce just a bigger hawkish risk for the next couple of days for, say, the ECB on Thursday? For that matter, the Federal Reserve? A week away. We'll see. That's the price action. Let's get you some morning calls. First up, Wells Fargo raising its price target on Alphabet, expecting higher 27 capex to be passed through to customers. That stock this morning just about unchanged. Your second call from AI disruption clouds the path to revenue reacceleration. That name is down 5% today. And finally, Barclays cutting its price target on IBM, saying it's too early for it to show significant AI upside. That name is down by 0.9%. in the pre-market. Let's stick with the tech story. Chip makers rebounding following their worst week in more than a year as investors shift focus to big tech earnings. Abby Yoder of JP Morgan Private Bank writing, "We disagree that the AI trade is ending. We know volatility can lead to opportunities, although we cannot pinpoint the exact bottom during pullbacks. We are buyers of conviction ideas." Abby joins us now for more. Abby, good morning. Good to see you.
Good morning. Good to see you.
You're getting at the question you're asked often. I'm going to ask it as well. Is it one trade? Is it ending? What's the pushback to those two questions?
I don't think it is one trade, right? Like, I think that's been the pushback right now from clients, and that's been their concern, right? Their number one concern is like, my entire portfolio is AI. I can't get anything outside of it. Even if I go to EM, it's AI, like it's very difficult to diversify. And I actually think when you look at the rotation that's happening within the market, right? The market's flat. You've got semis down in like a 20% correction, Korea north of 25%, but you've got the market flat, right? So you have other things working at the moment that are outside of this AI, trade, and I think that's what clients want.
The feel, though, Abby, is that they're still part of the same story. So yes, banks have started to pick up, but banks have benefited from all the AI capital raising, the IPOs, the spending elsewhere. If Lisa was on the programme, she'd also talk about the airlines, that some of the industry supporting airline revenue right now is coming from the tech trade. That's what kind of people are getting at right now. The economy is becoming a one-engine story for some ways in the minds of many as well.
I mean, I can understand that. It's definitely difficult to disentangle from an economic standpoint what is driving what, right? Like what's in the driver's seat. But for the most part, I mean, think about the commercial and industrial loan growth that you're seeing out of the banks. We've seen it accelerate from low, mid-single digit to almost double digit for some of these banks, north of double digit. We haven't seen that in like 3+ years, right? We've been in this manufacturing recession for the last couple of years, and you're starting to see that come out. And I think that definitely is partly related to the AI build out, right? Because that does, bring in the industrial complex. But I also think it has to do with the One Beautiful Bill Act and the immediate expensing of this CapEx that really does incentivize companies to invest and reshore and build. So I do think there's multiple components that are going into it.
When clients say to you they think that trade is ending, do you think, potentially not ending, so I know you don't think that, but do you think it's softening?
I think it might change hands, right? I think we're like reverting it, it feels very much like 2025 again, when we had the DeepSeek moment, and then you had an everything rally, and then it just became much more discerning as it relates to, which names were going to win. And I do think it's becoming a little bit more consensus, at least, to lean a little bit more into the hyperscalers, because I think there really has been this belief, we come back to this narrative, like in the summer of last year, where it's like these companies have the benefit of scale, the benefit of all of this data. They have so many different underlying businesses that can benefit from a revenue and then also expense standpoint. I think we're really underestimating. Yes, they're tapping debt markets. They're changing the way that they're spending that money, but they're also going to change the way they're making money on these investments. And we have pretty high conviction in that.
How concerned are clients about what's coming out of China? in some of these cheaper, low-cost models?
I mean, it's a major concern, right? But I think the other bigger concern would be if the government does take a stance where they say, you know, you can't use these, but there's different use cases, right? There's a lot of different use cases for different models, right? And these open source ones are much more malleable, but they're not going to be like the most important, you're not going to use them for the most important task at work, right? You can use them for more menial things and use them and they're more malleable. So I think it's just going to evolve, right? As this trade has continued to evolve over the last 3.5 years, it's just going to change. Like companies are just going to use different models for different things, and that makes sense, right? Like that actually is a smart business decision.
Year end, 8,100 on the S&P.
Year ahead, 8,200.
Year ahead,
June
8,200.
2027.
Okay.
Don't get ahead of yourself.
What's the path to that without chips participating?
Well, we think chips do participate.
Do they have to?
They don't have to. As you can see of what's happening with the market, I think you'd obviously have to see more heavy lifting in terms of the
Because the market right now feels like it's stalled. The index feels like it's stalled around 2% away from all-time highs.
Yeah. I mean, I guess, yes. Well, and to keep in mind, you've only recently seen the hyperscalers do well, too. So you can't have the chips and the hyperscalers not doing well, right? Like from a market perspective, that just doesn't really work.
Can you imagine a world where both do well? That's been a struggle for a lot of people.
Yeah, I do. I think that if the hyperscalers continue to show that they're, you know, garnering an ROI, a return on investment on their spend, and obviously the rate of acceleration in terms of how much they're spending, right? That growth will slow probably, right? Because this is just massive jumps year over year. But if they continue to spend, then that helps, you know, the infrastructure. So I do think that there is a way, but it really requires, you know, higher ROI and continued CapEx.
Can this happen if the Fed hikes interest rates?
It would make it more challenging, that's for sure. And mostly because when you think about what that would do to financial conditions, right? Because you do, again, have this changing of the guard in terms of this was all being funded from free cash flow before, and now, you know, there's $190 billion of debt being issued in 1Q, right? So I do think that changes at the margin, given that you have that happening.
Are we close to breaching capital constraints? We had a conversation about an hour ago. And there was some concerns about how much money's being raised in both equity and debt. The Treasury's had a massive deficit for a long, long time. That might start to matter a little bit more. Anywhere near to the pushback you might expect from that kind of level of financing we're seeing so far?
I mean, you're not seeing it in the market, really, right? Like, if you were to get that signal from, like, the IG market where it really, I mean, obviously you're seeing spreads move to a certain extent, but, like, if you were to get that signal from the market, then obviously I think companies would think, okay, maybe this isn't the right way to do this. But when you have equity raises that are oversubscribed, I don't think that's the message that these companies are getting at the moment.
Final question. If Alphabet comes out tomorrow and raises CapEx, is that the kind of market right now that rewards that? Are we happy with that?
Only if they talk about how their revenue is accelerating alongside of that and in excess of what we saw in 1Q, because we already did see clear signs of acceleration in 1Q as it relates to the revenue generation related to that CapEx. But again, we also had massive jumps in what was the expected spend in 1Q. So it's definitely going to depend case by case on if you raise CapEx, how are you monetizing it? And you've really got to show proof of that.
They certainly raised capital in Q2, a monster equity capital raise from Alphabet earlier in the year. Abby, it's good to see you. Thank you. Abby Yoder of JP Morgan Private Bank, constructive on this equity market. It's not just one trade and it's not ending.
Not one trade and it's not ending. And to Abby's point, she sees other parts of the market doing well. She still likes industrials and other parts of the market to potentially get to this bullish case of next year. But there are risks out there. Fed could hike interest rates. What happens if we get Goldman's $120 oil in the fourth quarter?
Let's hope we don't get 120 on crude. Let's just hope we don't go anywhere near there.
But what if the escalation just continues?
And it does
only
continue.
going to go up, and we're drawing down inventories. It's going to get more challenging.
The problem persists. I just get this feeling of this market right now. No one wants to internalize that price of Brent. It's like it's not happened. It's still 70. Don't look there. It's not 90. It's still 70.
Well,
but it's 90.
Tell that to consumers that are lining up for $4 a gallon.
I know. We're up again this morning by 1.6%. Coming up, we'll catch up with Rob Sarkin of PGIM, calling for 3 Fed hikes this year. Plus, Yahira has your morning movers. 3M rising as the AI build-out helps fuel the company's turnaround plans. That stock is up by 6%.
Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
The global economic playbook is being rewritten and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Equities firmer by 0.5 on the S&P, call it 0.4. At the moment on the Nasdaq, we're up by 1.2%. It's a better tone to this market. Chips started to perform. Last week they got hammered, down by 10%, entered so-called bear market territory, off by 20% plus from the recent high in June. Like
so
bear markets,
cold.
I know.
Every time you say it, it's funny.
I know. I struggle with it
I know you're
too.
rolling your eyes.
Well, when you're still up by 60, 70% on the year, it's not much
it's
for
crazy.
bear market, is it? But yesterday, things started to improve. The improvement follows through, some positive follow through into Tuesday. On the Nasdaq, we're higher by 1.2. Switch to the board and get to the bond market. Yields still elevated, just can't get away from 420 on twos. Just can't get away. Yields up by a single basis point, 421, 10s, 460, 30s, around 5%, even with softer CPI. Softer PPI. This is where we're at, a week away from the Fed's two-day meeting. It starts next Tuesday, concludes on Wednesday. And this is the reintroduction of hawkish risk coming from the energy market as well. WTI and Brent up again today by close to 2% now, closing in on 91 on Brent crude, 85 on WTI.
This is for sure going to be a problem for the hawks and the Federal Reserve next week. And if Lisa was here, she would say it's going to be a problem this week for the ECB, especially given how vulnerable Europe is when it comes to higher energy prices. But look, you do have mediators right now in Pakistan having this meeting with the Iranians. There's a choice to be made. Do they want a 10-day ceasefire? Or do things get a lot more hostile? And things can get a lot more hostile. And already they are hostile. The United States has lost service members. You see the Iranians coming back with targets in Jordan, desalination plants in Kuwait. Things are very challenging right now, and they can get even more volatile.
This is the frustration for both policymakers and investors. I can imagine a scenario where 2 weeks from now we're at 70. I can also imagine a scenario where 2 weeks from now we're back at 110. And if you're a policymaker who needs to set interest rates, that's not much good to you right now. You look at the broader backdrop, the bigger problem is this is only one piece of the broader inflation puzzle right now. The price pressure is coming from all directions. We spoke to GM about it 30 minutes ago. If it wasn't for what's happening with crude, it's something happening elsewhere. The pressure keeps building.
And that is on display this morning. We started the show talking about what's going on with TSMC, raising prices going to 2027, according to a report from Nikkei. What about the fact that we woke up this morning, yesterday, the president reintroduced fresh tariffs on Canada? Now, the market's shrugging that off because they've seen this story before. But the fact of the matter is we still have higher tariff levels and USMCA is still getting negotiated. There's a lot of pockets of risk right now around the world.
Investors right now, you just want to sort of bury the tariff story. Forget about that. Doesn't exist. Last year. Don't even want to talk about it.
I think the second I started talking, people just hit mute.
Like totally,
mute,
just like
mute.
Get rid of the tariff stuff. Energy, I'm not going to look at 90. I'm just going to pretend it's 70 still. That's the feel right now. And just focus on the earnings, and the earnings have been absolutely fantastic. 1 hour away from the opening bell. Let's talk about some of those stories. Your morning movers, Yahara has more. Hey, Yahara.
Hi, John. We start with some deal news. Sending shares of Utz Brands soaring 88% in the pre-market after the company agreed to be acquired by Germany's Intersnack in a $14.25 a share cash deal, taking the company private and giving this German company a bigger foothold here in the U.S. So investors sending the stock closer to the takeover price as investors bet this deal will close at the end of this year. And talking about other chips, we are seeing a rebound in the chip and memory stocks this morning with SanDisk and Micron all higher, as you said. The Philadelphia Semiconductor Index snapping a 3-day losing streak yesterday, and the recovery continues again today. And the thinking is, among some, is that the recent pullback has provided a good entry point. We also heard from TSMC saying that it is planning to raise its chip making prices, so that also boding well for the sector. And we end on shares of 3M. They are rising 6% after it posted a beat on both profit and it posted a raise. And that's because it's one of those industrial companies benefiting from the AI build out. The CEO, Bill Brown, is pushing further into data centers. They just announced a deal with Microsoft, and that strategy, along with the broader turnaround push, is starting to show up in the results. John?
Yahara, thank you. The stock is up by more than 6%. One to watch into the cash open, about an hour away. Let's turn to the economy. Yields remaining stubbornly high as inflationary headlines add up this morning. Brent crude back at 90. The president putting tariffs back on the agenda, and a report that Taiwan Semi is planning to hike prices for chip makers. Ira Jersey of Bloomberg Intelligence joins us now for more. Ira, welcome to the program. What is it about this bond market right now? We can't get away from 420 on 2s, 560 on 10s, 5% on 30s.
I think that's right, John. And I think one of the biggest things is the uncertainty about the inflation picture. So even though June we had certainly better data, when you have oil prices going up, that feeds through to a lot of other markets and industries, even in the core sector. So you think about things like transportation costs, for example. All of those things are going to lead the market, I think, to suspect that central banks globally are going to hike interest rates. Now, will the Fed actually do that? I'm not as convinced of that. And in fact, I suspect that they'll wait until they have all of these task forces out of the way before they think about hiking. So I do think that if they do hike, it's not until next year. But the ECB this week, sure, they're going to probably signal another hike. In fact, my colleagues in Europe think that that September hike is very much in the cards for them because they have a single mandate, whereas in the U.S., we do look at that 57,000 jobs and say, that's not great. So, you know, maybe we have to worry about both sides of the Fed's mandate.
Beth Hammack disagrees, Ira. Do you think she's got company at the Federal Reserve?
Well, I do think that there are a few members who are going to be hawkish, right? I mean, the Dallas Fed is always hawkish, right? So Lori Logan might think that the Fed's going to hike. And when you look at the dot plot from June, there certainly are some members who believe that they're going to need to hike interest rates later this year. But it is a very mixed bag, and I do suspect that Kevin Warsh and others who are on the maybe not the more dovish side, but the more let's stay on hold, let's see more data side, will convince the rest of the committee not to do anything until at earliest December of this year. But again, I do think that they'll wait until they have all of these task forces out of the way before they think about doing any move. The big thing, John, for the market, I think, is the market is currently pricing about 2.5 interest rate hikes and then a cut immediately after that. Yeah. I think one of those two things is wrong. They're probably not going to cut right away after they hike, or they're not going to hike as significantly as the market's price.
So, Aaron, let's deal with the near term. Let's get the sequencing straight. Let's deal with what we're dealing with right now in the next couple of weeks. The hawkish risk, so to speak, is relative to what is in the price right now. And if we can bring up the bond market again, you and I can just look at 2s right now. The 2-year has been comfortably above the policy rate of the Federal Reserve for the last several months. Ira, is that enough of a cushion to sit here and say, actually, the bigger risk next week might be dovish risk and not hawkish risk?
I think it is. I think those people who might be short the front end of the market might get stopped out, just because if Kevin Warsh does say, hey, there was a turn in the data in June, we have to wait and see if this trend is going to develop or if we're going to turn significantly. I just think in our view, and we put out our preview this morning, I do suspect that they'll be a little bit less hawkish. I'm not going to say that they're going to be dovish. They're not going to be dovish, but a little bit more tempered than they were in June. Basically saying, let's take a wait and see attitude for now, but with a hawkish bias. So I do suspect that we'll keep on pricing in for interest rate hikes, but again, maybe at December at the earliest, probably next year.
Ira, appreciate it. It's good to see you, buddy. Thank you. Ira Jersey there of Bloomberg Intelligence. That's the market question for next week. The bar's pretty high. We've baked in some hikes for the year ahead. How difficult will it be to out-hawk this market? Rob Stocken of PGIM anticipating 3 hikes this year from the Fed. He writes this: the US economy continues to power along with above-trend growth, above-target inflation, and now a warming labour market. And these factors suggest that Fed policy will become more hawkish. Rob joins us now for more. Rob, good morning.
Morning.
You heard what Ira had to say about things. Ira Jersey thinks maybe we'll disappoint some of these hawkish expectations. That's his view from Bloomberg Intelligence. Why do you take the other side of the debate this morning?
I would point to 2 things. One, when we look at the drivers of inflation, above trend GDP growth, what we think is a warming labor market that'll put upside pressure on wage growth later this year, and a range of supply side challenges that aren't just energy, but in trade, in tech, in labor, they all suggest upside risk to inflation pressures. That would be my first point. And so we think inflation is not going to move back down to the Fed's target without additional policy tightening. The second is, I think hawkishness at the Fed is reaching a type of critical mass. I mean, it's not just Chairman Warsh. It's not just the most hawkish members of the committee like Lori Logan or Beth Hammack. Really, you're hearing everyone else speak more and more hawkishly. And so I think the bar for hikes is relatively low. I don't think they'll hike at this meeting, but I think it'll just take a firming back up of inflation in coming months for them to start raising rates.
So when's the first hike? Because we also have a midterm election this year.
Yeah, and that's a concern in the background. We think the first hike is going to be in September, and you'll have a sequence of 3 rate hikes in the back part of this year. The midterms are obviously a concern. The Fed would like to avoid seeming political in any way it can. But we think at the end of the day, it's going to come ultimately down to the economics of it. And you're hearing that from Fed officials. Before the soft CPI print that we just got, Governor Waller effectively said, one more hot print and we're going to have to hike rates. And I think that logic is going to come back into play in coming months. So ideally, there wouldn't be a midterm election around the corner they'd have to hike into, but I think the economics are going to overrule that.
But where we're seeing inflation right now, these pressures are coming from the oil market, potentially tariffs, higher chip costs. Can hikes actually solve the problem?
Well, I think that the idea would be you hike rates, tighten policy, take some heat out of the economy, which is running above trend. It won't solve some of these supply side issues. Maybe it'll cool demand in certain sectors that will ease some of those pressures. In an area like AI, which seems mostly rate insensitive, but maybe it cools some of those pressures where it's strong demand and strong supply. But ultimately, I think it's about taking some of the heat out of the economy so you get less pressure in those non-shelter services prices. That's the Fed's big problem. That's the majority of PCE, and that is running 3.9% year over year. We don't think it's going to cool down without some additional policy.
You think we need tighter financial conditions?
Tighter financial conditions, exactly. And I think, any set of reasons that you outline here, I think they're all upside risk to inflation. Financial conditions are loose. The above-trend GDP growth, which we think is, despite the higher oil prices, is going to firm in the back half of this year, and the tightening labor market. They all add up to you need to do something. And we think 3 rate hikes is the way to start.
What tells you there is genuine intent here to do something and that this is not just a communication exercise?
Yeah, that's the real challenge. Talk is cheap, as they say, and maybe it's just talking tough, and there's a lot of logic to go behind. Maybe the Fed just needs to seem like they're committed here to price stability and then let some of these factors play out. But I think, if we go back to some of the communication we're seeing, I think the speech that aligns most with our thinking came from Lori Logan last week, where she said, inflation is going to ease, but with all of these risks, you can't be sure you're going to move down to 2.5%, to 2%. You're going to move down more to like 2.5%. And the number one thing that I think Chairman Warsh has said in his tenure so far is he wants to get inflation back down to 2.0%, not in the vicinity of target, but back down to target. And so that's why I think it's not just talk, because I think with these dynamics in the background, you can't be sure that you're going to move back down to that goal of 2.0%.
Out of interest, personal question. Are we killing this news conference? Does it stick around?
Well, you know, you have these task forces in the background. I think most of those are a 2027 story, but we've seen changes to communication. I think the press conference is going to stick. I think that's going to be hard to remove. I think the dots may go away eventually, but some type of forecast apparatus will remain. A lot remains to be seen. Certainly in June, it was a very different press conference than we saw from prior Fed chairs. I think that'll stick, but it will be changing over time and very different than what we're used to.
Rob, it's good to see you.
Great to see you.
Rob Suckin of PGIM looking for 3 hikes from this Federal Reserve.
As he's talking about the task force in the background, I was thinking maybe if Fed Chair Kevin Warsh doesn't want to greet the press, he'll have the head of the communications task force, or one of the heads, Mervyn King, come out and talk to the press.
I'm sure they'll do a news conference.
Can you imagine? You just outsource it?
Several news conferences coming up as those task forces wrap up. Rob, it's good to see you. Thank you, sir. Equity futures on the S&P just about positive so far this morning. On the S&P 500, up by 1/3 of 1%. With an update on news worldwide with your Bloomberg brief. Here's more from Vonnie. Hey, Vonnie.
Hey, John. Thank you. The Trump administration announcing new 50% tariffs on a range of Canadian goods set to take effect in 30 days. The White House is citing what it describes as unfair Canadian treatment of imports of U.S. dairy, autos and alcohol. JP Morgan CEO Jamie Dimon reiterating his criticism of the UK's bank tax surcharge. Dimon saying the tax hikes could drive capital away as they lead to an uncompetitive tax system. He says UK politicians should be worried about the number of companies that have delisted from London in recent years. Goldman Sachs says oil could trade above $120 a barrel by the fourth quarter if disruptions in the Strait of Hormuz continue. Currently, Goldman sees Brent at $80 a barrel in Q4 and $75 a barrel next year if tensions in the Middle East de-escalate. And that is your Bloomberg Brief. John.
It's a big if things stand. As things stand this morning, that's for sure. Hey, Vonnie, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead and the week ahead as well. We'll touch base with Darryl Cronk of Wells Fargo, preparing for 2 big weeks of earnings reports.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
If we get into the sell on the news on price perfection, there is going to be sector rotation. You got the hyperscalers. They're spending like drunken sailors, and they will until they have to because they can pass on costs. Where we run into a problem is that the end customer just can't take it anymore.
That's the big debate. How close are we to that price pressure building further and further downstream to the point where the customer starts pushing back? That was Ted Mortensen there of Baird on the tech sector. Here's the price action. Tech doing better again, up 1.4% on the Nasdaq, on the S&P higher by 0.4. As we count you down to the open and bow, let's call it 41 minutes away. This is the trading diary for the next 24 hours and the next week. At 5 p.m. Eastern Time, we'll hear from the president. He's meeting with House GOP members in the Oval Office. Look out for comments from that. Looking ahead to tomorrow, Alphabet, Tesla, IBM, all reporting earnings. On Thursday, results from Intel, American Airlines, the ECB with a rate decision. The ECB in focus. How much hawkish risk is being reintroduced from the oil market for that meeting, which kicks off later this week and ends on Thursday. We'll get some jobless claims too and some PMIs into the weekend. They'll drop on Friday morning. Investors awaiting those key results from the data and the earnings. Daryl Cronk of Wells Fargo maintaining a year-end S&P target of 7,900, writing, we continue to favour stocks over bonds and see diverse opportunities amid a steeper yield curve. Daryl joins us now for more. Daryl, welcome. Let's talk about the stock piece of this first. Why stocks over bonds?
Well, I think obviously the earnings growth continues to drive. Multiples have actually cheapened in 2026, so PEs have come down, not gone up like they have for multiple years. And as interest rates continue to grind higher, right, across the curve, it just erodes bond returns. I mean, your prior guest was talking about 3 Fed rate hikes. If that's the case, John, you know, the 2-year Treasury is mispriced here, even at 420, right? We walked into this year, the 2-year was a 347. Today it's 420. It's up almost 75 basis points, you know, throughout 2026. The long side continues to leak higher. Just bond returns are just tough here, notwithstanding decent income.
Well, Darren, let me get into that. Let's say he's right. Don't know if he is, of course, but let's say he's right. You get 3 and we're mispriced at 420. You need to go higher. I don't know what 2. Let's say we go to 450 on 2s. Let me just throw out a number.
Yeah.
Where's the yield curve in that world? A 10's coming along for the ride. How does the short-term move, the move at the short end of the curve, inform your view, your outlook for the longer end of the curve?
Yeah, I mean, think about it this way. We walked into this year basically with the bond market pricing in 2 rate cuts for all of 2026. We quickly walked that back as inflation started to resurge. Now we're pricing in 1 hike. If you got to price in, let's say, 2 more, right, you're at least at 450 on the 2-year. To your point on the curve steepening, today 2s to 10s are like 36 basis points. I think the 10 and 30-year have to come along for the ride, because what you have to think about there, John, is what makes up the long side of the curve. And the long side of the curve is a risk premium, a risk-free rate, plus a term premium, plus an inflation premium, plus a growth premium. Growth is going nowhere in that environment, right? Term premium and inflation premium would have to go higher by some amount. So I do think you'd see long-term rates, and actually it's in our year-end 2026 numbers, to be higher than they are today.
This is one of your favourite calls in the equity market, and the bond market shapes that view. It's the banks. Darryl, it started to happen. Yeah. 7 weeks of gains for the banks on the S&P 500. Fantastic earnings. The trade's working. Why do you think it will continue to work?
Well, everything's lining up for the banks, right? I mean, you've got the M&A activity, which posted the biggest quarter in second quarter that we've seen in the history of the markets, right? The history of the century, right? Almost 1.6 trillion of M&A, right? Issuance is off the charts, as you've talked about, on both the debt and the equity side. Loan growth is happening. Margins are expanding. So the environment is incredibly good. And to your point, in the last 30 days, the financials have outperformed the broad S&P index by almost 600 basis points. I think the key here, John, that people miss Like, the one point they miss here is what's happening to volatility on the surface. If I take the VIX at a 16, 17 times, which would be kind of nothing to be concerned about at the broad index level. If I take the VIX EQ, look up the VIX EQ, which is the constituent volatility, implied volatility, it's setting basically new multi-year highs today, right? Which tells you that the underlying volatility under the surface is churning much more than what people realize, which tells you breadth is deteriorating, correlations are falling, and actually dispersion is widening in that environment. People are not talking about that enough.
Beneath the surface, Darryl, it's been pretty vicious. I want to build tech into the conversation as well. Let's fold that in too. You mentioned these 2 weeks of massive earnings. Let's bring up the board again. Check out this graphic, the amount of market cap that reports in the next week or so. Tesla and Alphabet in the next 24 hours. Next Wednesday, we'll hear from Microsoft and Meta. You'll hear from Apple and Amazon in the following 24 hours next week too. Darryl, how much risk is there? Because when we got the bank earnings, they were great. Took a while, though, that morning for the stocks to start moving. In the end, they did. It was touch and go for a little bit, but the rally picked up. Are you as hopeful for these tech names? Is the bar just a little bit higher when it comes to what's priced into these stocks?
I think it is a little bit higher. Now, the good news is, like on the semis and some of the hyperscalers, we've taken the froth off, right? You noted earlier, they were, the Philadelphia Semiconductor Index was down 10% last week, is now down 20% in bear market territory. Still up 68% year to date, still up 108% year over year. But the bar is exceedingly high. I do think the CEOs and CFOs of those hyperscalers and semis and tech broadly are going to come in and say, not only are we willing to reaffirm the CapEx, but we're willing to spend the money. The big backlog is in the construction, in the engineering, in the energy pieces. So the real question will become, and the markets will have to reconcile, can the build of AI get done as fast as people want and expect, or as fast as the market expects? I think that's where the choke point ends up becoming. And it's not a willingness to spend. It's not even an ability to spend because the free cash flow is there. If I look at the hyperscalers, their backlog is over 100% of sales right now. Like, the demand is there off the charts. I mean, it's undeniable.
It's crazy, the amount of money flying around at the moment. Darryl, thank you. Appreciate your view on things. Darryl Cronk there of Wells Fargo on why he likes equities over bonds, why bonds might be mispriced for some rate hikes we might see, and this equity story powered by fantastic earnings. Let's bring up that graphic again. The earnings you're going to see in the next week from the tech sector, the market cap here that we're talking about is just phenomenal. Tesla, Alphabet. Next week, Microsoft and Meta on the Wednesday. Just to clarify, Apple, Amazon, the day after on the Thursday. That is a tremendous lineup of companies over the next 10 days.
And everyone's going to want to read on how AI spending is shaping the tech industry and this entire trade. All of these individually are going to be massive, potentially catalysts for the entire financial market. But when you hear from Darryl talking about the money is there, how quickly can they build this out? And I look to some of the risks right now in the build out. Energy prices are going up.
Yep.
It's going to cost a lot more. Political risk is going up. Can you even build, say, a data center? In some states, you can't.
Crude's at 90. Let's not talk about that. It's not happening.
It is happening.
Stocks are doing better, up by 0.4% on the S&P tomorrow. Max Kettner, HSBC, Angelo Zeno of CFRA, Mira Pandit of JP Morgan, and the AT&T CEO, John Stankey.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
3 straight days of losses. Can we turn it around this Tuesday? 30 minutes until the start of your cash equity trade. I'm Danny Berger.
And I'm Isabel Lee. Bloomberg Open Interest starts right now.
Coming up, tech takes the lead. The Nasdaq pushes higher as investors return to chip makers.
And stocks shrugging off Middle East tensions. The U.S. and Iran trade strikes for a 10th straight day.
And Novo Nordisk sues Eli Lilly, accusing its rival of misleading ads for blockbuster weight loss drugs.
Danny, we have a lot to watch on this Tuesday, which we talked about is not our favorite day, but today will be a great day because you and I are together. And here is where we stand. You're looking at green on the screen. Tech is really lifting the broader market this morning as investors buy back AI chip stocks at a cheaper valuation. So we have a lot of fears over China's AI progress, and this is dissipating as we approach earnings, and we have big ones this week from Alphabet and Tesla. Tomorrow, you're looking at NVIDIA higher by 1.5%, Intel by nearly 6%, and SanDisk up by more than 7%.
I'm loving all this positivity, both the market and you this morning, Isabel.
Oh, yes,
I needed that.
green.
I think we all can use that in these strange times. Isabel, I'm also looking at GM this morning because they raised their full-year profit forecast by another $500 million. They beat second quarter earnings estimates powered by stronger margins on its large trucks, and you can see shares only up though 0.25%. The company's CFO also joined Bloomberg surveillance.
We've held in on price and demand as well, and that's remained consistent. So as we look at the overall energy price environment, it hasn't really impacted us. We're still selling full-size SUVs as quickly as we can make them, but we have a much broader product portfolio.
Joining us for more on GM is Bloomberg Detroit Bureau Chief David Welch. David, GM raised its full-year forecast and after beating second quarter earnings estimates, but the stock, at least in pre-market, was fluctuating. What gives, and what's your biggest takeaway?
Yeah, the shares are up just a little bit right now. It was a solid quarter. It was a beat, and it's also, I'd say, a modest upgrade on their guidance. I think there's sort of a lot of crosswinds here left and right, which is, first off, part of it was cost, right? They did better on mitigating tariffs, and their warranty costs were better. So it's not like there's an underlying profitability story that's growth-driven. It's more solid management and execution, which I think investors are pretty used to seeing from the company. They do a good job that way. But are they gaining market share? Are they exploiting new markets? That's kind of tougher to see. So I think investors are not kind of giving the stock a new look or re-rating it in any way. They're just kind of saying, yeah, this is pretty good. Also, They had lean inventories in the first and second quarter. They're building out of that, so they're replenishing some. How sustainable is that? The company's indicating it is because they're saying they could keep this momentum going into next year. But investors are going to wait and see on that, so they're not totally buying the story that it's going to be great going forward in the long term.
I wonder, David, and this is a question John Farrow asked the CFO. I would love to pose it to you. And what you're seeing from these numbers, does GM still have pricing power, even as the price of gasoline at the pump remains sticky above $4 and continues to move higher with this war now entering another kinetic phase?
The average price of a vehicle they're selling is $52,000. That's expensive, so they do. But you did see an uptick in incentives, and I'm just, you know, anecdotally, if you go out on the web, I saw 0% financing deals on their pickup trucks, which, you know, that's the cash cow of the company. So at the moment, they still have pretty good pricing power, but that could be shaky going forward depending on what happens with this war in the Middle East, with oil prices, and with the economy overall. It's stable at the moment, but there are risks, and I think the market might be reacting to that as well. The other thing, too, is they're looking at warranty assumptions here when they get to that $1 to $1.5 billion benefit in warranty costs. Keep an eye on that. Sometimes companies will have a great quarter with warranty costs, and then a few quarters later, they kind of give it back, which is, you know, if they think their warranty costs are going to be better, they put less in their reserves, and then later on they pad it back up if they have those issues. It's almost a way of, you know, putting costs in one quarter or the other. We've seen that from the car companies. It's just something I always keep an eye on whenever I see a warranty benefit in a particular quarter.
All right, David, thank you very much. That's Bloomberg's David Welch in Detroit. Now, the broader tech trade is surging as earnings roll in, helped by a report that TSMC is planning price hikes. Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh, joins us now. Mandeep, we had talked about this earlier in the past couple of weeks, that a lot of this feels like a momentum sell-off, something mechanical. I wonder, as we get this drip feed of news and as we expect earnings, if this is kind of helping to turn around and give us, again, confidence in the fundamental story.
I mean, this week we'll hear from Alphabet, so the demand side would become clearer given, you know, Alphabet has a cloud business that has $460 billion in backlog, and backlog has been growing really fast for all of these hyperscalers. So to my mind, you know, there was some discussion around the open source Kimi model, how that's going to impact the closed model companies. But in the end, if you look at the big picture, it's really everyone wants more compute. Token maxing has been an issue in terms of leveraging these models, and everyone is trying to solve for that. But the demand should continue, and that's what I'm hoping to hear, you know, when these hyperscalers report.
Mandeep, in general, the AI trade has driven a lot of the gains in the market, but also a lot of the volatility. From your perch, do you see that people are trying to maybe broaden out from that trade, especially with news over, I keep saying overnight because on Friday it was overnight. Last week, the China startup that again spooked markets.
Well, I think everyone is nervous about how much power these two frontier model companies have, Anthropic and OpenAI, in terms of raising token pricing. And if that is a deterrent in terms of adoption, then people want to know, you know, eventually the prices of the hardware and these tokens should come down. That is what we have seen in the past. But right now, from what we can gather, everyone is supply constrained, which is what's driving the prices up. And the open source is just another illustration that maybe we have some broadening out in terms of, you know, the two LLMs really having all the market share to more model companies that can provide the tokens, and that will drive some kind of decline in pricing, because that's the one thing that everyone is trying to solve for, is how can this technology really broaden out by having more models in the end.
And elsewhere, the world of circular investing and everyone investing in each other continues. NVIDIA today disclosed the stake that it has in Nebius, about 9.3% stake in the NeoCloud company. What would the advantage be for NVIDIA to be investing in this company?
I mean, NVIDIA wants more cloud providers. They don't want, again, the power to be concentrated with the three hyperscalers. They want to build another hyperscaler that's outside of these three, that is a big GPU provider, and that's where they're very supportive of CoreWeave, Nebius, because they want a fragmented world where everyone buys from NVIDIA as opposed to three players who control 50% of NVIDIA's GPU sales, and they'll have the pricing power. So they believe in a fragmented world when it comes to the cloud side.
All right, Mandeep, you're going to be so busy tomorrow, this week, and next week. Thank you so much for joining us. Mandeep Singh from Bloomberg Intelligence on all things tech. Turning to the Middle East, Brent is moving above $90 a barrel as the U.S. and Iran exchange strikes for a 10th straight day. Meanwhile, the Iran-backed Houthi militant group in Yemen is threatening shipping in the Red Sea. Let's get the latest from Bloomberg Washington correspondent Tyler Kendall. Tyler, any signals you're looking at from Washington and Tehran to see what direction this is heading?
Well, Isabel, we are getting some signals that mediators are actively working to avoid further escalation, as Bloomberg News confirms that Iranian officials are in Pakistan today for talks, though a White House official tells us that we should expect U.S. strikes to continue until President Trump chooses a different course of action and Iran lets up its grip when it comes to the Strait of Hormuz. The thing is, we haven't gotten any public indication that Iran is willing to lift its leverage when it comes to the waterway, as we saw another vessel attacked overnight, this time one that was linked to Kuwait. We got some new satellite imagery, some new data from research firm Kepler, which finds on average 10 ships transited per day Friday through Sunday, with almost all of them using that route that Iran controls and not the U.S. coordinated one. And now compounding the risks, as you mentioned, is that we have this new threat from the Iranian-backed militia group, the Houthis, saying that they are going to institute this maritime blockade against Saudi Arabia. But new this morning, Isabel and Danny, Bloomberg News has reviewed a memo which says that the Houthis' warning is extending to any ships coming to and from Saudi Arabia's ports, not just Saudi vessels. So that is bigger than what we had originally believed the threat to be.
And Goldman Sachs warning worst case scenario, fourth quarter, if this continues, we could see oil at $120 a barrel. Tyler, for those who feel fatigue about the war in Iran, they can now concentrate as well on a trade war, with the president announcing 50% tariffs on Canada. What method are they using for this? We know Section 122 expires on Friday. And what does that say about further ability for this White House to levy additional tariffs?
Right, Danny, this is a really good point that we're up against this deadline for the Section 122 tariffs, which were implemented to basically be a stopgap measure to help the administration build back up that tariff wall after the Supreme Court struck down those broad-based levies under IEEPA. This is under Section 338 of the Trade Act of 1930. It is a very little-known provision, in part because it has never been used in this way. It has to deal with allegations that Canada has been discriminating against U.S. commerce. We got a few different examples from the USTR, including how some Canadian provinces have banned U.S. liquor sales. We'll see where it goes from here. Since this is untested, it could face some legal challenges down the road. I think it is much more likely that we will end up seeing the administration build back up its tariff powers through using Section 301. Those are investigations into allegations of unfair trade practices, and we've seen those used between administrations. They are considered to be much more durable from a legal basis, but this certainly was quite the announcement overnight. If it does end up getting implemented in full, it would mark the most severe trade action that President Trump has taken against Canada to date, though we should caution, Danny and Isabel, our own analysts at Bloomberg Economics, say that they do expect these tariffs to be tweaked, either delayed or canceled, and that this could be part of a negotiating tactic, since we know the U.S. chose not to renew the USMCA, setting up potentially years of complicated negotiations.
Tyler, thank you very much for your coverage. Bloomberg's Tyler Kendall in Washington, D.C. Let's get a check on your equity markets this Tuesday morning. 20 minutes to go until we start trading, and we are moving higher, a rebound in the NASDAQ. I would just caution, we were in a similar place yesterday morning, and we ended up losing steam, at least in the S&P, for 3 consecutive days of declines. Chipmakers, though, had a good day yesterday, and tech, again, continues to push higher ahead of Alphabet earnings tomorrow. Brent crude, that seems to be where the pain is, up 2%, now above $91 a barrel, and that's bullying yields higher by 1 basis point at 460 is where you see your 10-year yield. Some of the other movers on our radar this morning. Mobileye says its cloud-based driver assist technology will be integrated into select Stellantis cars in 2027. Shares up 3%, Isabel.
And 3M raising its forecast as a slow and steady turnaround effort is improving despite broader economic volatility. And the stock popping, Danny, more than 6%.
In a slew of positive earnings this morning, Hasbro also raised its full-year outlook on the strength of its Magic the Gathering card game business, which grew 32% year over year. And stay tuned, because in the next hour, we will be speaking with the Hasbro CEO, Chris Cox.
And coming up, the fight for the global obesity market is heading to the courtroom. This is Bloomberg Open Interest.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Now to high interest, a look at what's making headlines around the world. The London Stock Exchange is moving to offer near continuous trading with plans to launch a 24/5 trading venue. The new venue is called LSE 24 and is set to operate from 5 p.m. until 7:50 a.m. So LSE is saying in a statement it's expected to be ready for client testing by the end of this year. And the U.S. and China are reportedly preparing to hold talks on AI in September. This is ahead of President Xi Jinping's planned visit to the U.S. that month. According to Reuters, the date for the discussion has not been finalized. Establishing a dialogue on AI was one of the outcomes of President Trump's state visit to Beijing back in May. And finally, Novo Nordisk is suing Eli Lilly in U.S. federal court. They're claiming that Lilly's advertising for its obesity shot, Zepbound, and diabetes injection, Mounjaro, is misleading. Novo says Lilly's ad campaigns rely on outdated weight loss comparisons with lower doses of Novo's own obesity shot, Wegovy, than what's currently available on the market. Eli Lilly has yet to respond to the claims. Danny?
Thank you, Isabel. And I know we're still out to Eli Lilly awaiting any response to this. For more on the lawsuit, we are joined by Bloomberg Health reporter Madison Moeller. Madison, what are the latest? And what are the implications for Eli Lilly? Madison, 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 what are the implications for Isabel summed it up basically there, but what are the details of this case? What are they claiming that Eli Lilly did?
Yeah, basically what Novo is upset about is that in Lilly's advertisements for Wegovy, or for Mounjaro and Zepbound, they're using what they say are outdated comparisons. So Novo was able to get a higher dose version of Wegovy approved earlier this year, but Lilly's advertisements rely on a head-to-head trial that was using lower doses of the drug. So there are updated weight loss numbers, but the FDA and the companies themselves usually discourage people from using cross-trial comparisons, so meaning using different trials to compare weight loss results or any other results. And so Lilly's advertisements rely on an actual head-to-head trial. However, Novo is saying now there are updated numbers, there's an updated higher dose version, and they should be using that instead.
It seems to me that, yes, this is a legal battle, but also a battle for investor confidence and market share.
Definitely. I mean, this is part of Novo's more aggressive strategy. They have a new CEO who's been in the role a little bit over a year now, and he's really trying hard to claw back any market share that Novo can from Lilly. If you guys will recall, Novo was first to this market with Wegovy and with Ozempic, and they really created this modern weight loss market. However, Lilly was able to pretty quickly overtake them over the last couple of years with Zepbound and Mounjaro, which are a little bit more effective for weight loss. And so Novo is sort of coming out swinging now and trying anything that they can to reel back in customers and investor confidence, like you said.
Well, so they have this new drug out, the higher dose. Do we have any idea of what the uptake even is of this newer dose, and maybe some of the other advancements that they are trying to like point to and say, hey, this is better?
Yeah, that's actually a really good question. We asked Novo if they had numbers on this higher dose Wegovy uptake. They said that they didn't have anything for us at the moment, but it's something that analysts are probably really closely tracking. We know that in the real world, people don't always go up to the highest dose of these drugs. They can often get really good weight loss from lower doses, and the higher doses might have more side effects. So while in trials, people are supposed to go up to the highest doses of these drugs, that's not actually what we're seeing happen in the real world.
So how are you looking at this? Does this legal battle really change the competitive picture for you, or does it just really highlight that it's been such a crazy market? I mean, we always talk about all of these. I mean, peptides, weight loss, it seems like it's all the craze, even in Gen Z. Danny and I aren't Gen Z.
And you wrote a really good story about peptides this week, too. But
you helped with that.
It is all, I mean, we know GLP-1's peptides so popular, the enormous potential market opportunity. And I think that this trial is just the latest example of how competitive it is, that these companies are really willing to try any tactic to get a leg up on each other. And these two companies in particular have been rivals for over a century. And that is just going to continue. Clearly, they're not playing nice with each other, and it potentially is going to go to the courtroom now.
A century-long rivalry, that's 100 years, so that's really long. Thank you, Madison Muller of Bloomberg, for keeping us updated about all of these things. Later this hour, we'll hear from John Kuckelman, Group General Counsel at Novo Nordisk. And coming up, as earnings season kicks off, Goldman's Ben Snyder has investment
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Goldman Sachs says that high volatility and plunging momentum within the AI trade are good reasons to find investment themes outside of AI. The team led by Chief U.S. Equity Strategist Ben Snyder says compounders with strong earnings growth and returns are trading at a large discount. They also see M&A candidates and consumer experience stocks as opportunistic. So pleased to say that Ben joins us now. Ben, wonderful to see you.
Right.
And momentum in the AI trade has been really hurt. I was just looking at our Bloomberg long-short momentum trade, having its worst month, or on track to, since 2021. How much is that just something temporary versus investors in truly looking out for widening out trades like you're pointing out at this moment?
Well, it's not just the performance. The volatility of momentum has been striking. On our factor, going back 40 years, this is the most volatile momentum has been outside of recessions. And that creates obvious challenges for investors, including the need to just reduce risk in portfolios. And so what we've heard for months is investors asking for investment ideas outside of AI and momentum. And now that we've seen that reversal, those calls for other ideas have just grown louder and louder.
And you argue that the attractive themes outside AI's consumer experiences, compounders, which Danny mentioned earlier, and M&A candidates. Why do these stand out? I must admit, I'm not even sure what compounders mean.
I think that's part of the appeal. The first step was to look across the market and appreciate that many sectors and themes that should be unrelated to AI are trading with a correlation to AI, either positively or negatively. Healthcare, for example, has some connection to AI, but it's trading like the inverse of most AI stocks, primarily from a portfolio flows position. So the first thing we did is look for themes that really are not trading with a relationship one way or the other. And then we looked for places where we thought there were strong fundamental tailwinds. Those tailwinds include strong consumer spending on experiences, growth in M&A, some of the other dynamics you mentioned.
For those who don't know, I happen to have a M&A show every Wednesday, Bloomberg Deals, Wednesdays at noon. Watch every day if you can. So I was pointing at the wrong camera. Watch every day at noon. So if I can ask about M&A, what sectors are you looking at that seem ripe for that would be good for investors to kind of start sniffing around?
So first thing we did is went to our analysts and asked them which companies that you cover look like they have the highest likelihood of being acquired. And our view is if M&A announcements are rising, and as of course you know, they're rising quickly, that should lead to a valuation premium in these stocks. And what they did was highlighted 3 distinct groups. First, of course, is biopharma, where we've seen the most activity and the strongest performance of stocks in that universe. Second is the broader tech area. And then third is a collection of stocks from other areas, including industrials and energy, et cetera. And it turns out over the last few weeks, all of those groups have started to outperform as those announcements have continued to come through the pipeline.
Okay, Ben, I think you're going to stick around with us. Opening bell just in a few moments from now. Ben Snyder of Goldman Sachs. Let's get a quick check on your markets ahead of that opening bell. And again, we attempt to rebound after 3 consecutive days of declines, up 0.5% for the S&P. The Nasdaq up 1.4%, unbothered this morning by both Brent crude above $90.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Let's get your trading day underway. This is Bloomberg Open Interest. I'm Danny Berger. Matt Miller is still off for paternity leave. We miss him very much. It's a market that's attempting to rebound this morning, being led by tech. A lot of volatility. Ben Snyder was just pointing this out. The most ever outside of a recession for the momentum trade. Today, it is higher 1.5% for the NASDAQ, the S&P up 0.5%, the Dow up a third of 1%. Down at the New York Stock Exchange, we have a charity ringing the opening bell, the Pan Mass Challenge, some sort of cycling challenge that raises money for cancer research, which is a fantastic thing, with some pretty sweet cycling suits they all have on down there. We have Impinj ringing the opening bell. They IPO'd 10 years ago, so this is their anniversary. They make RFIDs, and they have underperformed small caps. They're still up about 18% year to date. So that's the story with who's ringing the opening bell. Isabel, I know you got some tech stocks on the mind this morning.
We do have some tech stocks, and as you pointed out, I'm wearing green, so maybe that's why the board is green, Danny, but you're looking at stocks to watch. Tech lifting the broader market this morning as investors buy back those AI chip stocks at cheaper valuations. So, the fears over China's AI progress, well, they're probably gone now as we approach earnings. We have Alphabet and Tesla tomorrow, so those are the big guys. SanDisk higher by nearly 9%, Intel up by more than 6%, and Nvidia up by 3%. So significant gains here, Danny.
Also at the open, I'm looking at other earnings. We have Isabel, GM. They raised their full year profit forecast by another $500 million after beating second quarter earnings estimates, powered by stronger margins on its largest trucks, but still have headwinds like tariffs and otherwise keeping a ceiling on any gains this morning. We're back with Goldman Sachs chief U.S. equity strategist Ben Snyder. Ben, it's going to be a tough week, or at least a busy week over the next week and a half. You have Alphabet earnings tomorrow. You get a lot of the hyperscalers next week. How important is it to get some positive numbers out of CapEx and a positive reaction to those numbers in order to reinvigorate this AI trade?
We've talked about this on your show before, but really for the last 3 years, the AI trade has been driven by earnings. And this is true for the broad market, and it's true for the AI infrastructure stocks at the center of the trade. And so you're right, coming up to these earnings results, the onus is on the numbers to support this rally. We'll be watching the CapEx, as you mentioned. We'll also be watching the revenue results to see signs of return on investment that, of course, gives a signal about the path of spending going forward.
A part of me thinks that if it's a beat and a raise and it still gets punished, then that's not really a stock problem, but maybe a positioning problem. And everyone is in on this trade. I mean, we do have from your prime services desk, Goldman Sachs, saying that hedge funds have been pulling out of the tech trade for the most in 2 months. What do you make of that?
I think you're right. There's fundamentals here, and then there's technicals as well. We were talking a little bit earlier about the volatility of the momentum trade, which by and large these days, of course, is the AI trade. When that happens, investors need to reduce the size of their portfolios. And we're seeing that play out in the positioning data you mentioned.
I was also thinking on the commodity research side of the Goldman Sachs house. They're warning worst case scenario, if the kinetic war continues in the Middle East, we're going to get $120 barrels per oil. Not their base case, but certainly their most bearish case for it or bullish case for oil. What would that do to this equity market? Because we have seen it shrug off concern after concern, especially the ones of the geopolitical nature.
At the end of the day, earnings are driven not just by AI, but about the macroeconomy as well. And you're right, investors have turned their attention away from oil, in part because energy prices have been falling, in part because consumer spending has remained very resilient. But if we're going to continue to see energy and gasoline prices continue to rise, investors will have to adjust their expectations accordingly.
And one of the questions we have is whether this whole AI narrative is creating a new era of winners or whether it's just pushing valuations too far. How do you square that tension? I mean, it's such an unforgiving market. I mean, Danny and I will really be looking out for these earnings because even if it's a beat, it could just go the other way.
Well, part of the challenge is balancing the near-term earnings outlook with the long-term earnings outlook. For example, very few investors I talk to really think that memory stocks will be the main economic beneficiaries of AI 10 years in the future. The problem is we all acknowledge it's very difficult to know what the world will look like 10 years in the future. And so the result is investors focusing on the tangible, visible earnings today, which is primarily in that infrastructure cohort.
Well, one of the things just on that, Kevin Gordon of Schwab pointed this out on X this morning, that the forward PEs for semis and for healthcare are now equal. They're both trading at 18 times. And semis obviously was trading much higher than that, but in the volatility, it's come down. I wonder what you look at the opportunity set of those two sectors. Like, does it make sense that they would be trading at similar valuations?
Comes back to uncertainty, right? If the earnings growth of semiconductors that we've seen over the last couple of years continues, those multiples are clearly too low. But as we head into the hyperscaler earnings you referenced, investors are asking yet again, as they do almost every quarter, whether this is the quarter we start to see the spending trajectory decline. If so, earnings estimates will decline as well. And in retrospect, those valuation multiples will be justified.
What about the small caps? Let's go into the world of the little guys. They've outperformed even the large caps this year. They've had a great run. Is this the start of a lasting comeback? And I feel like almost every time we talk about, is this the year for small caps?
We wrote about this a couple weeks ago. You're right. The Russell 2000 has returned almost 20% year to date. It's much stronger than most investors expected, ourselves included. I think there are a number of factors here, but one underappreciated driver is the AI trade.
Oh, gosh.
We ran the numbers, and it turns out the AI trade has driven about 50% of the Russell 2000
Okay, but question about that, because the Russell 2000 had a big rebalancing, and a lot of those AI stocks moved up into the larger cap universe. Does that make the Russell 2000 less attractive then?
That's exactly right, and that's a major reason why I think we will see weaker earnings revisions and weaker performance for small caps in the second half of the year.
So that one's less loved in terms of the broadening trade, but it does still feel the Russell 1000, so going up into the universe. Bespoke had data out that the 25 best performing Russell 1000 stocks in the first half were down an average of 25.4% in July as of yesterday. This goes back to the momentum issue. So if we're broadening out, why can't we also broaden out to the small cap universe? If the biggest winners, and a lot of them AI, are not performing well, shouldn't there be some element that we can pick up some of those unloved small cap names?
Well, the thing about the Russell 2000 is there's 2,000 companies in there. So certainly some of them will be attractive. And I think it's worth highlighting that the dispersion of returns we see in the equity market today is extremely wide. So there is a lot of alpha opportunity for investors. The issue is, writ large, the Russell 2000 is very sensitive to the cyclical economy. And our view is that the economy remains healthy, but it's not going to be accelerating in the second half of the year, and that makes for a difficult environment.
When you talk to clients, we have around 60 seconds here. Do you feel that they're getting anxious? Because we do have bearish bets against the S&P at around their highest since data going back 2010. So which really shows you the worries and the fragility of the market. What are they telling you? Anxiety
has been increasing very, very clearly over the last couple of weeks, but it's not as high as you might expect. And I think it's worth reminding ourselves the equal weight S&P 500 is just 1% off the high. The S&P 500 is just 2% off the high. And investors who have lost money in the semiconductor trade over the last couple of weeks also made a lot of money in the second quarter. So concerns are rising, but they're not extreme by any means.
See, this is the thing that I always struggle with, because if we are in this world of overvaluations, if it does seem bubbly, if that keeps you away from the market, then you're missing out on big gains. But then if you're riding those gains when things turn, you necessarily get punished because you're not hedging. How do you strike that balance of like, okay, things look a little bit frothy, but you want to ride those gains, but also not get hurt on the other side if there is a downfall?
So I'll come back to where we started the conversation, which is diversification. I think the solution is to maintain some exposure to those trades as long as the fundamentals look solid, but also own some other things like the M&A stocks, like the consumer experience stocks that we talked about earlier.
And compounders.
Correct.
Ben, this has been so fantastic. You please come back again soon. That is Ben Snyder of Goldman Sachs. And let's get a check on your equity market this morning, about 30 minutes into your trading day. And it's a good day for tech. And you can see that just shown by the fact we're up 0.5%, even though there are more stocks moving down than up. That seems to be the case. On many an up day, can we turn around after 3 consecutive days of decline? Micron having a very good day, up 8.4%. NVIDIA doing well, too. It invested in Nebius. We also learned that TSMC is raising prices, so that seems to help the ecosystem. Again, we get another test tomorrow in the form of Alphabet earnings. And ahead of that, Alphabet is declining, down about 9%, as is Amazon. So the hyperscalers not having a good day. Again, it's the check writers and check receivers that seem to be on opposite sides of the trade. Also, some consumer names not doing well today, too. So if we look at some of the sectors and how those are performing, again, it's going to be a tug of war with tech, but it ends up doing well because of how those semi stocks are doing. But communication not doing well because that's where some of those hyperscalers live. Healthcare, that's taking a beating this morning. Novo Nordisk suing Eli Lilly. At the same time, Staples, I mentioned that some of the consumer names not doing well. Energy up 1/3% as the price of oil, Brent crude, trades around $90 a barrel. Isabel?
I'm going to steal your phrase, Andy. Check writers and check receivers.
I'm going to be honest. I didn't come up with it. I can't remember who did, and I've said it so much at this point I don't even remember. But thank you, whoever originally came up with that
You've
phrase.
trademarked it at this point,
Sure.
and in my book, you came up with it. Coming up, we have Novo Nordisk suing Eli Lilly, accusing its rival of misleading ads for blockbuster weight loss drugs. We speak to John Kuckelman, Novo Nordisk Group General Counsel, next. This is Bloomberg Open Interest.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Time now for our top call. Some of the analyst action in focus this morning. First up, Morgan Stanley downgrading Salesforce to equal weight, saying the company's AI positioning has yet to drive an inflection in growth. Next up, Bank of America raising its price target on Micron to $1,550 and adding the stock to its US 1 list, pointing to another memorable earnings beat. And finally, we have HSBC upgrading Goldman Sachs to hold, citing the bank's higher earnings outlook and valuation multiple compression. You're looking at the stock higher by nearly 1.5%, Danny.
Isabel, let's turn back to one of this morning's top headlines. And Novo Nordisk is suing Eli Lilly, claiming that Lilly's advertising for its blockbuster obesity shot Zepbound and diabetes injection Mounjaro is misleading. Novo says that Lilly's ad campaigns relate on outdated weight loss comparisons. Eli Lilly, we are out to the company, but they have yet to respond to the claims. Joining us now is John Kuckelman, Group General Counsel at Novo Nordisk. John, thank you very much for joining us this morning. And look, before the court, you have to present this argument, not necessarily that what they presented is false, but it's factually true but misleading. That's a bit difficult to do. So what sort of evidence, surveys, and otherwise are you bringing to the court showing that consumers were actually misled by this ad and Novo suffered as a result of it?
Good morning, and thank you very much for having us this morning. This is an incredibly important story, and we're very pleased that you're covering it. This is not a complicated case. What Lilly is doing with its advertising campaign is taking the highest dose of its medicine and comparing it to a lower dose of the Novo medicine. And then it is deceiving the people who see these campaigns into believing that the Lilly drug is greatly superior to the Novo drug. So it's not terribly complicated. They're using an old, outdated study that is a head-to-head study, which is no longer current. And if they were using current data, it paints a very different picture.
Got it. So John, again, the question is do you have the evidence that consumers were actually misled or you suffered harm? What sort of argument are you going to bring to the court in terms of actual, like, things that you can glom onto that show that people were actually misled by this?
We do. And what we will show first is that it's obviously misleading. Just on the face of the advertising campaign, it is a misleading campaign. But we also have taken the time over the past couple of months to gather evidence so that we can show that consumers actually have been deceived.
So Novo is asking the court to stop the ads and require corrective advertising. What outcome would you like to see, John? Do you want the ads pulled out altogether? Do you want a disclaimer? Or would the team be happy with an apology? What is the outcome that would be the best in your view?
So the only outcome and the only right thing to do is to pull these advertisements and to pull them this morning. These advertisements are deceiving and they need to be pulled. So we've asked the court for an injunction requiring Lilly to stop these advertisements. But I would compare it to if you pollute the water and then you stop polluting the water, that's not good enough. You have to clean up. You've created a mess and you have to clean that mess up. So we also need Lilly to issue corrective advertising so that the millions, if not hundreds of millions of people who have seen these campaigns get the truth as opposed to the deceptive message that's in these messages.
And I just do want to reiterate to our viewers that we have reached out to Lilly. They have yet to respond to your claims, John. So in this, and you mentioned this at the start, that they're using a head-to-head trial, which you see as old. You have newer, higher dose Wegovy that is more effective. But the FDA itself discourages in advertisements from using cross-trial comparisons. What do you say to that? That would be a problem within itself if Eli Lilly were to make an advertisement, or Novo Nordisk, for example, choosing two drugs that haven't had a head-to-head comparison study.
You're absolutely right. There is no head-to-head study of the highest dose of Zepbound and the highest dose of Wegovy. That doesn't excuse then using an old study that shows the highest dose of Zepbound compared to a lower dose of Wegovy. Our 7.2 milligram dosage of Wegovy was approved in March of 2026. And there is no head-to-head study. So what you really are required to do if you want to make any kind of a claim under these circumstances, you should look at the two most parallel clinical trials of these dosages. And if you do that, and those studies exist, they are randomized, double-blinded, placebo-controlled studies. And if you look at those studies, what you will find is that under the highest dose of Zepbound, the average weight loss was 48 pounds. And if you look at the study involving Wegovy, the average weight loss was 47 pounds. 48 and 47 is a vastly different message than 50 and 33.
John, Lilly has gained momentum in obesity drugs. How do you respond to critics who are saying that maybe this legal fight is more about protecting Novo's position and against Lilly's growing market share?
This is obviously a very competitive market, and you can see that across the portfolios, including the recent launch of the oral Wegovy pill. It is very competitive. But that is not what today is about. 2 weeks from tomorrow, you're going to hear our quarterly results for the second quarter. But what we're focused on today and what we're focused on in this lawsuit is making sure that the people out there across the United States who suffer from obesity and diabetes have access to accurate information so that when they go and meet with their doctor to make decisions about what is best for them, they have accurate information in making those decisions instead of information that is really deceptive.
John, just on a wider scale, because we have this lawsuit, and then there was also the lawsuit against Hims, which I know since has resulted in a partnership. But should we assume more of this from Novo Nordisk, from you and the team, that this has entered a more aggressive phase of defending Novo and, again, defending market share?
Novo Nordisk is a healthcare company with a more than 100-year legacy of serving patients with chronic disease. We are not a law firm. We have other things that we would rather focus on than filing lawsuits. That is why we're reluctant typically to do it. But in egregious circumstances, we have no other choice. And today we're here. We wish we were not here. And by the way, we've reached out to Lilly months ago to try to resolve this. We didn't even get the courtesy of a response to that. But we would much rather be focused on innovative medicines for people around the world instead of bringing lawsuits. But we have no choice here because of the severity. And I also should add, it's actually a pattern with Lilly. So not only have they done it with Zepbound and Wegovy, they've done it with Ozempic and Mounjaro. And then they also, before their oral formulation was even approved, they were putting information out that it would be superior to the Wegovy pill. But interestingly, they weren't even comparing it to the 25 milligram Wegovy pill. They were comparing it to Rybelsus, which is a much lower dosage, and they were using data from a clinical trial where weight loss was not even the primary endpoint. So this is a pattern, and that's why we felt compelled. We have to step forward now and stop this.
Right, and again, you know, I can't speak on Eli Lilly's behalf. We haven't heard from them, so we can't, you know, confirm whether exactly this is a pattern. But point taken of what you're saying, John. But John, I do wonder if there might be an argument, and perhaps this is what Lilly would say too, that they are just comparing what is usually used by consumers, what's available at the time. The most recent higher dosage of Wegovy was only recently approved by the FDA. How many people are actually using that higher dosage, and thus does it really make sense to use that as the case study for their advertisements?
Well, first, they are comparing their highest dosage, so they would have to ask themselves that question about what they're doing. But I'd like to take us back to the advertisement, and if you just look at the advertisement, it is a very, very bold visual message and a voiceover that tells people who are considering what GLP-1 they should take that with one they can get 50 pounds weight loss and the other they can get 33 pounds weight loss. And that is deceptive. It's not true.
Okay, John, thank you so much for joining us this morning. John Kuckelman of Novo Nordisk. And again, we are indeed out to Eli Lilly. We invite them on the show as well to respond to these claims, and we await any response, and we will bring you it as soon as we get it. Coming up on the show, Northrop Grumman hikes its outlook with its order backlog at a record high. Shares, though, falling more than 4%. That's coming up next. This is Bloomberg Open Interest.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Northrop Grumman raised its forecast, but shares are falling despite a record order backlog. Bloomberg Markets correspondent Nora Melinda joins us live now at the desk. Nora, thank you. It's such a pleasure to have you this morning. Why is this backlog so important, and what does it say about the broader market?
Well, it's really important because of the fact that this is future revenue that's already under contract. So the fact that we're seeing $105 billion, that's exceptional. And it essentially has people thinking about the outlook for this company. We've also been hearing from analysts on Wall Street this morning talking about the fact that a lot of the gains in this stock has really been focused on the fact that we've been seeing this demand driven by the wars that have been ongoing. And so there is just a question as to whether or not we're going to continue to see spending on defense accelerating, given the fact that we're still dealing with this geopolitical uncertainty.
Just with all of that, because obviously a huge backlog, a lot of uncertainty. So presumably this is picking up. Can they meet the demand, though? Are there big backlogs that Northrop Grumman and maybe other companies are trying to battle through right now?
And that's the question right now as to whether or not they're actually going to be able to see this forward. But as I'm hearing on Wall Street, it does seem as though there is still demand specifically for Northrop and its peers, as we still continue to see countries really focused on advanced weaponry that these companies are able to provide. And that's the tailwind that a lot of analysts are seeing right now.
And talk to us more about B-21.
Yeah, B-21 is essentially the Air Force's next generation stealth bomber, but it's also one of Northrop's largest growth programs. So there's been a major focus here on B-21, and we're seeing that as a potential accelerant tailwind for Northrop more broadly.
Nora, just quickly, because I know you're also concentrated on the home builders, and we had D.R. Horton earnings and another quarter of disappointment. What exactly did we learn?
So, okay, we did see essentially that the company was cutting its full year revenue guidance, and that essentially it was pressuring the stock. As we saw, trading has taken off so far. But there is still some bright spots that we're seeing. There are some bright spots, including the fact that the company has found ways to lower its construction costs, and then also gross margin. That's essentially been the KPI for the industry more broadly. They've been trying to see whether or not these companies are still spending so much on incentives just to lure in home buyers. And we are seeing that D.R. Horton still remains resilient in that respect.
All right, Nora, thank you very much for joining us. That is Bloomberg's Nora Melinda on some of the earnings over the past couple hours. Coming up in the next hour, Oaktree Capital's Danielle Poli is going to be joining us for the entire hour. We're going to talk private credit with Mark Pinto of Moody's, plus GE Aerospace CEO Larry Culp from the Farnborough Air Show, and the Hasbro CEO Chris Cox after they reported earnings. You're watching Bloomberg Open Interest. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Preston. Sirens going off in Bahrain, according to the Interior Ministry. In Kuwait, the Army says air defenses have been confronting hostile missile and drone attacks from Iran. ABC's Martha Raddatz has more from Amman, Jordan.
Air raid sirens echoing here in Jordan. 6 missiles and 5 drones intercepted overnight. This after 3 U.S. service members were killed or presumed dead in that Iranian attack on a U.S. base in Jordan late last week. Video circulating online shows that massive explosion, a fireball erupting, debris raining down.
The Pentagon identifying the soldier killed in Iraq over the weekend during the disposal of that downed Iranian one-way attack drone as Army Sergeant Michael Swinton. He's age 30 from Fayetteville, North Carolina. Continued conflict keeping oil and gas prices high. ABC's Rebecca Jarvis says the nationwide average has now hit $4 a gallon.
While we're seeing prices rise across the country, certain states are feeling it the hardest. Utah, Colorado, Missouri, parts of Texas, they are seeing the biggest jumps today. And it all comes back to the price of oil, which is $83 a barrel and rising with that major oil artery, the Strait of Hormuz, effectively closed off.
1,000 flights into and out of the Northeast have already been canceled ahead of expected strong storms and flash flooding. While along the Gulf Coast, Tropical Storm Bertha is churning.
It has formed. Max sustained winds 50 miles per hour should hug the coast. It's moving really slowly, so we may see more like a Thursday morning landfall. But either way, the impacts are what you need to know about. Tropical storm warnings from Mobile through coastal Mississippi into southeastern Louisiana. 2 to 4 feet of storm surge is the top end.
ABC Chief Meteorologist Ginger Z. President Trump imposing a 50% tariff on certain Canadian goods. The White House claiming discriminatory action against U.S. products. You're listening to ABC News. The FDA citing a false positive for the bacterial parasite in Taylor Farms lettuce, even though that remains the focus of the cyclosporiasis outbreak.
Walmart now pulling its market-side brand of lettuce off shelves. Jack in the Box removing lettuce from locations in Texas, Oklahoma, and Louisiana. And food supplier Sysco and U.S. Foods halting deliveries of the affected lettuce. Symptoms from the parasitic illness can last for weeks and are especially concerning for people with other medical conditions.
ABC's Lana Moise. The intense competition among the makers of popular GLP-1 drugs has now spilled over into the courtroom. ABC's Jim Ryan takes a look.
With so many people using the drugs, it's a bold claim to make.
People using Zepbound lost an average of 50 pounds compared to an average of 33 pounds with the Wegovy injection.
And one that the maker of Wegovy says is misleading. Novo Nordisk claims that Eli Lilly is using data based on the highest dose of Zepbound versus the lowest dose of Wegovy. The Danish drug maker wants a court to order Lilly to pull the ads and to issue what it calls corrective advertising. Jim Ryan, ABC News.
For the first time ever, Miami's cost of living is pushed past the cost of living in New York City. Miami is most expensive in the country, followed by San Francisco and then New York. Sold for a record $3.75 million. The lightsaber from The Empire Strikes Back scene where Darth Vader cuts off Luke Skywalker's hand. The prop includes the lightsaber and the hand. Sherry Preston, ABC News.
If you haven't switched to...
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming that stuff on YouTube and streaming on Bloomberg.com. So we're out there on all sorts of media. We've got pretty much green on the screen here today, but we got yields moving higher as well. We'll get to all that. Coming up, we're checking with Alicia Diaz, Bloomberg trade reporter. Canada, more tariffs. Where did that come from? We'll get the latest reporting there. Kathy Entwistle, Morgan Stanley Managing Director, Private Wealth Advisor. What is she advising her clients these days with markets seemingly hitting new highs in terms of the equity markets every day? Scott Reckler, CEO and Chairman at RXR. We'll get the current state of commercial real estate nationally. Lily Meyer, Bloomberg Retail Reporter, will talk to us about Nike soccer ball said the World Cup ending wasn't what we dreamed of, i.e., I think the two finals are both Adidas companies.
Yeah, they had the number 3 and 4 teams.
Yeah, so yeah.
Which was actually a more exciting game, the bronze medal game, as opposed to the final.
Cared. Nobody played, and they were just winging it all.
I mean, the score was like a hockey game.
6-4, exactly. It was a lot of fun out there. All right, so we have a lot coming up over the next couple hours. It's Scarlett Fu and Paul Sweeney in the Bloomberg Intelligence Program. Let's kick it off with John Tucker in a Bloomberg Business Round.
All right, guys. Information technology, best performing industry group in the S&P 500. And yes, that is home to semiconductors. You have to have a special kind of intestinal fortitude to follow these semiconductor stocks.
Exactly.
I mean, last week, bear territory, the Philadelphia Stock Exchange Semiconductor Index. The SOX today up 3.4% after a nice little pop yesterday as well. S&P 500 up 38 points. That's a rise of 0.5%, 7480 on the index. The Dow Jones Industrial Average up 264 points, up 0.5%. 52,103 on the index. And the NASDAQ Composite Index, that's up 206 points, up 0.8%, 25,717 right now. GM raising its profit forecast, beating second quarter estimates. Shares right now up 3.6%. I love this one. Among the most active, the potato chip and snack maker Utz, going to be taken private at $14.25 a share. Utz, ticker symbol UTS. I don't know where they get the name from. I'll have to look that up. 89% higher right now for Utz. Meantime, Max Kettner at HSBC, he's looking to possibly reduce his risk exposure.
So to me, I think ahead of the midterms, after the earnings season, right, and in a month and a half, I think that's probably the time where you want to take a little bit of your foot off the gas.
According to Bloomberg BNF, data centers in the U.S. are going to account for about 20% of the nation's electricity consumption by the year 2035. In states like Virginia and Texas, where the data centers are concentrated, their share of electricity use is going to be even higher, given the speed at which the soaring demand from AI is increasing. BNEF projecting data center power needs to reach 194 gigawatts by that time. So what's a gigawatt? Bailey wants to know. 1 gigawatt is equivalent to the output of a traditional nuclear reactor.
Really? That's
yes.
a lot of
Can I give you a fun fact?
Go for it.
UTS went public via SPAC.
Oh.
No one knew that.
No.
UTSPAC.
UTSPAC.
Sounds like a little treat that could come up. UTSPAC, a new potato chip. We check the markets for you all day long, right here. Nobody cares. Right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
Oh, we care.
At least my fun facts are fun. Oh, SPAC.
That's about it. That's all I got for you. SPACs.
I'm a big fan of the UTS pretzels, potato chips. Good stuff. Big house on the Jersey Shore, Stone Harbor, one of the founding families. Monster house.
Really?
Yeah.
Again, with the Jersey linkage.
Thing. Exactly right. That's where the Philly people, they go to the South Jersey Shore.
It always comes back to New Jersey.
I know. This show might as well be called Jersey Intelligence.
Exactly. John Tucker, thank you so much. Appreciate that. As always, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John is just reporting, lots of green on the screen today. Let's take a look at some of the stocks on the move. We can do that with Bloomberg's Bailey Lipschultz. Bailey, what are you looking at today?
Yeah, let's start with one of the market's better performers, 3M ticker MMM. Right now up 10%.
Do you know what that stands for?
Oh, man, no, I don't.
Minnesota Mining and Manufacturing.
It used to. I mean, they changed it, but that was the original.
I love the alliteration.
Yep.
Yep. You learn something every day with this crew, and I appreciate that. Stock up more than 10% right now. Best day in more than 2 years, beating expectations, raising guidance. New CEO Bill Brown really touting their turnaround efforts. Profit again, crushing really what Wall Street was looking for. Analysts very bullish on execution, driving the momentum for the underlying business, talking about upward revision, looking at JP Morgan, who's been overweight the stock for quite some time, saying that multiple expansion is going to continue to turn the dials as it relates to growth revisions, though Citi neutral rating said investors had somewhat elevated expectations, but I don't know about you guys. Elevated expectations being followed up with a 10% rally is normally pretty good stuff.
Good stuff. How about energy here?
Yeah, Halliburton right now, ticker HAL, not Tyrese Halliburton, the company Halliburton, down more than 6%. When Bill Maloney was squawking that, I was like, what's going on with Hallie? Different thing. Down more than 6%, biggest drop since mid-April, trading at the lowest level since July. At one point on the lows, was down the lowest level since January. Missing expectations as it relates to margins, operating income worse than Wall Street was looking for. We did see some really weakness as the earnings call was carrying on, talking about less drilling fluids and more software sales in 3Q, saying that LATAM, Europe, and Africa are going to be slightly down in 3Q, and talking about the fact that North America and Middle East recovery will ultimately boost their C&P margins. But the big question for now for Halliburton, for a number of these companies, is where are expectations? What do the bulls want to see? And if we look at what 2Q came through and delivered for the company, negative relative to what Wall Street was looking for.
All right, so energy obviously in focus given the run-up that we had seen in oil prices and then the come down as well. Next up.
Genuine Parts, ticker GPC, maybe a new one for myself, for others.
Auto-related?
Auto-related, exactly. So the stock right now down more than 7%, missing expectations, biggest decline since mid-February. So this partly came by a cut on their guidance, but also the fact that management came out and denied reports that a competitor had expressed interest in its auto segment. So that's leading O'Reilly and some other auto parts stocks to rally, just given the pushback that we heard from the management team. So not only when you miss expectations or slash your guidance, now there's a question of what's the ultimate strategy. Evercore analysts basically saying all eyes are focused on the separation of automotive and their industrials businesses. That's going to take place in the first half of next year. But all things considered, it seemed like the earnings left a lot of analysts and investors wanting more, kind of in line for the most part, but in line in this market results in down days.
All right, very good. Appreciate that. Bailey Lipschultz giving us everything we need to know on the stocks on the move. For more conversations like that, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You know what thing, a news story I've completely forgotten about, which tariffs on Canada. That was a thing last year.
I know. Well, it's back.
It's back, I guess.
And I don't know what the impetus for it is.
I don't know. I don't know if they did something to upset the president, but maybe Alicia Diaz knows what's going on. And she's a trade reporter for Bloomberg News. She's down there in D.C. The Trump administration vowing to impose fresh 20% tariff on some Canadian goods over what it said was unfair treatment of American alcohol, cars, and dairy. Alicia, what more can you tell us here? This came out of nowhere for a lot of people.
Exactly. And one constant with the Trump administration is just when you think there's a quiet moment, tariffs are always going to come back into the picture. So it was only a matter of time before this popped back up again. But the big underlying irritant is that Canada hasn't yet come to the table with the USMCA review talks. It's been entirely just the US and Mexico up until this point. And so to my understanding, it seems like the U.S. really wanted something to pressure Canada to concede some of the irritants, whether it be with some of the provinces still ban U.S. alcohol. There's been some long-standing issues with dairy access and auto access. So this is all of those long-term issues kind of bubbling up here. And we still have 30 days before the Trump administration actually puts these tariffs into effect. So we'll see if anything that the prime minister does in response to it actually helps mitigate the tariff threats.
Yeah, 30 days is actually longer than usual. Usually it's 2 weeks for anything to happen. On top of that, there is the added irritant of the wildfires from Canada over the last few days. It's cleared up since then. But Alicia, talk a little bit about how this feels like a kitchen sink of all of President Trump's grievances against Canada.
Exactly. And it's good that you mentioned that because that was top of our minds coming into this. Trade Ambassador Jameson Greer denied that this has anything to do with the wildfires, largely because the legal basis of this is those irritants described in the report, which is discrimination against the auto sector, against the dairy sector. However, we can't ignore the fact that President Trump, just days before this came out, said that he wanted to add tariffs to the cost of the Canadian wildfires. So it'll be interesting to see what President Trump says and if he creates any explicit linkage between this threat and his previous complaints, from a couple days ago.
Okay, so these tariffs would be on things including, as you said, milk, beer, plywood, but also hockey equipment.
That's
which
going over the top.
I know. So I looked at that and I was like, whoa, now you're throwing down the gloves. Alicia, what is the likelihood or the possibility that maybe the USMCA, which is itself a successor to NAFTA, gets taken apart and the U.S. just strikes bilateral deals with Mexico and then a bilateral deal with Canada?
That's definitely the track that they're on right now. Talking to sources, there's a lot of, theorizing about maybe the U.S. will, like you said, just do these two separate bilateral deals, one with Mexico and one with Canada. There's also the question of maybe the U.S. creates like a framework deal with Mexico and just brings that to Canada and says, hey, you guys have to sign on, whether you like it or not. But all of these actions are pressuring Canada in some way. Of course, President Trump has expressed his disdain for some of Canada's actions. Last year he floated the idea of bringing them on as a 51st state. So there's definitely a lot of political issues intertwined with these tariff threats.
What is Canada's strategy for trade negotiations with the U.S.? We have about 30 seconds left.
It's a great question. And the U.S. side has been very quiet with this. They said that Canada is engaging with talks, but isn't necessarily bringing the explicit actions that they would want. So I think it's a matter of time to see whether this sort of prompts some concessions on their part or if Canada continues to stay strong and stand by some of the actions it's done.
All right, Alicia, thank you so much. Alicia Diaz is our Bloomberg trade reporter based in Washington. The Canadian dollar weakened on the news when these headlines first came out, hitting a one-week low before trimming its losses later on. But certainly no one saw this coming, although, as Alicia pointed out, you kind of can't go a couple of weeks without a tariff headline dropping. Right,
and a couple things to note is it's on some relatively small amount of goods, not everything, and there's plenty of time to walk it back.
30 days. That's a lifetime in this administration. All right, we have the S&P 500 and the NASDAQ higher right now by 0.5% and 0.75%. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. You earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. So, dip buyers jumping in with the bounce in the semiconductor stocks. I don't want to forget about the bond yields. They are higher. Oil prices continue to stoke concerns about inflation, and that can make the Federal Reserve raise rates. So let me do the 10-year, almost 3 basis points higher, 462. With twos up 3, that's 424. Overall, the S&P 500, 40 points higher. Information technology is the major industry group that's in the lead there. S&P 500 up 0.5%, 7482 right now. The Dow up 294 points. And I'll do the NASDAQ 100, 368 points higher. That is a pop of 1.3%. Earnings reports over the next couple of weeks going to be scoured for any evidence that, well, you know the story, if AI investments in particular paying off. Tesla, Alphabet kicking off the big tech reporting season tomorrow. And let me give some love to Hasbro. That's one of the standouts for me right now on the screen. 10% higher right now. Revenue beat expectations. They raised the full-year outlook based on the strength of its Magic: The Gathering card game business. I had to look this up. Players build custom decks of cards representing spells, creatures, and planeswalkers to battle opponents. So, I mean, if you do this, you're not alone. So you're not a dorkazoid. A lot of people are doing it, and it's lifting this stock. We check the marketzoids all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker, with our Bloomberg Business Flash. We are looking at green on the screen right now with the S&P and the NASDAQ higher, and it feels like this volatility we've seen in chip makers, it has not ended, and it's only going to get perhaps more intense as we get through the bulk of earnings season. IBM's pre-announcement, of course, a disappointment. The big result will be Alphabet on Wednesday. And what that says and how that sets things up for the sector at large. Let's bring in Kathy Entwistle. She is Managing Director and Private Wealth Advisor at Morgan Stanley, joining us from New Jersey. Kathy, what is the sentiment like right now towards hyperscalers, towards the AI trade? There's a lot of nervousness right now, and we note that there's going to be a lot of supply coming to market too.
Yes, absolutely. Well, thank you for having me. And yes, is a lot of volatility. There's a lot of concern. But what we're telling clients is that it's not just about the AI players in terms of the ones that are creating the movement here. We're talking about the picks and the shovels, and the ones that are building the infrastructure, the ones that are financing the infrastructure, and all the things that are going into it. So it's moved a little bit beyond the basic original names into a more expansive space.
So just stepping back, Kathy, thinking about just stocks in general hitting all-time highs every day here. What's your equity call at Morgan Stanley here? Maybe just in terms of equities and maybe U.S. versus non-U.S., that type of thing?
Yeah, absolutely. Great question, Paul. And we believe the bull market's still intact, but that it's no longer a market that everything goes up together. We have to be very selective, and we have to think about quality and what really matters. So we are looking at, if you look at indices, the equal weighted indice is starting to outperform sort of company weighted indices. So we're saying move away from just focusing on, the largest 7 names, and there's lots of other names out there to focus on, and just look at balance sheets, cash flow, pricing power, things like that really matter. The other thing that we're looking at is, yes, we like international, but we like the US more. There is some international that we like selectively, and that would be emerging markets, areas in Japan, along those lines.
Talk a little bit more about that. Emerging markets, areas in Japan. Is that through the tech trade, or is that through something completely uncorrelated?
Yeah, I think there's different ways to capture that trade. And you can do it potentially through some of the tech trade, but we also think directly in sort of market balanced portfolios, whether that's like an ETF that's giving you exposure to the specific market or funds as well. But basically just being able to capture it, not necessarily being as selective as a stock picker, but more selective as this segment of the market.
Kathy, what's the bond call here? Are you taking credit risk for your clients, or are you just clipping at short-term treasury yields? You can get 4.25% these days.
Yeah, we don't think that the Fed is going to raise any rates this year, which is counterintuitive to some of what the street is saying. However, we're firm on that, and we think that actually they're going to be lowering about 50 basis points next year. So you want to think long term, because once they start people start believing that they're going to reduce, the expectation is there, the interest rates in the short term are going to come down with it. So in that respect, we like to go out. We want to take some duration. We really like the intermediate part of the market now. And it looks a little bit more favorable than it had looked just even over the last month or so. So we're starting to look at that and leg clients in.
Kathy, thanks so much. Really appreciate it. Kathy Ann Whistle, Managing Director, Private Wealth Advisor, Morgan Stanley, joining us from the swamps of Jersey. Red headline crossing the Bloomberg terminal. China's moonshot in talks on pre-IPO funds at a $50 billion value. So again, the stunning numbers continue.
Yeah, so it's not just U.S. Startups that have trillion-dollar, or not trillion, but $50 billion valuations. They're definitely bigger than the traditional unicorns. It's kind of happening around the globe.
And I was chilling on the beach last Friday. I guess Moonshot says they're thinking about an IPO here. Is that kind of so?
I believe it was in Hong Kong, but I need to double check that. I don't know how the U.S. would react to a Chinese AI company IPOing in the U.S.
Exactly. Coming up, we're going to check in Larry Culp. He's the General Electric Aerospace CEO. He's speaking in just a moment with Bloomberg Television anchor Guy Johnson. They are at the Farnborough Air Show just outside of London. And they have these air shows, and they alternate between London and Paris every other year. And that's where the big deals go down. The airlines put their orders in with Boeing or who's the other guy over there in Europe?
Airbus.
Airbus, thank you.
It's a duopoly.
Yes, exactly. For those just big orders and tens of billions of dollars, it's important.
But aren't these orders already pretty much flagged? I mean, everyone knows they're coming. It's the announcement that takes place at these big air shows?
Yeah, and I think it comes down to what I understand, reading George Ferguson's research from Bloomberg Intelligence, it does come down to, is it 100 planes or 150? And
okay.
Think about it. But the thing about it is it just builds up the backlogs, and it just kind of shows who's got some momentum in the business. And for the last several years, Boeing has not had any momentum.
No, they've been struggling.
But now they've kind of got their mojo back. They've put up some orders here at this air show, so a better move there. And of course, General Electric right there with all their stuff. Larry Culp, General Electric Aerospace CEO, speaking with BTV anchor Guy Johnson at the Farnborough Air Show just outside of London. Let's take a listen.
I want to welcome to our global TV and radio audiences. I'm Danny Berger. Let's head down to the Farnborough Air Show, where Bloomberg's Guy Johnson is with the GE Aerospace Chairman and CEO Larry Culp. Guy.
I certainly am. Thank you very much indeed, Danny. Yes, welcome back to the Farnborough Air Show here in the UK. As you say, Larry Culp is with me. Larry, great to see you. Thanks for spending some time with us. Look, the first thing I've got to ask you is why on earth are we sitting in front of a very big 747 with your name on it?
Well, it's the GE Aerospace name. Guy, good to be with you. This is our flying test bed. As you say, this is a 747-400. This is basically our airborne laboratory upon which we test all of our engines. There's a lot of talk here at Farnborough, as there often is at the air shows, around the future of flight. We wanted to bring the flying test bed to Farnborough just to reinforce and help people understand everything that we do on board and inside the plane to make sure that we're bringing forward the best possible engines from a safety and reliability perspective.
You're going to test the next generation of engines for narrow bodies like the 737 or the A320s on this, because there's a big debate here at Farnborough about whether it's open rotor or the traditional kind of ducted jet engine for that next generation. Is this the aircraft you'd use to test that?
Very much so. So even though it's a wide-body engine, we can test virtually any engine that we might fly across our portfolio under development on the flying test bed.
Cool. Let's talk a little bit about the show and what has happened here. I'm sure you've been absolutely snowed under, meeting after meeting. What I've seen come out of the show is, again, huge numbers of orders for aircraft, which means huge numbers of orders for engines. You've just landed a huge deal in India as well. The backlog is getting bigger and bigger, Larry. It's a nice problem to have, but at some point, are you going to have to invest in additional manufacturing kit in order to fulfill some of these huge orders that you're taking?
Well, guys, it's been very busy. We've been here since Saturday, and I don't think we've had a better air show. From an orders perspective, we've had a number of announcements. I think the one you're referring to is one we let out yesterday afternoon. Over 1,000 engines with Indigo Airlines in India. Really excited about that multi-year commitment. There are others. I won't take our limited time here to go through the roster of them.
There are many.
There are many, narrow body and wide body. Guy, we've been investing in our manufacturing footprint, in our supply chain for years. We know that a good air show is interesting, but we're on a multi-year ramp, both with our commercial customers and in defense, right? We're sold out into the early 2030s. So whether it be investments in fixed capital, just as importantly, investments in people and process, those are the things that enabled us, say, in the first half of this year, to increase our engine deliveries by over 30% year over year. We're going to need to be driving that sort of improvement, that sort of growth for years to come.
Does that pace increase? Does the cadence of that start to increase? As you say, you're sold out for years and years to come.
Well, I don't think we need to necessarily compound at 30%, but we're going to have to do more in the second half of this year than we did in the first half, and 27 is going to need to be bigger than 26. So we know we're on a multi-year ramp, and what I'm so excited about, we said this last Thursday at our earnings call, we've got 9 quarters in a row now where we've seen double-digit sequential increases from our suppliers that are probably prone to pace us the most, which tells me they're investing, we're collaborating to break bottlenecks where they exist, and we're able to get more from them. In turn, we're able to deliver more to our airframe and airline customers.
Do you think you're going to have to invest more in that? You did highlight that. It was something that really stood out in terms of what you said on that earnings call. But is there something, do you think you're going to have to invest more in that supply chain? We've talked about kind of investing in your capital infrastructure. Do you think you're going to have to invest in theirs? Is there M&A stories that maybe you think about in order to just get that supply chain to where you want it to be?
There's more to come with that, without doubt. Most of that will be organic, right, within our operations. Some of it will come by way of collaboration. I'm sure there'll be inorganic investments as well. We've done a number of small acquisitions with suppliers that were better off, frankly, under our roof than at arm's length. But at the end of the day, it's not about ownership. It's about problem identification and breaking those constraints. Again, I think we've made a lot of progress the last few years in partnership with a number of our key suppliers, large and small, many of them here. More to come.
Okay. There's been so much news flow as we've been here at the show. One of them has been around what is happening with oil prices and the fact that we're seeing them heading back up again as a result of what's happening in the Gulf right now. If I talk to Kelly over at Boeing, if I talk to Guillaume at Airbus, they're like, this is in some ways good news for us, because what it does is it encourages our customers, the airlines, to invest in the most up-to-date aircraft, the most fuel-efficient aircraft that they can get their hands on. For you, though, I just wonder whether it's a slightly different story, because what we do see as well is that the airlines look at their older fleets and go, maybe we should retire some of those older aircraft. But the spare parts business is a big margin driver for you. How do you see the balance working there?
Well, I would say what's good for Boeing or good for Airbus is good for General Electric. Okay. There's no two ways about that. But the other piece of the equation right now, Guy, that you didn't touch on, frankly, is demand. Every airline CEO that has been at Farnborough, those that we talked to just a few weeks ago at IATA in Rio, all have remarked about how strong demand has been, even in the face of some of the oil price disruptions since the springtime. So we're looking at a situation where we have very strong aftermarket demand, we have very strong new make demand, and again, we can never forget about defense. So we have our work cut out for us on a multi-year basis. We know we're going to have to ramp. We're going to make those investments, drive those process improvements. But that work is underway at GE Aerospace, and that work will continue.
One of the big discussions here has been almost about the aircraft that's not here, and that's the next generation of narrow body. We talked about it a little bit earlier on. You're going to test it on this 747, the engine for that. You're pushing quite hard for the open rotor technology. You think that's the future. You think it's going to be simpler, easier to maintain, have some fairly big cost efficiencies that come with it. The airframers aren't there yet. They don't appear ready, judging by the conversations that I've had, to be ready to make a decision on that. How late can they leave it? When do you think that decision is going to come?
Well, we had an announcement just yesterday in concert with Airbus, with CFM International. We were talking about our new flying test bed equivalent for the open fan architecture. It's a technology development program. Guys, as you well know, this is a multi-year effort. We do think the open fan architecture provides both efficiency and maintenance or cost of ownership benefits. So we think we will ultimately be able to deliver to the airlines, the ultimate customer, an opportunity to do both. It's not yet a product, so there's work to do here. There's plenty of time for us all to work that out, but every next generation narrowbody has always come forward with a step function improvement in performance. Very hard to justify the investment to develop one, let alone buy one, without that. We're confident that the open fan architecture is going to be the enabler in that regard.
Larry, it's always a pleasure. Thank you very much indeed for spending a little bit of time with us here at the Farnborough Air Show. We greatly appreciate it. Larry Culp, the CEO of GE Aerospace, joining us here at Farnborough. I'll hand things back over to you guys in New York.
All right, thank you so much. That was Guy Johnson, our Bloomberg Television anchor based in London, speaking to Larry Culp, the CEO of General Electric Aerospace from the Farnborough Air Show. Let's get a reset on the markets and the latest news flow and check in with John Tucker for our Bloomberg Business Flash.
Yeah, and Scarlett, risk on, of course. The S&P 500 up 44 points, a rise of 0.6%. Information technology, the best of the 11 major industry groups in the S&P 500 right now. Of course, that's where the semiconductor stocks live. Dow Jones Industrial Average up 262 points. The NASDAQ Composite Index up 260 points. That is a 1% pop. The sharp slide momentum stocks could be nearing its end, and that could create an opportunity for investors to start rebuilding positions in AI and the semiconductor shares. At least that's according to the trading desk at UBS. So what is in the driver's seat for markets? We actually put that question to Andrew Sheets at Morgan Stanley earlier today.
I do think it's AI and the AI CapEx build out that remains probably the most important factor. And I think that's just because it cuts across so many market narratives. It's a big part of the growth story of this year. It's a big part of the earnings story.
And we're seeing Brent, the active contract, up close to 3%, 91.75 a barrel. And of course, that's raising inflation fears again. You're seeing that show up in the bond market. 2-year yields up 4 basis points. That's at 4.25. The 10-year, 3 basis points higher. That is at 4.62 right now. Alphabet, yeah, they have earnings tomorrow. The Google parent has more than quadrupled its office space in Miami. Shortly after Larry Page and Sergey Brin bought homes in the area, so everybody else did too. They established a footprint in South Florida, in part because California is, of course, preparing a ballot referendum on taxing assets of the ultra-rich. So
California, what are they thinking?
I don't know. Anyway, that's
I mean, they're thinking about it. It's not a done deal.
Yeah, okay, all right.
Hey, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate it. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Speaking of real estate, perfect timing. Scott Reckler joins us here. He's the CEO and chairman of RXR, joining us here in studio. Scott, thanks so much for coming back.
It's great being here. Thanks, Paul.
New York City office market. Give us an overview. How are things out there these days? It seems like it's coming back in a big way, but give us the details.
Yeah, no, it's more than back. I mean, okay. I've been in this business for 30 years, and I have not seen the New York office market as strong as it is today. Wow. If you look at leasing for the first 6 months, it was 23 million square feet. If you think that carries through this year, it will take us back to levels that we haven't seen since 2000. Rent growth has been extraordinary, the fastest in the country. There's still a flight to quality, so you're seeing the higher quality buildings are really, really doing well. But when you take like the top 50 buildings, the vacancy rate's like 3%, right? So when you're in that mode, and even big blocks of space, there's in all of Manhattan, there's about 22 high quality big blocks of space, and there's right now over 60 companies looking for over 100,000 square feet. So 100,000 square feet, only 22 available, and 60 something looking for 100,000 square feet of block. So it's shifted to a landlord's market versus a tenant's market right now.
Of course, all office buildings are not created equal, and plenty of office buildings are being retrofitted to become residential. And we saw in New York, at least, an incident in which there was a buckling of one of those commercial buildings that's being converted into residential. Tell us what you thought when that first happened, and just your thought process and how we can prevent things like that.
Yeah, so these conversions of office to residential has been a great program for New York. There was actually, they put a tax incentive in place to encourage it, and there's been almost 15 million square feet that's underway right now. So taking old office buildings, creating housing where we have like a 1.8% vacancy rate in housing. So great public policy, but not all conversions are created equal either, because this is not just taking an office building and putting residential into it. They were actually building another building on top of the existing structure, which already takes a complex construction project and makes it more complex. And the initial readout is that there was 2 columns that were supposed to have been reinforced that weren't reinforced, which created that buckling that you're talking about. I think we're going to get better clarity as to what ultimately happened, and was it an engineering issue? Was it an issue on the project? But clearly, this is a program that New York should continue to lean into. It's really created a great dynamic for New York. It's not only great in terms of creating housing, but think about these little neighborhoods that we're creating that used to be just commercial. Now people live there, they support the retail and the restaurants on the weekends. They're these 24/7 walkable communities. So, what you have seen is lenders and investors have raised the risk spectrum now. Like, we're doing 4,000 units ourselves, both on the investing side and development side.
Really?
And we've looked at these things now and said, okay, if this risk is higher, if you were going to have this overbuild, maybe we wouldn't do it today.
So talk to us about retail in big cities like New York, because when you walk out, when you're done with us today, you can walk out on Lexington Avenue. I'm going to ask you to look right across the street. There's a ton of unused retail space that's been there since the pandemic. Can you go rent that today? What's going on out there?
It's again submarket by submarket when you think about New York, right? So even this point about these conversions, right?
It's across the street from Bloomberg.
Yeah,
I mean, let's rent this space out.
Interesting. The Upper East Side, has had a more challenging time than some of the other areas. But you go by, Rock Center, the retail's packed, right? Obviously, you go down to Midtown South, Chelsea, retail packed, and so what you're seeing, these are the neighborhoods where people want to be. Grand Central has, in terms of, in Park Avenue, one of the strongest retail markets, office markets in the country right now. And, it's also because of public transportation, right? I mean, we're building a 3
we've
million
got
square
public
foot.
transportation here at 59th and Lex. I mean, there's something, it's a nexus.
I'm not kidding. Something's wrong. Like,
it's haunted.
It's mispriced. People were talking about Lexington Avenue at 58th Street. It doesn't get that much better than that. And this thing's been vacant, and it's a big slug of space.
Right. It's not just the corner property. It's kind of the whole block.
I don't know what's going on.
When we leave.
Scarlett and I were out in San Francisco 6 months ago, maybe, for a real estate
and it was like everyone was bullish.
They were saying AI saved San Francisco. Literally, it's now fully, you can't get an apartment, and all the space is being leased like crazy. How has AI impacted other markets?
Yeah, I think it's interesting. When you think about AI, there's compute power and there's people power, right? And the compute power is happening in all these data centers that are being built in these areas around the country where energy is cheap. People power is in the office buildings, right? And I think what you've seen in San Francisco is very focused on tech. What you've seen in New York is this incredible diverse ecosystem where you have this, you have capital, you have creativity, you have collaboration, all combust together through all these different industries, right? And so we're seeing with our law firms, we're seeing it in the capital markets. I mean, think about this year in terms of we've had the largest IPO, we had the largest M&A, Wall Street earnings are off the roof, right? I just told you about the office market. Obviously, Knicks win the championship, right? We had the World Cup. I mean, the energy in New York is unbelievable, but AI is just like everything else, is a big driver of the economic growth, either directly or indirectly with the wealth effect, right? And that's something that we're getting a great benefit and tailwind in New York for.
Do you see Miami as a competitor to New York for the financial sector?
I don't think so. I think that what you've seen over the last decade is the financial sector, like a lot of other sectors, have thought about a distributable workforce. So they need to be in New York. This is where their customers is where the activity is. But they also can put people in other parts of the country, whether it's Miami, whether it's Dallas, whether it's Atlanta. And then when they go there, what you find is it does not have the infrastructure to be able to be as competitive as New York, right? It's even there was an article this weekend that's now said that Miami costs more to live than in New York, right? So it's going to get to a point where it's going to have the same challenge of capacity issues that we have in New York in places like Miami. I think places like Dallas and Phoenix, and they actually have more capacity, and that's why you're seeing other firms announce relocating other operations there.
Yeah, Dallas has been a huge
beneficiary,
and they can grow. That's the thing, right?
Yeah, exactly.
There's nothing really hemming that market in.
No, right. No. That's not the case in Miami, right? Yeah. The congestion, schools, everything becomes a challenge there.
Yep. Scott, thanks so much for joining us. Appreciate it. Scott Reckler, CEO and Chairman of RXR. Talk a little commercial real estate. Coming up in just a matter of moments, Hasbro CEO of Christian Cox speaks with BTV anchors Danny Berger and Isabel Lee. That'll be coming up in just a moment. We can see what's happening in the toy business.
Yeah, well, we know that Hasbro raised its 2026 outlook, and it's also canceled several digital projects. A lot of the reason why it's seeing strength is because of Magic the Gathering. You know anything about Magic the Gathering?
I do not.
It's like the successor to Dungeons and Dragons.
Oh, okay.
It's a card game, but it's got this big following. John Tucker knows something about it.
I didn't say dorks.
I didn't say that. You said it, but you thought it.
Yeah. No.
You thought it, and you gave me a certain look.
Sounds like Young Boys would be kind of right up their alley or something.
Yeah, well, young boys and older boys, for that matter.
Yeah, unfortunately.
It's an adult game as well.
Okay.
Well, I mean, it typically caters to teenage boys, and there are a lot of people kind of grow up on it.
Okay.
So, yep. Hasbro CEO Christian Cox speaking with BTV anchors Danny Berger and Isabel Lee. Let's listen in.
Welcome to our global TV and radio audiences. I'm Danny Berger alongside Isabel Lee and Danielle Poli. Hasbro shares are surging after the company raised its full-year outlook, topping second quarter expectations, with Magic the Gathering once again driving growth. The franchise topped $500 million in quarterly revenue for the first time in its 30-plus year history. Joining us now is Hasbro CEO Chris Cox. Chris, wonderful to have you on. Congratulations for this milestone. And I know that this has been a huge part of your growth strategy, and it's paying off with Magic the Gathering. But I do have to start out asking, last time you and I had spoken, one of the other big parts of your growth strategy was your video game division. But you've now announced that you're canceling multiple video game projects. Can you just walk us through the thinking?
Well, I think most video game companies in a given year will have a variety of products in different stages of development, and we're no different. I think what we did is over the last 6 to 9 months, we took a relook at our portfolio and said, okay, what can Hasbro be best in the world at? What can we uniquely do differently than anyone else? And we decided to refocus. And, the decision we made was trading card games and role-playing games were really vital to franchises like Magic the Gathering and D&D. We're doubling down on those. But other categories like strategy games, action, stealth, we work with over 1,000 partners around the world with a very large licensing business. We're the #1 digital licensor in the world, working with nearly 100 partners. We can work with those kinds of partners who are experts in those genres and create a real 1-2 punch. Hasbro being a leader in TCGs and RPGs, and then our partners really helping to extend our brands elsewhere. And that's really kind of what today's messaging was all about.
And sticking with games, how are you using AI when you develop these?
AI is still pretty early days. We use it across the company, mostly for productivity. Our toy division does it for some concepting, but at the end of the day, a human is driving all of the taste decisions and the ultimate execution. Inside of games and video games, I would say AI is basically not used at all. Will that change over time? I think we'll look at what the state of the tools are, where the industry's going, and certainly we will use what makes sense. I think the video game industry has a real history of being an early technology adopter, and we'll take our marks from what the best in the business are doing.
What are you seeing with respect to consumer behavior or demand that's maybe not yet showing up in the data, but that you're planning for?
Well, gosh, I think the biggest thing that we're seeing is this boom in these categories that we call Gem Squared. Those categories that are gamified, entertainment-driven, multi-purchase, and multi-generational. I think other companies maybe call it kidults. That's been a power trend over the last couple years, and we certainly see it taking off moving forward. I think you're seeing that in strength with Magic the Gathering. You're seeing that with, growth that we have in Marvel and Star Wars, which is really fan generated. The kid business continues to be good, but fans are really what's being explosive in that. And with new initiatives like we're seeing with, traditionally kid products like Play-Doh, with what we're doing with the new product called Blooms, which is, an ability for older consumers to create beautiful bouquets of flowers to build and display. I think that build and display dynamic, that play being more than just something for kids, collection being more than something for just nerds like myself, but much broader. I think that's powering the entire play industry right now, and is a power trend that I don't think is going to go away anytime soon.
Can I just say, I think nerds is better than kidult. Like, I would rather be referred to as a nerd than a kidult. I'm just going to put that out there, Chris. Look, when it comes to maybe some of the more like traditional toys, the things that rely on imports, I know this industry has had a lot of volatility. And at the moment, the White House has been relying on Section 122 tariffs that expires this Friday. How are you and the team thinking about that expiration? Are you looking at any hedging options, bracing for anything in particular, especially as you start to lock in holiday shipments?
I think it's been a pretty volatile environment over the last couple of years between trade policy, commodities pricing. We've certainly seen that with oil. I think our focus is just, let's have really good, solid fundamentals. Let's have a broad-based, diversified business where we don't rely too much on any one thing. For Hasbro, we have Magic the Gathering, which is a huge power brand for us. We have a huge licensing business that's heavily diversified, and we have a beloved toy business. And so I think by having that diversification, by having brands that have a variety of different target audiences, we're able to weather whatever the market or whatever policies are thrown at us. And I think that underlies kind of the strength and bullishness of the raise that we had for this year and our midterm guide for 2027 and beyond.
You mentioned Magic, and we know that it keeps driving your growth, but do you think Hasbro is becoming too reliant on one power franchise?
Well, I think what you don't see maybe under the hood and an artifact of our reporting is just how big our licensing business is. Hasbro is the third biggest licenser in the entire entertainment industry, behind, I think, only Warner Brothers today. That's a big business for us that's very profitable. Sizing it, I'd say it's $700 to $750 million, generating operating profits in excess of 60%. So when you think about Magic, that's a big business for us. But when you think about that licensing business, that's also another very strong leg in our stool. And then when you couple with that with a very diversified toy business that goes across a whole bunch of different categories and a whole bunch of different audiences, I really think Hasbro's a multi-leg story, a multi-leg growth story, and a multi-leg profit story, with each of them starting to fire on all cylinders, like what you saw last quarter and you saw continue into this quarter.
Yeah, this quarter's revenue was very high, and your business has been extremely resilient to what's been going on in the broader economy. My question is around the consumer, and if you're seeing any slowdown in spending in any particular segments or anything that might impact future revenue.
I think if you would have asked me that a couple quarters ago, we would have said, yeah, we were seeing more of a K-shaped kind of recovery or K-shaped consumer behavior. But if anything, we're seeing broadening strength in the consumer. We're seeing it across price points. We're seeing it across demographics. We're seeing it across income groups. The toy industry as a whole is up over 3% through May. Hasbro is certainly benefiting from that, and it's very broad-based across multiple retailers, multiple genres, and multiple consumer types. So,
yeah, hey, Chris,
from
I
our
just
vantage point,
I just want to jump in.
Play, the consumer strengthening.
I just want to jump in just because we have 45 seconds left. I know you know the GameStop business well. You partner with them. Again, just quickly here, any thoughts on Ryan Cohen's attempt to buy eBay?
No thoughts on GameStop's overall strategy. I'm glad that they're leaning into trading cards and collectibles. They're one of our fastest growing accounts. And so we're partnering with them closely on that.
Very well diplomatically answered. Love that, Chris. Thank you so much for joining us. Hasbro CEO Chris Cox. And Danielle, thank you so much for joining this hour. Such a pleasure to have you.
This has been so fun. I keep buying more toys. Love the Play-Doh.
You almost bought the Bloom toy too, right? The adult Play-Doh. Yes.
So had an interesting conversation there with the Hasbro folks there, and the stock is trading up here today. So good conversation with Hasbro CEO Christian Cox there. Let's switch over to Nike. Here's a nice headline. Nike soccer ball says World Cup end wasn't, quote, what we dreamed. Let's get some more on that. We can do that with Lily Meyer, retail reporter for Bloomberg News. So Lily, talk to us about Nike and the World Cup, because it seems like I saw a lot of swooshes around there, but I also saw a lot of Adidas stuff out there as well.
Yeah, I mean, Nike was really present for the World Cup, but in the final, Spain versus Argentina, both teams ended up being sponsored by Adidas. So, you know, in the round with England and France, it seemed like Nike could make it to the final, but it was just an Adidas final in the end.
Adidas only final, but this is something that is beyond Nike's control. I mean, you know, I think a lot of people wanted to say England in the final, but it didn't happen. What does this indicate that this is going to be their strategy, Nike's strategy going forward, just kind of get their gear on as many teams and superstars as possible and really double down on professional athletes?
Yeah, absolutely. So out of their control in the playing, I think that Nike will continue to focus on sports under Elliott Hill, their CEO. That's been a huge part of his strategy, reorganizing the teams internally around sports and then, you know, trying to keep Nike at some of the biggest sports moments throughout the year.
The Women's World Cup is coming up, I think, next year.
Yep.
And that's big as well. What's Nike's strategy there? How are they positioned there?
Yeah, it'll be interesting to see, you know, what they say about their preparations for that and how we see them show up at that tournament. But yes, another big opportunity in football for Nike next year.
Do we know how Adidas is responding, or Adidas, if you're dedicated to the German pronunciation, how they're responding to the World Cup finals and the fact that two of their teams were facing off against one another?
Yeah, that's a great question. I haven't seen much of their response, but I think it was probably an exciting moment for them to have both of their teams in the final. You know, they have back some big players as well, and soccer has always been a huge focus for them. So I'm sure it was very exciting.
I am a Nike person. I'm not a paid endorser, but they probably should. But I've been wearing Nike since they came out.
You got to be a professional athlete to be a paid endorser.
So, yeah. Okay, I don't think
we're all out.
Lily, thanks so much for joining us. Lily Meyer, she's a retail reporter, Bloomberg News, covering a lot of the consumer names, including Nike. Again, they were all over the World Cup, but they did not make the final. That was an all Adidas affair here. But they're saying, hey, pay attention to the Women's World Cup, and which is big too.
Yeah, and Spain is the reigning champions of the Women's World Cup too. Okay. I believe so.
Okay. Well, I know we're good.
Lily's nodding, so I think so. Yes.
Yeah, the U.S. women are good too.
Yes,
really
much better than the men's team.
Yeah, like
what's up with that?
I don't know. Well, it's the whole thing about academies and not having academies and how we train the kids.
Investing in the pipeline, all of that?
Yeah, all of that. So we'll see how that goes. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour, Bloomberg Intelligence begins in just a moment. We've got green on the screen. The S&P is up, let's call it 50 points, 0.6%. The Nasdaq's up 285 points. That is 1.1%. The yield story, it's definitely coming here onto the front burner, up 3 basis points on the 10-year, 4.62%. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are streaming live on YouTube as well. This is the second hour of Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. We've got a lot to get to this hour. We're going to check in with Tyler Kendall, our Bloomberg News Washington correspondent, on the latest out of the Middle East. David Welsh joins us from Detroit to give us the recap of GM's latest earnings. It boosted its 2026 outlook. John Tazi is our Bloomberg healthcare reporter. Novo Nordisk says it is suing Eli Lilly over weight loss ads. So John will give us the rundown on that. And Chris Palmieri, our Bloomberg News senior editor and team leader for our entertainment coverage, has the latest on a judge pausing a deal between Paramount and Warner Brothers, citing some serious issues, even though the feds, the DOJ, has waved that one along and blessed it. So
Yep, I don't know.
I don't know how this all plays out.
They can do it though. I've seen some research where they can make things difficult.
Okay, well, the state's attorney general has made sure that they've, raised their hand and said, we're not going along with this M&A deal. So we'll get to all of that shortly. But first, let's kick things off with John Tucker and our Bloomberg Business Flash.
Yeah, risk on in the markets today. You have the Dow Jones Industrial Average up 247 points, a 0.5% rise there. S&P 500 up 46 points, 74.89 in the index. The NASDAQ 100 is up 1.6%, 451 points higher. It's kind of enough to give you a whiplash with the semiconductor stocks. They're getting a pop today. Their index up over 4% right now. Information technology, best performing industry group in the S&P 500. That's where the semis live. Western Digital, best performing individual stock in the S&P 500. The worst performer belongs to Danaher, down close to 14%. This is the life sciences firm. And here's a quiz. What did Danaher used to make before they spun it out?
Meters, water something?
Craftsman tools for Sears.
Oh. Is that right?
Yeah, remember that?
Grew up with those.
Yeah, absolutely. Anyway, Julian Emanuel at Evercore ISI, he sees a positive environment for stocks.
Because earnings are good, and oh, by the way, you look at this year, value is outperforming growth. The stock market is very strong, and the economy is solid.
Don't forget oil, Brent crude up 2.6%, 91.60 a barrel. And that's impacting yields with concerns about inflationary pressures. 2-year of 4 basis points, 4.24. 10s up 3 basis points, 4.62%. Fun fact, initial public offerings in the U.S. of biotech and pharmaceutical companies this year, they produced a weighted average return of 55%. So you compare that to the weighted average for the broader U.S. IPO market, a 4.4% weighted average loss there. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
Thank you very much, John Tucker. So Tuesday morning, we're looking at some green on the screen right now. So let's check in with Avalon Purnell, who is here to give us some stocks on the move. And Avalon, what's first on your list?
Let's start off with Equifax. That's ticker EFX. It's currently falling about 7.2%, though earlier it dropped as much as 14%. And that's after the Consumer Credit Reporting Agency lowered the top end of its full-year profit guidance. It did also raise the bottom end, but the midpoint for the guidance is below Wall Street's expectations. RBC also writing that the second quarter results were mixed when investors were expecting a beat going into the print, though they do also write that given the sell-off, Equifax is trading at a very inexpensive valuation.
All right, what do you got, Alice? What's next?
Danaher, that's ticker DHR, currently dropping 14%, most intraday since 1987. And that's after the life sciences firm forecast core revenue growth for the third quarter that did fall short of expectations. RBC highlighting that the guidance is mixed and not consistent with a broader reacceleration narrative. Still, he also sees that today's weakness as a potential buying opportunity. Worth noting that these results do make Danaher the worst performer in the S&P 500 this morning, and also they're driving other life sciences names further down as well.
All right, and as John Tucker reminded us, it was the owner of the Craftsman tools.
Yeah, they spun it out to Stanley Black & Decker.
That makes sense.
Which then went private, right?
I don't
Something like that, I think. I can't remember. Okay, next up on your list, Avalon.
Next up, a little bit of green. We have 3M, that's ticker MMM, currently up about 8.8%, most intraday since 2024. And that's after the industrial conglomerate posted a solid second quarter beat and also raised full year guidance. The outlook also suggesting that the broader turnaround continues to gather up pace despite those broader economic volatility issues. And part of that is because 3M is more insulated than some of its peers from the war in Iran, though higher oil prices still impact it. Citi highlighting that investors should view the results and guidance very positively, despite somewhat elevated expectations going into the print.
I have to ask it, because I ask everybody else.
Do
what
it.
does 3M stand for?
Oh, I'm not sure.
Minnesota Mining and Manufacturing.
Interesting.
There you go.
Not what I would have guessed.
Don't worry, there's 4 people before you.
Paul
can
and
get it
I are
either.
full of these useless factoids.
Useless trivia.
1970s, 1980s
80s,
era
yes,
business facts. All right. Thank you so much, Avalon Furnell. Avalon is our Bloomberg News equities reporter. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market, and sometimes fun facts as well. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, let's get some facts out of what is happening in the Middle East. And for that, we bring in Tyler Kendall. She's our Bloomberg News Washington correspondent. Tyler, what is the latest here with the Iran war? Because the U.S. has struck more Iranian targets, and the Houthis are threatened a blockade. It just feels like things are getting more worser than we had anticipated, certainly, as there's still officially kind of not a full-blown return to war, but some kind of ceasefire still in place?
We're definitely getting conflicting signals today, Scarlett. We've heard from mediators that they are actively working to prevent further escalation. In fact, Bloomberg News confirmed that Iranian officials are in Pakistan for talks today. But as these talks are going on, we got confirmation from both Bahrain and Kuwait that they were working to intercept Iranian drone and missile strikes. And so far, at least publicly, there has been very little indication from Iran that they are willing to let up their grip on the Strait of Hormuz, which needs to be the first issue addressed before we can even start to talk about what a resumption of direct talks between the U.S. and Iran would look like. Because overnight, we saw Iran hit another tanker in the Strait of Hormuz, this time linked to Kuwait, as new data shows us that over the last 3 days, we only saw about an average of 10 vessels be able to transit each day. But really importantly, the satellite imagery shows us that almost all of those transits were through that Iranian-approved route, not the U.S. coordinated one, just further indicating Iran's grip when it comes to the waterway. We'll have to see where it goes from here. You mentioned the Houthi rebels, the Iranian-backed proxy group, saying that they are instituting this maritime blockade on Saudi Arabia. Paul and Scarlett, I'll put on your radar that Bloomberg News was able to obtain this memo that details that this blockade isn't just for Saudi vessels, it is for any vessels going to and from Saudi Arabia's ports, and that is considered to be an expansion of what yesterday we thought this blockade was going to be.
Tyler, one person we haven't heard from in a while has been Secretary of Defense Pete Hegseth, and I think he's scheduled to speak in front of Congress soon. What are we hearing from the Department of Defense here just about the conduct of the war, maybe some strategies, maybe some potential solutions? Have you heard anything from that department?
Right. 2:30 p.m. Eastern is when Secretary Hegseth is going to face these questions from lawmakers. This particular hearing is around the Pentagon's budget request for fiscal year 2027, as it's faced some headwinds and an uphill battle in Congress as Democratic lawmakers have moved to try to impose some sort of curbs when it comes to how President Trump is conducting this war and tie it to the appropriations process. But you're right to point out we haven't heard that much from the Pentagon since we've seen this resumption of kinetic action. CENTCOM has been giving us updates yesterday confirming that so far they have redirected at least 9 vessels and that the attacks, now the 10th day of consecutive attacks by the U.S., have been focused solely on degrading Iran's capability to disrupt traffic in the Strait of Hormuz. The Strait really has been the focus of the administration's targets when it comes to this latest round of action. But no doubt that will be something to watch later today on Capitol Hill.
And we do have some headlines from Canadian Prime Minister Mark Carney. He says that he spoke to President Trump today, and the U.S. and Canada are agreeing to intensify trade talks. Just, Tyler, take a step back here and just kind of give us the context for these headlines here, because the President yesterday kind of abruptly announced new tariffs on Canadian products.
Right, up to 50% for a range of products, including wine, hockey equipment, and milk. This, if implemented, would be the starkest trade move that President Trump has made against Canada of this second term. There's a few different points of context that we should have here. One is that President Trump's Section 122 tariffs, that stopgap tariff measure that the administration put into place to fill the gap once the Supreme Court had struck down his broad-based levies, those expire on Friday. So expect the administration to start rolling out other tariffs on other countries. Canada is interesting in and of the fact that we have seen relatively tense relations recently. Just last week, President Trump had threatened to impose tariffs over the wildfire smoke that was coming down from Canada. And earlier this month, we know that the U.S. chose not to renew the USMCA, setting up potentially years of contentious negotiations. This is a very big escalation, but our own analysts at Bloomberg Economics have said that they don't expect it to be fully implemented. It very likely will either be delayed or canceled altogether, depending on how negotiations go. And to your point, Scarlett, we've heard from the Canadian Prime Minister earlier saying that they are ready to engage intensively with the U.S. on these issues, which would seem to indicate that this helped to jumpstart the dialogue going forward.
All right, good stuff. Tyler, thank you so much. Tyler Kindler is our Bloomberg News Washington correspondent on the latest out of Washington. And that kind of cues us up for the next conversation, which is with David Welsh. He is our Bloomberg Detroit bureau chief, and we'll talk about General Motors' earnings. But David, as Tyler was talking, I was checking out Canada's exports to the U.S., and energy is #1 on the list. 160 billion Canadian dollars worth of exports to the U.S. in 2025. #2 is motor vehicles and parts. At 74 billion Canadian dollars. What's the thinking in Detroit when Canadian products?
You know, generally speaking, in Detroit, the car companies worry about this because they've got long-standing manufacturing there. There are a lot of big Canadian parts suppliers too. Magna is big. Martin Ray is another one that's a good-sized company. They send a lot of parts over the border. Very quietly, Toyota makes a lot of vehicles in Ontario, and Ford and General Motors still have production over there, so does Stellantis. So, look, the car companies don't like anything that really is going to upset their supply chains any more than it already has. Mexico's already been a big deal for them, and certain parts of Asia as well. So they'd rather see the status quo remain in place and hope it does here. In fact, the car companies generally want to see USMCA remain as similar to what it's been since Trump set it up, 5-6 years ago to begin with. But you know, that's not going to be the case. But they have been fighting to sort of claw back some exemptions to that and reduce their cost. And that's why General Motors, one of the reasons General Motors had better earnings today, is they've managed to lobby their way into at least a little bit of a reprieve on these tariffs.
And looking at the GM results here, this is right back to their playbook, which is, I mean, they boost their 2026 outlook due to premium pricing on big trucks. Boy, that is America auto industry today. Premium pricing, big trucks, SUVs. That seems to be working for certainly Ford here. I mean, GM.
Well, it's working for all of them, really. A couple of things. So, yeah, they are charging a lot of money for their big vehicles. Now, we did actually, I will say this, we did see some discounting on pickup trucks. As the competition is always tough in that segment, and you've got high fuel prices that I think is keeping some buyers on the fence for a while. So there's a bit of that going on. But GM's average vehicle is selling for $52,000, and that's an expensive vehicle. So they're keeping price up. That's one of the things that's doing well for them. We talked about tariff relief. They have lower warranty costs. That's helping them as well. The other thing, too, to keep an eye on, they've been boosting production. They had pretty lean inventories throughout the second quarter. So some of this is that they're just kind of putting more into the channel to their dealerships. And now GM says it's sustainable and that they see similar momentum into 2027. Or 26 and 27, but they've got to deliver on that. Otherwise, they're building inventory and they may have to pull back at some point.
Okay, so GM and Ford, they're all doubling down on these big premium trucks. What does the car maker strategy look like when it comes to hybrids, when it comes to EVs? Because my understanding is there was another charge related to reduced production of EVs.
That's right. And what that charge is, it's basically for stuff they've already announced, but they've had to pull back production on the batteries they make for the EVs, and they've had to pull back on production of the electric vehicles themselves. They're retooling a plant in suburban Detroit that they thought was going to make electric pickup trucks, but nobody buys electric pickup trucks. They don't buy GMs, they don't buy Fords, they don't buy Teslas, they don't buy Rivians. No one wants an electric pickup truck. So right now what you're seeing are these charges coming through the system. and GM is taking a total of $11 billion in charges there. They're still, like, they haven't canceled a single electric vehicle in that lineup. They still sell a dozen different EVs, and that's their strategy. They don't have any hybrids on the market now except for the E-Ray, which is a Corvette, very low volume. They say they're going to have a handful of them coming. Mary Barra told Bloomberg TV that, but none on the market yet. Ford only has a couple. Stellantis, very little presence there. Right now, that's a Hyundai and Toyota and to a degree Honda game. And all three of them are getting good sales gains in the U.S. market because they've got hybrid electric vehicles at a time when gas is selling for more than $4.
We're going to have to head down to Washington, D.C. David Welch, Detroit Bureau Chief, joining us there. Right now, let's head down to Washington, D.C. President Trump is meeting with the Lebanese president at the White House, and they're taking some questions. Let's take a listen.
Last month. So did you raise it you will raise it with President Trump today?
Well, the Abraham Accords have been, I think, a tremendous success. I think you're going to see a lot of countries joining pretty soon. As you know, we have our original group, and it's so successful for them. Economically successful. It's been that. Nobody left, even during this time of conflict. So, no, I think Lebanon has a very important place.
What is your level of concern of a blockade of the Red Sea by the Houthi rebels, opening up another front in the war?
We'll see what happens. So far, it hasn't happened. It might happen. But we take care of things. If something like that happens, we take care of it. You know, we've done that with the Houthis before, and we haven't heard from them in a while since we did what we did originally. That was about 45 days of very powerful action we took against the Houthis. And we've had no problem with the Houthis. They've had no problem with us for a long period of time, including during this conflict. I think that if there is something like that, we'll just have to take care of business.
The Speaker of the Lebanese Parliament rejected the agreement between Lebanon and Israel and he said it's a sedition. It's going to cause civil war. He's the Speaker of the Lebanese Parliament, and he speaks for Hezbollah. He's Hezbollah's big brother. What do you have to say about that?
Well, maybe I'll let you speak to that.
Actually, the framework doesn't require the endorsement of the Parliament. Okay, it's part of our constitution. It's a prerogative of the president, and we are committed to it. And I think the Speaker of the Parliament is really wants to see the end of this war. He's from the south, and he knows he did his best to rebuild the south. But unfortunately, the south being destroyed in front of his eyes. So he's actually supportive of what we are doing, but we need to be careful. His position as a speaker and as a leader of the Shia community, we have to understand how critical is his position. But I can tell you that Speaker Berri is a man of state. He's supportive of what we are doing, and he's supportive of ending the state of hostility, ending the war once for all.
I think when he sees, because I've heard that, he's a good person, good man. And when he sees the progress made, I'm sure he's going to come on.
From NCI TV from Lebanon. I have two questions, please. When will the Israeli army fully withdraw from Lebanon? Is there a clear timeline for that? And last question, please. Last week you met with the Iraqi Prime Minister and discussed him or described him as handsome and saying he could become one of the best leaders in the Middle East. How do you describe
Which one are we talking about?
The Iraqi Prime Minister. Yes. How do you describe President?
Well, I'd say he's handsome also, and I think he could become one of the most important leaders in the Middle East, actually, if we do this, because they've been trying to do this for decades, right? Decades and decades. So if I made that statement about somebody else, I would put him in the same category.
When the Israeli army withdraw from Lebanon, is there a clear timeline for
They're
that?
in the process of doing that. They're in the process of redeploying to other sections. And again, they get along very well. That was a great agreement they signed with Lebanon, and they're redeploying.